Peter, we're back.
Good morning, my friend. Monday morning.
New
week.
New week.
How about
another
it?
one.
We got some clarity, but the markets are certain. Getting the election out of the way was a good thing, I think, for traders because Tuesday we had an incredible rally in the dollar. Euro just really put. It's so funny. I mean, those 2 weeks before, Glenn's running the numbers, and when we ran them at the beginning of October, I think Euro's range was 38 bips. And towards the end, the Euro range was down to, I want to say 26. And I go, Glenn, that's not right. And he goes, it's the math, dude. It's
Yeah,
right.
and then he came over to me shaking, and he's like, how do I do a standard deviation?
Yeah.
Boss said it's not right. You were really, you're kind of a scary guy.
But I didn't say that in a bad way. But it's just, it was right. And I don't remember a time where we had a 30-day, 26-tick range. If you think about that, that is just...
It's sad.
Well, it's right. It's sad for traders. It's sad commercially. Because within 26 points, what are you going to do? Buy the low, scalp it for 13 points, and then turn around? Nobody is that good.
I'll never forget when I started at the Board of Trade, and I was 22, and they put me on a sim for like a month or two, and they were like, you studied math at Michigan, like, you know what the heck's going on. We'll get you in like a real account. And I'm like actually shaking. And at that point in time, this is 2015, and interest rates, I believe at that time, were zero, short-term rates.
Yeah, still.
And I was trading,
so
and I was trading treasuries. I was trading futures against futures, so like knobs, so 10s against 30s, 5s against 10s, 2s against 10s, 2s against 5s, all the different permutations. 2s against 30s, the tubs, that's your favorite, the tub spread. And
that's the wild one. It's just because, guys, the more duration you add, the distance between the legs of the spreads, the more beta you have.
Less correlated,
Right.
bigger moves.
Yes.
Between a 2-year treasury. And I mean, look at it the last couple of weeks. You know, the 2-year is moving in the same way that they think Fed is going to be hiking or cutting rates. And the 30-year is moving in a different direction where they think rates might be in the long term. Anyways, all these different spreads on my board, euro dollars, cash treasuries, all this different stuff. And everything was inside of like a 2 or 3 tick. All these spreads were a 2 or 3 tick range every single night. And the guys that had been there for, more than a decade, and the guys that were in charge who had been, like you had, 20, 30, 40 years of experience, they're like, that's the range. You just have to trade it. And I'm like sitting there and I'm like, I have to sell knobs at 2 and buy them back at 1. Like, what if they go to 4, which is normal in a lot of environments, and it's so hard. But we were in that range for, I think until I left. I was finally like, dude, this is not the thing for me, and I came over here to Tasty Trade. But it's crazy, one, how long you can be in a range like that. And we were in, a 25 to 35 tick range for Euro.
Longer than you think.
And 2, you're like paralyzed as to like, what am I supposed to do? Am I supposed to just again sell these 109.50s in Euro and try to buy 109.20s or 109.30s? It's really hard.
Right. Nobody's that good, and it's just too small. I mean, it was like when we first started working together, Eurodollar futures. How many times did we look at euros at 99.82?
Yeah.
Which basically was
exactly right. Yeah.
On the rounded edge of 0 for 90-day paper, which is where we were.
Yeah.
And those curve trades stayed flat far longer than we thought. Couple of fits, couple of starts, but I mean, my thinking is we've got this uncertainty out of the way. Now, whether or not this trade continues with equities on a tear, and now think about it. We are, bonds are right now at 117.15. We are starting to test the lower bounds. If we get to 116, that's relatively new areas. I think we've got there briefly. Euro below 107, stocks at all-time highs. There will be more elasticity in everything because whenever a market gets to a new level it's never traded at before, there is, again, they're testing one side of the market's result, but you're getting to be, okay, where is fair value?
Yeah.
And so we're going to see more elastic. And I mean, Euros gave you a huge break on Tuesday night, huge rally Wednesday into Thursday. And then the selling Friday, especially in things like Aussie, was unrelenting. So we are well clear of that 107 level. We tried it, we tried it twice. Big spike on Tuesday. I think 106.89 we got to 106.90 maybe, and we held all the way up back up to 108.30. So 150 point range. We gave it back. And now we're plumbing new lows. So
I couldn't agree with you more that it feels like we just went through year end, where it's like, oh, that liquidity kind of dries up at the end of the year and everybody's kind of waiting for big institutions to have, fresh books at the start of the year.
And that's all excuses. That whole end of the year.
For sure.
I mean, the whole, they're going to reload, this comes off. Markets move when markets move. And you know what? I've had some of my best months in December because things moved to new levels and got more elastic. And was it thinner? I don't know. There's always, trust me, if the market moves to new levels and there's interest, you'll do huge volume days.
Yeah.
It's not like it was 20 years ago where you'd go into the pit. Usually you have 100 guys there. There were 3. Then it would get a little bit more elastic. We took a little bit more liberty on where we were willing to buy and sell. But this is a different kind of global marketplace, especially, I mean, the $6 trillion a day going through spot FX cumulatively gives you a lot of liquidity. So.
For sure. And yeah, my point more being that it feels like, we were coiling within this range. And let's take a look here at Eurodollar and take a look at the daily chart here, going back the last several months, Pete. It looked like throughout the summer and even fall here, we were just stuck in this 107, 108, 109. And like I say, oh, do I want to sell the 109.50s again? And then we got closer and closer to the election, saw some big moves, but still 111, 112, nothing like we've seen in years prior. You see these huge moves up to 115, down to parity the last couple of years. And now it feels like we are just seeing huge swings here the last handful of weeks. But also, if I zoom in even further, you're not just seeing big moves. Look at these huge wicks. And we're not technical analysts by any means, but that just tells you it's a big friggin' moves, but big friggin' ranges around those moves as well.
And there is some, we go back to that last time I printed 112. That trade down from 112 to 109.50 was just pretty much straight down. And you had to, if you were trading the range, there was lots of places to get stuck. In other words, if you're trading a 200-point down move and you're looking for a 50-point bounce, you never got that unless you threw the dart perfectly. And nobody does. But here we're getting back and forth, which is what we want as traders. So, I mean, the one kibosh to this is somebody last night said to me, oh, par's coming up next. And I'm like, oh my God, don't put a kibosh. Don't put a jinx on this.
Yeah.
We're into levels we haven't seen, which is great. So that brings in a level of uncertainty, a little bit more dynamic ranging. It's interesting to see the dollar strength continuing to play through here, while interest rate, the curve itself, is flattening up. We saw it kind of steepen post-election. Bond yields were higher. The 2s to the 10s got out to 35 basis points. It's back to 5 basis points now. The 10s, 30s is 7 basis points.
Yeah.
So very flat curve, which is interesting.
But with that context, I would guess, and this is coming from someone who hasn't looked at any of it, and you know way better than me, and so you're going to have to either confirm or deny this. I would guess that the last time we were at this yield for 2 years, 2 years were trading on top of 10s and 30s.
Absolutely.
And so what you have now is, yes, a relatively flat curve compared to a couple of weeks ago, but 10-year 4.5% bid and 30-year 4.6% bid, whatever it is, those are right around the highs for those duration notes and bonds
Right.
in the treasury space.
Right.
And so are we inverted again? No. Did we reach that parity in those extreme levels
Right.
for US dollar when we were inverted? Yes, but interest rates in the US on the whole are higher than they've been, though the short term is just not ripping through the long term.
Absolutely. This is the case where when that yield curve normalizes, because 2-year yields fell so fast. This one is where 2-year yields are holding there, and 10-year notes, 30-year notes are rising so quickly.
Yeah.
Quickly being a relative term, but absolutely. So it's interesting to see that dynamic play through a little bit. Equities continue. Last night, Russell opened up and just exploded.
It's unbelievable.
25, 30 handles. Now, today's a holiday. The U.S. Treasury market the cash Treasury market is closed. Futures are open. Will it be a little bit lighter in the futures market? Yeah, I imagine the book will probably be a little bit.
What have 10 years done so far? Did they? I'm guessing they opened lower and
They've done six. They opened relatively flat to a little bit higher and then sold off.
Okay.
So they're down. 10 years are down about 10 ticks, but they've done only 60,000.
Yeah. That makes
So
sense.
it's a light day. By this point, you'd be at 110,000.
But no sleep for the Forex space. And
No, absolutely not. And
these are I mean,
they tried an early rally right when the markets opened at 4 o'clock, and then futures came in at 5 o'clock. Little rally into euros, but yeah, there you see it there. It really didn't have much gas into it.
well, and 106.50 here, where we're sitting for this euro, is the lows. We were just showing that daily chart. Is the lows for really the last 6, 7, 8 months, going back to April, May range in here, and they didn't get much lower, went down and barely touched 106 even, and then 106 is the low going back to a full year ago, prior to the dollar giving up all of that going into year end last year. Obviously this year looking a little, year end is setting up to look a little bit different. That being said, Pete, you and I aren't, and it's funny, you say you were talking to somebody last night who's like, oh, parity's next or whatever. You and I don't necessarily care. Like we're not, man, if it gets to parity, I'm going to spend all my US dollars all over Europe.
It's not going straight there. And it's like, they'll be back and forth. But what we've had is 5% move in this pair in a month. Now, on average, currencies move a skosh on either side of 3% a year going back 30 years. So we've had an annualized rate of 60%. If you take that 5% over 30 days, that's a big outsized move.
Yeah.
Now, this is one where, again, it depends where your trading style is. If you're looking for a pot odds extreme, you're kind of there. If you're looking at structure and momentum, the longs are definitely being put to the challenge here, and we're at lows we haven't seen, and there is the ability for this market to bounce and sustain. And it's bouncing, which is nice. So you're getting nice bounces if you do want to play the extremes, but to hold is really challenged here. So, and you take a look at things like, if you want to jump over to Aussie, this is one that really,
I mean, this pair, Pete, has seen some of the best back and forth,
right,
I think, of any of these major pairs. And you're seeing here today actually holding on to unchanged, which is a rally against the dollar in today's market, because you can look here at the all pairs really quickly and you see pound is down 30, euro down 60, dollar putting in another 115 pips against the yen. And then you have Aussie here, which is actually able to eke out, I mean, unchanged, let's call it. But taking away a little bit of this 15-minute short-term view and taking a look at this daily view, or actually let me just go to the hourly to show this. I mean, Pete, these are huge two-sided moves in this Aussie. And you've seen two sides of euro to an extent, but like we say right now, sitting at 106.50 is really the lows. This Aussie right now trading a little bit under 66 cents. It's seen 68 and it's seen 65 in the last 48 hours of trading, and in a big way. I mean, huge moves. You see this. Obviously, this is the election move here in the big dollar rally. Everybody gets killed, and then there's a dollar sell-off, a little bit of comeback in a number of pairs. But this Aussie, by the end of it, by 24 hours after the election, Pete, Aussie was up against U.S. dollar, which you couldn't say of pretty much any major currency against USD, and then it sold off again going into the weekend, and now it's sitting in a little bit of no man's land. But this will be an interesting one because it's getting pushed on the equity piece, and it's getting pulled on the U.S. dollar piece.
You're absolutely right, and it's so funny because we've got PPI and CPI coming up this week, Tuesday and Wednesday, I believe.
Okay.
It's so funny when you don't have anything to talk about. Everybody talks about things like that. This isn't a high topic of conversation. Again, the calendar is great and it gives you the context around.
Yeah, you got CPI, what is this, on Wednesday, and then on Thursday.
Is it Thursday? Yeah.
You got PPI and Powell, and then also some Japanese and Chinese data that night. So a heavy week for data, but what, you're saying that nobody...
It'll be interesting. It'll be parsed through, and will rates move off of it? Yeah. But it seems like there are bigger things driving the market. So that's why you always take the opportunity to have the algos run the binary event. In other words, they'll run it up, run it down, depending. If we get a 0.5 print, treasuries will trade lower. If we get a 0.1 print, they'll trade higher. Whether or not they stick or that's what's driving this, there's bigger things at hand here.
Well, it's interesting because we went through, you and I haven't talked since FOMC went through on Thursday, and that was one of the most boring FOMCs in recent memory. And I think a lot of it probably had to do with the fact that nobody cares. Like, they were set to cut rates. They cut rates. Everybody asked about, is Trump going to fire you, or like, what the heck's going to happen? He's like, no, whatever. And the market was like, this is nothing. This is all nothing. And so it'll be really interesting to see if, the CPI and PPI, and don't throw the PPI off the table, because you and I both know that, like, the minute that you think one number is the number that's going to move everything, it's the other number. How many times we've set up for non-farm and been like, oh man, this is a big non-farm coming up, and it's the, JOLTS number 2 days before, and then non-farm is not so much. So we're going to watch everything, but it'll be what the numbers are and where the market moves after the event. Obviously will be interesting. But what'll almost be more interesting is, like, does it matter, or is the overall trend of this market, which is dollar strength, equity strength, crypto strength? Metals actually seen two sides more than anything, although
gold took a beating and silver down $1. Yeah, that's a big move. So,
are those trends more important than the state of inflation and employment at this point?
I think that movement is much more interesting than trying to gauge whether there was a bump up in inflation numbers for 1 month. I think, and you'll see the market. The only thing that's interesting for that is, how does the market react, given that we're the high end of the range for the dollar, the low end of the range for these currency pairs, with a higher or lower inflation print. It may have a different reaction than if we were up at 112, we're down at 107, sub 107.
Yeah.
So
well, that's
the more interesting aspect of it. And again, these numbers are just opportunities to take advantage of movement. Don't try to guess what it is. Set your ranges. Look for opportunity depending on what you want to do. If you're a momentum guy, you're either looking to, if there's a 50 pip rally on a soft employment number, you're probably looking to sell that in euro, because the trend's going to continue lower. If you're a contra trending guy and the print is high, you're going to go and look to cover that. Pick up something in the low 106s. But short of that, and then you're going to set your management area around that, and just, it's either going to get there, you're going to get something, or not, and you move on. Don't let the macro consume your ideas, because right now you're getting ranges, you're getting two-sided actions, which is what you want as a trader. So momentum or contrarian, you both are getting opportunities here.
Yeah.
And why the market is showing you it is widening out. There's more elasticity in everything now.
Yeah.
So because we are getting gold is at a level we haven't seen. This is finally, remember, we're at 2,800. We're trading 26.65. This is the biggest shakeout we've seen since we broke through $2,000.
Yeah.
So longer term longs getting challenged a little bit. Start of the week. So it'll be interesting to see how that comes through.
Volatility is
Higher.
up
Right.
across the board. And so, yeah, you're looking at, for example, this CPI number, which is actually forecasted to be 0.2% higher than it was previously. And so, of course, you would want to say, all right, well, the expectation is 2.6%, Pete, and we have a euro dollar market here that's gotten absolutely annihilated. U.S. dollar is trading on its highs for the last several months. And so you want to say there's asymmetry in where this market can go around a number like this CPI, which 6 months ago was the most important number on the board. And so that would lead you to say something like, okay, well, this means that if we get, a 2.7 or 2.8%, then maybe we see another 50 pips or so
Right.
lower in euro dollar. But if you see, a 2.4 or 2.3, something closer to 2, maybe dollar gives back a lot of these
Right.
gains from the last week or so. But honestly, I don't
No.
feel that, and I can't say that.
Absolutely not.
It does. It feels like if we do get a 2.7 or 2.8, they might really find a reason to kill this euro and sterling and try to rally this dollar up again. And yeah, if the number does come in lower, then maybe you do undo a lot of the Trump rally in U.S. dollar, or whatever you want to call what's been going on the
Right.
last week. But yeah, all I can say, having no clue what any of these numbers are, what the reaction is going to be, is yeah, volatility's up across the
Yeah,
board.
so we keep that in mind, that we set our scalping ranges appropriately. Lots of stuff to trade here. Kiwi, let's take a look at Kiwi really quickly before
Yeah,
we check
sure.
out. And then,
Yeah, I mean, same as that Aussie, just
Right.
huge two-sided ranges and hanging right here, just shy of 60 cents, which if you go back historically, this 60 to 59 area has really been the lows in here. And so, yeah, man, I mean, we're not a
60
week.
cent Kiwi is cheap Kiwi historically. So
I could
just
take a look.
Kind of keep that in mind.
I mean, we've seen 66, 68, 70, and I'm sure if I go back to all the data that we have here from IG, you've got 80 to 85 cents. Jeez.
Yeah, you've got to go back to what, 2000. I remember trading 40-cent Kiwi. Yeah.
Holy smokes. If we get down there, there's probably going to be problems in the global economy.
Yeah.
Because the last time we saw sub 55 or 50, this is 08.
Let's jump really quickly. We got 1 second, 1 minute to go.
Sure.
Let's take a look at Mexican peso, because that was one that actually, the election trade, so to speak.
Well, this was a really interesting one here. I have the monthly, so let me go back to the hourly. This was a super interesting one because peso, I mean, I know that dollar is railing its head off right now against peso, but this was great two-sided trade. Not what you would have expected, Pete. At certain points last week, especially going into the end of last week, dollar had actually lost ground against peso. So classic.
Buy the rumor, sell the fact. And
Yeah.
so everybody above 20 pesos to the dollar, we got a spike up there. They tested it as far as they could, and some sellers came in, and we traded below 20 really pretty quickly. Now we're seeing the trend reestablish itself a little bit. So, but what we're seeing is, and you're down to what increment are you at?
This hour.
An hour, which is a good slice to take a look at.
If I go to the daily, and you can see that you're seeing this volatility right there at those extremes for peso.
So, and this reconfirms the fact of what you were saying. This is a dollar move. This isn't a peso move or just a euro move. Is euro getting hit harder than things like Aussie and Canada at the moment? Yeah, but they're all driven by the dollar. Now, sometimes we get currency-specific events that drive just that pair. I think this is that dollar trade continuing to play through. So it'll be an interesting week because we're starting out the week. Anybody who's short dollars right now is getting challenged in their position.
Yeah.
So it'll be interesting to see if they continue to build on this or we get a little bit of relief as we play through this. But with equities coming out of the gates stronger, bonds lower, I would imagine we probably see the dollar at least go through the first part of today in bid form. Whether or not they take something off the table, we'll see. But the ability to stage a rally has been kind of tough to do. So watch euro. Everything's at really critical levels here. So it's good to see the elasticity come back in, the ability to trade both sides come back in. Just widen out your ranges a little bit, give yourself a little bit more opportunity because the market is providing you that.
Yeah,
so good
cool,
stuff.
man. Yeah.
Great week. I'm excited about this. This will be fun. We got uncertainty out of the way, which again lets us trade market movement, which is really important. So,
Yeah, man.
Guys, coming up next, Tom Sazov, Tony Batista, Vanessa Logan. Stay tuned. We'll be back with you tomorrow at 6:30.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? tastytrade. Make your move.
When you've got a futures contract that's in contango, what does that mean?
Futures, unlike stocks, have multiple prices appropriated to them. That's known as the forward curve. So when a futures forward curve is in contango, that means that the front month is trading cheaper than the corresponding futures back month. So you'd see that forward curve most likely looking like this in terms of prices.
And backwardation, what does that mean for futures contracts?
Backwardation is the opposite of contango. So where contango front month futures contracts are trading cheaper than the back months, backwardation is the opposite. So those front month futures contracts are trading richer than the corresponding back month contracts.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, cover calls, iron condors, jade lizards, become a trading mastermind. Get the guide at tastylive.com/guide.
Want to know what you're getting into before you dive in? When you trade options at tastytrade, you see your probability of profit and loss right where you need it. tastytrade. Make your move.
Get tasty, pre-market. Come on, you know it, can you feel it? We got some things to talk about. Pre-market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Hey, Nikki, what are you doing here?
I mean, somebody's got to do this job, right? I got to fill these shoes, this seat.
Somebody's got to do it, and somebody's got to do it well. We'll see on Friday if you do it well. Welcome to the show. Filling in for Tom Sodnoff is my oldest son, Nick Batista. Thank you, son, for coming in. Of course, we have the lovely Vanetta Logan. How are you, Miss Logan? Did you have a nice weekend?
I'm just getting ready for a week of just bat versus just bat, just nonsense.
I still think they should put you in the middle. Can we make that adjustment? Come on. A bat sandwich.
Fix it anyway.
Is that too much?
I'm excited. I like the change in energy that this brings. So we're just gonna see what happens. How are you doing?
I made changes already. Do you notice the screens? I pushed the screens down.
Yeah, we can see you now. Yes. Usually you're blocked. He has like the cone of silence wrapped around him because he can't see, and he needs to get real close to the screens. It's horrible.
Yes.
Anyway, I don't know. Do you say Happy Veterans Day? I don't know what the political correctness is, but it's Veterans Day, and I got to thank all the veterans out there. So
yeah, happy Veterans Day. Both of my parents are veterans. They were both Air Force, so I was like, just go get all the free stuff today. And my dad's like, that's not why I did it. I'm like, yeah, but you get free stuff today.
My father was in the Navy, I think by default. I think it was the only one that would take him. And lucky we live in the greatest country in the world that I haven't had to serve throughout my lifetime. So good job out of everybody.
Are we sure your dad was in the Navy, or was that just an excuse to go away for a couple of years?
There may be some truth to that. I know he was younger than he was supposed to be. Maybe it was juvie or the service, and I think he went to the service instead.
Yeah,
he was already hanging out at the docks anyway. So
that's right. It was a quick. All he had to do was jump on this time legally instead of trying to jump off. He was always trying to jump off. Now he could just jump on. Yeah.
Well, big news for you, Nikki. You moved. You got a new palatial estate, I guess.
Yes.
That's right. That's right, ladies and gentlemen. That's right. This man right there, he's got his own pad. That's right. He's paying taxes.
Congratulations.
Thank you. Yes. It was a little busy weekend. I also went to the Bears game yesterday,
first place that you've bought?
Yes.
Congratulations.
Thank you. Only took me 9 years of service under Sosnoff.
Say again, Nick?
It only took me 9 years of service under Sosnoff to get to this point.
Man, most of us had over 10, so you did good.
It's true. That's true.
The expected move was a little bit higher.
Yes.
Right inside the expected move. Yeah.
So tell us about your new place. When are you having us over?
It's tough. It's a hard invite to get. Okay, there's a big wait list. You guys are there though. You guys are there soon.
So wait, what I think is funny is your other building you lived in. It was the same building as your sister, right?
Yes, I keep it in the family.
But now this building, you live on the same floor as Mikey Butler.
Are you trying to dox us? Yes.
I just love that you have your emotional support person in every building that you move into.
Yes. Yes.
He likes to be around friends and family.
Yeah. I'm a family man. I'm a man of the people, okay?
Yeah.
Does Mikey get a commission?
No.
Did he get a referral? Did he get no referral?
That would have been smart to look into, but I don't think so.
Are you guys gonna tear the wall down and like build bunk beds? Like, what's gonna happen?
Yes, actually, yes, that's the plan.
Well, there's an apartment or two that separates you, right?
Yes, there's a lot of apartments.
Yeah, a lot of apartments are.
Yes.
So they're not gonna be able to do that, but it would have been fun.
Yes.
What are you doing for like your female influence on the space? Like, who is helping you?
I I got
that
this.
That spot is open. Believe it or not, ladies and gentlemen, with all he brings to the table, that spot is open right now. So if you have any feminine design,
it's 7:06. It's 7:06, guys. So I got to get roasted here. I've been up for 6 minutes.
Roasting you.
Jesus.
I'm proud of you. I'm super proud of you, and I'm just busting your chops because I don't want there to be a pyramid in the middle of your house.
Yeah, I'm thinking, pool table, darts, really make it a man cave.
Oh, Nikki.
Joking.
Oh, Nick. I know.
Come on.
Wow. I love this for you. I'm super excited. Do you have like your audio visual stuff set up so you can watch all the games and all the sports ball?
Wait, is yours are all your walls pink?
Almost.
All pink and you have 12 cats?
I don't have 12 cats.
She's working on it.
I have a nice TV,
right now, so
a nice
I'm
couch.
cat-free.
My bathrooms are pretty.
I'm sure you got a bunch of boxes hanging out. I mean, you just moved this week, right?
Yeah. But we're working on it.
Well, that's good. I will leave you be. Bat, how was your weekend?
It was great. I met my niece for the first time, legit niece, not the one that Francis usually would meet. That comes from Florida. This was
that's
my
right.
real...
I forgot you flew to Jacksonville.
Yes.
Oh,
yes.
How was the wedding?
It was very nice. They made me feel, and my wife and Vinny came with us, of course. They made us feel very welcomed. I was in all the pictures. I was a little surprised. They put me at the end of all the pictures. And I asked them later on, why am I on the end of all the pictures? Like, well, in case it doesn't last, we can crop you out of the pictures. So
we have the
that.
technology.
Yeah, there's that. But it went really well. It was very nice. I met my two nieces. I met my nephew and extended family, and it was very cool. It was very nice. It was very welcoming. It was wonderful. They were very nice people. It's been a great. For those who don't know, I met my sister about 3 years ago through 23andMe because my daughter, Nikki's sister, did 23andMe, and my dad had
promiscuous.
Was a Rolling Stone.
He was promiscuous.
Yeah, that's one way of putting it.
At this rate, we're gonna have like 60 Batistas all around the country by the end of this decade.
Yeah, you might. But it was great. It was sad. I mean, it was kind of a windy-ish day, and they were like an inside courtyard outside. And the moment she walked down the stairs, or about 5 or 6 stairs, it started to drizzle. And by the time she got to where she was supposed to stand, it was downpouring.
Oh, no.
Yeah, and she started to cry, and I cried. So it was, yeah. But it stopped. It stopped about 10 minutes later, and everything went on, and it was great, But, water makes things a little messy.
Those sun showers or whatever they call them in Florida, I mean, it's supposed to be good luck. But look, if I just spent 6 hours in hair and makeup, I'm gonna have words with people.
and Chris was wearing a white shirt like this. So unless we wanted to put a pole up in the middle of the, we had to get her someplace dry pretty quickly.
Oh, Florida! Yikes!
Yeah.
Oh, but I'm glad that's nice. It's found family, so that's really nice.
Yeah. They all said, "Listen, it's really nice to meet you this time. Hope I don't see you again." And I said, "I agree. I understand completely." And it was good after that.
Oh, that's not true.
But it was fun. We had a great time. We left on Friday. We were home Sunday morning, so it was just a quick little trip.
Oh, that was a quick little jaunt too.
Yeah.
You didn't take the RV though. This was a plane trip.
It's sold. It's gone.
I know. No more RV trips. This would have been perfect for you guys.
No, because I would have gotten there when the wedding was over, and I would have turned around and come back and got here late for the show if I had driven down there. It takes like 2 days, at least for me it does.
I am following on Twitter. They out of Chicago's Union Station, Amtrak just unveiled a new route from Chicago to Miami. Do you want to guess how long that takes by train?
Ooh, I should know this because I did that with my mom back in the late 60s. So
well, it's back, and so they sent 2 like Chicago Tribune reporters to ride the train, and so she's like live tweeting.
17 hours?
Yeah, it's gotta be
How long?
more than that.
46 hours.
How many?
46.
Oh my God.
I don't know the trader way to do that.
46.
But,
4
6. Yeah.
4 6. 46. Yeah.
And you know they're not on schedule.
Wow.
Yeah.
Wow.
And I was like, who wants, and it's expensive. And I was like, who wants this?
Oof. Yeah, that's gonna be a hard no, dog.
Yeah. But Nikki, for spring break, you and Mikey could ride the rails.
All the way to Miami. Yeah.
Not like what you're used to on Halsted Street.
No, I would rather just like buy the flight. Save me the
I know, right?
46 hours.
Right?
Yeah.
Just brutal.
46 hours of luxury confinement.
It's a way to see America.
Yes.
I guess. I don't know. But speaking of getting out and about, Tom Sosnoff just finished, I think, his first show, 1 down, 4 to go. He's in Edinburgh, Scotland. Brittany posted some pictures. I was asleep because I should be allowed to sleep.
He
But it
paid
looks like
us.
Tom's show.
We got paid by him. I don't know what happened when he flew over there. I think he had like a jet lag or something, or he just missed us so much. We got paid on a bet.
We got paid on our football bets and other bets that we've had. You know, you are so lucky, son, that you live in this generation where there's Venmo and Zelle, because Sosnoff went back in the day when he would lose these $20 bets, you would have to give him $100 to go away. Like, it would all week long, he would be trying to bet with you on anything that was an advantage to him so he can get his money back and some. Now you get paid. It's
Wait, I thought
bread.
he had Indiana and that you guys had Michigan.
He did, but we had 14 and a half points.
Oh, because they didn't cover the spread.
I thought for sure that would be a talking point for me for at least 2 or 3 weeks. You know, on Johnny Trades, I could talk about, you know, how he owes me that. I thought there was no way that he would pay that out this quickly. So I'm a happy man.
The only reason you got paid is because he had to pay Scott and I also.
That's true.
And we've been paying him when we lose. So that's the only reason. That's why you got paid $40 because you had another win from like a week and a half ago, right?
Yes.
That was on your own.
Yes.
That's why you got more. Oh,
wow.
I was gonna. Oh, that's funny. He just traded, so now I can text him that Tesla is up 23 and coin is up 35. I can make his day.
Well, maybe the fresh, I don't know, British Isle air makes him more generous. I don't know.
I don't think so. Let's see what he says here after I text him this. Let's see.
Okay.
Coin up 35. Good morning. I'll say to him. Yeah, okay. We should get a minute. We should get an answer any minute.
What time is it there?
I think it's like 2 o'clock there, maybe.
1 o'clock. I think about 1 with the time with daylight save.
Oh yeah, I have no idea.
About 1:15. Yeah. Yeah, he had a pee break.
So he's on his 3rd meal of the day.
He just texted me back in oi.
Oi. Yes, but at least the exchange rate is working in his favor with the euro, so that should be nice.
Yep, that is.
Ask him if he got me my Scottish sweater.
I'll ask. Hold on 1 second. I'll do it this way. Did you get Vanetta her Scottish sweater? I got a Vanetta. Got it.
You want my sweater?
We'll find out.
Speaking of messing around and finding out, what are your thoughts about the Bears?
Oh, he was at the game.
I was at the game.
You were at the game?
Yeah.
It was pathetic, awful, anemic. These are the sort of things that I would describe, the ways I would describe the Bears. It was one of the most awful experiences I've ever been to.
Can I ask how much did you pay for those tickets? Like, were they cheap or are they still?
A friend of mine got them, so they were free for us.
because you're DraftKings degenerates? Is that how you got this?
No, this was outside my DraftKings whale status.
Okay.
Sometimes you can't afford free, son.
It was a rough game. It was really tough.
I asked you this actually via text yesterday. What are the fans saying? Like, what are they saying?
I mean, the whole stadium, it was booing pretty much the entire game. It's awful. The whole coaching staff has to go. They have to fire them all this week. If we don't, it's only going to get worse. Just clean house. Got to start new.
It makes me so sad, and it's just so frustrating to see this kid just get sacked within an inch of his life every Sunday. Right. And it just seems like he doesn't have any support, and that he is a great talent, but we're not developing it properly. I don't know.
Well, he's surrounded by receivers. I think he's surrounded by an offensive line, but that's neither here nor there. It's hard.
The play calling, the coaching, they've lost it all. They've lost the whole locker room.
Belichick, baby. Belichick next year.
I was talking about that with Ryan and John before the show. Just throw whatever number he wants, give him whatever he wants, and start fresh and change the vibe and the culture of this place. That's what they have to do.
Yeah, but hasn't the league changed? Like, aren't we going to like younger coaches or more? Like, I don't know.
Yeah, those coaches exist, like a Cliff Kingsbury or Ben Johnson or something like that. But what the Bears will do is they'll hire some no-name person that they think is like this amazing person for cheap, like a Nagy or a Trustman or somebody like that, where they're just not. It's just not what you need for a restart. You need a good coach.
Well, never forget they fired Lovey, and we were 10-6. Justice for Lovey.
That is true.
I hope Lovey cursed the franchise. So deal with it.
I believe he did. Ooh, Tom wrote me back. He said he got you 2 of them. Vanessa.
Yay!
Yeah.
Wow.
Typical Tom answer. Yeah. That's right. Give it to him.
That's fine. That is what it is. Anyway, we are in for a fun week. All week long, we are going to be having special guest appearances by the research team. And Tom is gone, so we don't need him. So we got Bat versus Bat all week long. So it's going to be a wonderful week here on Tasty Live for you today on this magnificent Monday. Just a little taste of what you can expect at the top of the 8 o'clock hour. We got Options Jive, and for Research Corner, we got Kai coming in, the general coming in at 8 o'clock, and then 8:40 Skinny on Options Abstract Application. Dr. Jim's going to be in going inverted on an iron condor. We know you can go inverted on strangles, but what about a defined risk strategy like an iron condor? What happens there? Did the Lions win?
Ooh.
I didn't watch.
I know they played Houston, but I was not paying attention.
They did win 26-23. I just looked it up.
Okay, so Dr. Jim will be insufferable. That's all I was just checking on. That's all I needed confirmation on.
I thought he was Miami.
He's a dog. He's whatever is.
He's got like 2 or 3 teams in every.
He's a
sport.
Dolphins Lions. He's a Dolphins Lions guy. But I think Tampa Bay was also good. I think Baker Mayfield had a good game, so maybe he'll be a Bucks fan today.
He was a Bucks fan when Brady was playing.
Right.
I gotcha. Right. Okay.
Yeah.
And the Dolphins don't play till tonight. And he was almost a Jacksonville Jaguar fan because they almost pulled it out yesterday against the Vikings. So
that's
you got a lot going on.
Anyway, but he's going to be in. Talk about going inverted on an iron condor. Then 9 o'clock, we have a market measure headed your way. Why neutral strategies may dominate. And God is going to come in for that, help break some of that down at 9 o'clock. And then my personal favorite, live from the trade desk, big boy Scott Sheridan, counting down all the top trending tickers over at Tasty Trade. It's a pretty sausage-heavy show, but that's fine, I guess. You do you.
Well, we got you.
It's a lot of dudes. Yeah, barely, but that's a lot of dudes for the rest of the day. But fair. We are gonna have some fun. You guys want your daily dose?
Sure.
Hit me with my theme music. Let's go.
Our leading story. Breaking news.
Across
the wire.
Leading story.
Top story. It's just in.
In today's headline.
This just in.
Breaking news.
All right, everybody. Today is a magnificent Monday. It is November the 11th. As we mentioned earlier, it is Veterans Day. Happy Veterans Day to all the men and women and animals who have served for America's armed forces. We thank you for your service. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name is Vanetta. Are you ready for the news?
Ready for the news.
Are there any earnings, Mr. Bat?
Well, like
Mr.
I was saying a moment
Senior
ago,
Bat, I should say, I guess.
there are earnings like Shop and Home Depot, Mosaic, a few others. But when you've got Tesla up 23 and Coin up 35 and Goldman Sachs up 9, you'll probably find something else to do besides earnings this afternoon. But we'll see.
We don't need no stinking earnings. Hey, well, getting to the first headline of the day, the dollar's bracing for U.S. inflation data and several Fed speakers after just a crazy roller coaster of a week last week. The dollar started the week in a cautious mood. Looks like you're going to get CPI on Thursday, reports on retail sales and industrial output due on Friday. Some more news coming out of China. You're going to get some Fed Reserve speakers this week. What's the indicated move for this week, and how long can the market sustain these new highs?
Yeah, it seems like it can go on forever. It typically stops on a dime. I really thought it's a little bit extended here, but you know what? You just mentioned the euro. The euro's making new lows. It's the Bitcoin and commodities are going high. Everything is going higher. It seems like right now things are very pro business. So don't get in the way of this. Miss the first day, catch the second, third day of a down move.
How about for you, Nikki? How are your positions affected with the massive up move last week?
They've been pretty good. I mean, I played the upside, so I've taken a lot of positions off into this move. I agree with what my dad said of, not being the first, not trying to be a hero the first day of the move. On the other side of that, if you're long into this sort of thing, you take positions off as you have profits on the table, you take those off and you gain a little bit of short delta on the way up. So now I'm getting, a little bit short here, but I'm long some of the stuff that's gotten killed too. Like I put on some micro euro positions into that move. I put on some short premium in oil futures /CL. So I've got neutral-ish delta at this point.
One headline that I saw says, going to the next headline here, John, it says the fate of the post-election stock market rally may be in the hands of bond traders. My guess is that rates in the bond market will keep rising and get to a level that the equity market doesn't like, says one CIO. Let's just talk about treasuries and how you guys are playing them or not playing them this week.
Bonds are down 17. I'm talking about the 30-year. The notes are down equally on a percentage basis. They're not on their lows, but they're close to them. They haven't really caught much of a bid. They tried on Thursday and Friday to get a little bit of a rally, and now we're back to the middle of Thursday's numbers. Bonds volatility is good. Ivy rank is good. If you got a hunch, bet a bunch. Bonds are definitely in play.
Nikki, are you doing anything in treasuries?
Not really. That's just not my trade.
Mine either.
So it's genetic. Okay.
Yes. We're simple men. Okay. We don't deal with the 32nd, 64th, notes, bonds, 30-year, 10-year, 2-year, all this stuff. It just kind of trade equities. That's
we simple folks, son. We simple folks.
Yeah, simple.
Okay. Keeping it moving. Hey, this is bonkers as world leaders meet in a global climate summit I think it's in Azerbaijan, which I just like to say Azerbaijan. A shadow financial crisis has cost the world $2 trillion. Last month, two major storms, Hurricane Helene and Hurricane Milton, caused between $51 billion and $81 billion of property damage to the southeastern United States. But that's a small fraction. According to the International Chamber of commerce, extreme weather events globally between 2014 and 2023 have cost the global economy $2 trillion. That's roughly in line with the toll of the 2008 financial crisis. Again, as global leaders meet to talk about how they are going to address climate issues, it's now a thing in focus. But I was just surprised that the number was 2 trillion because that's a lot.
It is. I don't know what else to say. It's a horrible
Trillions
thing.
are the new billions.
But
Trillions
I
are
did want
new
to ask
billions.
for
You
you
are
guys,
right.
like, are you expecting with the new administration sort of a decrease in focus of like wind and solar plays and more concentration on fossil fuel like oil and natural gas stock plays?
It's hard to look at it. But listen, that's a macro view. I mean, you've got oil down $1, almost $1.70
I'll get to
down.
oil.
Yeah, $1.65 down 2.25% already. So oil's taking it on the chin for sure. Those solar plays are tough plays too. Not a lot of liquidity in there. So I mean, you've got your FSLR and the likes of those. Then maybe you can do something there. But again, fewer and far in between. You got solar kind of on its butt too. Although FSLR is a $192 stock.
Speaking of oil, you are right, Bat. Oil slips as U.S. storm threat eases and China stimulus disappoints. What are you guys doing in crude oil?
Crude oil, I don't have a position. Nikki, do you?
I do. I sold an iron condor in the middle of last week. If you look at oil volatility, OPX CGI, it's sitting at 38 right now. In the middle of last week, it was in like the 40s to 50 handle. So volatility in the oil markets has certainly been at the higher end of where it's been trading over the last 4 or 5 months, even at this mark. So there is some volatility to be had there. And oil itself has been relatively sideways. We've been chopping between 65 and 75 for, the better part of 2-3 months here. So I think if you're trying to get away from the gamma squeeze in the market that we're seeing, maybe going into oil is an interesting play for you.
Okay. All right. And I didn't understand like what you said. I thought that was just your Wi-Fi password.
that actually would be a really good one. Incorporating the colon in the middle of the letters definitely would put you at a strong password category.
Well, I'm glad that you know what you're doing, but just be careful. That's all.
Thank you. Here, would you like me to do my best Tom impression? I don't care.
No, don't do that.
So what do you think about oil? Are you interested in oil? No, I don't care. I don't care.
I don't care.
I don't care. Who cares? Who cares?
Hey, this is crazy. So Bitcoin reached a fresh all-time high near $81,000 and futures premium soared. Over 2.8 billion has been bet on Bitcoin, topping 90,000. Open interest in Bitcoin's price running above 90,000 rose to more than $2.8 billion on the popular Deribit derivatives exchange. It's one of the few crypto native platforms that offer futures trading. Hello. But what are you saying about this move in Bitcoin? Is it here to stay or buy the rumor, sell the news?
Actually, 83,000 on the futures last night, Vanetta. 83,205. It's 82,600 and change right now. I don't know if this is the beginning of this huge bull run. Obviously, it's a new high. But I will say one thing that we got right. We talked about years ago about how maybe those fringe players, or not the miners like the Riot and the Mara, they would be like good proxies to trade, but they're not going to match the movement of the product itself, like Bitcoin itself. And if you wanted to get long Bitcoin back in the day, get long the physical and not really these fringe stocks. There's been no fringe, and I don't mean fringe stocks, like mining stocks that participated in any magnitude of the move. Most of them are closer to their lows than their highs. So
but
we got
let's
that
look
part
at
of it.
Coinbase this morning. Massive up move in coin.
Well, Coinbase is something different. Coinbase, I don't even think was around when we were talking about this.
True.
But yes, you are correct. Coinbase is up like $35 this morning. Coinbase is just a runaway train. Coinbase trading 306, almost 307 right now, and it is near its highs.
Good.
You got to remember
job,
something.
Coinbase.
Coin started the week last week. Nikki, what was it, like $180 or something like that?
Around that, yeah.
It's 306.
Nikki, what are you
More.
doing in Bitcoin or Coinbase or MicroStrategy or any of the other?
Well, if you read the cherry picks on Tuesday last week, we featured Bitcoin. Talked a lot about October and into November and into the end of the year. I know Tom, didn't really talk much about it on the show. So if you missed it, I'm sorry. We've been having Ryan on our Option Trading Concepts Live every Monday. We'll have him on today. Had a absolutely timely and beautiful segment last week about Ethereum and Bitcoin and kind of the divergence in prices there. Suggesting maybe to get long Ethereum as well. Just alpha getting thrown around on the other segments.
Yeah, so that's right. Yes, Ryan from Tasty Crypto will be on your show today. He's a wonderful resource. Make sure you're following Tasty Crypto on all social platforms. They are doing wonderful work over there. Hey, keeping it moving, Tesla. This was just on Friday. Now I don't even know what the number is, but Tesla hits $1 trillion market cap as the stock continues to rally post-election. Tesla shares were up 8% on Friday. That was enough to push the company's market cap past $1 trillion. The stock was up 29% last week in just a massive move. It seems to be continuing that today. Let's talk Tesla.
I've only bought dips in Tesla throughout all of Tesla's trading. Like I've only traded it from the long side, and I've done quite well. About 5 days ago, right before this monumental move to the upside, I did a delta neutral, maybe slightly long strangle, and it has become, or it's already tested. I mean, 3 days on a 90%
I'm sure you're
drop.
getting blown out. Yeah.
Yes. So Tesla's gonna be my thorn in the side today for sure. So Tesla to the upside.
Should have done a Jade
today.
Lizard because you have upside protection.
Should have. Thank you. I really appreciate that. It makes me feel a lot better. Thank you.
Super helpful.
Yeah. So Tesla today will be inverted or buying the guts and selling the wings or doing something different. Tesla's gonna be a pain. It's gonna be a pita, as I like to say.
Nikki, how about you and Tesla? What's good or what's bad?
I have an upside broken wing butterfly there that's kind of right at the money here. I think you got to, just in general with Tesla and Coinbase and MicroStrategy, just kind of the stocks that have been in focus the last week or so. You got to be careful with these trades, and there's tons of call skew in all these products, and margin requirements and volatility are expanding in those products. So don't be a hero if you're trying to be long or short them. Maybe look at diagonal spreads or calendar spreads, something like that. I think a lot of people are going to get hurt on both sides being short premium in both these stocks, unless you can hold that position. It's not something I'm not trying to sell strangles in Tesla in my Johnny sized account. I think that's a big mistake.
Yeah, you're gonna use even if you're gonna do something like that, you're gonna do like an iron condor or something with defined risk.
Yeah.
Even if you were if you're gonna go into I'm talking about any $300 stock. You don't have the buying power to do a naked strangle.
Yes.
One of the advantages of a smaller account. I'm working my way there to a smaller account.
Yeah. You'll be there soon.
You'll be there soon. In other automotive news, Nissan Motors is going to cut 9,000 jobs, or 20% of its global manufacturing capacity, the automaker said last week, as it scrambles to reduce costs by $2.6 billion in the current fiscal year amid a sales slump in China and the U.S. The plans underline the vulnerability of Japan's third largest automaker. They never really fully recovered from the disarray that led to the 2018 ouster of Carlos Ghosn. Remember, he ran away and it was a whole big scandal. Yeah.
Yeah, there was a documentary on Netflix.
They put him inside like a music case. They put him in like it's a crazy.
Yeah, it was pretty good.
It's a crazy story there. But also getting to chip news, U.S. has ordered Taiwan Semiconductor to halt shipments of advanced chips to Chinese customers that are often used in AI intelligence applications. The Department of Commerce sent a letter to Taiwan Semiconductor imposing export restrictions on certain sophisticated chips. It comes just weeks after TSMC notified the Commerce Department that one of its chips had been found in a Huawei AI processor. So ruh-roh. TSM, not sure what you're doing there.
Yeah, it's trading $172 and change. It looks like it's up about 30 cents, but it's on the low end of its range.
What about other chip stocks, Nikki, Tony?
NVIDIA has
AMD.
earnings coming up. I think, is it this week or next week? The 20th. So next week.
Yeah, NVIDIA has earnings next week.
Yeah, so that'll be a big one. I hate to do this because I know Tom will not participate in this if it gets to where I think it'll go.
Okay.
But because he'll capitulate. He'll take like the first $1 or $2 and get out like he did in China, in the China names. But I think the sneaky play on the board right now is Intel.
Okay.
I mean,
the laggard.
If you're in the Trump, we're gonna bring everything home and make America great again, you'd think that America's biggest chip manufacturer might get some handouts or something like that, and it's sitting at lows. So I don't know.
Well, it's you are right. It is well closer to its lows than anything near its highs. Even
please don't say that it's up $2 on the week.
It's up $4 off its lows, but I'll give you this:
it's trading where it was back when you guys were on the floor.
That is true. It is true. It's $25 off of its 6-month high.
Yeah,
so
it's erased 30 years of gains. I was
That's correct.
I was still in your loins the last time this was trading at 20. Okay.
Actually, you had been dispensed a few times, and we had to put you back in. But yes, you
No. I was a good swimmer. Still a good swimmer.
No. Beth
hey, must not be watching now.
Keeping it moving. This is crazy. Chegg. Remember Chegg? Well, it's on its last legs after ChatGPT sent the stock down 99%. There are doubts about whether the online education company will be able to even pay its debts. I think it's just CHGG. I'm pretty sure.
It's CHGG. You are correct. It's
yes,
$1.70
So the stock
is
down 99% from its highs in 2021, erasing $14.5 billion in value. They've lost 500,000 of paid subscribers. Revenue keeps dropping quarter after quarter, and it's not great news.
No, it's not great news. This one we avoided to the downside. We really did talk a lot about it back in the day. Chegg, no bueno.
I mean, but this is a certified kill shot, if you will, by OpenAI. Yeah. Like you could trace the line directly back to OpenAI, right?
Yes, you certainly can. You certainly can. Nothing to say here, but avoid it. Listen, if you think they've got some of their parts that's worth something, it's $1.70 stock. You know your risk.
Nikki, does it make you mad that Vinny has access to all these tools to get his homework done instantly?
Well, before you answer that, Nick, and I know I've kept you at the dining room table for a few hours, even when you didn't have homework, just because I sometimes didn't believe you that you didn't have homework. He now can take a picture of a math equation, just a picture, and it'll spit out the answer.
Yeah.
It's amazing.
It's good. You have access to all the answers. Now you got to do something with it.
It still gives you a D. It still gives you a D.
Does it?
But you get the answers. Yes.
But it spits out an answer. Hey, speaking of Gen Z, this is crazy. You're never going to guess this. Well, maybe. These are the top apps that Gen Z adults, so we're going to say 18 to 24, downloaded this year. What would be your guess is the number one app downloaded by Gen Z? It's publicly traded. You guys don't trade it a ton, but you can trade it.
Was it that one from last week? I know we mentioned that. I forget what it was. I forget right now. I'm so sorry. Go ahead.
Do you have any guesses, Nikki?
I don't know.
Because you'd think it's like Meta. You'd think it's like Instagram or like Facebook, like WhatsApp or whatever. But it's crazy. The number one app downloaded by 18 to 24-year-olds, Temu. Yes, the Chinese retail site Temu, which is PDD, is the number one most downloaded site by Gen Z. It is then followed by TikTok, and then Meta, and then ChatGPT, and then an app called CapCut, which is also part of, I think, the TikTok family. But I was surprised that Temu was number one.
Yeah, Temu trading $118. Looks like it's up around 30, 40 cents. But even the S&Ps are up 18 or 19 this morning. You ever buy anything from Temu? Now your brother Vinny has, and I have my own thoughts on it. What about you, son?
I have not. No. But half of the stuff you get on Amazon is probably Temu or Alibaba anyway. So it's just different branding. It's all coming from China.
You're 100%. I mean, not 100% correct on that. There's a lot of truth to what you say there. 100%. I know you just bought something for a washing machine. I thought you were going to mention it. That was an off-brand, probably something from a Temu. What would you call it? A drop shop? You know what I mean? Like where they
drop shippers.
No, I was trying to replace the gasket on my washing machine, and it was not the right product, unfortunately. I went aftermarket. I mean, the OEM was a little bit more expensive. I cheaped out on it. Well, the OEM I couldn't get. That was the biggest problem. Yeah. So I had to find one aftermarket that didn't work.
Nikki,
you gotta go original products.
So now I'm just buying a new washer dryer.
Are you trading in any?
I can't get the gasket. I've ordered it from 4 different places. They say it's available, and then they cancel my order. And they call me and say it's a 60-day wait to get the stupid gasket.
Before you do that, can you try Apt?
Yeah, I went to Apt and bought a brand new washing machine, washer dryer.
Next time you got to tell me I got a guy.
Oh, you got a guy at Apt? There's 6,000 guys at Apt. You walk in there, there's more salespeople than customers. It's the mecca of sales. It is the greatest place I've ever walked into.
I got the manager 30 years. I got the guy for you.
Yeah.
Next time. Son.
You got a guy that has one that fell off the truck and saved me $2,000?
I don't have that guy.
That's
anymore.
The kind of guy I need. I don't need Joe Schmo, okay? I need the guy that knows a guy.
You guys are super chatty today. Hey, iPhones seized by cops are rebooting themselves, and no one is sure why. Police in Detroit are sending out a warning about what they suspect is a new security feature in iOS. This is a funny story. So they had like a bunch of these iPhones in lockup, and they were in the cops' custody, but then they just started rebooting without warning, and the devices like were in airplane mode, but they were saying that it makes it harder for cops to use third-party tools to break into the phones and to root around. They're not sure if this is a bug or if this is a feature, but if Apple tells me that my phone won't narc on me, I'm going to buy more iPhones. Obviously, there's bad implications for this. There's good implications. I don't know. I just thought it was a funny story that phones in lockup were just rebooting themselves, and the cops were like, we don't know what to do. So Apple.
More importantly, Vanetta, what do you got to hide? Apple $2.25 and change. Looks like it's down around $1. Apple being a little bit of a bucker.
I think all that Apple, Microsoft, Google, Amazon money is fueling all the other stuff, the Teslas, Coinbase, MicroStrategies. I don't think there's not enough liquidity to go around to all those things, and so I think that's what you're.
It's a rotation. Yeah.
Yeah.
John, I'm skipping a bunch of more stories here because the bats are chatty.
Sorry. I don't get the spotlight all that much, so I got to take advantage.
But no, this is a crazy story and also sad. hackers keep stealing tickets from people's Ticketmaster accounts. If you haven't changed the password on your Ticketmaster account recently, you probably want to. I heard a couple of anecdotal stories of some Swifties who went to Indianapolis to see the show, and when they went to go scan their tickets, they're like, these tickets have already been scanned, and they're like, how is that possible? And then it makes you want to just go fight the people in your seats. But sometimes even the people that bought the tickets, they don't know that they were stolen either. So it's all like, it's a whole big thing, but Ticketmaster has been hacked. But they were like, yeah, no, your password's probably fine. But if Ticketmaster tells you something, they are lying.
Do the hackers have to pay the enormous fees too?
I know.
Do the hackers pay $50 a ticket?
The fees for it? They can't even protect your account. What are the fees for?
The fees are for the right to be hacked.
I don't know. LYV is Ticketmaster Live Nation, and I hope they go out of business.
Yeah, I don't blame you. Live Nation trading at 119. It's hard to tell where this stock. It looks unchanged, but it's not too far off its highs. Maybe you did something there. Ivy ranked a 50, but it does has earnings. Oh, it's got earnings after the close today. I never trade Live Nation. LYV. We'll take a look at it.
Take a look at that. Hey, here's something that's interesting. You might have mixed feelings about it. The Beatles, yes, the iconic Beatles, their final song, restored using AI, is now up for a Grammy. What do you think about that? So you get like an AI John Lennon in there, like, so they had this song, so it is their IP, like they had like written parts of it, but it was unfinished because, you know, people die. But now they finished it using AI, and now it's up for a Grammy.
You know what? The music that these kids play today is all generated anywhere, someplace else. Nobody's voice is really their own anymore. It's synthesized. Let them win the Grammy post-mortem. Who cares? Let them go.
All right.
What do you say, son?
No, I'm just thinking of can we use AI to like make Tom's trades good? Like after he puts out a bad trade, can we take the recording and have it like spit out an actual good trade on it or something like that?
That's funny. Hey, I'm bringing this up because I have two knowledge experts on this subject. This is actually kind of funny. Be careful if you are a parent and you are excited about the new musical blockbuster release Wicked coming to theaters this month. Mattel, in collaboration with the movie, has unveiled a line of like Barbie like Wicked dolls. But if you flip the package over, it sends your kids to wicked.com. The problem with that is wicked.com is a porn site. Wickedthemovie.com is the site for the movie. This is bad.
Oh, it's not good, but I don't know what to say. Anything.
It's not like
doing some research, and yes, you are correct.
Wicked.com is a porn site.
It is in fact a porn site.
Yes.
That's amazing. How does that get past?
Because they're using AI or something. Probably they got rid of copywriters, and I don't know.
Yeah.
I don't know, but both sites feature people defying gravity. Oh. Okay. I'm just going to keep it moving there. Hey, this is great. Louis Vuitton has dropped a bougie pet collection, and it comes complete with a $60,000, yes, you heard me correctly, $60,000 dog house and a $2,000 dog bowl. What do you get the dog owner who has everything? Well, you get them Louis Vuitton. Well, this is ridiculous.
Yeah.
But he looks so happy. Look at that dog.
They probably got that from Temu, and it's only like $49.95 or something like that.
I don't know. But I pulled this just for you, Nikki. DraftKings released their earnings last week. I think it was on Friday. But a funny item in their earnings call was they lost $250 million in revenue on NFL games. And the company said they experienced the most customer-friendly stretch of NFL sport outcomes we've ever seen, which I thought was a very funny sentence.
That's why my picks league has been so bad, because I'm usually on the sharp side.
Yeah.
Got it. Well, DraftKings up $2 to 42, about mid-range for the year. Place your bets here with an IB rank of 13.
Yeah, that's bonkers. Hey, finally today for my viral video of the day. Do you ever like watch an internet video and you're like, I could totally do that, and then you're like, no, I can't. This is the clearest definition of that I've ever seen.
Only when I'm trying to buy Wicked tickets do I do that. Say that to myself.
The first 5 seconds of this video, you're like, I got this, easy peasy, and then it kicks up a notch. Watch this. So he's blindfolded, and it's this thing, and he's like, okay, I can feel where it is. You're like, okay, I could do this. How? How is he doing this?
Yeah, there's a couple of kids like this. They do other things like this too with a ball. So
yeah.
There's one where they put a ball, I'll let you finish.
Oh, it's all done. Thank you, John.
So you can buy this thing where it has like a little plastic ball. It's on a string, and you put like a headband around your head, and you hit it, and it's you just keep hitting it. So I thought, I used to be able to do a
speed bag kind of.
That's right. I used to be able to do a speed bag back in the day. So I tried this thing. I couldn't hit it 3 times. I threw it out. It's horrible. These kids are great.
That's fine. Well, you guys are great. This has been fun. Bats, what's coming up next?
We're going to take a quick 90-second break and come back. We got more Tasty Live after this with a little confirm and send. We'll be back in 90 seconds. Tasty Live.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
When you've got a futures contract that's in contango, what does that mean?
Futures, unlike stocks, have multiple prices appropriated to them. That's known as the forward curve. So when a futures forward curve is in contango, that means that the front month is trading cheaper than the corresponding futures back month. So you'd see that forward curve most likely looking like this in terms of prices.
And backwardation, what does that mean for futures contracts?
Backwardation is the opposite of contango. So where contango front month futures contracts are trading cheaper than the back months, backwardation is the opposite. So those front month futures contracts are trading richer than the corresponding back month contracts.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, cover calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Want to know what you're getting into before you dive in? When you trade options at Tasty Trade, you see your probability of profit and loss right where you need it. Tasty Trade. Make your move.
If you missed the live show, here's our cherry on top weekly recap.
The guys in Australia absolutely love it when they can make fun of you. It is part of the culture. If they have an opportunity to pounce all over you because you're an idiot, then they take every advantage of it in Australia. And
I welcome an Australian man to pounce all over me. Yeah, he could go down under.
Tom's going to give me a hard time for this. Can't believe I'm going to say this. I'm in a vulnerable state right now, so I'm going to say it. Taking tap dancing lessons. Come.
Oh, I have a system down. I cook them in.
Jesus, blessed. I can't. I almost tell you. I took your crap all freaking day long. I am not taking this. I want to get to Johnny Trades, and I want to go.
Get the full scoop by checking out the archives at tastylive.com.
Nicky, we are back, my son. It's time for a little bit of confirm and send. Before we do, let's take a real quick look at the market. Even the S&Ps are up 18. They've been up around 10 to 15 all night. They're trading near the higher end of their range, although they are 10 handles off of their highs. The Russell is the big leader in the clubhouse, up 25 and change, with bonds going lower, although they are off of their lows, down 9 ticks to 117.18. Bitcoin's the big story, 82,500 on where it is right now, 83 and change on its highs. I'm talking about the Bitcoin futures right now. Oil on the other side of the coin is down $1.75, and gold, we didn't talk about it all, down 2%, down $52 and change. You've got coin up 30 and change. You've got Tesla up 20 and change. You got a lot of movers. We'll get to them on the opening bell. Let's get to confirm and send if you don't mind. Earnings, cool. Shop, Home Depot, a couple others.
Cool, let's do it.
First question. Say I am long static delta and sell a call as a hedge. How do you know when to close the hedge if the underlying moves in the favor and or against you? So good or bad, how do you know when to get rid of the hedge?
It's $1 million question. That's why the idea of hedging is so hard, or just being naked long premium. Everybody asks, if I buy puts or I buy calls and the market goes up, what profit do you take? And that's the hardest question. I think if you're selling calls, it's a little bit easier because you only have a capped amount of money that you can make on that position. So I would still say 25 to 50% of the max value is what I would close at. But again, anytime you hedge, you can't hedge the tail event. You have to have a target in mind and say, you know what, I want to take $1 out of this hedge, or $2 or $10, whatever the value is, and then kind of stick to that.
Yeah. This reminds me, happiness is like it's a direction, not a place. You know what I mean? And when you're selling a hedge against something, you're trying to reduce delta. And when it gets up to your short strike or near your short strike, or you've reached your mental profit, as you just mentioned a moment ago, it's time to get out. That's the easy thing to do, right? That's the upside, or if you're long static delta, you sell a call at the upside move. The downside move is a lot harder. So for me, if I'm selling, let's say I'm selling a future, that would be the static delta. I'm selling a put against it, that would be my hedge. And the product continues to go lower, meaning I'm losing some of my. The product continues to go higher. I'm losing some of my delta, meaning that 30 delta that I might have sold. When it gets to around half of what my delta originally was, that's when I start to move up or close it. That's what I do. So for me, either way, the upside is easy. The downside is a lot tougher. No good answer here. Next question, please. If you take a position inverted, at what point do you uninvert, son?
Ooh, I mean, it's another tough question. You got to when you're inverted, it's the same value as the out of the money strangle at those same strikes. So you have to look at it like that sort of position. I think for me, I try to uninvert a position when I'm rolling out in time, starting kind of a fresh position, either a straddle or an out of the money strangle. But being inverted and having an out of the money strangle at those same strikes are the same position. And so I think the idea of being inverted is something that gets people in a tizzy. It really isn't anything different than an out of the money strangle from a value perspective. You have the intrinsic value on the table. That's the big difference.
Yeah, I totally agree with you. The only thing that I think you may have left out there is it uses a more buying power when you're inverted. Meaning if you're short a $100 strike that's in the money and you're short a $120 that's also in the money, so you're short the call and the put both in the money, it's going to cost you an extra $2,000 in my example in buying power. So I like to uninvert as soon as I go inverted. So that's just what I like to do. That's buying the guts and selling the wings. Like my son said, there really is no difference between the two trades as long as you're short the same two strikes. So do it whenever you really like. I like to do it immediately, if not sooner. That's just my own personal preference. Next one, please. On Tasty Live, I've heard you say trading options on futures is more capital efficient than options on equities. In that case, can you help me understand why you allocate the majority of your trading capital to options on equities? Great question.
So span margin, you get about 6x leverage versus options, which are somewhere between 2 to 4. So you get almost 2 or 3 times the leverage with futures versus equities. So that is correct. They are much more capital efficient and leveraged in that way. In terms of like allocating towards those positions, you're still, even if you're using more money, you have to kind of flatten that out, right? So if you have extra leverage in futures, you naturally use more in options to have that same sort of exposure in those positions. Like everybody gets hung up on the idea of leaving cash on the sidelines in any sort of fashion. But when you're trading equities and futures, you're already going to be 3, 4, 5x leverage to what your cash value is. So it's that same sort of idea.
Sure. And you got to remember, like ES options are 50 cents a point, not $1 a point. So you'd have to do 2 just to equal the 1 that you would do someplace else. There are a lot of different things, plus the limitations on the options themselves. There's only a few, like the ES, NASDAQ. You get into the Russell, markets get a lot wider. There's just not as many products, really, comes down to the answer for me. And I just stay all in the equities. I have no problem with you going here as long as you know that NASDAQ is $20 a point instead of $100, so there are different nuances there. But for me, sure, go ahead if you like to. I prefer the liquidity and the standardization of the on the equity side of the options. Next question, please. I use GTC orders set at 50% to close my trades. Is this something you do as well?
I don't. I think it gets clunky in my positions and order book and whatnot. So it's not something that I typically use. I'm also pretty much watching the market all day. So it's not something that, is needed for me. I think if it helps you sleep at night and helps you go out and do whatever you got to do throughout the day while you're not looking at markets, I think it's a great thing, a great tool to use. But for me personally, it's not something I use. I'm also more flexible with my positions. Like I'm not just waiting for X amount, and I'm sticking to that to the penny. I try to be a little bit more flexible with both profit and loss positions, day to day.
So I have a confession to make. I'll come clean. Intraday, I'll put orders in above and below the market to close orders that I close positions that I already have on, but I do it each day. Now I'm going to challenge everybody else. I mean, you set your I'll quote Tom, you set your VCRs to record a show that you want to see in the future, maybe each day or something like that. You can do this each day. Like, this is not something you need to, because markets move, things change. You may have wanted to set a Bitcoin sale at some point, 2 weeks ago at a price that markets move and change. You don't want to sell your Bitcoin there now that you're long, or you might have had a Tesla trade on that you might have wanted to close. You don't want to close it now. So I reassess and look each day at all the positions I have, and then maybe I set an intraday order, but I don't use GTC orders. Next question, please. I am caught in a short straddle where the underlying had a massive run last week. I know the mechanics call for me to roll up my puts, but because of the huge run, I'm worried the underlying will turn around and fall, and I get whipsawed. How do you handle a trade like this? Tesla would be a great example. Coin would be a great example today. What do you do here, Nick?
Another one that's always like the shoulda, woulda, coulda, hindsight type question. It's hard to trade like that, and I think rolling up the put, it always stinks. You don't want to have to do that, but the idea of the whipsaw, like if you get a Tesla, for example, if you get a 20-point down move and you rolled up the put, Friday, and you get a 20-point down move, right against your put, that's a positive for your position as a whole. Like the roll up costs you $2 or $3 or $5, but you gain back 10, 15, 20 of intrinsic value on the short call that's in the money. So it's always a shoulda, woulda, coulda, and you're never going to time the best, exact perfect time to roll up the put or roll out in time or whatever. But you have to keep in mind that it's that the whipsaw is a good thing for your position when you roll up a put. You want that to happen.
I know, but if you hadn't done anything, you'd make so much more money. I think that's their point, and I completely get it. I really, really do. This answer is pretty simple to me. I don't think. I just stay mechanical. I roll up. I reduce my delta by 25%. And if I get the scenario, like I'm going to have this in Tesla, and if I get the scenario let's say for argument's sake, I went from 20 deltas to 60 deltas now. I'm going to roll up to another 30 or 20 deltas and have my original tight delta that I had on before the move today. And we get a whipsaw back, I'll be flat, and then I can reassess. Yeah, I would have made back more money, but you know what? More times out of not, it's the best thing for me to do. So I'm gonna kind of say you stay mechanical. It's the hardest thing to do. It's the hardest trade I had an Apple position that I've been rolling since June, getting whipsawed back and forth both ways, and I probably would have gotten back to even or a pink scratch. I know you guys have a green scratch. I have a pink scratch. Where I was maybe 20, 30 cent loser on the trade, maybe 3 or 4 months instead of 6 months. But you know what? My magnitude of my move inside my P&L of my portfolio allowed me to put on other positions because my delta never got out of whack. So you can't really quantify how important staying mechanical is, but it really is important. Roll up the untested side, reduce the delta by 50%, and move on, and hope that you get whipsawed, as Nick said. Next question, please. Do you think we're just going to rally until the end of the year?
I do.
Here's a personal, no wrong answer here. A personal question. What do you think?
I do.
Of course, I'm going to actually agree with you. I think we're going to have some pullbacks. Obviously, you would hope that there's some two-sided action to the market. I don't see where volatility or anything else is pointing to anything else in the market. So
liquidity, my friend, liquidity, and there's lots of it.
The bond market may be the canary in the coal mine. If bonds go down and rates go high enough, that's going to take some money away from these high flyers. That would be my only thing. Volatility also would be the next one, but volatility is showing no signs of life. So that's smooth sailing there. All right, let's take a quick 90-second break. My man Kai comes in next. He's been coming on strong every Monday with a good little option jive. We'll do it again. We'll be back in 90 seconds with Tasty Live.
If you missed the live show, here's our cherry on top weekly recap.
The guys in Australia absolutely love it when they can make fun of you. It is part of the culture. If they have an opportunity to pounce all over you because you're an idiot, then they take every advantage of it in Australia. And
I welcome an Australian man to pounce all over me. Yeah, he could go down under.
Tom's gonna give me a hard time for this. Can't believe I'm gonna say this. I'm in a vulnerable state right now, so I'm gonna say it. Taking tap dancing lessons.
hold on, what? The two of you are doing tap dancing.
Yeah.
Oh my God! I want to come watch. Please, can I come watch? Don't make me come to your rehearsal. What do they call that? Not your rehearsal.
Oh yeah.
Oh yeah, you're coming.
Graduation, like his graduation.
When I do my recital.
Your recital.
Yeah, when I do my recital. Yeah, you're coming.
That's the freaking best thing you've ever said.
You're
coming.
You're coming. I'll tap in here one time. I'm gonna do it
with your hair. You're gonna look like Borat.
I've seen you play golf. I think you should take up tap dancing.
Thank you. See, I knew you had to get a criticism in there somehow. I appreciate that.
TP refuses to adjust his webcam, so he does the show like this. And it's the most Bill Belichick camera angle I've ever seen.
It's, you know what? A couple times I asked him to change it because I thought it'd be better.
Everyone in production has asked him. Every single person.
I decided it looks great. I love it. Just leave it the way it is. If he can get away wearing that shirt with that pose, he deserves it.
Oh my God.
Like Chilean sea bass. It's actually toothfish or whatever, soft fish.
Ugly fish is what they call it.
Ugly fish.
Yeah.
Right. Yeah. So it's Chilean sea bass. It sounds good.
I got a Chilean sea
$50
bass.
a slice. He just eats
What do you
up.
mean? Well, hold on. What do you mean you got a Chilean sea bass? If you tell me that you bought one and it's sitting in your refrigerator or it's been in your freezer for a few years and you just uncovered it, what does it mean you got one?
Every time I go to Costco, I buy Chilean sea bass because I like it.
Ew.
And how do you cook them?
Oh, I have a system down. I cook them in.
Jesus, blessed. I can't. I almost made it. I took your crap all freaking day long. I am not taking this. I want to get to Johnny Trades and I want to go.
Get the full scoop by checking out the archives at tastylive.com.
It was a great show. It was very inspirational and motivating.
I feel like you got to know each of the traders a lot better on a personal level. It was awesome.
This is my 10th or 11th live event. I thought the math was really complicated and it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
The beauty of Thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
The delta of paper is equal to the partial derivative of rock with respect to rock, paper, scissors. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
It's options. Jive.
That's right, Nikki. It's time for an option job. We brought in my friend Kai to help us out. Kai, how are you, my friend?
I'm doing great. How are you, Bat and Bat?
The General.
Good. Good morning to you.
Good morning.
All right, what do we got today? What are we talking about?
We talk about what was going on last week, and we give a little bit more information or expectation about what we're looking at for this week.
Perfect. Let's do it.
All right. So major index performance last week, definitely in the positive side, and much higher than the average weekly movement. Among all these four, probably Russell up a lot more than the rest of the indices, 8.7%, almost 9%. We don't even need to look at the historical data. These numbers are all way larger than expected move. Not expected move, the average movement. So the average weekly move for all these indices are somewhere between 1.7% to 2.5% if we only consider the positive move or negative move. So these are, the last week was different.
Yep.
4 or
Yep,
5
but they're all
standard
up huge.
deviations is what
Yes.
you're saying.
Yep.
Oh, was it 5 standard? Yeah, I didn't check that.
Something like that. If its average is 1.5
For
or
SPX, it's 1.7% if we only consider positive move. Nasdaq's 2.4, 2.5%. These are definitely at least two standard deviation.
2, 3 standard, yeah.
Yeah. Yep.
Tail
All right,
risk.
move on.
So next one, the next slide. So these are the data for expected move at the beginning of last week and also the beginning of this week. Definitely the implied volatility was much higher last week. We started 20 or 22 on Monday. So the expected move is 150 points for SPX, roughly 2.5%. The actual move is actually for sure is higher than the expected move. And this week we're looking at 66 points for SPX. Less than half of the expected move from last week. So let's see what's going to happen.
That's kind of shocking. I guess with volatility at 15, that's what you would expect. I mean, we went from a 20 VIX or a 20 vol futures to 15 in a week, so you would expect that 20 or 30% of the expected move would come in.
Yeah, it actually happened in less than 2 days, right? So we dropped from 20 or 22 to 16 in 1 day.
Mm-hmm.
So next slides, we're looking at if we start trading 45 days, one standard deviation strangling SPX. Back then, looking back, what is our position right now? If you put on this position 45 days ago, right now the position is actually trading at the upper end of this expected move. So it's still inside the expected move, but very close to the upside. So this is kind of what we're experiencing right now. It's getting closer. It's up like a 0.3% this morning, right? So it's getting touch on the expected move on the upside.
Yeah. There's not too much to say here. If you have any type of neutral or short delta on this play, you know you're being tested to the upside. Yep.
Right. And we haven't even talked about Tesla and coin yet.
That's correct. Beautiful.
Yeah, beautiful. So next one we're looking at the some major assets movement and their volatility. So this is the realized volatility or historical volatility we're looking at. So last week SPY. The week before, the largest move is actually crude oil's downside, negative 3.2%. So the week before. So the passing week. For the other major assets like gold, oil, currencies, bonds, they end up within kind of okay range, 1.8, slightly larger than the week before. But the most important thing is the internal volatility is much higher than 2 weeks ago. So although we end up in the okay range, but the internal realized volatility is really, really high. And
there's no, if you had positions on, and matter of fact, if you've ever looked at your 401k or anything else like that, you really should take a look at some of these products that you have here. They've 2 and 3 times their expected move this year. So, what do you do there? Do you lighten up? Do you stay with it? I mean, this is a wonderful question to ask, but you need to ask it to yourself. Like, what do you want to do here with your existing positions? Do you want to stay with them? Do you want to lighten up?
That's a good point. I haven't thought about a 401k yet. Yeah, that's true.
That's correct.
Yeah, most people just long index.
Yep.
So now we talk about the volatility. In the next slides, we're going to talk about implied volatility of these major assets. If we go next slide, we see although the realized volatility started to increase last week, but the implied volatility actually dropped quickly across all the assets except the oil, right? So S&P 500, IVR dropped to 14% right now because the IV is only traded at 14% too, 14, 15. Bonds we had like 100% the week before, now 35%. So all the assets we see the volatility start to stabilize. I think mainly because the election week.
Yeah, I
Right.
think volatility, I mean, obviously volatility had expanded going into the election and it started coming down even before the election. But yeah, obviously the magnitude of the move is going to be all week long. And I want to challenge you, mentioned that 401k. I want to challenge you to take a look at your 401k or your IRAs that maybe you don't manage yourself and you may have at another brokerage firm. So check to see that your mutual funds at least match the market. Forget about if they went higher than the market. I think you're going to be pleasantly surprised that they're doing well, but nowhere near the match of the S&P 500. So if you're doing that, why don't you just buy the S&P 500? At least get the magnitude of the move to the upside and match the magnitude of the move to the downside. Don't underperform both ways. How horrible is that? So check those out. I think you're going to be really sad at what you see, but hopefully I'm wrong.
Do you have an explanation about the crude oil? Why the implied volatility didn't even drop? It only increased like a 2%. I don't see like huge movement coming in. It's slightly bigger.
There's no more wars in the Middle East. That's over. Trump's going to come stop it.
Yeah.
I thought that's going to.
Yeah, so there's
stabilize the volatility.
No war in the Middle East, so oil stabilizes.
It's the unknown, Kai. I think to answer your question, yeah, the unknown.
That could be one of the reasons. Yeah.
Yep.
Cool.
Next one, please.
So next slide is if we are talking about zero DTE. So if we look a little bit into the details of what happened every single day, definitely last week was an exception, right? So the week before, I remember 4 out of 5 days, the SPX trading in the inside the expect move. But last week there were only 2 days, Monday and Friday. The SPX was trading inside the expect move. So let's see what's going to happen this week. Last week was definitely very different.
Kai, I want to challenge you something here. Maybe you can do it for next week. Instead of looking at the expected move for the 0 day on the opening, let's wait until, let's say, 9 p.m. Let's take a time frame. You have data on the hours, correct? That you'll be able to look at? And let's see the magnitude of the move from like 9 o'clock on. Because when you're looking at a 0 day and you're taking the data from the day before, a lot of times, like today, we have a move that we're up, 20 handles, let's say. But we stay, maybe we close up 35 for the day. And we only had a $15 expected move for the day. We really only moved $15 on the day in my example. Do you know what I'm trying to say?
Oh, you want to see? You want to use the expect move
after the opening.
After the opening,
pick a time,
okay.
9 o'clock. So we place a trade at 9 o'clock, and we take it off at 12, and we take it off at the end of the day.
So we don't need to worry about the overnight movement. Is that what you're saying?
That's correct. That's
okay.
correct.
Only for okay, yeah, that's fine.
I think let's find out what that data looks like, because I think that's more of what people are really looking at when they look at 0 days. I don't think they're placing them the night before. I think they're placing them intraday. Let's see what that looks like.
Do you have the data, what's the most active time to trade 0 DT in the morning? 8:30, 9, somewhere?
I would say let's pick 9 o'clock. It's just arbitrary. I'm just saying markets tighten up. I mean, it's on the hour. I don't know.
Okay, yeah. No problem.
Cool. Next one, please. I want to catch the opening.
Yeah. All right, so definitely similar to the week before, the most significant market move is from the Bitcoin, right? You can't say Tesla, but Bitcoin is probably the most not most surprising, the very heavy assets, right? $77,000 from the end of last week, and this morning it's up like another 9% again.
6-7%.
Yeah, 10% already.
I want to look.
I checked like 30 minutes ago was 8.8 or 9%.
Yep.
But anyways, it was up 17% last week. The IVR dropped from 35% to 11% at the end of Friday. Definitely a huge move. And this morning we're gonna keep watching it this week. And again, just try to remind everyone the historical average of BTC movement, even though this is a large product, they move a lot, but the average upside move and downside move for weekly, next slide, is about 5 to 7%. 7.6 to the upside and 5.7 to the downside. So 17% or 10% this morning, definitely much larger than historical average.
Very good. Next one, please.
Yeah. All right. So we're going to the earnings. So last week earnings, we have some big movers. So there are 5 underlines. The movement is close to 10 or larger than 10%. Wing, SMCI, CVS, Pinterest, and Airbnb. Not major stocks, but these are kind of liquid one, has large movements.
Yeah, and that 10% number is about outside the expected moves on all those. You want to be 5 to 8%.
Sure, yeah.
Yep.
Yeah, for sure. And at the end of last week, we probably, if we go to the next slide, we already have roughly 2,700 companies announce the earnings. So it's almost double the number of companies the week before. Again, the winners and losers number are very, very close to 50-50. And on average, we have slightly better return last week, 0.3% compared to the week before.
Good job.
Yeah. So this week, we're looking at some of the interesting and very liquid companies who's going to announce the earnings. Is probably Shopify, Spotify, Disney, and Baba, and also JD. Depends on if you want to trade this Chinese Amazon stock. 4 or 5 very liquid one.
Great job, Kai. Good job out of you, my friend. Sorry to rush you on that last one like that. We'll take a quick 90-second break and come back. We got more Tasty Live. Great job, Kai, really. We'll take a quick 90-second break and come back. We got more Tasty Live after this with the opening bell.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? tastytrade. Make your move.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here. And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast. Yeah, Option Trades Today. You listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bat.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Nikki, we are back, my son. The opening bell is imminent. Even the S&Ps are up 17. They're about 10 handles off of their highs. It's exactly where they were the last time. The big movers, downside, you've got gold and silver down over 2% to the downside, and Bitcoin up 6.5% to the upside. I know we've already talked about Tesla and Coin. They're set to open here in a second. We'll let those go in a moment. Volatility, although it's only down 20 cents, that is a 1% move to the downside. And the big move to the upside is the Russell, up 24 handles. That's a 1% move when everything else is up around 0.25% to 0.5% in the Dow. But we'll let the markets open and we'll
Natty
we'll
gas
go from
up
there.
almost 10%, 9% here.
Yeah. Yeah,
Big move in natty gas. There we go.
Big move in nat gas. I think big move in nat gas up 9%, like you said just now, is something to talk about. When you've got stocks like Tesla and the others up 24 and change, I think commodities like nat gas take a back seat. Let's see what's moving this market on the opening right here. To the downside, you got Humana down 14. Obviously, GLD with gold down $5. TSM down 4. Meta down 3. To the upside, let's take a look. There are going to be quite a few. MSTR, obviously, a Bitcoin substitution up 27. Coin up 26. Tesla up 22. Goldman Sachs up 8. Look at the volatility here over the last 5 days on all these products, except Tesla. So for those of you who have a Tesla position and you might have sold some premium, even with a bullish standpoint to it, you'll notice volatility expanded by about 8% over the last 5 days. You're not getting any help there on the volatility side of things. Man, this is for a 17 or 18 point, even the S&P move. My account is not reflecting that because I have a Tesla position and a Goldman Sachs position.
Yeah, and I'm not getting helped by any of the stuff that I've got long delta in. Like I have some long delta in Microsoft. It's up 60 cents. You know, like
right.
those aren't moving. Google, Amazon was up like $2 pre-market, but it doesn't look like it's, where is it?
Microsoft
it's like
up 67 cents.
All the liquidity is going into the MicroStrategy, coin, and Tesla right now. Everything up, the market being up.
So from a young person's point of view, does that scare you?
No. Just a
Not at all.
rotation.
Rotation at new highs.
Yeah.
Doesn't it sound a little ugly?
Why does it scare you? Because it's something different?
Yeah. Anytime I try to do something different, it always seems to hurt me. Yeah.
All I'm saying is it seems like there's a little bit of a...
In the market and in life, son. In the market and in life. Anytime I try to do something different than what I usually do and I've been successful, yeah, it hurts me. Yeah. It chafes my arse a little bit. Yes. It doesn't
I don't think I take anything out of it. I just think that right now the liquidity is flowing into those things versus Apple or, Amazon, Microsoft, stuff that was the big mover 6 months ago is now kind of taking a break. And I think that's how markets grind higher, is that you get a bid in a Tesla and a Google at lows, something like that. I mean, that's just
you just mentioned a bunch of stocks like Google, Microsoft, Apple that took us to new highs in the past are not taking us to new highs right now.
That's good. That's usually a positive. That's like what you want to see. You don't want to see the big, the top 5 stocks continue higher and everything else goes nowhere. You get all those things to highs and then there's a little rotation. That's what it seems like.
Agreed. But when you look at where these stocks are, these are not near new highs. These are new highs that outkick their 2025 projections. Meaning it's not the other 450 stocks or 480 stocks in the S&P 500 that are bringing us to new highs. It's these smaller players inside the S&P 500, those names that we want to be the new leaders. Mm-hmm. They just look like they've gone too far too fast. But son, nobody knows. You're 100% correct. I asked you a question and you're allowed to have an opinion just like everybody else is allowed to have an opinion. It doesn't have to mirror mine. Like I'm in a Tesla position, so I'll be stepping in front of the train there. I already have stepped in front of the train there. But at some point, I'll need to change that position because it's moved too far and too fast. And I'll never be able to get that money back from that strangle that I sold. I can only hope to lessen the blow in there. But I'm not going to jump on to these. I'm going to stay in those Microsoft positions, those Apple positions. They still have decent implied volatility to them and hope that they catch up to these fringe players or new leaders in the clubhouse and be with the cool kids. I'm not going to get caught to the downside in those. That's my point.
That's fair.
I mean, I remember not too long ago when, we were all looking at these, Maras and riots and Bitcoin was making new highs, and then it sold off by 20, 30%. It took a lot of people out there too. So
but that's
be
not,
careful is all.
Yeah. But that's the Bitcoin space. I mean, you should expect to see you volatility in both directions.
Okay. Prepare for it. Don't expect it, but sure. I get it. And you can only do that by trading it small.
Yes.
All I'm trying to say is people get I got emails this weekend. If I know Tesla's going to get to the number that it's at today, what would you have done last week? Well, I mean, you can't say that. I can't play for a $50 move in Tesla. Then just do a zebra or just buy a huge call spread. In a shorter dated option. You can't do this to yourself. You'll drive yourself nuts.
Yeah, well, that's the hindsight. Looking back and seeing how much money I would have made if I had done X, Y, Z. It's horrible to do that, but
this is when the trolls come out, son.
Of course,
people.
Of course, I mean when you get these big moves, you have these excessive moves in a lot of stocks. I think I agree with what you're trying to say, but I think if you are trying to participate in this, the hero trade of selling calls or being naked premium, it looks really attractive right now because something like Tesla, 12% increase in volatility over the last 5 days. Everybody wants to sell premium here. I think that's the risky thing to do. I think if you want to participate in this
but you can sell premium by selling puts too, son.
Oh, certainly.
It works both ways. You don't have to have a neutral or bearish stance on this. You want to be bullish and sell premium in Tesla, go right ahead.
Yeah, I agree. I think you have to
be careful.
Call diagonal spreads, put diagonal spreads, stuff like that where you are defined risk, where you have some positive gamma. I think that's how people should be playing this. I don't think you should be playing that. I don't want to sell the 300 strike puts in Tesla because you have that, if something happens, you have that excessive risk to the downside. I think there's a point at which volatility gets too high to sell premium.
Mm-hmm.
You don't want to mess around in that, especially in smaller size accounts. That's all I'm saying.
That's a great point. That's a great point that you just made. Another great point you just made. Some of those stocks that have brought us to look at this: Meta down $8, AVGO down $4, Apple down almost $3, Qualcomm down $1 and change. Let's see what your Intel is doing. Intel down 13 cents to 26 and change. Yeah, you made a great point there that it's not the stocks that brought us to the promised land that are doing it right now.
Yeah.
Mm-hmm. Good job. Good job.
Gotta be careful out there. Things are moving.
Things are moving. There's no doubt about that. Yeah. What else you got for us, son? Anything before I take us to the next? Well, we got Dr. Jim. I know you're not used to having Monday be broadcast like this, but nobody says Monday like Dr. Jim. This guy he's the epicenter of Mondays.
Yeah, I'm just looking at my positions and I don't have a lot of great things.
Well, I'm doing pretty good. Like Baidu, I'm up good money in. Gold, I'm up good
money in.
Oh, God,
take the money and run. You got it. You got it. Take the money and run in those. I'm looking at some of these currencies, like my euro position is junky, but I got some good DraftKings positions, AMD. I'm a little bit of a mixed bag.
Batistas do a lot of things well. We are not commodity traders, okay? We just are not born that way. I'm sorry.
That's true.
Look at the euro making new lows. What is the pound doing? That's where Tom is. Pound down also trading near its most recent lows, well off of its lows of 124, trading 128 and change. Obviously, the euro is the big loser to the downside.
Mm-hmm.
All right, my son, let's take a quick 90-second break. You want to?
Sure.
We'll take a quick 90-second break and come back. We got more Tasty Live after this. Nothing says Monday like Dr. Jim. the skinny on options, abstract applications after this. We'll be back in 90 seconds.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply. Join the club, genius. Tasty Trade.
Morning, Uncle Craig. I really appreciate all the investment advice you bestowed upon me this holiday season. That opportunity Prince Harry emailed you about sounds interesting, but I think I'll just stick to watching Tasty Live.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't kick the cat or the dog or the small children until the day of Christmas.
From the smart mouths at Tasty Live.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Dr. Jim Schultz, Central Michigan University. Number 51, because trading the Tasty Trade way, that is our minimum probability profit.
Kai Zan, University of North Carolina, Chapel Hill. Number 16, because 16 is one standard deviation on one side.
Brittany Sherrick, Bradley University. Number 15, because I like to carry a positive theta of 15 to make $15 a day. Whoop, whoop.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays to see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Got the need for speed? No problem. On Tasty Trade, adjusting your option positions is a right click away. Rolling just got quicker. Tasty Trade, make your move.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Crypto is better when it's tasty. The Tasty Crypto Show, hosted by me, Ryan Grace, and Frank Caberna, will help traders of all levels learn DeFi trading. We'll provide our insights on altcoins, crypto industry news, and blockchain education. And we'll have you swapping, staking, and trading using derivatives in no time, all using the Tasty Crypto Wallet app. So don't fork up your chance to become a crypto master. Watch Tasty Crypto only on Tasty Live.
Tomas. Nikki, we are back, my friend, and nothing says Monday like this, man. Dr. Jim is in the house. The skinny on options, abstract applications. Dr. Jim, what's going on?
Man, what's going on? Guys, gents, so how we doing this morning, man? So what I need to know from you guys, from y'all, is what is putting you in a worse place this morning? Is it the Russell 2000? Is it the S&P 500? or is it your Chicago Bears?
I
Guys,
knew it
talk
was
to me.
coming.
Talk to me.
I knew it was
Talk
coming.
to me, man. This is a safe place. This is a safe place.
It's a sad day. It's a sad day. It's a sad life. It's a sad fanship. Like it's a tough thing to continuously have to deal with. You know, you think you found something, like you think you've gotten to the place, like a happy place, and it's just ripped apart. It's like in like Happy Gilmore, where he goes to the happy place and then Shooter McGavin comes and like just spoils the whole thing. That's exactly what this weekend was. Like, you know, we had beers and big, you know, things and, you know, fun, and then all of it was taken away.
Well, yeah, because I mean, when you're looking at, I mean, did they start 4-2? They started 4-2, right? Or was it 4-1?
4-2. 4-2.
4-2, yeah. And so when you're looking at the schedule ahead, you're like, all right, Green Bay is going to be some problems, the Lions going to be some whatever. But you look at the Patriots, you're like, that's a W, man. Like, that's a W.
I'll tell you the worst part is that after going 4-2, you start looking at the end of the schedule where you play Lions twice, the Packers twice, the Vikings twice, and you think to yourself, and you say to yourself, you're like, you know what? We can win one of these at home. We can pull off, you know, we could split with the NFC. Like, we can split these games. And now you look at them and you say, we're going to lose those games by 40. We're not going to score a single point. So that's where you go from a 4-2, like, hopes are high. Like, this is a team that can be like a little bit above 500. Maybe we get a playoff spot, to I can't even watch the games. I can't believe everybody has to watch the Bears televised on Thanksgiving and see just the debacle that this has become. It's a tough one, Jim. It's tough.
That's bad. Who do they have on Thanksgiving?
The Lions.
They're one of the Thanksgiving.
The
Is it the
Lions?
Lions? Oh, sure. Okay, in Detroit. Yeah, of course.
It's going to be a primetime game. Everybody's going to be watching. We're going to just get destroyed. It's going to be the end. That's the dagger.
That's it.
Yeah,
That's
not going to be fun.
And you thought S&P 500 6,000 was the dagger. That's not the dagger.
Yeah, no. That's what's keeping us afloat here. What about your Dolphins? They going to pull out a win tonight?
My Dolphins? No, man. Did you guys see my Lions last night?
I was going to say, you gave him the layup. You gave him the layup.
My Lions last night, dude. I mean, it looked a little dicey there for a little bit. I mean, Goff just kept throwing picks left and right.
Did he end with 4 picks?
I think it was 5.
Oh my God.
He looks horrible.
I think it was 5. 5. But man, I'll tell you what. I mean, Campbell's got that squad. I mean, they're all in, man. Like, that's what that's what makes sports fun, honestly. Like, they're all in. Everybody's bought in. Whether they win, whether they lose, whatever. But it's like they're fun to watch, man. They're really fun to watch.
Yeah, there's hope. You know, you have the air of hope, of potential.
That's correct. And speaking of hope and potential, we got a whole week. Is it a whole week of the Batista battery this week?
Yeah, it's a takeover. HR they've been at the door, like knocking while I've been on air. They're like pointing at me. They're like, no more.
That's not a point. They're doing this.
Yeah.
Yeah. Got your eye on you.
Oh man, no, that's good stuff. Well, it makes sense. I mean, you know, Tom loses the election. He's going to take his ball and he's going to go home. He's going to take his ball and he's going to another country.
No, he left. He's staying in the UK.
I mean,
he's protesting.
I don't hate it. I'm just saying, I don't hate it. You know?
Don't laugh, Dr. Jim. There's a lot more truth to that than you think. There's a lot more truth to that than you think.
Nice. All right. Well, hey, speaking of some truth, let's do some finance this morning.
Please.
John, go ahead and get us going here on the title slide. So this is interesting. Going inverted on an iron condor. We've actually talked about this. It was a couple of years ago now, but this is something that I still get emailed on a regular basis. Mm-hmm. Gentlemen, is this something you get asked about on kind of a frequent basis?
I do.
Yeah, I'm sure. Well, Nikki handles a lot of support. We should give a little shout out there, Nick. I mean, you get a lot of just the generic questions that come to support at tastylive.com. You know, you're the man. You're the man there. So
I think it's just generally a lot of people are trading in smaller sized accounts. And so you're naturally doing a lot of iron condors versus strangles. And you get into the situation of like, you know, what do? I see you guys doing all these adjustments all day long. How do I approach this with a $5 wide iron condor or a $10 wide iron condor? And it's tough because there's a lot less you can do.
Right.
That's 100% right. That's 100% right. And we're gonna work through some numbers and an example here this morning. But I kind of had a sneaking suspicion that yes, you Nick, because you do handle so many emails from the viewers and the customers that I was assuming. I mean, I get asked this all the time. So I'm like, man, you're probably 2xing me, 3xing me in terms of, because you're right. It's like you see a strangle, you see so many things you can do. And so many of those things are positive in terms of risk reduction and break-even point improvement and whatever. You're like, hey, can I take those same principles and apply them to the defined risk version, which is the Iron Condor, and that's what we're going to talk about here this morning. So, John, go ahead and cue us up on the intro slide here this beautiful, beautiful morning. While there will always be a ton of gray area in trading at Tasty, we've been able to systematize trade entry and trade exit to make them more or less black and white. Still, it is the management and adjustments along the way that will likely make all the difference in your journey as a trader. So that begs the question, should you ever consider going so far with your adjustments that you go inverted on an Iron Condor? And again, I'm going to work through an example here for the next couple of slides. But actually, I'm actually curious. So you have, if you think of a trade and you break it down into 3 parts, trade entry, trade management, and trade exit. Of those 3, which of the 3 do you guys think is the most important?
Nick, you want to take a stab at it?
I was going to say the opening, because that's the only time you can really control things, or at least play for things into the future, right? You can play for selling premium when volatility is high. That's something you can hang your hat on and say, you know what? Right now, I don't know if volatility is going to go up, down, sideways from here, but it's high right now. So that piece of the puzzle is on my side. You can play for time, 40 days to go till expiration. I'm going to have positive data decay. That part of the equation's on my side. You can manage you can choose your delta on entry. You know what? I want to lean a little bit long or a little bit short. Those are the things that you can control. You can't really control down the line what the management is, or if or when you'll be able to close it. So opening is my pick.
I concur.
Okay. All right. So I guess I'll have to be the contrarian to the contrarians here this morning. I'm gonna take management. I'm gonna take in between. And the reason why I'm gonna take that is because it's already on the slide and I really can't not take it. So right. I'm gonna go trade management. But obviously everything you said is correct. 100%. That's correct.
I think they're both important in different ways.
Of course.
Yes.
The reason why I think the management might be a leg up on entry and even exit is because when it comes to entry and exit, we have kind of made. I don't want to go so far as to use a Sosnoffism and say it's been commoditized. I don't know that we've gone that far with it, but it's closer to being commoditized than the trade management is. To me, the trade management, we've done an amazing job with the mechanics and the different things, but still, like you run into situations, and I mean, you know this, Nick, with what you and Mike and Katie are doing at Options Trading Concepts Live all the time. You've got crab trades, you've got ratio spreads, you've got, whatever. It's just like, man, there's no clear path forward through the forest. Like you're going to have to make some subjective calls along the way because it's not black and white. With Iron Condors and Strangles, that's a little bit different. We kind of have commoditized that, for lack of a better phrase. But man, you start branching out into some other strategies. Man, I don't know, man. I think the management might be where it's at.
Okay.
But hey, I mean, we got Bears fans, Lions fans. It makes sense. All right, so let's go ahead.
Yeah. It makes it.
I didn't expect that to be the final word. I didn't expect to get the mic drop like that, but I'll take it. Okay.
Well, this is a different group. This is a different group, Dr. Jim.
I know, man.
We're going to allow you to talk.
You can have the floor.
Yep. I'm very shocked. Yes. So, John, hit us on the next slide. Okay, so when we go inverted, though, what is our objective? What are we trying to accomplish? I think we can all agree on, these being kind of the 3 goals of going inverted, right? Goal number 1, you want to reduce your directional bias. Goal number 2, you want to widen your break-even point, especially on whatever side's being tested, right? You want to improve that break-even point, but you're going to be able to do that by going inverted. And then goal number 3, you want to decrease your max loss. With the short strangle, it's undefined risk. The maximum loss is still going to theoretically be infinitely large, but we know that that's not practically going to happen. So whatever credit you're able to bring in, you are able to kind of soften the blow a little bit from what kind of practical maximum losses you're up against. So then, of course, the question becomes, are these three objectives and goals still applicable to something like an iron condor that is the defined risk version of a short strangle? Okay, so what I want to do now, let's work through an example, and then I'm going to be curious to see, based on the numbers I've selected, which I got these numbers from Friday, so they're fairly recent, if this is something you guys would ever consider doing. So John, go ahead and get us going here on the next slide. With an SPX example, and again, the index is trading around 6,000. It's over 6,000 now, right, Tony?
Yeah. SPX itself.
Well, with the little bit of a sell-off we have here in the first hour of the trading session, we're sitting at 6,007.
Yeah.
6,007 on SPX or ES?
SPX.
Okay.
ES is 6,035.
Yes. Yeah, got it. Okay. So the crash has begun. So that's encouraging. That's very
yes. We've crashed from the highs 10 minutes ago of 6,017.
Hey
down
man,
10 points.
beggars can't be choosers, right?
It's a tough 10 points. Hey, if you're Tom and you scalp that 10 points, though, it's the most amazing thing ever. You miss the 500 on the way up. You get those last 10 on the short side. It's the best trade ever.
That's exactly right.
Be careful when you spit up in the ears. All right. Be careful. The walls have ears. So
they do. I know they do. I know they do.
Right.
All right, so let's say you sold the following $20 wide iron condor. So it's not 5, it's not 10, because I think that would be a little trickier to kind of see what's happening here. Let's widen it out a little bit and kind of go for a higher probability trade. So $20 wide iron condor got the index around 6,000. Let's say you trade. Let's say you build your iron condor with the following verticals. You've got a 5,900, 5880 put spread on the downside and a 60-60, 60-80 call spread on the upside. Now, again, market's moving. Things have changed over the weekend. The prices you're going to see today are probably going to be a little bit different from what you see here on the slide. Let's say you're able to do this for about a third the width of the strikes, which was applicable on Friday. $6.88 credit. So that means your maximum loss is $13.12, right? Pretty standard, pretty plain vanilla, like nothing super surprising here. Okay, let's say, because we all know this is going to come, SPX rallies to 62.50, right? So just a clean little 240 points on the SPX, right? So this will be, we're talking tomorrow at the close.
Yeah, 3 to 4%. That's our daily move. I mean, come on.
It's the bid-ask spread differential at this point, right?
Nothing.
SPX 62.50. Let's say that you have an opportunity to roll the put spread up because you're testing on the call spread side now, right? You can roll the put spread side up and over the call side, so you go inverted, to 62.35, 62.15 for another $6 credit. Should you do it? Or should you even consider it?
No.
Now, we're gonna break down all the numbers in a second, but I'm just curious, like initial thoughts, gut reactions. Is this something you guys would ever do?
No. Can't go inverted. You're with an iron condor, your hedge or your stop loss is baked in on entry, and you should be okay with whatever that number is. There are things you can do to manage on an inside or sort of move against you if you're tested on one strike. If something blows through your spread, you're stopped out already. Your stop out was baked into the position to begin with, and it's over with. You can't continue to throw good money against bad.
Tony, you agree?
Yeah, yes, I totally agree. Your stop order is placed on entry when you have a vertical spread, which is the one side that we're talking about here. Yes, and I'm sure you're going to go over the slides where you open yourself up to more risk, and you'll notice when you go inverted, you should look at when you, at least on the Tasty Trade platform, before you hit confirm and send, if you're reducing risk, it should always add a little bit of credit to your account, like your buying power will go down by $100. If you go inverted, you'll notice that your buying power does not go down.
Interesting. That's very. I never knew that.
Yes.
Man, I never knew about that little buying power hack in terms of risk change to the position.
Yep.
Wow. Okay. Because that's way faster than like working through the credits and debits if you don't want to do that in that moment. That's really interesting.
Totally agree with you. It is way faster, but you need to know why, because the first thing you'll question is, you'll question, what is the computer doing here? It's not, or you know what? Sometimes if you're like on a calendar spread or something like that, it won't know you have an existing position on, and it won't it won't change your risk. If you had a diagonal spread and you're changing it, it'll just show you the buying power for that trade because it doesn't know it's matched up against something in the back month. So don't always take what the computer tells you. Please do the math yourself so you know. If you know, like anything, like my other son who's taking pictures of math equations, getting the answer from some AI formula, not knowing how to do the equation doesn't help you.
Yeah, no, that's great. I mean, man, 2024, these kids, man, look at this, man. I mean, Tony, we could have been somebody. If we had ChatGPT when we were growing up, man, we could have been somebody.
I could have been somebody. I could have been not just boy leader of Arista and Archon, which you never were. I could have probably been leader of the free world.
That's correct. That's correct. And so, yes, you guys are 100% right on the nose in terms of this is not something we would ever do. And we're going to work through the numbers why. So, John, go ahead and hit us here on the next slide. So let's work through. Let's say you did this. Let's say you actually move forward with this roll. You roll the put spread up. You're inverted on the iron condor. You're like, hey, I'm following the tasting mechanics. I'm reducing risk. I'm doing all these things. The reality is you are kind of reducing risk in certain instances, but you're also adding a ton in other instances. So let's work through 3 different scenario P&Ls because it can be super confusing when you have a position on like this, which we're going to talk about that in a minute too. Whenever you have a new position on or even, old positions or whatever, just work through if the stock lands, you don't need to know every single stock price. You just need to know certain areas relative to your strikes. So right here, we're just going to work through 3 scenarios. Number 1, the call spread is out of the money. Number 2, the put spread is out of the money. Or number 3, the stock is in the middle, so they're both in the money. Because remember, with an inversion, like a strangle, we actually want both options to be in the money. We want the stock to be in the center. With an iron condor, it's completely different. Because you have those long legs and you had to bring them with you, everything gets super clunky and cumbersome, and it just doesn't work out the same way. So, okay, so now we've collected $12.88. We got $6.88 on entry. We picked up another $6 from our roll. So our max loss looks like it's only $7.12. Now, I had to put a Barry Bonds asterisk next to that because it's not $7.12. It is going to be more than $7.12 potentially, depending on what the stock does. So, okay, first scenario, SPX is less than 60.60, which, guys, we know that's not going to happen. Like, we know that this is obviously not going to happen because the market's not allowed to go down. It's just not allowed to go down. And so, but theoretically, I can't. Let's just entertain the idea, right? If SPX goes down below 60.60, now my call spread's out of the money. My put spread will be fully in the money. This is a good scenario for me. I only lose $7.12. So I saved the $6 that I picked up on the roll off of my original max loss. So that's good. Okay, second scenario in the middle. What if the market rallies, which we both know is going to happen, of course, and SPX goes above 62.35? Now the call spread's in the money, but the put spread's out of the money, but it's the same outcome, right? Your P&L, you lose $7.12. You save the $6 that you picked up on the roll, and everybody's happy. Okay. The problem is, what if the stock lands in the center to where both verticals are now in the money? And again, this is actually what you want with an inverted strangle. With an iron condor, this is not what you want because now you're essentially having to buy back both short verticals for max value, $20 on the call spread and $20 on the put spread. So you actually end up losing a total of $27.12. So you lose an extra $14 off of the original max loss because you essentially get double whammied. And so we're going to talk about, should you ever do this on the next slide, but these are the numbers. Is this essentially what you guys were crunching through in your heads when I was asking you the question?
And it comes down to the drag of the long option. So when you're rolling short premium, you're collecting so much more, or your naked premium, you're collecting so much more credit versus an iron condor where your $6 roll here, if you were naked on this position, would be $30 or $40 on SPX, or maybe even more. And because of that long option that you're also rolling up, it kills all that premium that you're getting and it puts you in an even riskier position. And you're using double the buying power.
That's exactly right. That's exactly right. And I mean, you guys brought up a great point earlier, and I think this is kind of a tangential comment related to what we're talking about here, but it's so important. When you do a defined risk strategy, vertical, iron condor, diagonal, it could be whatever defined risk strategy it is. a good principle to have in your head is that you don't need a stop loss.
No.
The stop loss is already in the strategy. It's already baked in there. If you're going in to a defined risk strategy and you're thinking, man, if it gets to X, I'm going to get out early, you're way too big. You're way too big. You should never feel that way. And you should instead feel, man, if this thing completely blows up in my face and goes against me, that's okay. I mean, sure, it stinks, but it's like, I'll be fine. I can move on to the next trade and I don't have to worry about it. And so that's an important thing for people to remember. So, John, hit us on the next slide. So should we ever consider this? Well, I mean, it feels good to join forces with the Batistas. I got to say, I mean, you got the Germans and the Italians coming together. Has it ever happened before?
Jim, we're agreeable. That's why it's so enjoyable for you is we can agree. We can support your content. We can support your ideas. We don't have to poo-poo you and one-up you every time. That's the glory of being with the Bats throughout the day.
I mean,
Vanetta said glorious. The same thing. She's happy that we respond to the things that she says. It's good.
Oh, I'm sure for Vanetta, this is like, man, I mean, Vanetta feels like what the Russell 2000 Bulls feel like right now.
Yes.
Like that's what Vanetta probably feels like getting to work with, young bat and old bat.
I did have an Omaha in the first 90 seconds of the show.
Well, I mean, come on, man. It was,
Yeah, it had to be done.
Yeah, I mean, that's just it. I mean, did you really think that Caleb Williams was not going to get sacked more than 5 times yesterday? Like, come on, man. It doesn't matter who he's playing. It doesn't matter. Like, we know this is going to happen.
I'm delusional, so yes, I did think that this was going to be.
Yeah,
I thought this was going to be different.
This time is different in that it's not. It's not different at all.
It wasn't.
So, should you ever consider this? No, inverted iron condors rarely make sense. They may never make sense, actually, but maybe in some weird situation you can make it work if it's like super wide or whatever. But this is not something you should consider. Number one, forget about the P&Ls and forget about what we just went through. Actually, I think the bigger problem is you're going to have a mess on your hands. That thing is going to be a mess in your account to try to figure out where you're at. What you even want to accomplish, it's going to be very difficult to track and monitor and follow along with. So for that reason alone, I'm like, man, I don't know. This is probably not a great idea. But then also number two, yes, you do get some savings if you get a bigger move in the index and it moves outside of one of the verticals and, only one of them is, in the money. But man, if it stays in the center, you get bamboozled. That's never really what we're trying to do when we make adjustments. Any adjustment to any strategy, we're never trying to add potential risk to the trade. We're always trying to take risk off the table, right? And so this goes counter to all of that. And so for those reasons, I would say this is not something we would ever consider. So, gents, final thoughts on inverted iron condors. Final thoughts on bears. Final thoughts on lions.
Final thoughts on either of them, on all of them, or never do it.
Yeah, you got to stop.
Man, 8-1.
You stop your roll at the short strike. Maybe 1 or 2 strikes in, depending on how wide your spread is. But at that point, you've done all you can. There's nothing more you can do to manage the position. At least you were defined risk on entry, and you're not getting your face ripped off on a naked position.
That's exactly right.
That's exactly right.
Side. So one more football question for you guys. So it appears that the Chiefs, man, I mean,
you can't claim the Chiefs. I won't let you.
No, I'm not claiming.
You can't get them too, okay? You got 10% in the NFL already. You got 3 teams.
Hey, man. Hey, I'm just saying, like any good true fan, I got an NFC team and I have an AFC team. So I got my Lions, I got my Chiefs. But anyway, I mean, how about that blocked field goal at the was that crazy? It was like they're going to lose. I mean, it was only like a 40-yarder, right? Like it was a chip shot.
Listen,
right?
that's a thing that could never happen for the Bears. It just doesn't, the gods could never allow that sort of situation, that sort of joy to happen for the Chicago Bears. So yes, that was a very Chiefs-esque outcome.
Yes. Very, very good. All right, let's get them a few takeaways. I know you guys got to get to some market measures, so man, let's do it. Adjustments in management are what truly separate good traders from great traders, as trade entry and trade exit can more easily be streamlined and simplified. But whenever you consider a potential adjustment, make sure that you fully understand what you're signing up for so you don't create for yourself a complicated position with little to no payoff. It's very similar to being a Bears fan.
It is very similar to being
very It's very complicated with almost no payoff.
Almost. You're completely right. Dr. Jim, great job, my friend. As always, you brought it. We'll take a quick 90-second break and come back. We got more Tasty Live. Your Dolphins, I believe, are playing on Monday night. Will you even watch the game?
Of course. Been a fan since day one. Oh,
We'll
dude, we're going to roll. We're going to roll the Rams tonight. Oh, it's going to be great.
We'll be back in 90 seconds. We got more Tasty Live after this.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. You know, that's what I do.
Tasty Trade has crypto, and you can trade with 0 commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it. Join the club, genius.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
I had to rewatch that market measures from this morning, Bodacia. Our raid really distracted me. I was like, get away from me, uncontrollable fire.
I told you, Tasty Grax, you can't plunder with headphones on. Light pillaging, maybe.
Sometimes I'll hide in a gross peat bog in the middle of a raid, just so I don't miss market measures.
I'm only recently comfortable admitting this, but I think I trust market measures more than I trust my savage hellhorse, Arbitrageur.
God, I forgot to tell you guys that I slaughtered a horde of conformerons this morning. Did the whole terrifying row of severed heads on pikes as a warning thing, but you never know with those idiots.
Okay, thanks for the heads up.
Ha ha ha! Goblets of hot blood for everyone.
Nice.
Thanks, you guys.
Normally I hate puns, but that one was okay.
We just ripped higher up to 50 points, and I just thought we would stay there, but...
The thing the market does best is it keeps you very humble.
You get paid a lot for being right, and you lose a lot for being wrong.
So give me, I don't know, a couple hours, and I will give you everything that you need to start trading options. See you inside.
Want to know what you're getting into before you dive in? When you trade options at Tasty Trade, you see your probability of profit and loss right where you need it. Tasty Trade. Make your move.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with Tasty Live to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's market measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Iggy, we are back, my son. You know what that means? It's time for a market measure sponsored by the CBOE, and we brought, well, only somebody who can do it better than Tom Sadnoff. Gad, how are you, sir?
I'm good. How are you, Tom?
I'm doing well. Thank you.
You
for
feel
asking.
intimidated that he's got your spot? You know?
Yeah, he's commandeered the big boy chair. You know what? I can respect somebody coming at it. Just be careful with what you ask for.
Yeah. There's some. We have a lot of young blood in this office. The hungry, they run fast, they work hard, they're here every day, and the seat's getting hot.
I hear you.
Thank you for offering.
Well, let's go. Let me hear you fill it, Gad. What do you got for us today?
So today we're gonna talk about a little market measure, which is so interesting, by the way. So,
okay,
the title is "Why Neutral Strategies May Dominate." It's interesting. This ideology of the traders, right? There is a research that said 90% or 85% of our loose trades or bad trades comes from thinking like we know something, right?
Of course.
And then 10 to 50% of a loose trade or bad trade comes from the market beats us, right?
Sure.
And why can't you be neutral, right? And say, okay, let me stay neutral, see what happens. So we run a little bit stats, calculations. We go to from 2005 up to current dates. See, we test different kind of size.
Okay.
Like neutral strategies, or when you take directions like puts or calls, what will be the results? So this market measure is about all that.
All right, let's do it.
Yep.
All right, so liquid. Am I on the wrong one?
You're on the wrong one.
Oh, okay. A strategy dominates when it achieves equal or higher returns while bearing equal or less risk. So what are we looking at here? We got the expected returns as a percentage and then the standard deviation of risk. You're saying more risk, more expected return?
Exactly. Less risk, less returns.
Okay.
Next.
All right, going on to the next one here. So examining straddles. So it's reasonable to assume that the offsetting delta would reduce the directional risk and the straddle would be more profitable than either leg on its own in terms of risk taken and return. So you're looking at a straddle versus each position. So what you're saying is you have more risk potential just on one side of the market, on either side of the market, whether it be puts or calls. You have more risk on just a single position because you don't have that delta hedge from the other one.
So just this will be testing to those individual leg, right? Put or call. And then we put all those risks together, which will be hedging both sides, right? And we test those results. In the case of risk, we're going to use standard deviations.
Okay. All right, so getting on to the next slide here. So how is this this assumption played out historically? Does the risk reward advantage of a neutral strategy make it noticeably superior to a directional premium selling? So you're going to take neutral positions compared to one or the other directional premium selling position.
Exactly.
Naked calls, naked puts.
Exactly.
Beautiful. All right, so let's get to the study here. So the study, 2005 to present, every trading day, place trades close to 45 days. So you compare it selling at the money puts, and you're managing them at the 21 days, at the money calls managed at 21 days, straddles managed at 21 days, and then the strangles managed at 21 days. I'm a little typo there, right?
Yeah.
21 days. And then so you're going to look at the average returns and the standard deviation of returns, or the standard deviations of risk. Of risk. Okay, so we're going to see how wide the risk is, as well as the returns on all those strategies.
Right, you got a lot of data here. This is over the last 20 years, right? 05 till now, just about 20 years, 19 years. So a lot of information. Go ahead.
All right, so the straddle achieved both higher returns and lower standard deviations of risk, even though the call side lost most of the time. If you look at a chart of SPY, it has gone up since that time. So you're naturally going to be losing on the call side. Tell me what we're looking at here. So we got annualized P&L as a percentage of the underlying.
So when you look to these, first of all, when you take a look to this table, numbers speaks by themselves, right?
Okay.
When you see at the money call, at the money puts in the straddle, this is the first table we compare the stats on both sides, neutral strategy. When you look to annualized P&L as a percentage of underlining, you see at the money puts have 32%. At the money call, it's a rules trade, right? Negative 40%. And the straddle outperformed by 40%, which means we have better returns when you compare neutral strategy and both when you compare one leg by its individual stats, right? When you go to the risk, which is standard deviations, here I didn't put percentage. I use actual numbers, actual money, right?
Okay.
So it shows at the money call, it's 130, right? At the money puts 841. At the straddle, which is neutral, it shows 602. And remember, when you trade, the only logic, which is simple for everyone who trade, we know like if you take huge risk, the return will be also huge, right?
Yeah.
And if the minimal risk you take also returns, you can expect huge returns, right? But take a look to this neutral strategy. Straddle have 602 risk in terms of standard deviation, right? And at the money put, you have 800, at the money calls have 630. So this give us the indication like, in real life, we don't need to be mediocre, right? Tom hates this strategy. In real life, we don't have to be mediocre, right? We need to take sides. But when you are trading, I prefer to stay neutral when you don't want to take huge risk.
Yes, this shows me that we've obviously had some positive drift up over this period of time, and then, I'm in both cases of being bullish or bearish. Like if you're on one side of the trade, you should expect to have bigger potential returns, but you're also going to have bigger risk because you don't have there's no hedge in place on entry. And so it's easier said than done to look at 2005 to now and say, oh, well, I should have just sold puts the whole time. That's a hindsight look back. Even if you are selling at the money puts, you're going to see the losing trades, the standard deviation of risk, to be much greater than what you have with the straddle. You don't have the upside profit potential as the naked puts do, but you're going to have wider losses. Your overall standard deviation of returns can be much, much wider because you have those tail losses.
Yeah. Even if you look at today return in terms of return on your investments, you will see the call, it's negative 1.6, and the puts, it's 1, and the straddle, it's 2%. That's the annualized return on investment we get. If you see the standard deviation of your return on investment, which is the risk, so the puts will be higher, right? Because there's so much noise right there. But the straddle, which is a neutral strategy, will be slightly lower according to the puts.
Yep. Got it. All right, jumping to the next slide here then. So even the Strangle achieved both higher returns and lower standard deviations of risk, even though the call side was a losing trade. And this is, anytime you look at a long time frame, you're always going to have losing short delta positions when you see the market has what, effectively 3x since 2005, 2x minimum. We're right there. So you're obviously going to have losses on any neutral or any short type position. The thing to key in on is that the losses on those select times to the downside are much, much greater because you don't have any sort of hedge on. You don't have any sort of short delta on your position. You're one-to-one to the downside. And you see it here with your standard deviation of risk being, much higher on the out of the money puts.
Exactly. And when you compare this slide with the previous one, you will see this trader has potential of losing more than Strangle, right?
Yeah.
If you see to the in terms of risk, the straddle has more than 3x of losing, more than the strangle has. Like for example, straddle have 600 of the risk, but on a strangle we have like 200, right? Which is my recommendation. I don't need to take recommendation, right? But this triangle kindly outperform in terms of risk management when you're looking into long-term position.
Because you have more you can do with it. When you're just selling a put or selling a call, you can only roll it out in time or roll it up and out if you're on the call side. If you have a strangle or a straddle, you can roll. Both those options are bringing in premium and are bringing in value that you can capture over a period of time. Whereas with one-sided trades, if you're wrong on direction, that part of the trade is tough.
Exactly. And I don't think there's someone who wants to do the calls the wrong time because call sucks, right?
Yeah.
It's almost easy to say call sucks. So.
Yeah, I mean, until they work the one once or twice.
Yeah.
All right, let's move on to the takeaways here. A couple more. So while neutral strategies appear to outperform directional ones, we may still look to take directional positions to stay engaged and build core positions. There's nothing wrong with having a directional assumption.
Exactly.
However you build it, the things that we control on entry are volatility, time, or how heavy our directional assumption is. Those are the things that you can ultimately control with your positions. However, a purely mechanical approach looking to optimize returns given certain levels of risk may be exclusively to stay neutral if you're trying to take less risk on both sides.
Yeah, we don't mind if you take a direction on any side, but remember to say use mechanical approach for you to control your trades.
And be small.
Yeah, be small.
All right, last one, takeaways. So neutral strategies don't require any additional buying power, so it's logical to sometimes avoid picking a direction. Selling the call doesn't, against, if you're just selling puts, if you're selling a call against it, won't use additional capital, brings in more premium, gives you a little bit more potential value to capture through the life of the trade. In the example of the SPY, straddle, and strangle, it achieved both higher returns and lower risk than its individual components. Obviously, positive drift over 20 years helps, but in the short term on a trade by trade basis, better off with the neutral position.
Exactly.
Well done, my friend.
Thank you, but
well done. I didn't think you were able to fill that bat. I didn't think
the bat. But I have one question.
I didn't think you were able to fill my seat, but you did a great job, Dad. Very nice work out of you.
Thank you.
We're gonna take a quick 90-second break and come back. We got more Tasty Live after this with oh joy, your friend and mine, Mr. Scott Sheridan. Next, we'll be back in 90 seconds.
Beautiful. Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
To my trusted financial advisor, let me know your thoughts on reinvesting what very little remains of my money into ramen noodle stock, now that I'll be eating it for every meal until I die. Best, Cynthia.
Sometimes it feels good to get smart. Get even smarter with live market insights and insults.
They're all freaking losers. There's no skill.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap.
I got my Ted Lasso.
You actually have pants on.
Yeah, of course. I'm in school.
Huh, got it.
You're flexible.
It's cool.
Yeah. Oh, nice. You are pretty flexible. Let's see, get that leg up again.
Oh yeah, he's really. Right now, my other leg is cramping.
I believe that to be true. decision to build Thinkorswim was a byproduct or a derivative of 20 years. In our minds, the future of finance meant that we were going to move away from something that was very manual and move to something that was tech-driven. What we did with Thinkorswim truly changed the industry. To do it a second time was a challenge that I just had to take. The platform is just leaner, cleaner, a little meaner, legitimately built from scratch. The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. That's what I do.
So I've been trading for about 5 years, maybe 8 to 5 years, and I got in the options world because I wasn't making enough just holding long equity. There's not a lot of strategy. It's just sort of like buy it and then pray it goes up. I found tastylive from my friend, and I started looking at the YouTube videos. My favorite part about it was just that there was math, there was probability, it was something you could consistently rely on. Once someone gets the right information, which they provide on tastylive, they can really change their financial situation for the better. Consistently, not, I bought a stock and it went way up one time, but how can you do it consistently, over and over? And with tastylive, I was able to do that.
Coming up on Bad Money with Jim Blamer, Blamer's hot stock tip of the day.
Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
Got the need for speed? No problem. On Tasty Trade, adjusting your option positions is a right click away. Rolling just got quicker. Tasty Trade, make your move.
Good morning, you knuckleheads. Welcome back, you knuckleheads. Hello, everybody. Hey, enough out of you, Nick. That's right, your friend of mine, the very popular Mr. Scott Sheridan from the Scott Sheridan Studios. How are you, my friend?
Wow, great, because I got Stereo Batista. So that any day with Stereo Batista is a good day, so that's good. Now,
that is correct.
Let's just get through a couple things on the weekend, some good, some bad.
We can't talk about the Bears.
Some good, some bad, some okay. $20 from Tom.
That was good. That was great.
That was good.
Shocked,
right?
Actually.
$20 from Tom, and Indiana won. So it's like a dagger through his heart because he had the winner, but he lost money. It's kind of like buying premium, and the market goes your direction, but not far enough, right?
That was probably a tough payout. Three separate Venmo transfers
from the airplane.
From the airplane.
Okay, so that's one. Two, just gonna touch on it. Done with the Bears. Like I can't.
Over.
It's over
until they clean house. Until they
have to clean house.
I was at the game.
I don't know how anybody could go. I was thinking about people at the game, and I'm watching people go like, "Oh my god!" I'm like, "Look,
some of the words.
It was by choice you went to the game." When was the last time that you saw a professional team literally just give up? They gave up. The offense, I was watching them walk around the field. They didn't want to be there. It was crazy.
I'm telling you, that Washington game was the dagger. That killed all the vibes. It killed everything. It killed all the momentum. I mean, that was the dagger. That was it. When was
the last time an NFL quarterback was sacked 9 times?
I don't know.
Right? I mean,
probably last week when the Bears played.
No, I think he was sacked. I want to say 9 or 10
I think we get
times.
progressively worse each week in sacks.
I mean, if you're Caleb Williams, at this point, you go, listen, put the other guy in. I'll just.
Well, but Jim gets 3 football teams to root for. So who should we take? Jim.
He has 3?
Yeah, he's got it depends on who wins. Like he'll take the team that wins the year before, and then like wherever his new location is, take that.
I'm an underdog person.
Okay.
So like when the playoffs start, like when the Mets, I didn't watch a lot of baseball.
Yeah.
That was fun.
Yeah.
You know, like just watching the Mets do what they did. So I'll wait till the playoffs start because clearly there's no more football. I mean, there's actually nothing in Chicago right now. The Bulls are horrible. The Hawks are worse.
Can't even watch any of them.
And you can't even watch them.
You get the antenna.
Right, so they're bad, and we can't watch them. It's like the restaurant, you complain about it. The food was horrible, and the portions were small.
Yes.
So, right. So we have no sports to watch here. We need a new team. We need a new coaching staff for the team. Otherwise, the team needs to be sold. So
that too.
If and when the time comes that she passes at 104, maybe.
Is that how old she is?
I think she's 104.
Right now.
I think she's 104. Can we look that up?
I'm doing it right now. I'm looking.
I think Virginia McCaskey's 104.
She was at the game.
How old? 68.
101.
101.
1923.
All right, 101.
Holy. This woman saw the Great Depression.
I think
she's
outkicked her coverage, so good for her.
She's lived through 2 Great Depressions, the real one and the Chicago Bears 2024 season.
Okay, anyway, let's move on from that. So, Tony.
Yes, sir.
Have you finished Disclaimer? Have you watched Disclaimer?
No, what is it? What's it on?
Well, it's on Apple. Have you finished? No, it's on, Apple.
I need to go earmuffs?
No, I'm not going to say anything. Have you finished?
Earmuffs? I'm really good at earmuffs. My dad used to say this to me all the time as a kid. Earmuffs on.
Yes or no?
I haven't watched the last one yet because I think it just came on this weekend and I was traveling.
Okay.
See, I'm a Penguin guy.
Tommy asked me would I recommend it, and I said it has to be to the right person because it's really dark, but it's really well done.
It's really good.
I think it's really good. Really dark. But Kate Blanchett, Sacha Baron Cohen, and Kevin Kline, they all do really good jobs. And anyway. All right. Now.
It's really, wait a minute. I gave you one assignment. While you were eating your Italian cookies, did you watch Martha?
Oh, no. But I did see the clip, which was amazing.
Walk.
From behind. Oof. Cannot tell the difference. Cannot.
You cannot tell the difference. It looks just like Sosnoff.
Cannot.
I'm serious. From head to toe. It's amazing.
See, my image was when Jules and Tom and I 100 years ago went to Jackson Hole to ski. And it's super windy one day, so we took sleds and went into Yellowstone, which was really cool. At that point, I realized Tom's built like a bison. Big head, big shoulders, little tushy.
Yeah. And like little...
Big head, big shoulders, little tushy. And now that image is replaced with Martha Stewart because it's just 2024 and it's more current.
Ooh, that's bad. It's a tough image. Tough image. Oh my God.
Hey, Tony.
You are right. He was built and still is kind of built like a bison.
We need one of those memes, like the meme where you have like a picture of one person and it kind of morphs into the next.
Yeah.
We could do that. I think
the bison into
the Martha to Tom to Bison.
How old is she? 82? What did we say?
Ooh.
82, 84? She looks way better for 82, 84 than Tom does.
Oh, not Virginia. We're talking about Martha now.
And Tom does it whatever his age.
83.
83.
So same age as Tom.
She's an ex-model just like Tom also.
Yeah. So have you talked to him? Because I did have a quick conversation. Did you talk to him?
Oh, only via text.
Is he in good spirits?
Yeah, a little famished. Kind of like, I got a lot going on. Hurry up, I got to go.
Super busy.
I got to tell you something. For his P&L, he's in amazing mood.
Oh. Well, there we go.
for his P&L.
When does the show start? Is the first one today?
Yes, at noon.
At noon our time.
Yes.
Okay.
6 o'clock.
So we're gonna have to watch the follow feed, see what he's trading.
Or I could give you
Yes, you will.
account.
Yes, you will.
Yeah. Do you want me to monitor it? Do I have to babysit it?
Yeah, I can show you the account. It's like a.
Make sure he's not in any margin
he
calls.
puts it in, you just close it right away. You go, we don't like that shit.
I'll help. I'll try to remote in. Put on some good trades for him.
My Bear fans want to remind you that Cutler used to quit on us all the time too.
Oh, I don't think Williams quit. I think
his offensive line did.
Well, I don't think they're capable. I mean, they're not NFL players. But the receivers and everybody else was just like, their heads are down going like, why are we even out here? Oh. Legitimately, they, on paper, could have and should have been 6-3 and on a stretch 7-2 at this point, right? Should have beat Washington for sure. And if they beat Washington, then mentally they go into that Arizona game completely differently. And then you think they could get New England, and now they're 4-5, and they most likely will not win another game.
No, that certainly will not.
You're taking a lot of liberties with this when the under/over was 8 games, I believe.
8.5.
You think
8 games.
I thought it was 8.5 because
we were supposed to be somewhere around 500 by the time we started to play the Lions and the.
We are. We're around 500, just below it.
Yeah, we're below it, but the vibe is way different. Like
the vibe is like 0.
Yeah, if we were 5-4 right now, and we had a little bit of mojo going, I would be excited for the second half because you were not expecting anything better than like a 9-8 season.
Right, to go from 4-2 to 4-5 is very different than being 0-2 and then winning 5 in a row and then losing 1. Right.
Yes,
totally agree with you. Yes. So Tony.
Yes, sir.
The 6 and I made a power play because I couldn't watch the Bears game anymore. So we drove up by you, had a little Barnaby's. Delicious.
Really?
Delicious.
Did you? So were you inspired by that little text that I sent you?
Yes, I was. And I said, you know what? We got to change the mood. Not a lot going on around here that's working for us. Let's go.
You know what the best thing about Barnaby's is? Well, the vibes are amazing there, but the pimento cheese and the Ritz crackers while you're sitting there, you could just kind of nosh at the when you're ordering. Yeah, it's great.
So we ordered on the way up there, so we got there.
Oh, and you picked it up and drove downtown?
No, it's ready. We just
ate there.
Yeah, you just ate there, but we ordered it. Yeah. Filbert's, a pitcher of Filbert's root beer.
Oh yeah, that's all.
$6.
Really?
That's the way it should be.
Yeah,
that's the way it should be.
There's no inflation in Barnaby's.
No. Barnaby's and
Make America Barnaby's again.
The two inflation does not hit those places.
And next power move, my Costco, your Costco, not your Costco, had hole in the wall red sauce.
Really?
Tom has, that's old news. Tom has already mentioned that on the show.
Oh, really?
He said,
not edible?
I heard Costco is more packed than it's ever been.
So you now need crazy. I went on Saturday, and I don't do what Tom does, which is wait 15 minutes for a spot.
For parking spots, so these.
So
that's the most. I'm sorry. That's.
I don't get it.
It's the worst thing. It's like you could park one row back and get a parking spot instead of just sitting there for 15 minutes.
And he thinks it's the greatest idea.
No. But the best thing about it, the best thing about it is he'll dedicate 2 hours to allegedly go walk 3 miles.
Of course.
So I am checking out, and I had some bourbon, and the woman looks at me and said,
I need an ID.
I need an ID. and I looked at her and I said, I turned around. I'm like, are you talking to me? And she's like, yes. And I said, you just absolutely made my day. And she's like, why? She's like, I think you're close. And I give her my ID and she looks at me and she's like, wow. Okay, whatever you're doing, keep doing it. And I started laughing and I'm like,
you know what? They must be doing the Trader Joe's thing where they get super friendly at the checkout line.
No.
Yeah.
Is this a new policy at Costco?
No, I don't think so. I mean,
listen, I don't like to curse on this show, but I'm calling bullshit. Okay. I mean, you haven't changed. You haven't changed since I've known you. Like, for the last 40 years or 30 some odd years that I know you, you haven't changed, but you were old looking back then. I mean, let's be serious. Let's be serious.
Wait, did Tom hand you the baton and say, whatever you do, make sure you get a couple jabs in?
Maybe it's the tap dancing classes you're taking now. They're getting you into
those
like
start?
really good shape.
No, Arizona. I got to find a place.
Yeah, I was gonna say, where are you gonna find a place? You need to do that in like a city like Chicago.
Yeah, I know.
You're not gonna find a tap
thinking about
dancing
that.
studio
I was thinking
out in Cave Creek.
Yeah, it's a valid point.
Yeah.
It is a very valid point. Now the good news is private lessons. We might be able to find somebody.
Maybe.
My worry is that if and when I try practicing at home, the dogs are gonna run.
Oh yeah, because
they're gonna be like, "Oh my God, Dad's doing this again." Where should we go?
No, if you do private tap dancing lessons, you're gonna get somebody like Jules.
I'd take Jules if he knew how to tap.
I think you're gonna be good. I think it's like.
I appreciate that.
I think you're.
Wait till I come in because I have a feeling this floor is going to be A+ for tap dancing.
The studio floor is perfect for tap dancing.
Yeah,
I think it's going to be A+.
Are you gonna perform, like do like a recital for the trade desk or something?
Well, I'm a little hurt because Tom told me he wouldn't come to my whatever thing was, and I said recital. He's like, "Yeah, I'm not coming." I said, "No, you have to come." But I might if I do it here. He doesn't have a choice. But
are you doing it with the 6?
Yeah.
Are you doing? Oh, that's.
She wants to do it with me. This was my idea, and she's like, "Can I do it with you?" I said, "I'd love to have you do it with me." Right?
Move.
That's a beautiful thing.
Right. So here's my call.
I can't wait to see you in one of those little tight outfits with the with the thing hanging. You know what I mean? You better be like a French po' bowl. That's all I'm telling you right now. Don't you disappoint me.
So here's the thing. Listen, I know, as the 6 always says, got to believe to achieve. But I think I'm realistic in my expectations. So I'm hoping I can just kind of get a couple moves, like nothing special, just like actually move my feet so you can hear some clicks. If I could do that, I'll perform here. If I can't get that far, no reason to perform.
You've got the body for it, though. You got the slender, like I could see him like move. I could see you move.
Appreciate that.
So I think it's gonna be.
I think tails and a top hat would be the way to go. But I don't have you.
I agree. But did you watch Sosnoff do the line dancing thing with Katie?
Oh my God.
I think Sheridan's got a little bit of that Jewish rhythm in him. So
we've established that. I got nothing. I'm getting a little better from riding. So I'm getting a little better with rhythm, like hearing it. But it's amazing to me how I watch people like this that have rhythm. I don't.
Nikki, you're lucky you got a little Italian blood in you over there, so you got a little bit of rhythm.
It gave me a lot of other things too. Okay, some good things, some bad things. There's a whole mix of things that got into your Italian blood over there. Okay, so
musical people. We're musical people.
Yeah, yeah.
Wait a minute. As Tom would say, said nobody ever, but that's okay. Hey, by the way, did you happen to go see Sebastian Maniscalco this weekend?
No, but it messed up the traffic by my.
Oh, do you live over by? You live by the United Center?
Yeah.
Why didn't you go? He's great. I didn't know it was this weekend.
Yeah, I don't know. I feel like the shtick has kind of played out.
Oh, really? I haven't heard him like recently.
Yeah, the sauce. I got the sauce. Don't you love the sauce? Like it's played out a little bit. I don't know.
Okay.
Why didn't you go?
I didn't know it was this weekend.
Oh.
But to me, I mean, I think he's really funny. I mean, to me, Bill Burr is still the best out there right now. And
Shane Gillis.
Better.
He's the best. You got to watch the Tires. Tires on Netflix. Great. 30-minute episodes. Done. You'll crack up. You'll die.
Is that him?
Yeah.
Tires. I'm writing it down. Can you text me? I'll write it down.
Yeah.
All right, I'll get that. Tony, how's the hockey tournament this weekend?
Thanksgiving weekend. We got the turkey tournament.
What was this?
No
week?
tournament this weekend. I went to Florida to go see my. I went to Florida to go see my new.
Yeah. How was the wedding?
It was great. They invited me to take all the pictures with them. They made me stand on the end of the pictures in case
because they
photoshopped
you out.
No, he got the invite for the wedding gift. So he's a cash guy.
Some truth to that.
Right, enough.
It was really wonderful. It was really nice to meet everybody. It really was cool. Good family, nice people.
Thanksgiving, I'll be in Arizona. You gonna be there?
No, I've done Thanksgiving in Arizona before. It's nice.
It's nice.
I won't be there till January. Are you coming out after? I'll take you golf anytime I'll come out.
I'm going out there for Thanksgiving. I was gonna invite you.
I appreciate it.
But
See, now that was a smart move because you knew I was going to be there and I have to reciprocate.
I know.
Now you get to come play at my place,
Right.
which is what you want to do. Anytime, like this.
All right, I got you.
Anytime.
Scott's always looking out for me.
Right? There we go.
I told you 10 years ago, son. Get on Scott's side.
I know. I rode
not on Tom's
I
side.
rode the wrong horse. I admit it. I'm sorry.
You kind of did, but
I know.
it's okay.
You're
A lot of people make that mistake.
Support. You're Nick in support. You could have been Nick, head of all things good at IG and corporate.
Yeah, living somewhere else, working 2 days a week, be perfect.
Right? Never too late.
I know.
I'll take you.
It's all right.
All right. All right. Should we
In my bed.
Should we get to some business?
Sure.
Do we think Tom's listening?
Ooh.
Yeah.
I don't think
He
so.
would have called in if he heard you tap dancing
That's
again.
true. All right. I'll give it to him anyway. Top 15 symbols going through the system first 40 minutes of the day. No broad-based indices or futures. Tom, by chance, if you are listening, number 15, Riot at a 33. For everybody else, Tesla at an 85. Coin at a 68. NVIDIA at a 39. MSTR at a 52. GLD at a 60. Mara at a 24. PLTR at a 33. Meta at a 13. Apple at a 19. AMD at a 27. SMCI at a 67. Amazon at a 10. SoFi at a 34. SOXL at a 35. And number 15 for Tom, Riot at a 33. Rounding out the next 10, DJT at a 53. TSM at a 43. TLT at a 38. MU at a 31. SLV at a 37. And Goldman Sachs at a 31.
What say you?
See, and
100. Goldman Sachs. 600. It's up $100. 4 days.
Why not?
Goldman.
Why not?
Why not? Strong and quite strong, right?
Bitcoin 85,000 touched it.
Wouldn't touch
Yeah,
it.
it did
You wouldn't touch it?
85,100.
Wouldn't touch it because it could go easily. Could go to 100. It could go back. It could go back to 50.
But that's the beauty of it. That's volatility.
Wait till we come out with the industry comes out with smaller priced options. That's going to be great.
When do you have any idea when the iBid options are coming? Because I know that was like a thing that they approved it, right?
Yeah, I don't know. I do know that the one of the exchanges. I'm not going to say which one.
Okay.
But I have been in touch with them. They are coming out. They're trying to come out with a smaller version of the Bitcoin contract, which I think will be great.
Do you know how big the size would be? Like,
I think they're doing 2. I think they're going to do. No, take that back. Maybe it's just a 10th. I think it's going to be a 10th, or it might be because right now
a tenth of a coin.
Yeah, I think they're doing one that's a 10th and one that's a regular coin. But the difference is it's one versus the CME. If you want to trade that product, it's 5 coins.
5 coins, yeah.
5 coins.
So they're going to have a 1 coin.
1 coin and then a 10th, I think.
And then a 10th.
I think. So I don't want to give any more details. So no, I don't want to get anybody in trouble. But that's what's proposed right now, and it'll be great. I mean, great product. I mean, when you think about if you had a $80,000 product, that's think look, it's up $7,000 today.
Yeah,
84,000 up.
The micro Bitcoin contract MBT is 1/10 of a coin.
Correct.
So
but the options don't trade.
I don't know if they even have them on there. They do have the options. They have one. They have the front contract
because we're stopping it because they don't trade.
Oh,
that's why there's no liquidity and people were getting trapped.
Yeah.
So
you got them at every. They're 5,000.
Correct.
So, I mean, you can't.
So, but if there was a product that came out that was 1 Bitcoin and a 10th of a Bitcoin, great.
Yeah, that would be perfect size.
Right?
Yeah.
And I think it will attract a lot of retail.
Need those options.
I agree.
Right?
Yep. I agree. I think the market's hammering for it. They want it bad.
Bad.
Yep. Totally agree. Because Bitcoin itself, unless you're trading the cash on the platform, it's an undoable play. Mara, Riot are not substitutes for the coin itself.
No, and again, I just think the CME would be interesting, because again, they did try coming out with the smaller contract, but it didn't get any attraction. So when they came out with the product, it was 5 coins, but I think when they came out, I want to say Bitcoin
In the
was
40s?
1,000,
Yeah.
15 to 20,000,
Yeah.
and it was 100,000. That was already still big. But how does any retail customer trade at 84,000 times 5?
No, you can't.
Right? You're
Yeah,
almost
you can't.
450,000. I mean, like $500,000 contract. What are you doing?
And the options there are tough.
Yeah, well, but I mean, again, it's a $500,000 product.
Yeah.
Right? So if we come out, if the marketplace does get access to a full coin and a tenth of a coin, I think it'll be really, really tradable. And I think you'll see a lot of liquidity. It'll be great.
Yeah, the pairs trades that you could do with that would be fun.
Right.
Hey, Scott, before I leave you, I want to leave you with this little thought. Some of my peeps, my Taiwanese sources have said to me, the lady at Costco is probably checking your ID to make sure if you got the super senior discount, but you look so good.
No, that's wrong.
under that number.
Whoever sent that, that's wrong. That's not nice. That's not nice.
Hey, I could take it.
Oh, only Tom gets that treatment.
By the way,
You were under
could
that
you send
number.
me details on that one? What is the super senior discount?
5, 10, 15%. Who knows?
Hey, I'm open.
So good job out of you, my friend. We're going to take a quick 90-second break. We're going to come back. Forget about the girls. You got TP coming on next. We'll take a quick 90-second break right after this. Peace.
If you missed the live show, here's our cherry on top weekly recap.
The guys in Australia absolutely love it when they can make fun of you. It is part of the culture. If they have an opportunity to pounce all over you because you're an idiot, then they take every advantage of it in Australia. And
I welcome an Australian man to pounce all over me. Yeah, he could go down under.
Tom's going to give me a hard time for this. Can't believe I'm going to say this. I'm in a vulnerable state right now, so I'm going to say it. Taking tap dancing lessons.
hold on, what? The two of you are doing tap dancing.
Yeah.
Oh my God! I want to come watch. Please, can I come watch? Don't make me come to your rehearsal. What do they call that? Not your rehearsal. Oh yeah.
Oh, yeah, you're coming.
Graduation, like his graduation.
When my recital.
Your recital.
Yeah, when I do my recital. Yeah, you're coming.
That's the freaking best thing you've ever said,
You're
son.
coming. You're coming. I'll tap in here one time. I'm gonna do it
with your hair. You're gonna look like Borat. I've seen you play golf. I think you should take up tap dancing.
Thank you. See, I knew you had to get a criticism in there, some. I appreciate that.
TP refuses to adjust his webcam, so he does the show like this. And it's the most Bill Belichick camera angle I've ever seen.
You know what? A couple times I asked him to change it because I thought it'd be better.
Everyone in production has asked him. Every single person.
I decided it looks great. I love it. Just leave it the way it is. If he can get away wearing that shirt with that pose, he deserves it.
Oh my God.
Like Chilean sea bass. It's actually toothfish or whatever, soft fish.
Ugly fish is what they call it.
Fish.
Yeah.
Right. So it's Chilean sea bass. It sounds good.
I got a Chilean sea
$50
bass.
a slice. He just eats
What do
it
you
up.
mean? Well, hold on. What do you mean you got a Chilean sea bass? If you tell me that you bought one and it's sitting in your refrigerator and or it's been in your freezer for a few years and you just uncovered it, what does it mean you got one?
Every time I go to Costco, I buy Chilean sea bass because I like it.
Ew.
And how do you cook them?
Oh, I have a system down. I cook them in.
Jesus, blessed. I can't. I almost made it. I took your crap all freaking day long. I am not taking this. I want to get to Johnny Trades and I want to go.
Get the full scoop by checking out the archives at tastylive.com.
It was a beautiful fall weekend in Chicago. Lots of sun, warm temps, and tons of people out in the neighborhood. To try and be more normal, I decided to work from the coffee shop all weekend. Mingle with the common folk for a bit each morning. In fact, I wrote the cherry bomb yesterday while talking markets with complete strangers. What started as a discussion about fried clams in Cape Elizabeth evolved into a heated debate about junk bonds and cashless collars. That was fun. You see, every once in a while, you need to challenge yourself. That's why, for the Bears game, I made Jamaican-inspired oxtails. Who says I'm not a risk taker? But the real reason I'm sharing the story about talking finance with random strangers is because that's what makes Tasty so special. Unfortunately, we live in an incredibly divisive era of interpersonal communication. When talking to people we don't know that well, we can't talk about politics, religion, social issues, education, or even current events. I feel like every topic becomes an instant powder keg. Every topic except for finance. Tasty Nation speaks their own language. They're different. They can articulate certain aspects of investing that always intrigues and engages random strangers. I commonly hear, how do you know that? Strategic financial know-how and articulation skills are an amazing bridge between people with very different views and opinions. Let me give you some examples. The next time someone says, "Isn't Trump amazing?" you say, "I just bought a broken-wing butterfly in the SPX." Or, "Kamala is just incredible." You say, "I just sold a jade lizard in NVIDIA." On immigration and taxes, you say, "I really love the leverage of span margin." Tasty Live really is making the world a better place.
Hello, everybody, and welcome to the TP and J Show. TP, thank you for joining me today.
Oh, thanks for having me on, Jenny, and welcome back to the trading world. We missed you last week.
And happy Veterans Day. I'm glad to see you in your blue. I'm in my red. Together, it's good. Happy Veterans Day, everybody out there. Go get your free meals. There are like 59 places near me where my dad and my father-in-law can go for free meals today.
Really?
Yeah.
See, I did not serve. My brother, my older brother, well, my only brother, he was in the Army way back in the 60s. My dad, of course, was in World War II and Korea and stuff, but he's gone now. But yeah, I think it's great. But you know, Jenny, it seems like they're like, as a percentage of people, there are fewer veterans than there used to be. I mean, obviously, you know, when they have these giant wars like World War II, growing up, everybody was a veteran. But now it's not so many.
No, and I've been part of and gone to some of those honor flights. Do you know where they had all the World War II veterans fly them out to DC, and then they come back, and there's a big celebration here at the airport. And those have been really cool. But, you know, I'm pretty sure the last World War II veteran went, and then, you know, now they're taking the Vietnam veterans on the honor flight.
Yeah.
But at some point, like you said, I don't know the numbers really of how many veterans there are now compared to the past. But are there any World War II veterans still alive?
Probably. But no, it's an unbelievable sacrifice what all the veterans gave, and no matter what their roles and stuff. And no, it's wonderful. The least we could do is give them a day and some free McDonald's or whatever it is.
Hey, you could go get free wings at Buffalo Wild Wings. There's a whole, I think it's almost every restaurant around me is offering something for the veterans today, which is really nice. It is nice. I'm sure my dad will probably go out for 10 meals.
So Jenny, I was so busy trading last week, and obviously do the shows with Liz, not a problem. But the rally that we saw last week I was very surprised, because I had some short strangles on, iron condor, things like that, and they blew right through my short call strikes. I had to do a lot of defending on the untested side, rolling up my puts as if there was enough premium, and a lot of times there isn't now. But this rally just took me by surprise.
Well, okay. So the last time Trump won, we had a crazy rally that followed as well.
Well, we had that crash at night.
At night, but then
And then it
during
bounced
the week,
back.
there was a massive rally.
But the magnitude of this, Jenny, is what gets me. Is that, yeah, I understand it's, the peaceful transition and all that stuff, and maybe the economy is going to be better or whatever. I don't know, but it's just the surge. I also saw, Jenny, in the news that $20 billion last week flowed into mutual funds, stock index funds, or just stock funds. $20 billion. And I didn't do any research to see whether that was really big or average, but money is flowing into it right now. And so my question is, Jen, is this short term, or is this a short term rally? Do we fade this rally, or do we go along for the ride?
My question to you today, TP, was going to be, what the heck do people do now who, let's say people had long positions, were mostly put sellers, had long delta, and now they've taken off. Let's say people have taken off almost everything. Like, I look at our account, and it's not scrolling. My positions too, they're not scrolling. People don't have scrolling positions like they used to. What do people who were long delta or were slightly bullish and they have nothing left, like, what do you do if you're just looking at it with a blank slate? Like, I took everything off. People lightened up before the election too. I think people were lightening up. They were nervous about what was going to happen, which is probably why all that money was coming back into mutual funds. People pulled money out ahead of time, thinking, well, what if, what could happen? What if we do fall? And they put it back in. But now, how high? What percentage are we up on the year? Let's pop into the platform. And take a look.
Just for the SPY or SPX.
Right. Like, here's SPX. You go back to the beginning of the year, and
Jenny, I can't read that.
We were 4,700, 47, right around 4,700.
So it's up like 1,300 points. So 1,300, that's like up 35, 40%.
Which is, have we ever hit a year up 40%?
I think we probably have, but it's huge. And so what do you do? Well, so Jenny, one of the things is, all right, and you know me, Jen, I'm not an economist. I don't read economics. I don't really care about that sort of thing. I don't do the whole, the balance sheets and blah, blah, blah. But if you think about what's going on right now, the dollar is really strong. And
what would you if someone wanted to look at the dollar, what would you?
Well, I would look at specific currencies. Like right now, if you type in /6B, that's the British pound.
Which would be the opposite.
Right. So, right. When that thing goes down, it's the British pound dropping. Right. Mm-hmm. And so that's down. If you want to see a huge move down, type in 6E, which is the euro.
And I was looking at selling a put spread in the euro today. But okay, we're still, for so long, the euro was strong. I remember, way back when I went to study abroad back in the 90s, I believe the euro was worse off and the dollar was even stronger than it is right now. I don't know.
Yeah. Well, I think was. And go ahead. What were you going to say?
So it could keep moving in the direction it's moving. The euro could keep going down. The dollar can keep going up. We've been there before.
So here's one of the things that people, and regardless of where you stand politically, and I know that's a big issue right now, but the whole point about increasing tariffs, right? You say, well, it's going to increase prices and do this and that. Yes, that is absolutely true. But what a country can do, and this is why these currencies are dropping, what a country can do in response to tariffs in order to keep its market share of a product is devalue its currency. Okay.
Right.
So, and especially if you're like China, which is, you have a dictatorship and they say devalue, here, print another 100 million yuan, they do it tomorrow, right? Or cut interest rates, the 100 basis point, they do it, right? The European Central Bank is maybe a little bit more cautious or whatever, but that's what's happening right now. So this whole expectation of tariffs, right? When the Trump administration comes in January, it's what's driving these currencies down so much. So let's say that the yen is down, but not as much. The British pound that we just looked at is down, but not as much. But the euro, if there's some fear of a trade war, tariff war with the European Union, Jen. Yeah, they're just crushing the euro right now. So,
but who makes that decision? So in our house, my husband works for a German company, and he sells German products, and he sells German products here in America. And we've been talking about this, like the tariffs are going to hurt them, but the change in the value of the dollar versus the euro is helping them. So it's like one offsets the other. It won't make a difference. But who is driving down these prices?
Well, traders dumping this stuff. I mean, that's really what it is. I don't know if the central banks are doing anything right now, but it's just traders. It's people with big positions in this stuff that said, yeah, all right, let's start puking euros. And they take them down. And so what Liz and I were trading last week is we sold some put spreads in ZB. And let's see what ZB is doing right now, Jenny, just for the sake of argument.
Okay, and I'll take a look. They already came off. They must have already come off.
We took those up because one of the things when I do a show with Liz, she's always really cautious about doing things that you would disapprove of. So it's like, it's kind of like, I'm like, gee, Liz, maybe we could do this. And she's like, I don't know if Jenny would approve. So she's very cautious about, and by the way, Jenny, she missed you. She she missed you terribly. She says, oh, TP, when's Jenny coming back? That's what she was saying.
TP, it was funny because I was in Florida and it was just my husband and I, and it was like we had nothing to do because my son's away at college. My daughter was in San Diego for a school trip. So we were just laying at the pool, nothing to do. And then Liz got to Florida and we were like two old retired people thinking, oh, thank goodness we have friends here. So our big day was getting ready to meet them for dinner.
Isn't it weird, Jenny? Is your kids are closer to my age, my kids' age. And yeah, both my girls are in college and they do their own thing. So and they're both kind of close, right? They go to school in the area. And so we took them out to dinner a couple of weeks ago, and I asked my older daughter, I said, are you going to be around for Thanksgiving? And she looked at me like, what's the matter with you, Dad? Of course I'm going to be around, but Thanksgiving. But it was a serious question. She's 21. She can go anywhere. She can, get on a plane or do whatever. And she does. It's not like she's taking a plane trip, but she goes around and stuff. It's a valid question. These kids, Jenny, they're turning into like adults. It's kind of strange.
I never heard.
And yeah,
from my daughter.
I'm staring at my wife. So what do we do now? That's why we have so many dogs, Jenny. So we have these dogs to keep us entertained. Because God knows I'm not entertaining enough for my wife.
Well, let me ask you, did you do anything special for your daughter's 21st birthday? Because my son's turning 21 in a couple months, and I keep trying to figure out what to do for his 21st birthday.
I can't remember. I'm sorry, Jenny. It wasn't my 21st. It wasn't my 21st birthday. So I didn't really care that. No, of course I love my daughter. Whatever. No, I can't remember. I know. The thing is, for my daughter, she had a birthday with one group of friends, another birthday with another group. It's like it's like a week.
Right. Well, here's a question. If he has a Tasty Trade account, And maybe for his 21st birthday, I should buy something for him in his Tasty Trade account. So what do you think? Like, what would be a good happy 21st birthday? I bought this for you I put the money in and bought this for you in your Tasty Trade account.
So I would think about, like, I know your son, I know he helped out your husband, doing some work over in Germany and stuff like that. And he kind of, and this is the question I had to Liz last week, is do you talk to your kids differently about careers and jobs? Not trading, but careers and jobs than your parents talk to you?
Definitely.
100%. It's just different, right? And I'm not saying my parents were bad. They wonderful, wonderful parents. But the point is, our kids are so much more, I think, knowledgeable, right? They know about more stuff than I ever did. And I'm guessing than you ever did. Because first of all, your son has the internet. He goes online. He's aware of technology and things like that. Why don't you look for, something like, what's NVIDIA? NVIDIA right now, can he afford $146 stock?
So when he was 18, we started his account with $5,000.
Mm-hmm.
And now his account has $10,000 in it.
Yeah.
Which is pretty good. So from 18 to 20, almost 21. Pretty good.
That's
right?
Awesome. That's awesome.
Yeah, we mostly try to sell puts or put spreads in little products.
Yeah.
But
it's time for him to grow up to a big product, Jenny.
He wanted NVIDIA. But he told me he wanted NVIDIA, probably right around here, where I said, nah, it's already so high. So I just had him buy a little bit of this NVDY, which I don't even really know
what
much
is
about.
It?
It's some kind of. You tell me. Let me read you.
I've never heard of it.
It says ETF Trust Yield Max NVIDIA Option. What is? We don't get the full name here.
I don't know. I don't care. Let's see. Is it liquid?
I think it's some type of NVIDIA.
Jenny, it has 3 stars of liquidity. And if you just click on the upper right-hand corner there to the arrow and open up the analysis part to show people where the liquidity is. So if you go, oops.
Oh, hold on.
What happened?
Oh, you mean the overview?
Yeah, the overview.
Okay.
Yeah, so it has 3 stars of liquidity, so it's not bad. Let's look at the options.
But it's some type of NVIDIA proxy.
Yeah.
That's only $25 instead of
$150.
Yeah.
Yeah. So okay, you could sell maybe, I don't know, the 23 puts in there. Maybe you could get 45 cents for them.
So, but if I'm thinking like, oh, gift, instead of taking him to Vegas, gift, I'll put in money and buy something. So so you think I should, yeah, maybe I had him in, he was in quite a bit, but they've all gone up so much. I don't know if I should encourage him to close it. Like, he wanted Microsoft, that went up so much. I said, maybe you should think of closing it. He want all these things. He was in Reddit. He wanted Reddit. That went up so much. I said, well, maybe you should close it.
Jenny, you're being too much of a mom. You're being too much of a mom. Let the kid play, okay? Let him get out there and start trading. Well, here's the deal. I agree. This stuff that's rallying, would I prefer to buy this stuff after it's sold off? Of course I would. Of course I would. But my fear is right now that we are just in kind of a market explosion. And I know, Jenny, the economy is not the market and vice versa. Okay? That the market the S&Ps can take off and the economy can stink for people. I get that. But it seems like, and especially if interest rates are going to kind of start drifting a little bit lower, that, yeah, just a bullish position here. If you look back at the last 20 years, I was just thinking about, my mother-in-law who had a lot of money invested, and she was a very successful businesswoman and basically put her money in muni bond funds for the past 25 years, right? And that's what she had. And she made 3% or whatever it was a year. If she had just said, okay, I'm going to put 10% of my money in an index fund or something like that, her estate would have been much, much larger. And, whether that was her goal or whatever. But my point is, I've been bearish for so long, Jenny. We would need a 50% correction for me to recap my losses on these old bearish positions. Okay.
So TP, for it's so hard. It's really hard because we've watched the market for decades, right? We've watched the market for decades, and I couldn't ever bring myself to get long SPY this year, never, and not even sell puts in it, because I was like, I'm not getting back in there till it hits 300,
Uh-huh.
And but you can find other things. So instead of just being short, I would just try to find other products that were near the bottom or near their lows or not at all-time highs to sell puts in instead. So you don't have to say I'm not going to play because this market's at all-time highs. I'm just going to be bearish. I can just find lower price products or products that are already kind of beaten up and get into those and forget about these others. It's a little safer.
Sure. I mean, but that's why I think something like NVDY, it's not the most liquid, but if you could sell the 23 puts in there, I'm going to see if I can get them.
I'll sell some here.
I just want to see if I get filled. I don't think I will.
Now, I do think so.
The closing. I got a closing only message.
Oh, closing only, really?
I get it for NDVY.
So then I would have to go into the big dog. I'd have to.
I mean, that's. Like I said, and so what I would do is the earnings are coming out on the 20th. So the earnings are coming out next week. The skew is still pointed towards the upside in NVIDIA. So you could certainly wait until next week. At that point, the way I would think about this, next week you take let's say 2 weeks out. Let's take 14 days out. If you do that, the Jan options with 67 days will be at about 53 days to expiration, kind of right in that option expiration wheelhouse. So if you're thinking about, then you and your son could see, okay, what did NVIDIA do after earnings? And just wait until earnings come out, then look at the Jan options at that point. Discretion can be the better part of valor. I understand that. So, yeah, we might have a sell-off, in which case you take advantage of that. But, yeah.
Do you think people should... Do you think
when's his birthday?
Oh, January. So I have a little time. But I think I will, TP. I think I will sell some puts or put spreads in NVIDIA for him, throw in the money for those NVIDIA spreads and see if we can keep them going. Okay, so talking about waiting for a sell-off, do you think people should be, we look at this market, should people be waiting for a sell-off to get back in, or should they get back in but just with defined risk trades instead of naked trades?
Yes. So I think waiting for a sell-off, you could wait for the next 10 years. Okay. And Jenny, tell me what, and I'm not putting you on the spot, but what's a sell-off?
Right, yeah, exactly.
1%, 10%, 20%. So at some point, you have to start taking risk. Okay. You can't, there's no such thing as best. Yes, would I like to buy NVIDIA if it were $20 a share? Yes, it's not. Okay. It's 146. So that's the reality of it. And what I'd say is, all right, let's look at, and what I was talking to Liz about last week is I have been trading more NDX, and I'm not saying people should trade NDX because it is a huge product. Okay, it is $21,000. Okay, but if you think about what the NDX is, and the Qs by extension is, it's a more volatile product than there's so many expirations. It's about 15, 16% right now. And then the Qs.
Are you surprised with this turnaround? I mean, I saw
Qs
NASDAQ.
are 19.
NASDAQ
I'm sorry,
morning.
Jen.
Are you surprised with this rally in the NASDAQ? Because this morning, look, you could see we were as low as, 2142. And now NASDAQ was down 70 points this morning.
Yeah. Now it's not. And this is why I'm saying that if you just said, look, for the next, maybe until the inauguration, I'm just going to position bullish just because everybody seems to be so bloody optimistic about the future. Okay. And so if you look at Qs, so I said Q has higher implied volatility than the SPY, and that's kind of the nature of what it is. But if you went out, let's say 39 days, and yeah, if I'm not sure if you're getting any credits for short put spreads, maybe like the 505, 507, but doing like the 513, buying a call spread, buy the 513, 515 call spread, something like that.
This is what I've been doing. Last week while I was in Florida. When I was in Florida, any bullish position I had that was, had serious risk in it, either long the stock, short the puts, whatever, closed them all and switched them all to this. Bought a call spread, sold a put spread to pay for it. I mean, it's much smaller reward potential, much smaller profit potential, but taking your risk down to very, very minimal risk, but still having a slightly bullish position on in case we keep going up.
Yeah, so that's my point. So you can take a $500 product, and because thank you CBOE for making single point strikes in this.
Right.
I mean, in the old days, Jen, you remember they would be 5 or 10 points. You had a $500 index, and they'd be 10 points wide.
Right. I will let you know just for future. In the old days, it was CBOE. In the current day, it's CBO. There's no longer. It's no longer CBOE. It's CBO.
It's CBO.
It's CBO. So because there are more parts to it.
I stand corrected. Thank you, Jenny.
I'm live from the CBO every Wednesday, and it took like a lot of slaps on the wrist before Liz and I kept getting it right.
Well, see, I know old habits die hard, right? Yeah. And when you I'm a lot older than you are, Jenny. And that's, I was talking to Liz last week. I couldn't remember the word blockchain. Okay. I couldn't remember blockchain. Right. So anyway, I was having a senior moment. So anyway, all right. So this is why I think you could go put a short put spread in the Qs in your son's account or something like that. Get him playing. It's more important.
I'll throw this in just because it's very defined risk. I'll put in a GTC for 50% in it. I like the idea of to get long, sell a put spread to pay for a call spread. It's not as high a probability as just selling that put spread, but you have a little more profit potential. TP, let's talk about the adult accounts now, because
But let me make one last point for your son. And what we have learned over the years with Tasty Trade and our previous companies is it is much harder to get a person who is doing zero trading to get that person to the trade small, trade often status. It's much easier to take a look at like you, Jenny, and say you're trading way too much, Jen. Scale it back a little bit, pick your spots. It's easier to take you down a little bit than to ramp you up. Getting your son used to just getting in the game and playing right now is more important, I think, even than making money. And that's like heresy in my house. You got to make money trading, right? But the point is, the lesson he needs to learn is he needs to be active. All right, let's go to the grown-up account.
And so speaking of that, we were having a meeting the other day and talking about these 0 DTEs and SPX, and I think if the younger generation, if these college kids knew enough and learned enough about trading these 0 DTEs, they would be more inclined to try to make a quick $50, $100 a day using these SPX 0 DTEs instead of trying to make $50 on like a 39-day trade. I think they'd find it a lot more enticing. But the problem with this is that we have to get this pattern day trading rule changed.
Yes.
They have to get it changed because these kids don't have big enough accounts to get in and out in a day.
That is one of the first, if I were president, which maybe I will be someday, but if I were president, that is one of the first things I would get rid of, because I think it is discriminatory. And that the regulators know more about your risk tolerance than you do. Okay? That just because you have more than $25,000 in your account, maybe you're a multimillionaire, doesn't mean you understand what risk is. Right. You don't know. As opposed to some kid like our kids, like our 21-year-olds. Yeah, my daughters know about risk and they can figure this stuff out in their heads. They know risk. Okay? They don't need the SEC or the NASDAQ saying, you don't have $25,000? Sorry, you can't do that. I hate that, Jenny.
How are these kids supposed to get a $25,000 account to be able to place these trades? And it's actually less risk that they could, take it off quicker instead of having to leave it on all day.
Right. All right. So let's go to the big account.
Yeah. So, right. Talking about big accounts, we've got this problem of, we've got the market up 40%. How high do we really think it's going to go? Do we really think it's going to go any higher? How do we change our trading? Like, what do we do? I struggle with it. I thought, well, maybe I'll just focus on the 0 DTEs. And this morning, I've been selling the daily iron condors in SPX. Took a break during the election, just during the election week, because it was a crazy week. But this morning I went in and sold one. But then I kind of panicked because we saw a little turnaround. SPUs were up 19, and then they were almost not up at all. And NASDAQ was down 70, and VIX was popping a little bit. And then I panicked and closed it for like a $5 loss or $10 loss. But now VIX is only up 20. It was up 50 cents earlier today.
Yeah, I sold a put spread in the VIX a couple of weeks, week and a half ago or whatever, in expectation that the election wouldn't be decided on Tuesday night. Okay. Jenny, I was very surprised at that, because I know everybody's all lawyered up and every question would be, contested, right? I was very surprised that didn't happen. And yeah, so I sold a put spread thinking, okay, whatever, we'll take a shot on a one lot, Jen. That's what I did. I did a one lot. And so, yeah, I'm losing money on it. I'm going to hang on to it because, okay, I can handle a loss and I've got enough other stuff against it. But the point is that what do you do now with Jenny? I think you have to start looking at other products.
Just finding individual products.
So, right. Stuff that you haven't. And one of the things, so look at some, like the grain market, for example, if you have that, the crude oil market, gold, those sorts of things.
So switch to commodities. When you're just kind of waiting, when you're waiting on the equity market and you're kind of waiting to see how things shake out, switch to commodities.
Well, yeah, because there could be opportunities. In other words, what we've always said is you should be product indifferent. Mm-hmm. So like, Jenny, I didn't know what NVDY was.
I still don't know exactly what it is. I don't know if there are fees associated with it. I think it pays a high dividend. I would suggest looking into it for people before they would jump into it.
Right. And so what I did as a trader, I looked at its implied volatility. I looked at its 3-star liquidity. It's like, okay, that's enough for me. Because sure, I'll try to sell a put, and then I couldn't because it was closing. I'm like, all right. So now, if you go into, would I, again, a contrarian bullish trade in ZB, and I talked with Liz last week about why I might prefer ZB over ZN. 39% IV. It's pretty high right now. Volatility is fairly high. Selling put spreads in there as a contrarian.
Would you do 25-day or 46-day?
I would do the 25 days. I would stick to here. Let me double check that because I can't see. The problem
they're both
is
under the same cycle. They're both in the.
They're both in the March and basically. And so what people have to understand is, if you weren't listening last week, so the ZB carry, in other words, the difference between the DEES and the March ZB futures is strictly interest rates. It's interest rates versus the coupon payment on the ZBs. There's no crops or shortages or anything like that that you see that could cause basis issues in something like the grains or even crude oil or something like that. So ZB is very clean in that regard. So yeah, I would look at 25 days. I would look to get paid on this.
25 days. And I've been with so you talked about maybe we'll see them slowly lowering interest rates. But were people surprised at the move last week in bonds? What were you doing in bonds last week?
I was long. So I've been long bonds for a couple of weeks, and I was getting whacked in those as it sold off, and then it rallied back, and now I'm up a little bit of money in my ZB options, and so I just have a little bit of bullish stance on ZB right now. And yeah, you could certainly do ZN too, the 10 years, that's fine, whatever. How come I'm not seeing options in the 25 days?
That's what I'm just slow loading. I've got full bars. I'm just trying to see.
And Jenny, I'm okay with you.
No, I get the markets right away in the 46-day.
Yeah, I don't know. There's something going on, and I don't want to push too hard because I don't want to lose my internet connection to your show. So I don't want to press any buttons. So anyway,
I think maybe so. Could we do the 46-day? It is the same. I don't know why, and that could just
do the 18-day. Do the 18-day. It doesn't matter. Just
all right.
So like the 16.5, 15.5. Yeah, it's pretty good. I mean, if I sell it for 18 days, and I know it's beyond less than 21 days, I get it. But if I were bullish in ZB, look at the risk-reward ratio of that trade. I collect about a third of the width of the strikes.
Right.
And for a $265, and I would take that off at $120 profit, $130 profit.
So max profit $260. We're looking for 50%. I'll sell this for what do you call this? 17 ticks.
17 ticks. Yeah. I mean, you can say 17 cents at 17/64.
I'm working that now.
Yeah, I'll join you just to play because I already have a bunch of bond stuff on.
Is there a deadline of rolling it, moving it?
I don't think so. No, I think you could probably take this off. So what you do is look at the the 16.5, 15.5, the 16.5, 15.5. Yeah, it really doesn't change price much, even as you move a week. If I go down to there, yeah, I would have to wait about a week and a half for that to get me to my 50% profit.
If we don't move, but if we get a jump up, we can be out of it tomorrow. Who knows?
Right. So I would just say, I'm working that 18-day just for the sake of argument.
All right. No,
But
I like it.
would-
I like it. How about
I
we
would
get
look
into
at the I would look at the 45 days too. I like those just as well. Anyway,
how about we
all
get
right.
into the euro too? How about 6E? How about we get into the euro too? I know we talked about this a little bit earlier. It's so low. Could it go lower? Sure, but using options, we can give ourselves a little bit of room. Now with this, would we stick with the 25-day?
What do you want to be bullish in there?
Don't you think?
Sure, why not?
Sell a put spread?
Why not? You have a hunch, bet a bunch. I mean, see, I like this. So looking at 25 days, if I sold and I hate the strike prices, but the 525s, 575, yeah, and here's what's interesting. You picked one strike different than I did.
I moved mine up a little bit to be
right. No, it doesn't. But this is my point: is Jenny and I, we kind of have, it's kind of shorthand. We just sort of gravitate towards the same strikes. So why did we pick those strikes? I just looked at they were out of the money. Mm-hmm. I looked at the probability of being out of the money. 60, 70%, whatever it is. It sold a put. Okay, I'll sell that higher strike put, buy a put, a couple of strikes lower and see what I get. That's what we do. There's no deep analysis of, the support levels here or there. I don't know.
And I know I said, the euro has been coming down, but it could still go lower. It can, but it could still go lower and that trade could still win. We're giving ourselves some room.
That's exactly right. So I think I'm going to sell the 52. What do you want to do, Jen? The 525, 575, or the 5?
I did this, and I'm already filled. I did the 575, 525.
What did you get?
And 6E, 0.0013.
All right, I'm going to sell it out. Mid price is 1.4. I'm going to squeeze it and see if I get 4. Trading the euro, you usually have to give them a tick. So I'll see if I get filled at 14. If not, I'll take it down a tick and just join you in that trade. So yeah.
Now, ZB, do you think I need to take ZB down a tick because we're not getting filled at 17?
No, I wouldn't bother with that. I would go out to 45 days on that one. This is not a screaming, oh my God, I got to get filled here.
Right.
I would cancel it and roll it out into the 45 days.
All right, I'm working both those orders. We only have about 15 to 20 minutes left. Did Liz show you this? We look at this a lot, the most active, and I'm always surprised to see some of these. If you take a look at this today, the VIX, April, 39 call, 100,000 of those traded. If you go, it's crazy when we look at some of these VIX options. They're always way out of the money, and there's a huge volume.
So those are for April of 25.
Right. Well,
so
next year is 2025.
If I do this, so and here I go again, Jenny. If I go out into those, and you don't have to do this, but I'll just tell you what it is. So the April VIX futures trading at 117 or 1753. Mm-hmm. All right. So that's only a couple of bucks higher. The DEES, just for reference. And you can
see here, 25,000 of the DEES 39s traded. So 100,000 of the April 39s traded, 25,000 of the DEES 39s traded.
See, so the DEES, so here's what I'm saying. The DEES is trading at 1849, and the April... It's so there's backwardation going on right now. So just looking at these prices, and I typically don't trade VIX out that long, but yeah, those April VIXs are trading cheaper than the DEES and the JANs. So there's backward. So normally it's the back month VIX trading higher than the front month VIX, but in this situation, you're not seeing that. So do I think that those April VIXs are relatively cheap? Kind of. Which ones did they buy, Jenny? Which strike did they buy?
It's so far the 39s. I mean, doesn't that seem?
39s?
Yes. So it's like,
I mean, all right. Yeah. Who am I to argue? The thing is, you don't know what paper was doing. And what I mean when I say paper is what the outside order is, right? So when Jenny was at the CBOE and I was at the Board of Trade, so you're a market maker, you're standing kind of in the middle of the pit, and you have the brokers outside on their phones. They get a call and their orders come through and they'll say, hey, Jen, where are you on the April 39 calls? And, that would be paper coming into trade. That's what we mean by paper. So I don't know whether the outside trade was buying or selling that, what the market makers were doing, because for every buyer, there's a seller.
But you see, there's no volume in that line. So this is a new trade. It's not a closing order.
So if I switch over to open interest.
It's not, there's no open interest. So tomorrow there'll be 100,000 open interest there.
That's amazing. Yeah, I mean, that's okay.
But and I know if there's a market crash tomorrow, those Aprils aren't moving that much. If there's a market crash in January, those Aprils aren't moving too much. If there's a market crash in February, those Aprils aren't moving too much. The Aprils aren't going to move unless there's a market crash in April.
Or in March, right?
Yeah.
It's because, like I was saying last week, the VIX, and you got to be aware of this, the spot VIX, the shorter term VIX moves fastest and furthest. So like you just said, Jen, this is just a different way of saying what you just said. If there's a market crash, it's the spot VIX that's going to go up from 15 to 45. Mm-hmm. Okay. Then it's going to be the D's future. Then that's going to go up some, but not as much. Then the Jan future go up some, but not as much. The April future will probably go up some, but not nearly as much as the spot VIX.
But I guess if you're doing 100,000 of them and they go up 10 cents.
Yeah. And if you're managing, $30 billion, what do you care if you lose 76 cents?
We saw this going on before the election, TP, when VIX was in the 20s and people were buying hundreds of thousands. We saw these 13s, 13 and a half. These were all trading like crazy. And
you mean buying puts?
Yeah.
Or selling puts?
I think, last week the puts that we watched trade prior to the election all came in and worked out right after the election because we saw the VIX go from like 20 to 15.
Yeah, I did not make money so here's another thing for your son. All right. So and I want to cover this before because I could go on and on all day on this show with you. But one of the big things is Bitcoin and the whole crypto space. And so that is something that your son is probably more tuned into than I am, certainly, maybe you, Jen, but they kind of understand what crypto is and what it can do. Look at, it's like Ryan Grace, who runs our crypto desk, is a young guy. He grew up with this stuff, and your son is half Ryan's age. So it's growing up with this stuff. It's different. So if you look at, unless your son wants to buy Bitcoin, which you could do, coin is a proxy. And that's had a massive rally up, but you want to sell a put spread in coin for him?
So this is a good question. And I'm glad that you brought this up because he couldn't, when we were setting up his account and he wanted to get in crypto, Ethereum was much more affordable. So he has one Ethereum coin and it's $3,000, right? I wish he had $3,000 in coin instead of in one Ethereum coin because his money would have doubled if
Right,
instead of making a couple $100. So I don't know if the best choice with that $3,000 is having it in one Ethereum coin, or is it better off being used somewhere else?
I don't think Ethereum is bad necessarily. I think, and this is just my, talking up my position, because I own both. I own Bitcoin, Ethereum, all that stuff. So I just think that just like the S&Ps are the public's, that's what they understand the stock market to be. So if say, okay, I want to get long stocks, I'll buy an S&P fund. They're not looking at a NASDAQ fund or a Russell fund. They're buying an S&P fund. Same thing with crypto. Bitcoin is crypto, right? So if the money comes flowing in is looking for a cryptocurrency to buy, the most popular, most knowledgeable thing, just like in the old days, you didn't get fired for buying IBM, right? In the really old days when, the 60s and 70s, when companies would buy, computers. Look, there might be something better out there, but you're never going to get fired for buying IBM. And so the same thing here. If you don't know anything about crypto, you're just buying Bitcoin. And I think that's part of what the rally is. Bitcoin is an exchange. It doesn't care. It just says trading activity.
Right.
Right. And it rallies.
And it's tough. I mean, last week, I was sitting there with Liz. Maybe we were on the train coming home from the SIBO Wednesday. So we've got Friday, this day. This day, we've been trading coin, put spreads, diagonals, whatever. She had a call in there left over from my diagonal. And at the time it was, way up here. And she's like, whoa, I'm going to sell this 255 call. I'm getting, $10 or $15 for the 255 call against it. And I mean, look at the move. Now it's 318.
Jenny, that's crazy. Why I'm saying that the word hedge is a 4-letter word. Okay. I have lost. No, I shouldn't say lost. I have given up so many potential profits on hedges. Mm-hmm. I would be like, I would have multiple private jets. Okay. If I hadn't hedged my positions, I would have like my Monday jet, my Tuesday jet, my Wednesday jet. Okay. Hedging, I have never done well with hedges. Okay. So selling calls against stuff, if you don't like it, just close the position. Coin, just going back to coin for your son or for anybody, with 45 days, the 275, 280 put spread, I can get about $1.80 for that right now. A third of the width of the strikes generates $128, $1.28 a theta a day. That's what I would look at.
Yeah, I know. And sometimes the market's frustrating, right? It's hard. Last week, my husband, I was driving him crazy because before the election, it was on the show, before the election, Liz said, where do you think the market's going to be after the election? I said, 6,000. That's what I said. So then I thought, well, I'll put my money where my mouth is. And I bought an SPX call.
Uh-huh.
And I said to Liz and my husband, I'm not touching this until Friday. I am not touching this until Friday. So what did I do Wednesday morning? Sold it. And I couldn't stop talking about it all week in Florida.
Yeah. And so what does your husband have to do? He still has to get out of bed in the morning, go to his job. Oh, gee, thanks, honey. Thank you for forcing me to go back to work. You had to sell that call.
I mean, so I don't know, TB. Are traders ever happy? Are we ever happy?
No, and this is just it. And the fact is, it doesn't matter. It doesn't matter. I'm still going to be trading, and my guess is you're still going to be trading until you can barely lift your hand to click on the mouse to hit a bid. Okay, sell them. Click, click, click. You don't even know what you're doing. It's like, just point her towards the screen, give her a mouse and let her click. Seriously, that's kind of how I see myself getting old. All right, so what are we doing?
It's
Twitter.
It's 10:53, and I just want to make sure if people have questions, we got to them. Florida 7, the yield max. Oh, he's telling us. Thank you, Florida 7.
Thank you, Florida 7.
NVDY, the yield max NVIDIA option income strategy ETF is an actively managed fund that seeks to generate monthly income by selling, writing call options on NVIDIA. What do you think?
That sounds great. Thank you, Florida 7. It's closing only as far as I can. It is what it is.
The options.
It is what it is.
Okay. On Friday, Liz said Jenny did a wonderful impression of TP, and we would like to see it.
I know, but if it's like 15 years old.
I'm pretty sure I did an impression 14 years ago, and I have to work on it. I'm going to work on it, but I'll bring it next time you're on TP. I'll bring it.
Thank you, Jenny. Well, like I say, people should do an impression. The sincerest flattery is the sincerest form of what do they say? Imitation is the sincerest form of flattery. So if you're doing impressions of me, Jenny, thank you very much. Nobody else. Well, my kids do. They make fun of me. My kids are awful.
I'm telling you, I think I've said this before. So the smartest man I ever met was my husband. I married him. Until I met you, TP, you're smarter than him.
Oh, no. All right. Yep. Well, Jenny, you're sleeping in the doghouse tonight. Nice
I'm
work.
just saying, when we met at Tasty, you are the smartest person I've ever met. Hands down, and our viewers know that. They know.
Thank you, Jenny. That is very kind of you to say. I do not share that opinion. I think I have been humbled enough by the market and life and everything like that. And you know what? It doesn't really matter. Because at the end of the day, it really depends on how much money you're making trading. And yes, you gotta, things have to make sense. And this doesn't make sense to a lot of people, and that's okay. But as long as it makes sense, and think of it this way, my brain is in these numbers, use the numbers. When I talk to young people and they say, oh, yeah, I want to know how to calculate this and that. And I said, well, that's great. I can show you how to do that. But it's better to spend time making money than it is trying to reinvent the wheel. Mm-hmm. And yes. And so here's the other thing, Jenny, and this is and I think you would agree. Disagree if you need to, but you and I have seen a lot of people come and go in the trading world, a lot. Yes. And the single thing that I think the ones who didn't make it are they thought they had it all figured out.
They thought they knew something. They thought they knew. I know from doing this as long as I've been doing. I started on the trading floor in '97. You started on the trading floor probably in early
90, 93.
Right.
92,
so we've been
92.
We've been doing this a long time, and I know I can't predict direction. I don't know what way something is going. I can't think like this is it. This is the winner. I'm going to go all in on this one thing. That's the people who are gone. The people who just want to, slow and steady wins the race. Keep your size in check. Those are the people who are still around.
And I always ask questions. So, why does this work the way it does? Why did this happen when I thought the opposite would happen? What is this thing? People are always coming up with new products. Smarter people than me, always new products. Let me look at those new products. Let me see how they work. Is this something I can make money on? It's always asking questions. How do I come up with half these numbers on the platform? I ask questions like, how do you make 50% on an option? How do you do that? We hadn't done that before. Once you ask the question, the answering is pretty easy, but it's always asking those questions. And so you can never relax with this. It's not like any other job.
No, and it's always changing. And I do think trading's always changing, right? When market's crashing, we're put City USA, selling puts. Now, look at what we were doing, selling a small narrow put spread to buy a narrow call spread. You're always changing your trading.
Jenny, I have to say this, and I will say this with you and Liz only. I think trading keeps you young.
That's why we look so great, TP.
I'm just saying, Jenny, I didn't want to say it. I didn't want to be the one to say it, but I just saying, whatever. Right?
You know what? It keeps people sharp. I look at my grandpa. My grandpa lived to 93. He kept his mind active every day, always trying to do something with his mind. And he was sharp until he passed away at 93, and he was still sharp. And so I do agree with you that trading is keeping us young, keeping our minds sharp. We are out of time. 10:59, out of time. We don't want to run into the boys' show. Thank you so much for filling in last week for me, today for Liz. Liz will be back tomorrow, everybody, and we will be live from the SIBO on Wednesday. TP, have a wonderful week. Enjoy your Thanksgiving. Happy Thanksgiving if I don't talk to you.
That's right. Thank you, Jenny. Thank you very much for having me on, and I had a lot of fun doing the show with you. It's always so nice to talk to you because you and I have different conversations than I have with other people, and that's what makes the variety fun. But thank you very much. Thanks everybody for watching. Liz, Jenny, take the TP&J show. Jenny, take it home.
Oh yes, the TP again came up with this last night, kind of like PB&J, TP&J, everyone's favorite childhood sandwich. TP. All right, everyone, remember to trade small, trade often, laugh with us, learn with us, and watch the TP&J show. See y'all tomorrow.
Know someone who needs a better broker? Earn $250 for each qualified person you refer to Tasty Trade. Because friends don't let friends trade on a bad platform. Terms and conditions apply. Join the club, genius. Tasty Trade.
How much does it cost you guys to do simultaneous hair flips?
Years of practice.
Get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. I got my man Mike Butler, and of course, the man, the myth, the legend, Ryan Grace in the house with us today for our crypto takeover. And if you want to come join us, hop over to YouTube, type in tastylive, come to our channel, give us a like, and subscribe to our videos because that helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on, from strategies, concepts, trade ideas, trade management, crypto, whatever. Just come hang with us for the next hour of the day. My favorite hour of the day I get to spend with my buddies, Ryan and Mikey. Ryan, sir, is this your Super Bowl? Did we make it?
I'm excited.
Yeah?
Yeah. There's a lot of enthusiasm in the market. We're going to break all that down. I think there's still some pockets of opportunity as well. It's tough to chase this kind of move. It doesn't mean that this is the top necessarily, but I think you kind of want to look elsewhere. Where is there?
Your hands get sweaty. You know, you get the arms sweaty, knees weak, arms are heavy, that kind of thing.
Quite literally. But yeah, we're seeing just an endless continuation of the post-election ripper.
Yes.
And it's crazy because at some point you're like, is this where I kind of like exit this trade? Like, do I take the profits here? And it's just, I don't think we've seen a red day since the election results in the
market
or
and
Bitcoin.
in really anything. Yeah.
It's been crazy.
Been up only.
Absolutely crazy.
This is the hard part because when it's going down and you're trying to buy the dip, obviously 0 is the lower bound.
Yeah.
Where do I sell? Where do I take some profits? There's always that element of FOMO. You don't want to miss out. But I would argue again, if you pick this up at 50, talking about this being Bitcoin, nothing wrong with taking some money off the table. That said, it is obviously unknown as to kind of where this stalls out. Hasn't stalled out yet. Maybe it is the 85 area. A lot of people think this could go to 100. Yeah. Regardless, it is kind of challenging, but there's nothing wrong with taking some money off the table at the right times.
Love to see it.
A quick little market update until we get into it. E-mini's up 12 right now. They've been basically flat all day. I mean, we opened here and haven't really moved all that much. It's been a intraday range of about 24 points here. So definitely no sort of realized volatility in the market as a whole. Definitely seeing some realized volatility underneath the surface. Stuff like Tesla is at 350 now. It's had about 130 point rally in the last 2 weeks or so. It's back to the sort of meme status, I would call it. You got stocks like Coinbase up $48 today after a 100-point rally. MicroStrategy is another one. It's not quite in the S&P 500, but some of these outlier moves are definitely happening underneath the surface. A lot of small caps. Carvana is one that I've gotten emails on. It's up like $9 or $10. We had that stock APP, which is AppLovin. It's up like $100. It just got added to the NASDAQ. It's definitely a little... there's some liquidity out there in the market that is definitely flowing into some of these stocks. NASDAQ itself down 34 here at the big names, and it seems like it's kind of, I was talking about this with my dad a little bit. I wonder if you guys have the similar take here. But the NASDAQ down basically nothing, but is not participating really in this explosion to the upside that you're seeing in the tech space itself. You're seeing a rotation out of some of these things like Apple down $4 on a day where the market seems like it's going to the moon. Microsoft, another stock that's down $4 or $5, 1% here. It's not at all-time highs. You look at like Google was basically unchanged this morning. It's up $1 or $2 here, but it's kind of stuck in the mud. Amazon down. It seems like there's a little bit of a rotation out of the Mag 7s, X, Tesla, and into the higher beta space of Bitcoin, crypto, Tesla, of course. That's what it seems like to me underneath the surface. Quickly, Dow up 340. We're also up 40. So we're also the strongest of the group today, up a little over 1 2/3%. Oil selling off a bit, down $2. You got volatility futures basically at 0. They should be at 15.25 here, down 30 cents, about 2%. Bonds down 6 ticks, continuing their free fall. Gold and silver both getting killed today. Maybe there's a little bit of a rotation out of your gold and silver safe havens into the Bitcoin, which is up $790 on the futures, spot up 3,700 with an absolute magical candle over the weekend.
7,900, not 790. Multiply that by 10.
Oh, did I say 790?
I think you did.
Yeah.
We got to make sure that people know.
Yeah, it's up big. It's up a lot.
So let me ask you guys, how do you think about this move where we've been trading inside of this range for about 6 months? I know you guys have taken multiple trades in that range. To my knowledge, they all worked out pretty well because that range was 50 to 70. You could buy 50 every time, you could sell 70. I suppose if you sold it all this last time, you've missed the next 15,000 or so in terms of the breakout. But how do you guys think about a move like this where whether it's in Bitcoin straight up or Tesla straight up, how are you trading it?
I think you have to remember, so when you think about like, okay, Bitcoin's 40% a year, like annualized, it comes with volatility. So
both ways.
But it's like, I guess the best example I can give you is like after the election, everything was ripping higher. We were up 200 points in 2 days. I was like, should I move my retirement from this growth fund into like an interest rate fund? And I was like, what is stopping the market from continuing higher? And my answer was, I don't think there really is anything right now. So it's like, just let it go. See where the top is. If you've signed up from 50 or from below 50, and now you're finally getting this move, I feel like you'd have more pain from FOMO if you exit than losses if you don't.
I was trying to articulate it on the morning session with my dad this morning of just, trade. The thing that sticks out when you look at like a Coinbase or a MicroStrategy is the massive call skew, the massive pop in volatility. I mean, Coinbase itself, the 5-day IV change, 6.4%. MicroStrategy, 5-day IV change of 7%, which is a lot. I mean, you've had these massive moves in these products as well as a massive spike in volatility. And the conventional thought or the TC trade thought would be to like sell some premium, right? Sell a wide strangle or wide iron condor. And I think with volatility, there gets to a point where you have volatility that is too high to sell premium. And there's too much risk involved in selling the premium. And so I've been trying to kind of articulate the idea of, if you want to short this or get long this in any way, it's not selling puts or selling calls or doing strangles or straddles or whatever. You have to have some sort of long premium component. You have to have some gamma exposure. You have to have a time component. Like if you want to get directional, diagonal spreads, even calendar spreads come into play because you should expect. I don't think we're going to sit here at 85K is what I'm going to I don't think.
Yeah, I agree.
The trade is not to be short volatility and say we're not going to move from here.
Well, volatility is pretty low in Bitcoin right now.
In Bitcoin itself, in some of these, like you look at like a MicroStrategy or a Coinbase or Tesla, even I know that's not like a Bitcoin play, but it's kind of in play right now as one of those movers. I think you have to be careful with the idea of just like selling volatility here because I don't think we're just going to sit here.
Yeah. Well, and I would argue to your point, if realized is in excess of implied volatility, there isn't embedded premium.
Yeah.
If implied volatility is trading at a discount to realized, you have the time component, obviously, and those trades could work out. But again, it tends to be reactive. And so if you see a continuation of that high volatility in terms of what it's actually doing, why would premiums come in? If anything, they're going to only go up.
Yeah, they're 100%. Exactly.
Yeah. And I think if you're like speaking to implied volatility increasing, especially in products like Tesla or MicroStrategy, if you have static long delta, if you have like 100 shares of stock or more, like this is the time where I'm looking to sell that 4-day
This is a
premium.
dream.
This is the best. Yeah.
Like this is obviously the best case scenario, but because you're getting this huge rally, like the 4-day 400 strike in MicroStrategy is trading for $300. Like
that's
if you get, and what's cool about if you have 100 shares and you sell that call, let's say, you can, even if you get there, you could buy it back and roll it up to the 500 strike another week out for a credit probably. So it's like you can intelligently reduce your cost basis a little bit, but take advantage of this IV spike if you have static long delta.
Yeah, and
in
that's
a scenario
because
like
that
Tulsa or MicroStrategy.
that delta is not affected by the increase in volatility that to what Ryan was talking about of like when you're seeing this realized volatility, the expansion of implied volatility is like almost on a lag to what's actually, to the move.
Yeah.
So if you have shares, you get exposure to that move that offsets some of the volatility that you might be selling in a short dated call.
Yeah.
Where it doesn't, if you sell a 400 strike call or the 350 or the 375 and you're collecting dollars for the next 4 days and the stock goes up $50, that's beautiful, right?
Yeah.
You want that to happen because you have that full delta exposure.
Yeah. And the implied volatility is assuming that we're going to continue to see moves like this, which you could. But if you have one day, like let's say you sell that call at the 400 strike, and tomorrow MicroStrategy is up $5, and it just is only up $5, that call is going to go to zero pretty much. Like it's gonna go to relative zero. It'll go to like 30 cents, 40 cents. You can close it. So if you wanted to play that game, you certainly could. And obviously the optimal time to do it is into moves like this, which are crazy to the upside. And not only are you seeing massive percentage changes in the notional value of the stock, you're seeing 5, 10, 15% increases in the implied volatility, which just explode those call options.
Yes.
Which is another reason why, like we've talked about trading these products like MicroStrategy and AMC, GME, like what's the strategy? And for us, it's like you buy out of the money calls because you know that this is going to happen. If you get the move and you are pairing it with an implied volatility expansion, why would there be any other strategy that you would do if you're trying to take a shot on this crazy move? Unless you have static delta, of course.
Yes.
Crazy.
It's nuts.
It's fun again.
What a move.
It's fun again. It really is. It really is. This is a fun market. A little wild, but fun.
Just a little wild. Oh. It really feels like the rest of the market is just kind of sitting back and watching Bitcoin. Do you get that feeling too? Because like nothing else is really moving outside of you have gold moving a little bit, silver, but everything else is kind of flat outside of the rotation.
Yes.
The Mag 7 rotation.
I think that's a big point. And my dad was trying to say that that's like a bearish thing. And I'm like, that's, in my opinion, is sort of bullish, right? You have a move from these stocks that have done, have led the way over the last couple years, and now they're kind of staying flat, and everything else is kind of catching up. Yeah. I mean, like that's what you want out of a rotation. But this feels a little bit like after the COVID crash-ish, where you have just like I'm getting the text messages and stuff, like everybody's ready to just, go all in.
Yeah.
There's a little air of FOMO.
Starting to feel it a little bit. I haven't received the text yet, which always a good indicator, contra indicator.
Yeah.
But yeah, there's enthusiasm, a bit more enthusiasm in the marketplace right now, especially in crypto.
I think so too.
I do think, though, you can't forget where you came from. And that might make it easier at certain points to hold some of these positions because it was so bad for so long. And during that period of time, we've done a lot of research. We've looked at least what's happened historically, try to extrapolate what could happen in the future. And then once that starts to materialize, right, it is rooted in something. Don't lose sight of that. When we're talking about, hey, this is how the cycle might realistically play out. And when Bitcoin's 30,000, 40,000, it's laughable at times. It's hard to see it. But then once it actually starts to play out, just remember that the analysis that went into it does say, hey, realistically, this is where you could go to. And I think it's helpful to anchor in that sometimes.
I think that's a really good point because even and outside of crypto, you can apply that same thing of like, the thought that whatever stock can get, whether you're trading a Palantir or Apple or whatever. And these numbers that we're seeing now, like we're at those points. Like you have that sort of, I don't know. It's hard to imagine that coming into play, but when you're there, you have to think back at like, when Bitcoin was 30,000 and people were calling for 100 and it seemed like the stupidest thing ever. And now you're here and now what? It's like,
I think sometimes people get caught up in the nominal values.
Yeah.
It's a lot easier if I say this, right? Do you think a stock that's $7.50 can go to 12?
that's an easier say.
Right.
But when you think of it percentage-wise, it's a big number.
And then people will argue, okay, well, what about the market cap? What does it take to get this stock, Bitcoin, to 12? Well, it's 1.5 trillion, probably pushing closer now to 2 trillion. Could it be 4? Could it be 5 trillion? A lot of analysis says that, yeah, seems possible, feasible. And then it gets there. Well, that would be the price that you're at, if not higher. And so again, I think a lot of what we discussed at the time, it seems kind of unrealistic. It's laughable. But when it starts to play out, just remember that was the analysis. I mean, that's kind of what we've been looking at.
Yeah. And I think especially with Bitcoin, when we get these moves to the upside, it's like in other products, you look at a chart and it's just like this grind higher. But with Bitcoin, it's like nothing, chop, 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 and then just gap. And I think that's what people have a hard time envisioning. Where like your Microsofts, your Apples, your Amazons, like you can envision that over time just trickling higher. But Bitcoin doesn't tend to do that. It's just like chop, and then gap, and then chop, gap.
Yeah. This isn't doing anything out of the ordinary.
Yeah.
I guess I'll put it that way, right? We, I believe on this show, ran through the numbers where going back to, I want to say it was 2016 or so, might have been 2018, regardless, looking at how many occurrences were there where Bitcoin moved more than 20% in a week. And this was following a big down move at the time. And I expected, like you, I think naturally would, that those big moves would all be to the downside. And so we found that there was over 200 occurrences where the price of Bitcoin, and again, you have to consider that it was very, very low. So it's easy in percentage terms for it to do it early on in its life. But had moved more than 20% in a week, more than 200 times. And the majority of those times were to the upside, which was the biggest takeaway. And so what we're seeing here today is exciting. I think if you've been long from lower prices, there's obviously some opportunities, and you regret those if it does have a significant pullback here, which it could. But this is not out of the ordinary by any means in terms of how this is trading.
I have a philosophical question for you before.
I love it.
Before we get into, I guess not that philosophical, but we're going to use a big word. Do you think the price of Bitcoin as an $85,000 asset, do you think it would be better served and a second question, at some point, do you think it'll be quoted in sats versus, like, do you think that the actual number, 85,000 per, helps add value to Bitcoin?
Absolutely.
So you think, because I think that plays into it a little bit. Because I think that people look at the number and they're like, that's a big number for one. You know, I got one share of Apple, it's 200.
I think so. I mean, you look at, what are we at today? I guess if I'm looking at the Tasty Trade platform, 8,000.
Yeah.
Right?
Oh, yeah, 84,600 at spot. Yeah.
So $8,000 move. $8,000, that's a lot. Stocks don't move like that. Well, stocks aren't priced like that. But they do move 10% at a time. Sometimes they move a lot more than 10% at a time. So I think it absolutely helps it. If you're looking at what stokes the FOMO,
I think
what makes this interesting, people want to quote $100,000 Bitcoin, and that's it. It's a big number.
Yeah.
So I think for sure plays into this.
Yeah. It's like when you split a stock almost. And like it becomes less valuable, so to speak. You know, you think of when Amazon was trading at $2,500 a share and it was moving $100 a day either direction. Everybody thinks like that's like these huge moves. And then you split the stock and it moves, $2 or $3 or $4 a day. And it's the same as that $100 move, but as a different dollar amount. So it's, I think that's an interesting part of this whole thing that's going on. Fun. Good.
Fun is a good word for it.
It is fun. It's good. It's opportunity. Yeah. I mean, I think that's the key here. Let's get into the slides and see what you got for us here. Because you didn't even touch on the ETH move, too.
Oh, we've got a lot to touch on. Yeah, happy to go wherever you guys want to go. Let's do a little bit of a market update to start off with here. Numbers we have not yet quoted on the show. New all-time high for Bitcoin, at least 84,000. ETH back up above 3. We finally got that break at 27 to 28. We thought that the move to 35 would be pretty quick. We'll see if we get up there. But, that's been a nice trade on a relative basis over the last week. Outperformed Bitcoin a little bit. Seeing this reflected elsewhere, though, again, Bitcoin market cap dominance is still in play. Litecoin up, Bitcoin Cash up. Solana outperforming Bitcoin year to date by 18% as of the time I put this together.
Wow.
But Solana up there at 220. I don't think that's a new all-time high, but it's getting close. New all-time high for Bitcoin. Interestingly, and obviously these trade with a little bit of a lag, but those indicators, those exponential moving averages, what we use for momentum here, have not yet flipped bullish for Ethereum on the weekly basis. So again, you're seeing that reflected in underperformance, but you see that to some extent in terms of the trend or the momentum. Short term, though, everything has just obviously taken off pretty bullish here. When you look under the surface, not necessarily true of every single token. They're moving in the same direction, but you've seen much larger moves in some areas versus others. Looking at the pairs here, bit of a pop as of recently in that ETH BTC ratio, so up almost 10% on the week when you look at that alone. Solana outperforming as well, as we've just talked about. But big moves across the board, regardless of what you've owned. If you've owned crypto in the last week, you're probably pretty happy with some of these moves.
I would say so. Have you seen, like liquidity-wise, because one of the things we talked about this morning was how, the Bitcoin futures, which are a massive contract, and 5 coin notion of value, they've been traded like the day of the election, they traded 27,500 contracts, which is basically the high that we've seen there. And we've maintained kind of a higher edge of those of that volume. Are you seeing liquidity in the space much higher over the last week or two?
I'm looking at on my screen here, and this is for anybody following along at home too. I love the data from the block. They have a ton of different dashboards that will show you everything from futures data, open interest, positioning, like we're talking about, to DeFi-related metrics and so on. You've definitely seen it climbing throughout October into the election.
But it's not out of
some of this stuff just hasn't been around that long. If I look at open interest of CME Bitcoin futures positions, that is at an all-time high.
Yeah.
In terms of what's reported here for the large traders or speculators.
Are you seeing it in the coins themselves though? Like I'm talking like Bitcoin transactions and liquidity overall, or maybe even you could loop Ethereum in there too. Because I wonder if it's like the question I'm trying to get at is this, more liquidity coming into
this new money?
Is this new money, or is it just kind of, I don't know, the same group?
Yeah,
so
I
to
think
speak?
you're absolutely seeing some new money come into the space. I would still argue that this is majority retail. Crypto is still majority retail. There was some research put out by Binance, I think last month, showed about 80% of trading activity still retail driven. You look at Coinbase, you look at their quarterly financial report, and certainly their retail revenue or transactional revenue dwarfs the institutional side. That said, MicroStrategy came out and made another $2 billion purchase. We've seen record days for some of these ETF inflows. So I've got almost $2 billion as well has gone into these ETFs. So that's assuming that's net new money in terms of the space coming into those ETFs. The total assets under management of all crypto funds globally is $116 billion. I believe that BlackRock's IBIT, or I should say, all of the BlackRock being the biggest, but all of the spot crypto ETFs in the US in aggregate have surpassed the GLD ETF assets under management.
Wow.
So new money coming in, absolutely. I haven't seen any on-chain metrics that speak to that one way or the other. We know that on-chain, a lot of that supply has been illiquid, meaning that people just aren't selling their tokens. They're not moving their coins, at least when we look at Bitcoin. And so you see these flows come in, those ETFs are hooked up, and it's having seemingly having an impact on the price. So I think, yes, liquidity is flowing into the space.
Okay. So that's actually a good point that you put out, is that the big players haven't, and by big players, I mean the people that have been in for a long time are not changing hands right now.
It wouldn't appear
There's no like,
that way.
Yeah.
Yeah.
Okay.
At the same time, you've seen a few announcements from different state pension funds, a small investment here, a small investment there. But those things pale in comparison to MicroStrategy coming out and buying $2 billion. Those are the things that also, we've been very focused post-election on what does a deregulated crypto market look like? Not that it's going to be deregulated, but maybe more so, what does a regulated crypto market look like if, in fact, we do see legislation passed, which I think people, are right to be hopeful will happen. So we've seen some of that, but really, what is driving things here is what we kind of just become used to, another $2 billion out of MicroStrategy.
Yeah.
We haven't yet discussed another interest rate cut, more on the horizon. There's a lot more going on than just the election, but the election certainly has been the catalyst for a lot of flow into this space, just given the binary nature of it, right? And I think you do have to recognize when things have changed, and I think certainly we've had a catalyst that changes things.
No doubt. Awesome.
So that's a quick look at the dashboard. If you want to jump to the next slide, have some updated expected moves for you. But anybody that's been following along will notice that not much of a change in implied volatility, interestingly enough. Post-election, immediately following the event, we did see volatility collapse as we saw, across the board. We saw selling in the VIX as well. You saw that to an extent here in implied vols for Bitcoin and Ethereum. They've popped back up to kind of mid-range from where they were. So Bitcoin trading between 50 and 60 at 54%. ETH trading at 64%. It's been between 60 and 70 for some time now. Bitcoin expected move is going to put you up to 90,000 on the high end here on a 1 week, one standard deviation, 78 or so on the downside, looking for about a $6,000 move, and ETH getting closer now to that almost $300 move, 35, 39, 29.61 on the downside. Solana, $16 move there.
Does that surprise you that you don't see the added volatility here? Or I guess it's just following the market as and by market I mean like everything market volatility low.
Yeah, it's given what we're now starting to see show up in Bitcoin, it's surprising that the volatilities aren't higher. They have jumped a bit. I mean, about 4 or 5 points from where they were just a couple of days ago. But I think we've become very accustomed to over time a Bitcoin that can trade at 70, 80, or higher implied vol and has a realized vol a lot higher than where it is right now, even though 10% move in a day is a big move. This isn't that crazy relative to at least how crazy it's been in the past, which I think is important to note. Not that that's going to repeat one for one, but this stuff, if you're just entering this space, this is not it can get really, really wild on both the upside and the downside. Maybe less so as it matures over time. But again, these aren't like that. They feel big because that number's that much bigger or it's a new all-time high. But this isn't anything out of the ordinary. And so maybe I'm not surprised then.
What if you, so we're going back to the philosophical questions. So if tomorrow we wake up and it's 120 a coin, or if we wake up and it's 20, you have like the 50 or 60, 70% move in either direction. Do you think anything changes for you thought process wise on up versus down? Like if we woke up tomorrow and it was just down to 20,000, it's down 60K. Does that shit with no news related to anything coming out? Does that change your philosophical?
100%. Yeah, absolutely.
Would it?
Yeah, if I wake up and I see that overnight Bitcoin's gone from 80,000 given this narrative and backdrop to 20, something has happened.
Okay,
something
not 20. Let's say 40. It's a 50% down move.
I think you'd need a catalyst. I'd have to, and that catalyst then would force me to probably reevaluate this. Whereas, let me just phrase it differently on the upside. Upside's easier because it doesn't really, to drive it to the downside, I think you need a catalyst. I think the price moving higher is the catalyst to put it into these arbitrary, you pick your favorite number, 100,000, 120,000. I'm likely selling some at those levels in the face of that move. If we were to collapse by 50% after all of this, then I'm rethinking everything.
But we've seen the 50% moves.
We have, but
So this time is
the industry was collapsing. There were clear catalysts. I suppose if you go back to 2018, had so much excess built up through the ICO bubble, and then that kind of popped, and you have to some extent some interest rate policy, but yeah, I think the downside would be harder in that I would be questioning a lot of things, maybe having an existential crisis in the event that we just kind of went down 50% without being able to identify a driver. On the upside, the driver is driving currently.
Yeah.
It's the price action, and so I think it's probably easier. I wouldn't question it as much.
It's an interesting differentiator between, or at least it's a different mindset between that and stock trading or even investing. If Apple goes down 50%, which it did during COVID, or Tesla or Google or any of these stocks that are down 30, 40, 50%. I know it takes a little bit longer time frame, but they're, from highs, they were down that much. Nobody thought Google's going away or, Apple's going away.
Right.
But that's,
well, I think when you take the example of Apple or Google and you relate it to Bitcoin and you just match it with implied volatility versus realized moves, the implied move is plus minus 6,300. If you get a move from 85 to 120 in a couple days or in one day, that's a catalyst for maybe you taking some off and seeing if you get some chop, or maybe you get back in at lower levels where that realized volatility is exceeding implied volatility in that same sense. But if there is a fundamental issue that arises where you get a move from 85 to 40, then it would be the same thing as Apple's being sued for whatever 200 decillion or whatever, that scenario
from Russia.
Imagine if a company like Apple or Microsoft had some really fundamental change where you were ooh, this is not going to be very good for this company at all, and that would be a catalyst for you to be okay, maybe I rethink this. But I feel like Bitcoin, there's only more people that are paying attention now and taking it seriously because it is playing out the way that you might have expected it to play out if you were an early bull, we'll say.
Yeah, and I think what the industry is looking for next and why it's so bullish right now is that with a GOP administration and control of Congress, it's likely that we get something done in terms of crypto regulation. Now, the industry might not necessarily agree with what that looks like on the surface. That said, I think any policy, any progress in that direction invites further participation, more liquidity. Some of the biggest, right? When you think about even financial services firms in the space that we compete within, there are very few that offer this product or offer access to their customers. I think a lot of that changes. Yes, the ETFs exist, but there really aren't that many large institutional participants versus what the market likely looks like when you have very clear regulations you can adhere to versus mostly the uncertainty that we've dealt with for the last few years. Again, I don't know what the policy is going to look like, and it's not going to happen overnight, but I think any progress in that area is really what's driving what we're seeing here, or at least was the catalyst for what we're now starting to see a little bit of follow through with.
Love it.
Yeah, it's great. It's great to see the retail side getting some W's here.
Yeah.
Because like Ryan said, a lot of people that I talk to that are pro Bitcoin have been that way for many years, and they've been calling for this kind of move, and now you're finally getting it. So,
yeah, well, let's take a look. I've got a few more just data points I want to call out. We can, again, go anywhere as we wrap things up here, but just not quite sure how well everybody can see it on the screen. But with our Bitcoin dominance, I've just tried to mark on these different charts. That's your November 5th, November 6th period. So that's your election. So Bitcoin dominance, trending higher. We talk about that on almost every single show. Multi-year, 3-year high at 60%. Quickly rolled over. Is this the start of a broader rotation or not? I don't know. Too early to call, obviously. But you are seeing, even in the face of Bitcoin all-time highs, you are seeing market cap growth within the space in other tokens, at least relative to Bitcoin here. So we've seen a little bit of a rollover there recently. A bit of a pop in ETH against that is probably driving it to some extent. So if we go to the next slide and look at the last 6 months of that ETH BTC ratio, and you can see that subsequent pop there in terms of the price of ETH or the relative performance of ETH versus Bitcoin. That said, this does not look like the change in a trend or anything at all remotely close to that. So you have a quick trade. It was very oversold, to use that term, and you've got the bounce. I think you got to wait and see. This is way too early, even just a week or so after the fact. Way too early to tell if there is really that kind of broader rotation that's about to begin, as we might expect it will within this overall cycle.
So you think it'll be, because for this chart to get back to like flat, basically, you would need Bitcoin to stay kind of sideways and Ethereum to catch up in terms of value. You can't continue to see, or maybe you do expect the Ethereum to go up 30% over a week and Bitcoin to only go up 10%.
Yeah,
it's one or the other to catch up.
That's right. I think Mike used the term earlier, ripper.
Yeah,
ETH would have to go on an absolute ripper. To make it very simple, let's take a $100,000 Bitcoin price. So when you look at the ratio of ETH to Bitcoin, the highest that it's ever been has been about a tenth. We've really struggled to get over 500ths of a Bitcoin in the last year or so. So $100,000 Bitcoin price, a tenth of a Bitcoin in terms of the ETH price gets you $10,000 ETH price. ETH's 32, maybe 3,300 right now. Hell of a ripper. Bitcoin could still go up. Bitcoin could still get to that six-figure price target people have, but ETH would have to go on a hell of a ripper.
A ripper. Yeah. I like it.
Which I think is entirely possible. And maybe that is the big catch-up trade. It doesn't mean that Bitcoin doesn't go up, but that's probably something that a lot of traders have their eyes on, especially given now a more regulated environment, I suppose, if that's what happens. And nobody really knows what's going to happen either. This is what we're assuming, I suppose. But a regulated environment in which you really see DeFi flourish, where there's probably some element of KYC, there's some regulation that these companies can adhere to, maybe more so U.S. firms no longer live in fear of some enforcement actions, right? That uncertainty has prevented a lot of growth, in my opinion. With that removed, you could really see ETH, you could see that ecosystem, layer twos, DeFi, everything associated with it could really start to flourish. Now, does that mean it's a $10,000 ETH price? I have no idea. But the conditions are much more conducive to that being a possibility versus just what we've been trudging through for the last couple of years. And while that's still been going on, the whole space has been growing. I think this just really accelerates it. And so that's why that's an interesting trade to me. You could probably say the same thing about Solana, right? And maybe even moving away from the crypto space and kind of bringing it back into traditional finance for a second. When you think about these ETFs, we've talked at length about why these flows have been going into the Bitcoin ETF, but they haven't found their way into the ETH ETF. Well, if you're sophisticated enough to invest in ETH, you understand it. Maybe it's likely that you're participating in a different way where you're generating those staking rewards. The ETFs don't offer that. If the ETFs now, through some regulation, some clarity, are able to offer the staking rewards, pass them through, maybe in the form of a dividend, then maybe see more participation in that.
Yeah.
I think this also opens the door to potentially a Solana ETF, which in terms of liquidity should be beneficial to the asset, to the price. So all those things are kind of coming together at the same time. And I think you might still have some opportunities for that catch up, even though you started to see a little bit of it play out over the last week.
I didn't even think about the yield part of the Ethereum ETFs because you're not getting that pass through.
You're not.
So anybody that's past like the level of like, I'm going to make like a Tasty account or, Coinbase account. And I mean, like, then that's like the lowest, I mean, that's not a high level of technical know-how to do those sort of things. Maybe I think that's actually a great point of why there might not be the same sort of liquidity in the Ethereum ETFs.
Yeah, so we could see all of that change. And I think, again, it invites capital into the space, which we're starting to see, some flows ahead of that.
And really, I think all of this just sets up for, your next Venmo or your next, you name it, where there could be some sort of service or platform or something that all of a sudden everybody needs and has on their phone that's completely run on Ethereum blockchain.
Absolutely.
I feel like if there's one argument for getting long Ethereum and looking for a 100%, 200%, 300% increase, it's in my eyes, it's got to be something along those lines. Would you agree?
Yeah, absolutely. And I think to an extent, you're seeing a lot of that play out within the Solana ecosystem as well. It just hasn't been around for that long. It's still kind of a nascent technology, still early days. But when I look at Solana, they have multiple physical hardware devices. They're exploring exactly what you're describing. Could you see more financial services move on chain, become more accessible, easier to use? Absolutely. It's difficult for us as U.S.-centric investors and U.S. residents to see this at times, but really applicable to, I think, other parts of the world in terms of what this technology unlocks. So I think, absolutely. This is still very early.
Still early.
Last thing I want to just point out, guys, just to put things into perspective here. If you look at the last week of relative performance post the election on, I think, 2 slides from here.
So those are the correlations. We all know it's moving in the same direction. Yep. Here we go. The relative performance.
Okay, so this is the last one that I just wanted to show you. Doge up 200% against everything else.
We're so back, baby.
Not necessarily reflective of all memes or other areas of the market, but there are some pockets of outperformance, just like there's been some pockets of underperformance and potential opportunities. You are seeing Doge go on quite a rip. I don't know if that's because the market is starting to assume some association between Elon Musk and his involvement in the government in some capacity and Doge. I have no idea. I think to some extent what you are seeing is also just rampant speculation here and enthusiasm, exuberance in the marketplace. So I think you want to take advantage of selling opportunities at times, but you are certainly seeing other pockets of outperformance.
Elon's going to put our reserves in Dogecoin. Screw Bitcoin. We're going straight to Doge.
There you go.
Oh,
brilliant.
My God. So good.
Yeah. So that's just a quick look, guys, at what we're seeing here in the week or so following the election, and I don't know where we stop, but continue to trade a little bit higher here today. Big 10% move over the last week in Bitcoin.
Can you give us a little teaser for when you and Katie are going to start with the Where Do I Start? We've got some questions about that. That's coming soon, hopefully.
Today, this afternoon, 4:30. So for the next few weeks here, we got a little bit of a mini series that we're going to run on the Tasty Crypto Show. This is Where Do I Start Crypto?
I love it.
With the one and only Katie McGarrigle. So she's going to be joining me on the show, replacing both Frank and Glenn on Mondays and Wednesdays for the next few weeks. We're going to start with the very basics of crypto. Talk about the technology, why it matters, why it's valuable, what you can use it for, get into Bitcoin, talk about that, what makes it unique, the investment cases, and then cover everything else from Ethereum, DeFi, how to really get into this, use the Tasty Trade platform, Tasty Crypto Wallet on the show. So if you want to tune in for that, it's going to be on Tasty Live. Live chat will be open as well today at 4:30 p.m. Central Time.
Hell yeah.
Love it.
It's way better
I think it'll be great because it can be, especially for someone that's new to this space and you start reading about crypto and blockchain and everything. It can be really overwhelming and kind of if you don't have someone guiding you through it, it can be really overwhelming. So I think I'm excited for this. Yeah,
we're going to focus on why this is special from a technology perspective, and then maybe why it fits in your portfolio. Maybe it's not for everybody, but to me, it's a pretty compelling asset class. So we're going to walk through all of it from the investment perspective, which I'm excited about.
And it's good that you have Katie because Katie's nice and wants to understand.
She's
us.
great.
We're a little more degenerate.
Oh, you guys are fantastic. You're
dog
fun.
with hat and Dog and Me and Doge and all the other ones.
So one of the things that I want to do with you guys on this show here, if you're open to it, I know we've talked about trading.
Yeah.
And we're working on some things so that we can get set up and trade within the Tasty Trade platform in terms of the 4 cryptos that are offered there. But I propose what you might call bag wars, where we're all going to have a self-custody wallet, Tasty Crypto wallet. You can pick your chain. You don't need much, maybe $100 worth of USDC, and each week we'll pick our 3 favorite meme coins. There doesn't have to be a fundamental reason. You might just like that it's called Fart Coin, for all I know. Doesn't matter, but we're going to pick our 3 favorites. We'll talk about them. You can have a reason as to why you invested in it, or trading it, I suppose.
Yes.
And we'll look at that if you guys are interested. Little mini segment.
I'm definitely down for that.
Let's try to kick that off next week then.
Yeah. All right. I love it.
From the YouTube chat, Howard commenting on Solana, clearly the best L1 if you're building a crypto startup now and evaluating every ecosystem, that's where you're going if you're smart.
Yeah, I tend to agree with that. I mean, we've shown some data here on this show recently comparing both Ethereum and Solana. And I think we saw massive growth, if I recall, in terms of just users, certainly meme coin trading, and just how efficient it is on Solana. That has been one of the big growth drivers. But in terms of fees that are generated on those chains, as you think about these as a business, as we've talked about previously, roughly, at least when we were looking at it, the same amount of fee revenue being generated across both for that time period. I think we're looking at the past month or so. I tend to agree that there's a lot that's happening on Solana. Doesn't necessarily mean that there's, one is better than the other, right? We don't really have those arguments around Apple is a better company than Google. You probably want to own all of them at this stage. At least that's my opinion here. Yeah. And there's a lot of reasons as to why you would want to own Solana. Now, maybe you want to be overweight Solana or underweight Solana. I don't know how it fits within someone's portfolio. But definitely, that's one of the top 3, in my opinion. If I could only pick 3, it would be Bitcoin, ETH, and Solana at this stage.
Love it. Love it, love it. Bitcoin chopping around that 85 level. We'll see where it goes. We'll see where it goes tomorrow. Are we just in this 10K moon every day? We might be. We just might be.
Well, obviously what we'll be telling is on any dips, how quickly buyers possibly show up, right? We'll see the strength of some of the buying that needs to be there to push this higher. One thing to consider in crypto, this is on both the upside and the downside, is that because so much of the price action is driven by derivatives markets, specifically perpetual futures, and a lot of this trading occurs outside the US, you have auto liquidation rules. And so there are certain points in time where, let's just say, the markets can get a bit extended and it then just kind of collapses in on itself. If you have an environment where it really incentivizes sellers to come in, or on the other side incentivizes shorts to cover and buyers to come in, that is going to stop the market kind of from trending in that direction short term. So the upside, we have recently seen a lot of short liquidations. So about 200 million in shorts were taken out. That can amplify it to the upside, but you get conditions where the funding rate might be a little bit too expensive to hold long term, given what's happening with the price action, and then that feeds on itself and is self-correcting. So you get extended at times, and I would expect it to, but you could get a quick snap back. It's how quickly then do buyers show up at, say, a move from, just call it 85 to 75, 85 to 80. That's what I'll be looking for.
So in those markets, like the perpetuals, is it like is there an overweight liquidity in one direction most of the time?
I would think people are probably long versus short, but there's definitely times where you can probably look at some data and say there's a decent probability that you're going to see a reversal here, or you're going to see the market trade lower from these levels.
And it's backed by spot, right? So you have to put up, let's say, one Bitcoin to be long or short a 100x contract, and your liquidation is based on whatever your zero value would be.
Well, in a lot of cases, it might just be based on any collateral that you have. So you have USDC, and in the same way that you have margin, it's just that there's so much more leverage in some of these markets where I don't know what a standard contract for Bitcoin might give you here, like with a micro, maybe it's 3-to-1 or something. Yeah. You can get 50x leverage in these other markets. So you almost have this scenario that acts almost like an option, right?
Yeah.
When you think about a perpetual future, if I only have $500 worth of collateral and I lever that thing up 10x, 25x, whatever it might be, that $500 can very quickly get wiped out on the downside. And that's the most that I can lose. But my upside is exponentially larger with this perpetual future. So it has this option kind of payout dynamics.
Yeah. Okay.
But I would say that most of the time that market's going to lean long.
Yeah.
Just given the nature of this stuff, I think. And you see that elsewhere too.
That makes sense, because I was trying to wrap my head around, because it's not like if you're long a 100x contract, it's not like there's like that's like put on the market, but the effect of your closing and or selling out of collateral is what is going to move potentially a market. If you're getting, that's the liquidity.
Yeah, a lot of times that collateral might just be a stable coin, though. It could just be a dollar-based asset.
Yes.
Versus like having to. I see what you're saying. Like if you think about this from the stock perspective, if the management of those positions required a bunch of sales or purchases of the underlying shares, it could impact the stock price.
Yeah.
Yeah.
And I was thinking of it like if I had to put up one Bitcoin and I get 100x leverage and Bitcoin goes down, $500, I'm at zero basically. And then that Bitcoin then hits the market as like, cause I have to liquidate that as a further, mover to the downside.
Yeah. And I think, that absolutely can feed into things at times. Absolutely.
We need to just start like a prop firm here, guys. Let's start this.
What's been working really, really well? Liquidity pools. Ahead of the election, no idea obviously what's going to happen, but we can all come in and bet on there's going to be some volume. And so that's one of the trades that's continuing to work here today is those liquidity pools that we showed how to set up.
Yeah. Have fees gone up?
Oh, yeah. So in terms of gas fees, a little bit, yeah. But in terms of just the yield as a function of increased volume trading activity on a decentralized exchange like Uniswap, it's going up a bit.
Love it. Lots of ways to participate. That's the beauty of it. 5 minutes left here. Couple questions from the YouTube chat. Shopify position. How do you reason about your?
I thought it was going to be a Bitcoin. Got to stay on.
I tried to stay on the Bitcoin, but getting some questions.
I haven't even looked at this. I have it was right at the money 3 or 4 days ago before we rallied $10. But I'll have to roll this sometime today. Is what I'll look to do. I'll do it right
Speaking of not even looking at stuff, I looked at the SPX expected move. It's my normal thing, just looking at what's expected for the week. 60 points from here on out, plus minus. And then I looked at the economic calendar, and we've got CPI on Wednesday, PPI on Thursday. It's like the market doesn't care anymore. We're done. We're done.
Yeah, it's over. All the fear is gone. Look at the vol futures at 15. The VIX itself is about to be in a 14 handle. It's all done. It's over. Up only now. Uptober leading into what's the November phrase?
Oh, it's just the best performing month for crypto.
It is the best performing month.
Which is, it is interesting, I suppose is the word of the day, to observe that after seeing this historically and not having many data points, but here it is playing out in similar fashion. Doesn't mean that it will continue to do this, but as of right now, it seems to be the way that it's playing out.
Are you ready for Thanksgiving dinner table talk? Because I get questions.
Yeah.
I could only imagine how much.
I haven't recently, even up to this point, which might be representative of what we see with Google Trends as well, where even though Bitcoin's at all-time high, look at search volume for crypto, for Bitcoin, it's not there. I'm ready for the conversations, Nick, but whether we have them or not, I don't know. I don't know if anyone's paying attention.
How about a broken butterfly to the downside on Coin and Tesla? Would you play something like that?
I would not.
Because
I told you got to get directional.
A broken butterfly to the downside.
Yeah.
Somewhat directional. I think what's interesting about today is you're seeing such huge moves in these products, but implied vol is still staying pretty bid here. If I was doing it, it would be on the 4-day. Like, if I'm being honest. Like in Tesla or Coinbase. Like, you just, for these to really work in your favor, you need to have no extrinsic value. And you still have a lot of extrinsic value today, but like a 320, 315, 305 in Tesla for the 4-day for 50 cents, like, you still need to pin that little region there or have it be around 320 on Thursday or Friday. But it's going to be a tough trade until you literally get all that extrinsic value out of this position. So it's tough.
Tough.
Same with Coinbase, up a cool $57 today. Oh man.
Yeah, I mean, I don't know. How do you guys think that fills that gap there from 300 to call it 270? Or if you're long here, I mean, we were talking about this back when it was sub 100.
Yeah.
And I know I sold it like $10 higher.
Paper
but like,
paper
what do you do here? You just kind of wait for the reversal and let the market take you out of it?
Yeah.
Listen.
And that's the problem is like your window, like a 5x10 broke wing butterfly, 5 points wide from 305 to 300. It's the exact same setup in Tesla. But like your issue is you need it to be in a 5-point window and it's up 60 points today. Like, it's just, these moves are so crazy that even implied volatility, I don't think, is doing it justice for the realized volatility you're seeing, which is obviously what you're seeing.
Yeah.
Yep. Hold on for dear life.
Yeah.
Well, I think it's time for some Vietnamese food. What do you think?
I think it's perfect time.
Glorious. Well, thanks, Ryan, for coming on.
Thank you, guys.
Today's a very exciting day for those hodlers out there, those diamond hands. But yeah, if you have any further questions, you want to shoot us a note, you can find all three of us on the Twitters. I'm at Trader Mikey B, Nick's at Trader Nikki Bat, Ryan is at Ryan Fred Grace, and go follow at Tasty Crypto as well. I've got the link to the Tasty Crypto newsletter pinned to the top of the YouTube chat, tastycrypto.com. You can find it on the homepage as well. Comes out every Saturday morning. Very valuable stuff. A lot of digestible data stuff like we're talking about today. So go sign up for that for free. But yeah, have a great rest of your trading day. We'll see if and when we can break that 100K mark in crypto. Maybe it'll happen this week. Who knows?
Tomorrow, the next hour, by the close.
Yeah. We'll be back same time, same place, till 11 a.m. Central tomorrow. We'll see you then.
Peace.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on tastylive.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Golf putt, normal distribution, reduce speed, increase standard deviation for a wider angular strike. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
Look who's back testing. Tasty Trade now has options back testing for free.
Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Your eyes do not deceive you. You do not see Chris Vecchio on the screen, and that is because he is out today, but you're in trouble because you've got me here steering the ship. Lord only knows what can happen now. And Mr. Jamal Chandler sitting in. Sir, happy Monday. How goes it?
Happy Monday, my friend. Folks, you are in trouble. That's right. Illy and I have controlled the ship. It's our ship. He's the captain now. You know what I'm saying? And I'm assistant captain. So we're here. We're about to have a little bit of fun today. I'm hyped up, man. Weekend was good. Pretty chill, like I said, low key. As we were talking about off air and heading into the show. I'm kind of like, since you asked, I'm starting to fall back into the world of kid sports once again. My youngest kid now.
Here we go.
I know, dude. I know. And we've like, look, I've done it before. I got a kid, my older son who's a junior in college now. So we've been through this once before, 10 plus years ago. I have taken my time, but it's been inevitable. And now he's back into it. So we went to a couple of basketball games and he did his thing, but it's the process is starting all over again. And, I'm not really looking forward to it, but I know a lot more. I know a lot more this time around. It's kind of interesting. I'll just say that.
I haven't quite started that deep down the lane yet. They're still a little young, but we took them to their first big concert this weekend. We went to go see this great kids musician called Danny Go, and they had a blast. They were in there. It was a packed house in Oakland. They were going crazy.
That's awesome. And were they all dancing in the aisles and whatnot?
Dancing in the aisles, jumping in the seats, the whole thing. Place was packed.
Ah, that's pretty cool, man. It's even cooler that you have Oaktown so close by to be able to do that as well. That's dope, man. I love it.
It's awesome. It was a great venue. Hat tip to the Paramount Theater. It's an amazing spot.
That's cool. I never heard of that one. I'll have to check that out sometime. But that's dope, man. I love
it. Definitely. I'm starting them young.
You got to, man. Dude, what do you make of the last, I guess it's going on a week. It'll be a week tomorrow. The last week of trading. I mean, it's been bananas. What do you make of all of this so far? And
that's the right way to describe it. Last week was absolutely crazy. And if we got the platform up here, we can take a look. I mean, the week sort of broke down as everything before Tuesday, and then everything after that. So if we have a look here, I mean, you can clearly see where the election is. I mean, that much is directly on the chart. and then after you have this kind of interesting rounding out, which if you're a follower of candlesticks and you see one like this today, it sort of makes you go, It doesn't get you fully on board with saying, oh, this is something I'm going to fade. I don't think we have all that here, but this, especially on shorter term time frames with the momentum, and this is, by the way, RSI down here, if you're keeping score, the simplest of all the oscillators, just the way I like it, that this is setting higher highs and this is fading. It doesn't necessarily mean it's going to turn, but it does mean that it's slowing. Just from an arithmetic perspective, just the way that indicator is counted, it suggests momentum is fading. So what does it mean? I guess it doesn't completely fall outside the realm that after such a wild move last week, you'd have a little bit of rethink, a little bit of digestion, but I'm certainly not looking at this as anything to fade. I'm a little bit skittish to buy in. I don't have any direct exposure to it. I was leaning a little bit short into the election, and obviously that did not work out. Thank God for vertical spreads and
for defined risk spreads. Yeah, I'm sure.
For defined risk spreads and hedges and other things. So the gold short worked, which we'll get to. The bonds short worked, which we'll get to. The dollar long worked, which we'll get to. And all of that was just enough to offset the pain in equities because, good Lord.
Yeah, I mean, this says it all. You're right. Like it's been volume, right? Days of markets moving higher, and obviously this one stands out among the other ones. There's a ton of markets that are some of this were doing this as well, which we'll get to. But just equities alone. So I have had for the last it was since I guess it's about 2 months, going back to September. I had on long MES contract, long MNQ contract. And I was short call spreads and SPY and in Qs. That was kind of my trade. It was kind of like a quasi covered call, if you will, right? And it worked out really well, actually. And I even held it through the last couple of days. This move higher even worked. Now, of course, my short call spreads were pretty much in the money at this point, but it ended up working out well because of the offset of the futures contracts. Now, it's interesting because I was trying to decide late last week, what do I want to do with this position? And I eventually even did the similar thing with the Dow. I was long MYM and short DIA call spreads on the upside. And again, a nice winning trade for me. I was just trying to decide, what do I want to do with this? How do I feel? And ultimately I had to come to the realization that, when I put this on like 2 months ago, the landscape has fundamentally changed in a very big way, just even in the past week. And so I just decided to take it all off today. It's like just going to start fresh from here. To your point, I don't feel the need to get long any of those futures contracts. The ones that I just was long, I decided to just take those off, just take the whole entire trade and spread off. I don't feel the need to dive into this right now in a FOMO way. Just, let this ride out for a little bit and we'll figure out what we're going to do from here. But things have definitely changed big time. When you're talking about what's going on with equities, you see what's going on with a lot of the banks. It seems like a lot of banks are still continuing to see some upside. Healthcare a little bit. You see some changes going on in there. The whole idea of what they talk about, that sector rotation, right? When you get after an election, it's happening, bro. Like it's happening.
Oh, for sure.
Now. You know what I mean? And so I'm just trying to figure out what's next.
I mean, if we look at just the sector breakdown today, consumer discretionary seemingly leading the way and financials right behind it. So just real pro-cyclical. The weak spots, such as they are, and there's not many, but actually tech, of all things, is the heaviest. Real estate behind it, materials behind that, but that one's minor. So let's call it real estate and tech. And those are the interest rate sensitive, or some of the interest rate sensitive pockets of the space here, which is a perfect segue into looking at the one of these that's probably the most interesting in terms of forming some kind of a setup that may become something here. So the NASDAQ has been soggy basically since July, right? Dow hit new highs. S&P hit new highs. This did not. And now this is sitting right at that July high. And the price action here is starting to get curious. If we zoom in here, and I was looking at this earlier, and it was a little unconfirmed for my taste yet, but this is starting to look like maybe it's beginning to form a little something. So if we take a look back at the daily, and I'll just put this line in here to orient us. There's the high. And if we go back into the shorter time frame chart, this is an interesting failure here. So we get up to it, we hold it, we poke above and then break back down. That's an interesting kind of misstep here, even on an 8-hour. So I'm sort of looking at this down here and going, are you going to give me a little pullback confirmation? And then can I maybe look at a put vertical into here? And then we'll see. And maybe that's it.
Yeah, no, I like that idea. And if you know what, you make me realize too, when I look at this, you can even go take it a step further back. I mean, the last time we saw some serious red was that week of all those earnings, right? Like just even that week before the election, right? Like that's where we saw the well, Google did well, but I mean, Meta and Apple and the like did not do so well on earnings. And of course, it's almost like it's forgotten about after the election, right? Like it's totally just forgotten about. This is what I mean. Like things have changed, and so whatever we were thinking a couple of weeks ago definitely has changed a little bit. So you're right. I'm looking at this near term action and trying to figure out what's going to be next. Is there going to be some failure before they try to take out those highs in a meaningful way, or are we just going to dance on this line for a little bit as everybody's just not as interested in tech right now? They're a lot more interested in, like you said, banks and consumer discretionary, right? I mean, you see the way Tesla's been flying, of course, the last couple of days, and that's a whole nother story. But I'm trying to figure out too, will this thing give us an opportunity? Will there be even any vol anymore this year, Ilya? I feel
it'd be nice to have some vol.
I know, and I almost feel like on the one hand, we might have seen like the last bit of high vol for the rest of this year. I'm not exactly sure what brings that back in. I don't even know if the last Fed meeting is going to do that or what's it going to be. I don't think it's going to necessarily be CPI this week. Like what brings any vol back for the rest of the year? We might be done in the way of that. We might have to look to 2025 to be able to sell some vol again. We'll see.
Yeah, I mean, for me at this point, there's so little vol out there that if you're going to do a thing, and in fairness, this is up my alley. I like this better, but it's a directional sort of thing out there. It's difficult to be just a passive premium seller out there just going, everybody's freaked out. No, they're not. No,
yeah. No, they're not.
It's just not there. It's just not there. Which I'm always kind of pulled to think about it in two ways. On the one hand, you can't ignore the fact that vol is low and you have to look directionally. But then when you start to look directionally, you go, okay, but vol is low, which means that the path of least resistance is for it to expand back out, because we're pretty downbeat here. Just in terms of the recent kind of places where it's been, we're basically toward the lower end of where we've seen it since the middle of August. So if you're going to look for something, I suppose it would be for vol expansion. My thing on this, and you mentioned CPI, I think that's exactly the segue here. This, for me, is the story of where vol is going to go eventually, because now that a lot of the stage is set, the election's out of the way, that uncertainty's gotten squeezed out. Now it's look at the economic data, listen to the Fed. Will they now follow the data? Because there's been a whole lot of interest rates going up. I mean, if we look at where this top is, this is the last Fed meeting right here. That's it. And, for those of us that like to play the home game and say the Fed doesn't matter, it's already priced in by the time it occurs. Right. There's that top. And so either they were waiting for confirmation or they really heard something. Either way, the trigger's there. And so when you look at what they did since then, right? Fed comes out, cuts 50 basis points, gives them everything in the forecast they could possibly imagine. Here's 100 basis points for this year. Here's 100 basis points for next year. What else do you want? There you go. And the market goes right, yields higher. And that just tells you, the economy is fine. You're cutting into an economy that's going to overheat or at least is going to get hotter, because it's not like you're easing into an issue. The economy is not weak. Last GDP numbers, 2.8%. The PMIs are basically hovering at the same 12-month high that they hit back in May and just sitting there. So the economy is growing fine. Obviously, there's pockets here and there, but there's always pockets here and there. And so the market seems like it said, right, you want to ease into a economy growing between 2.8 and 3%. Got it. Okay. This is going to be inflationary. Let's go ahead and take up yields. Let's take up the dollar. Let's take up break-even rates. Let's steepen the curve. That, to me, now is pretty much the only thing left to talk about. Because now that we know what the election is, and we get the sense that policy-wise, it's more inflationary again, because it's tax cuts, that's inflationary, that's fiscal stimulus, again, on top of an economy that's already not cold. And of course, if we see some big adjustments on the immigration side of things, that's labor supply. That's again inflationary. So it makes for an interesting thing as we go into that December Fed. But in the meantime, I'm watching this bond and going, if these yields break out of this election range, that's where the ball is. If we get a hot CPI number and we get back into here somewhere, and we start to push this, let's take a look at the continuous contract just to get a sense of where we've been here. It's not like we would be in uncharted territory or anything like that. So if we went from here, let's say, and started to get back into here because CPI is hot, that would be a very interesting thing to see, even just to see if the market swallows it and goes, yeah, okay, that's fine. Whatever. The economy is growing. Okay, so we're going to have higher yields, but it's against better growth. Or not.
It wouldn't be interesting. It would suck, Ilya. It would suck for me because I'm long bonds. No, I mean it's fine. I mean I've been long them. Probably about a solid almost 2 months. Probably around the same time as I put on the other trade in March. I've kind of rolled down a lot actually, and I was rolling down on election night. And I'm sure I'm in the majority, and we're wrong. A lot of us are. And that's why I'm curious to ask you, like, how long have you been short bonds, or was it just an election night thing, or is this kind of a thesis you've had for a while because you were, appreciative and understanding of like the fact that we're going to possibly have a lot of this inflationary stuff coming in with the new administration?
So I was long the bonds ahead of this breakout. And once this breakout happened, I got out right around here as it stalled. So I missed this little bit of it. I then missed this little bit of it and started to get short right here. So this little pop, I was actually looking for the bounce here as well. It took me for a little seesaw, as markets do. It breaks down here through these former highs. You go, oh, it's a short. Wait, no, it's a long. Nope, still a short. And so it took me for a little back and forth here. But ultimately, it resolved lower. And so I've been holding it from about here. And so this is the ride I've taken on it so far. I'm looking at this and thinking, really, election this, election that. We have an economy that's hot. We have a Fed that just cut 50 basis points and put itself on autopilot, and last week followed through and cut the 25 basis points that they said they were going to do back mid-September. And so I was just looking at it and going, well, the market thinks this is going to be inflationary, all of this, election or no election. And that's what got me in the bonds. Just saying, you know what, the dollar is rallying, yields are going up, the curve is steepening, gold is going up at the time. And actually, that's a short that's bailed me out of my stock market sins in the past 2 weeks as well. So looking at that in just a second, but that was really the idea that for whatever reason, the market has decided and you can see it in the data, that the economy is not bad, that there's not a sign of the sort of recessionary type of tilt that people were afraid of, let's say in June, July, August, as the data was turning the wrong way. And I mean, it makes sense. There's a great index from Citigroup that measures economic surprises. And it told you a story of deteriorating U.S. economic data relative to forecasts from April into the end of August. And it made sense then. Then the markets went, oh, the Fed is reluctant to cut. They're going to be late. The economy is turning. They're going to miss this thing. What soft landing? Okay, that makes sense. And then in July, that's why when Powell comes out in July and goes, okay, it's on, we're cutting. That's why the market falls. I mean, if we look at how you might have expected them to react, you wouldn't think. But here is Powell saying we're going to start to cut, and the market goes, oh no.
I know, so weird. I remember, yeah.
Because I mean, the way I read that is they look to April onward, the data is fading, and they go, oh, now you want to cut? You've seen the pain. Now you've recognized you're late again, and you're chasing again, and we're going to be in recession by the time we get to this election, maybe. But then by end of August, everything turns, and the data heats up, and it's a different story. My biggest question for you in this context, because I'm wrestling with this, and I think I have an answer, but given what stocks have been doing to me lately, I'm not sure it's the right answer. We saw this movie at the beginning of last year. U.S. economic data started to get better, and people started the year with 6 cuts in the forecast.
Yeah.
And as the data started to get better, they're like, wait a minute, this makes no sense. What do you mean? And so you can see it in the structure of this, where at the beginning of the year, they go, wait, no. Take that away.
Yeah.
There's no 6 cuts here. And the way you read this, folks, is 100 minus the quote. So if you look up here, just intuitively, these numbers are higher, these numbers are lower. 100 minus a higher number is lower rates. 100 minus a smaller number is higher rates. So just think of this inversely. So this is rates going up. At the beginning of the year, the market said the economy is getting better, there's not going to be as many cuts, and stocks rose. It didn't bother them. Are we going to see that again here? Because for me, the difference is at that time, there was a synchronized global acceleration. US was doing better. Europe was starting to do a little better. China was starting to do a little bit better. And there was a positive overall global story. That's not the case now. Now the US stands alone. China can't seem to get out of bed still since COVID. And Europe is slipping back into recession. So can we get away with another one of these here?
I think we could see something like this again. At least that's kind of what I'm betting on to some degree. I mean, there's a lot of different narratives, and we can spin them all day long. But the fact remains is nobody has any clue how this administration is going to end up acting out and how things are going to play out overall. I mean,
that's right.
There's look, there's a lot of different things we go into the immigration issue as far as what's going to happen with that. We can go into, many other things, but I do think we're going to see some ebb and flow, and I think you're right. I think the bonds is actually the area where we're going to see some decent volatility. Honestly, it's been like a 4-year type of trade when you look at it. Going back to 2022, you saw what happened then. 23, of course, the end of 23, I think, is the thing we remember the most. And beginning of this year, like you just showed, because bonds really took off on this idea that we were going to have all these different cuts. So I think at some point again, we're probably going to get a little bit of that. I don't think it's going to be, as wild as it was at the end of last year and the beginning of this year. I don't think it's going to be that wild, but I think at some point or another, they're going to turn these machines on bonds. This is one of the largest things in the world. I think the big bear market that we had already happened in 2022. And I think at some point or another, this is going to start to reprice itself. Now, will we see, the levels that we saw in 2021 and prior to that is the real question. I mean, I do think there is sort of a ceiling on bonds. I just feel like there is, right? And again, there are a lot. There's some truth to a lot of things that are probably going to end up happening with the new administration. But I do think as a result of that, there's a little bit of a ceiling on bonds. But I don't know. I think this is one of the better trades out there, honestly, more so than equities these days. I think the bond trade is.
I mean, it makes sense, right? Because you have really clear levels here where you say, okay, which thing of these things is the right thing, right? You had this long decline, which of course makes sense, right? This is the easing giving way to tightening, right? This is where the Fed essentially says, okay, we're done. The bias is now to start to hike because this inflation is sticky. You already see the bonds start to anticipate that before anything actually starts to happen with tightening. The tightening doesn't start until here.
Mm-hmm.
And then we keep going and going. And if you look at this now in context, if this was just sort of in the most simplistic possible way, the trend as it is defined, right? Lower highs and lower lows. A trend lower by definition. Okay? Do you believe this? Maybe, because clearly the thing has changed. It is no longer setting lower highs. It's made a higher high here. Something's different. And then it's been a little soggy. Obviously, we've had an election.
Right.
And so this sort of becomes the bogey for me. I could see it extend down here and find support here. I could see it invalidate all of that and end up here and tell a different story. But here it's kind of in no man's land. And there doesn't really seem to be enough IV to do anything like a condor or any kind of range bound strategy. Since you're in the middle of a range, that doesn't look like it's going to work here or have any juice to squeeze. So looking at it, I'm sort of begrudgingly short, but very begrudgingly at this point. Like I'm looking at this and going, all right, will you just invalidate this thing already so that I can stop freaking out about holding something in the 9th inning of a move? Because it does look like there's not much room at this point. And I get why it could keep running down, but it doesn't have a lot of space. So I'm looking at it stall here, watching these momentum readings kind of level out and start to correct a little and thinking, is this thing just going to correct in time, end up here somewhere and then take another big leg lower before it goes? Or is this actually the bottom? Is this fading of downside momentum that we see here? Is this it? Unclear. But I think CPI this week is where maybe that gets, if not clarity, then at least a little bit of a shaking of the snow globe to see what comes out.
Yeah, the one thing I don't want to do as of yet, and I think I kind of talked about this with equities too, is sort of make last week's move be the end all, right? Especially with the bonds right now. I don't really want that to be the end all be all and me to make the decision on my position. I still want to stay long. I still want to see how this shakes out. I mean, and across a couple of different things, I think that's the case. So I still believe that we're close to a bounce here. Again, it would have to be, if it takes out 112s in a meaningful way. I mean, first of all, I'm going to be, my position is going to really be hurting, and that's in the area where I really have to sort of decide and think like, okay, maybe I'm wrong on this one, and it's time to close up shop. But I guess until then, again, like we'll see what CPI brings this week, at least the thought process around what's going on with that, if we see a little bump in inflation or not. I mean, it's been a bumpy ride to the bottom, right? Or 2% potentially, but we'll see, man. I mean, for now, like I said, I'm fine with the last week or so. And again, I think that's, it's fluctuated quite a bit, but I'm fine with that move because again, I know it was mostly on the back of the election, but if we start to take out some of those lows down there, then it gets a little hairy and then I really have to make a new decision.
And in fairness, I mean, my finger is on the trigger here. I'm going to be getting out at the first sign that this thing is showing meaningful signs of bottoming, and probably flipping back the other way. Because to your point, we've just gotten through the election. There's been a big wave of pricing in what that means, but we're not going to have concrete proposals that have some sort of a clear path that we can score, and that markets can score and say this means X for inflation or this means Y for rates, basically for a few months at least. And at some point, speculation reaches as much as it can know until there's more details. And that's where this thing probably stalls. So we'll see if the economy can give us some heat outside of the policy speculations side of it, which actually is an interesting thing in the context of what's going on here. Because you'd think if the bonds were relatively steady, you'd see something similar in gold and you'd see something similar in the dollar. And you don't. So you look at the bonds and you go, which one of you knows a thing and which one of you is asleep at the wheel? Because gold is getting cooked here. What are your thoughts on this?
I was a little afraid about this one. Again, I think this is another post-election move. I was a little afraid that this could happen because of the fact that I am long gold. This is one where, Ilya, I'm telling you, this is one where I reverted back to some of the old momentum days. Chris and I have talked about this a lot. This is one where I just went straight up upside call spread. Now, I have played with gold a couple of times throughout the year. As a matter of fact, back in March, I was still attempting to try to get short sometimes using MGC or something like that. But that stopped in August, got long call spread. That worked out well, took it off. Got back in, I think, in September, did another long call spread. That worked out well, took it off. I just got back in the beginning of last week, maybe, or the end of the week before. I mean, it was just before the election. I got back in and I got long.
So like right here.
Yeah, somewhere in there. I'd have to look specific. It doesn't even matter. But I got long, and I actually went further out. I went to the December expiration, so over 45 plus days. And again, this is the opposite of a tasty trade, right? But I think gold deserves that. I think silver deserves that. I think you got to treat them a little bit differently. They're not, a lot of our mechanics, to be honest with you, a lot of them have to probably work best with like equity or equity related type names, not necessarily commodities, even though we use them for commodities, but this is just my opinion. But anyway, we used the long call spread. I went really far up this time, 2,900 to 3K. So of course I'm getting waxed over the last couple of days with this move here, but it's all good. It's further out. It's duration. It is what it is. I mean, I do have other positions that have kind of helped offset the loss, not in gold per se, but just across the board. But to answer your question, I'm still trying to figure this one out too. Now part of it is like the dollar's been firm and the dollar's been strong because the idea of again the idea of what's going to happen with the administration and the protectionist, the ideas for the dollar. So dollar moving in such a strong way more recently, I guess you could argue that that's affecting gold. To your point about gold and bonds, I mean, that was actually something I used to hang my hat on. You could pretty much watch the 30-year bond and watch gold, and they would move together for the longest time. This year has not been that case, right? Gold has just done its own thing. And so I've been playing it like it's doing its own thing. But I'm again, this is another one. This is why I mentioned this with bonds, and it's the same thing here. I'm trying to figure out, is this a new regime? Or is just a little bit of a pullback, and it's going to resume what we've seen throughout the year? And I tell you, dude, this is part of the reason I almost thought about taking everything off as of last Friday, just to sort of approach this whole market right now with new, fresh set of eyes, because things have definitely fundamentally changed. You're just not sure what 100% is real and what's not yet. And I feel like I remember this after the last election, and definitely in 2016 as well. So, there's a couple of week period, maybe even a month and change, where things are sort of recalibrating. I think you got to give them a little bit of room to do that. So for the timing, I'm giving gold that room, and luckily my position is well over 40 plus days out. I should have gone to the January, damn it, when I put it on, just to kind of get around all this, But for now, I still believe long gold is the way. Until proven otherwise, more than just 2 big down days. I got to see some sustained movement to the downside.
I'm with you. I sort of reverted back to first fundamentals of tape reading and like the simplest technical analysis you could possibly imagine. Because when I was looking at this from a macro lens going into the election, this up move was happening as the dollar was rallying and as yields were going up, which makes no sense. You look at this and you go, okay, so you're telling me that an asset that yields nothing and an asset that is quintessentially a foil to fiat currency is going up with rates and with fiat currency. What?
Doesn't make sense. Yeah.
What world are we in?
Right.
What is this? This almost never happens. At the beginning of the year, we obviously, in retrospect, looked at those Chinese reserve figures and said, oh, there was a non-economic buyer basically backing up the truck to buy everything. Okay, fine.
I want to party with that guy, by the way.
They're sitting on some serious reserves at
They
this
got
point.
gold toilets. You know what I mean?
It's crazy. It's crazy. At the end of last year, going into the first quarter of this year, their gold reserves were growing at 11% year on year. Each quarter. Each quarter. It's crazy. It's crazy. So, but then they stopped at some point mid-year. All of a sudden, the data just leveled out and they backed off. And so I was looking at this going into the election going, either they're buying again or there's some sort of weirdness here. This thing, it makes no sense that it's going up, so I don't know. I have no clue what's going on. I'm just going to go back to watching the tape. And when you looked at the tape, this is all by way of justifying my insanity here. I looked at this and said, higher high, higher high. Whoop. That's weird. It broke this. This was a former high. This is now a lower low. Sell. And so I got into a little put vertical right here. Risk defined, going, you know what? I don't know why this thing is going to go down. I don't know why it's up. But the price action seems to be telling me it's tilted. I can take a decent risk-defined bet. Let's see. And boy, is it bailing me out of what I did in NASDAQ last week. So this is going great.
You need those. You need those.
Sometimes you need a little help. And so as I look at this now, it's basically sitting where you might expect it to find a little bit of support, or at least a little bit of a pause. So right here, we can clearly see that this was, for whatever reason, a level of friction. So I'm going to be looking at this now closely and basically seeing if this finds some kind of a reason to stop right around here. And this, I suppose this violent snapback sort of makes sense in the context of this kind of weird period we were just talking about. If this was uncertainty about the election, if this was essentially people going, you know what, if this is a 2020 situation again, maybe we won't even find out right away. Maybe there's going to be all kinds of contesting of this thing. Everybody's going to argue. Somebody's going to riot somewhere. Who knows? The last time we did this, it was crazy. And so maybe this is the market saying, you know what? Not that. That didn't happen. Take the risk that would happen back out of it.
Yeah.
And basically get back to, okay, realign with yields, realign with the dollar, because this is, in a sense, a kind of, oh, whoops, I was drunk. It turns out the dollar is up and yields are up. I don't belong up here.
Yeah.
It sort of looks like that, but now it feels like decision time, and I wonder if it does basically nothing tomorrow and into CPI and just waits for that to be the next shoe.
No, all that is very pertinent to this discussion about gold, I think, because again, like you said, leading into the election, it was doing things that didn't exactly make sense. And I would venture to say there was a lot of that because everybody was trying to pile into the thing that they thought was going to make sense based off of how the election was going to react, right? And I think this is definitely one of those where people were like, "Oh, let's get." Obviously, gold has been bought all year, but I think there are a lot of people who decided to pile into gold because this is the play for maybe the election, something going wrong or something not taking too long to figure out where things are going to wind up. And once it didn't happen, it's like, okay, no, we're out. We're getting out. And that's why I just don't want to make the decision based off of just the last week or so of action, because I think there's still a lot of money moving around in a lot of different corners of the market right now. And I don't think a lot of the narratives have made sense per se. So I'm trying to figure out what makes sense. And I don't feel the need to abandon gold just yet. It's been, it's been pretty reliable throughout the year. I will say I'm looking at the chart and just remembering, like, there's been a couple of times here where we've seen some big sell-offs. That August, the beginning of August was clearly a time period. You can see that sell-off in May there was a strong one. So, we've had a couple of these throughout the year. I do wonder if, like you said, if after this sell-off, it just gets quiet and hangs in there for a while, because we forget. I mean, after the big strong move up for a while there, between late April and August, it was fairly quiet to some degree, right? We got a few pops here and there, but it was really after August where we saw some of the strongest moves.
Yeah, I mean, this was that sort of China piling in bit, and you see these, to your point, you see these long pauses on the way higher. See if we can look a little bit further back.
That's why I'm thinking, like, I'm a little annoyed at myself. I should have done January. I didn't, because again, being long an upside call spread, this is going to take more than 10 days. And by that time, we're going to be at 30 something. And I don't want to be long. And even if it's gold, I don't want to be a long an upside call spread with like less than 30 days to go. And I'm going to have to probably roll this thing out to January just to give more time, even though right now it's beaten up, but I might have to.
Yeah, I mean, I'm sort of, and we'll get to crude in just a second. I'm sort of in that boat in crude where I need to either roll out or call it a day. Over here, I mean, you can see you have this long quiet, and then at the start of this year is when you get that explosive buying from China, and then you're basically asleep after that once they stop until the Fed announces right here it's go time. And then you have the pricing in of rate cuts. And all of this makes sense up until like here, where yields turn and the dollar turns. And this thing keeps going for some odd reason. And now it seems like we've reset that part of it. We're back to where the Fed left us. This is the week of the Fed cut right here. So we're essentially reset from the election back to where the Fed would have had us were this weird thing not there. And so now, show me CPI that's hot, and maybe we get back into here, maybe into here, and if we don't, into here. But that to me is the next thing. And in this context, because this is the third face of this story, the dollar. So here's the euro, and I'll go back to a daily chart just to give a sense. This thing, I was getting a little concerned about it here, holding this thing short. I started to sell it up here. And when this started to happen, I got out. And then obviously after the election, we had this massive move. And so on this retest of the underside here, I got back in reluctantly. And as it was sitting at these levels, I'm thinking, you're chasing. It's near the previous lows. You're going to rue the day that you did this. It's always not enough dollars to buy for me. And I get back in, and sometimes it's a little late. But this thing just wants to keep going.
It does.
What do you make of it here now that it's basically come down? I mean, essentially back to where April was, and that baking in of rate cuts started. We've basically undone all of it.
Yeah, I'm glad one thing that we have exposed here today is that I've been a terrible trader in 3 asset classes so far. Because it's been bonds. Bonds I was already long, but gold in this euro trade, getting short the dollar is actually something that I just got back, and I had to look at the exact dates. I did it on Halloween of all days. Both of those trades. Yeah. Awesome by me. Very scary so far. But I was interested in getting long this, i.e. short the dollar, just because it's a contrarian trade. And
sure,
I just wanted to try, to see if I could fade it. And so I do wonder, how this is going to all play out. Again, are we going to be returning back to the times where the dollar was really ruling the market here? And the interesting thing is markets don't seem to be as scared of the dollar this time around, right? We saw how that narrative played out 2022, early 2023.
Yes.
And I'm just figuring, one of these, I guess, has to be wrong, right? Either the dollar or the market. I'm not exactly sure which one. But I still feel it's worth fading. Again, I still feel like it's again, until we see how the administration is exactly going to approach things, until we confirm that whether we're going to get this inflation, that's magically expected to appear in our economy, which, again, that could happen. But in the meantime, I just feel like this is a pretty good, sort of, if you do it risk defined wise, and again, I'm doing it risk defined. I actually am short kind of in the money. Yeah, I think you have to. I mean, because this is one that can get out of control before you even know it, especially even overnight, et cetera. So this is one where I'm short a put spread in here, and I'm going to give it a little bit of time. I've had some luck at times with the euro this year. But this time around, I'm kind of on the wrong side, as the dollar's just been really strong over the last couple of weeks.
I mean, obviously, not shocking that CPI is going to be a big one here as well. There's not a whole lot of event risk from the European side this week. There's some stuff out of the UK, which I suppose might make sense that when we look at the pound, it's not doing as badly here. It's still down against the dollar, but much less dramatically.
Yeah.
The euro is really getting cooked here. But there's not really a whole lot of data out of the Eurozone this week to really point a finger and say, here's a catalyst. There's a little bit, but nothing that would sort of get you focused away from, first off, the CPI numbers, and then because we don't have enough event risk on the monetary policy side in the U.S. for 1 week, the next day after that, Powell is speaking. So first we're going to get the data, and then he's going to come out the next day and tell us what to think about it. So this could be an interesting seesaw. And if they diverge, and if they don't, it could be a move with some legs. So for me, at this point, I'm just kind of taking the Hippocratic Oath approach. And first things first, do no harm. So I'm not adding, not taking things away.
Yeah.
I'm just gonna step aside here and let this thing do what it's gonna do. I have no idea whether this is a level it wants to break or not. I'm tempted to think that because we've sort of taken out this underside here, which was tested multiple times, sort of gave you the sense that the market sees that there is something along this path here, that now this is a level where maybe we're done, or maybe we get back down here and that's the next kind of big moment to think about things. But for now, I'm just going to let this thing sit. The one that really interests me here in particular, because I jumped out the window and said all manner of disparaging things about China's economy last week, is the Aussie dollar. So last week, China had, I'm sure you saw, these explosive export numbers.
Mm-hmm.
And the Aussie roared higher and copper jumped. Here's for context.
I remember, yeah.
Here's copper for if it loads. Fingers crossed at some point. There we go. So there it is. I mean, here was the election. So just ignore that. That was a massive WTF all over markets. But here's what we're talking about. The massive jump in copper. And that was a near 13% year-on-year jump in Chinese exports, strongest numbers since basically the middle of 2022. And everybody said, oh, yes. At least people have believed. There's confidence. And then you looked under the surface of the numbers. And you looked at the PMIs that came out a couple days before that were also the strongest in 4 months and also pinned that on exports. Then you started to read between the lines and go, wait a minute. A pickup in U.S. demand. Why? And how does this make sense? We're about to go into an election, and both of these candidates are flavors of a China hawk. So what difference does it make? Why are people optimistic? And you go, oh, well, if it starts to tilt in the more combative version of the China hawk, and you see tariffs in one case and not the other, things are going to get expensive if it goes that way. Buy things now. Stock up now. Build inventory now. And so you get this massive surge in exports, but it all looks like smoke and mirrors. It all looks like front running for higher tariffs downwind. And so I did this whole thing on Macro Money last week saying, don't believe the hype. It's not going to work. They need to do fiscal stimulus because the monetary thing hasn't worked for 3 years already. They need to do something different, and that's what the markets want. And so because I didn't want to take that bet in stocks because they can will those higher, Xi Jinping can just say, hear ye, the domestic stock market must go up, and so it goes. I instead did this in the Aussie. And this is the one I'm
You don't get
watching.
me doing the Flavor over here, man. Don't believe the hype.
That's right. That's right. That's right. Public Enemy. I love it. So as I was looking at this and thinking, okay, no. And thankfully, it seems to have agreed so far. But now it's at one of those levels that scares the hell out of you. Because you go, okay, yeah, I mean, it did the thing I wanted, but why didn't it keep going?
Yeah.
In the last couple minutes here, because time is flying by, what do you make of this China story? Do you think it's going to work? Do you like things tied to it? Be it the Aussie, be it copper, all of it.
The thing I do like is the fact that they are tied to the China story, right? Like, at least you can hang your hat on that when you're trading this. And so really it boils down to, how do you believe, things are going to progress in China? Are they really turning the corner here, and we're starting to see are we going to start to see the Chinese economy start to expand again, that huge expansion that we saw for so many years, or not, right? But I do like the fact that it's tied to the story, but that's actually what scares the hell out of me. Whether it's this or copper, like, that's the part that scares the hell out of me about that trade, because a lot of their determination, their move is made a lot of times overnight, right? And it all is tied to China. So I mean, I think that that's good. Because again, we've been talking about a couple of different things that we know how they've traded throughout the year, but they've been thrown off in the last week or so just because, something else sort of pulled and tugged at them. Whereas this, at least it's still China. I mean, even though we saw election influence here, obviously because of the way the dollar moved, but at least this is still tied to China, as is copper. And I think that's at least something you can hang your hat on the trade.
And in fairness, I mean, we saw how the dollar ran against the euro, certainly against the yen. It didn't do that here. It tried, but it ultimately reverted to what is sort of the underpinning macro, more so than in the euro, more so than in the pound. Interesting. And I'm going to be watching this really closely to this week. There's a bit more data out of China, but again, it's all hanging on this U.S. monetary policy story for me this week and what the markets are going to do with it. On the one hand, if I'm China and I see the tariffs coming, do I do the big fiscal stimulus now?
You think so, right?
Maybe I do it now. Maybe I wait and let the impact happen, or at least let the announcement come, let the fear come, get a sense of what it is, and then push back and keep my powder dry until then. It's tough to read. So I'm going to be watching the Aussie dollar here almost. I mean, I have the trade on, but almost as an indicator and going, okay, is this thing caving?
Yeah.
Because if the Aussie dollar is caving, then maybe this is not the first quarter of this year. Maybe it matters that the U.S. is growing, but it's not spilling over elsewhere. And the global economy itself is actually grinding down. And the U.S. has kind of walked off its own direction. But everybody else is stuck. Maybe that's a key difference. We'll see.
No, I'm with you on that. I'm holding on to my big box trades, like I said, whether it's euro, whether it's dollar, whether it's gold, and actually one more to add to that is oil. And I mean, I know we're not going to get into it, but I just got long oil again today. Usually anytime below, 60, anytime below 70, I'm interested. It's at 68. I got interested again. Again, that's another global growth story, right? We'll see how that ends up playing out too.
Absolutely. Real quick, I'm waiting for this thing to let me out of my short from 72. I got short on the retest of this little axis here. Just let me get back down here. That's all. I'm not greedy. Just let me get back down there, and then I'll get out and then have your rally. It's all good.
Love it.
And that takes it for us. Everybody stick around. We're, of course, going to have Dr. Jim here with From Theory to Practice after. For Mr. Jamal Chandler, I'm Ilya Spivak. Chris will hopefully be back with us tomorrow. There's a whole day of Tasty Live stuff ahead. I'll be back later for overtime and macro money. Don't go anywhere. We'll be right back.
It was a beautiful fall weekend in Chicago. Lots of sun, warm temps, and tons of people out in the neighborhood. To try and be more normal, I decided to work from the coffee shop all weekend. Mingle with the common folk for a bit each morning. In fact, I wrote the cherry bomb yesterday while talking markets with complete strangers. What started as a discussion about fried clams in Cape Elizabeth evolved into a heated debate about junk bonds and cashless collars. That was fun. You see, every once in a while, you need to challenge yourself. That's why, for the Bears game, I made Jamaican-inspired oxtails. Who says I'm not a risk taker? But the real reason I'm sharing this story about talking finance with random strangers is because that's what makes Tasty so special. Unfortunately, we live in an incredibly divisive era of interpersonal communication. When talking to people we don't know that well, we can't talk about politics, religion, social issues, education, or even current events. I feel like every topic becomes an instant powder keg. Every topic except for finance. Tasty Nation speaks their own language. They're different. They can articulate certain aspects of investing that always intrigues and engages random strangers. I commonly hear, "How do you know that?" Strategic financial know-how and articulation skills are an amazing bridge between people with very different views and opinions. Let me give you some examples. The next time someone says, "Isn't Trump amazing?" you say, "I just bought a broken-winged butterfly in the SPX." Or, "Kamala is just incredible." You say, "I just sold a jade lizard in NVIDIA." On immigration and taxes, you say, "I really love the leverage of span margin." Tasty Live really is making the world a better place.
You can get up to
Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Welcome to the Monday edition. What it is that we are trying to do, man. Thank you guys for being here. Thank you for being a part of what it is that we are trying to do, because it is only because of you all and all y'all from my Memphis, Tennessee crowd that we can do what we do. So thank you guys so much. If you're watching over on the Tasty Live Network, now we're actually bounce on over to YouTube, because you can join the conversation, you can join the discussion, you can communicate with our brethren that are also watching the show, and it will indeed be a good time had by most, especially if you are along the Russell 2000 right now, as it screams to all-time high after all-time high after all-time high. So let's go. Let's pop in here. Let's take a quick little look at what's going on in the old stock market. And yeah, let's see. So we've got wow, we got EMEA S&Ps up 1. You got the NASDAQ, also known as the risk-free instrument, extraordinarily high-risk product, down 51 on the day. So that's a little odd. Got the boomers up 300. Got the Russell 2000 Futures Index up another 36 on the day. So just another quick little 1.5% on the top of the previous 19.5% in the last, 2.5 trading days or so. Got the bonds, down 6. Got the notes down 12. You got oil. Man, oil's getting really shellacked here today, down a little over $2. Then you've got, wow, speaking of shellacked, man, guys, check in on Peter Schiff. Look at this. Look at this. I know my man bought it like 900 back in 1975, but man, check in on him, because he's down 68 points on gold. What's silver doing today? Hold on a second. Let's see if silver is still, they still in business? SI. Little Sports Illustrated for you guys. So silver down 70 cents on the day. So silver getting hit pretty hard too. So you got silver down 70 cents. You got gold down $68. And so the precious metal bros are they're struggling, man. They are absolutely unequivocally struggling. So you got the British pound is down. You got the euro is down. A little US dollar strength for you guys here on this beautiful November Monday. You've got volatility down 15 cents. Volatility futures right there down 15 cents. Down 15 cents. Then you have the spot volatility. The cash volatility is actually up today, so a little mixed market in the volatility pits. So you've got the VIX at 15, so up about 7 cents on the day. And then I did happen to gander at, man, look at Bitcoin. Man, are my crypto bros finally going to be right? I mean, y'all been right pretty much every day for the last 18 months, but man, look at that. Bitcoin 85,000, up another 5,000. That's crazy. So it appears that, 100K. Right, 100K. I mean, this is a given, right? So 100K, that's a given. 150K, that's a given, right? So your next two ticks, 100K, 150K, and then what are we looking at? Maybe 13K. Is that what we're thinking? Is that where this thing finishes? That seems like a very natural progression to me, right? That seems like a very natural kind of sequence of events when it comes to the old Bitcoin. And so 100K, 150K, 13K, it is written. And there's nothing we can do about it. It's just the way it's going to be. And so, all right, so what I want to do today is I see you guys in the chat, man. I appreciate you guys so much. You guys are in the house. Sunflower, Kimberly's in the house. Don 721 in the house. Harold is even in the house. And so, Harold, you're in the house. Didn't the Jets lose last night? Man, you're a glutton for punishment, man. But I appreciate you. That takes a lot of resolve and a lot of stick-to-itiveness. And so that says a lot about your character as a person. And so Sergio's in the house, man. I just appreciate you guys so much. I'm going to get to as many questions as I can here in just a second. Oh, I see Emerald's in the house throwing me the shout out before the show begins. The official start to the show from a chat standpoint is when I go in there and drop my own comment in the stream. That's honestly the reason why I do it, is to not only let you guys know that I'm here, but also to kind of demarcate the previous shows and my show, because I know that there are all kinds of conversations that are happening beforehand that if I try to step inside to, a midstream conversation, I will have no idea what's going on. I barely know what's going on when I start the conversation with you all, so I got to give myself at least a fighter's chance. So let's go ahead. Let's talk about a few of the positions in the portfolio. We'll get to y'all's questions, and I don't know, man. We'll just see where the wind blows us. I mean, what do we got this week? Got anything this week? Got no elections. Like, got no FOMCs. It's like there's just nothing to do, man. I mean, it's just going to be a very, very, very quiet week until Wednesday. So, guys, listen. This is serious stuff. Wednesday morning, this Wednesday at 8:30 Eastern Time, a.m., the most important CPI print is going to drop. The most important CPI print of our lifetimes is going to hit the tape, and you do not want to get caught off guard So I would spend this time. You've got about 48 hours, maybe 44 hours between now and then. Get your affairs in order, like get your wills done, get your living wills done, get all those things streamlined so that when it does happen and the apocalypse arrives, at least you'll know that your family will be taken care of. And so, all right, let's go ahead and let's see here. What do we got? We got 9 positions on. I actually want to start with the 2 crab strategies that we have going on in the portfolio, because last week I was not satisfied with my own performance when it came to figuring out where I am on these crab trades. This would be Google and Qualcomm. This is a new strategy, so we're learning together, right? We are taking our cue from the experts in the crab strategy space, which are of course going to be, Nick, Mike, and Katie. And so I'm learning along with you all. But in part of that learning process, there's going to be some bumps and some bruises. Well, we took a couple of bumps. We took a couple of bruises last week when I tried to look at where I was on both trades. And I was not really able to figure out where I was kind of in the, the great space that is figuring out your basis and figuring out, the P&L in a current position. So I want to go back in. Let's go back in, kind of take 2. Qualcomm and Google. Let's figure out exactly where we are on these 2 positions, and we're of course going to use the chains to assist us in this regard. The chains is going to help a whole lot when it comes to Qualcomm. The chains is only going to get us part of the way there when it comes to Google. So let's go into Qualcomm here. So if I go into Qualcomm, and if we look at, so this is the key, and this is what I did earlier. Whenever I'm trying to figure something out, this would apply to any subject matter, not even trading, not even finance, not even inside of the Tasty Trade platform, just really anything. I just try to break it down to its like smallest component parts, and then just start labeling things and start kind of writing things out in an itemized fashion. That way I can kind of clearly understand what's happening. And it's also, it allows me to more clearly identify where the bottlenecks are. What am I not understanding? What am I not seeing clearly? And where do I need to devote my attention to? So I did the same thing for Qualcomm and Google, and it really helped me better understand, what the chains were telling me, where I was at on these 2 positions. And so for those of you out there that are also trading crab strategies, this is a great strategy. It's extremely flexible. It's highly complex. But with that flexibility and complexity comes some gotchas, right? And one of the gotchas is kind of figuring out where you are in the space of adjustments, management, the life of the trade, what have you. So let's go ahead and let me see here. If I grab the beginning of the trade, this is it. So this is 1029, right? We've got minus 486. This is going to be our entry trade. So this is entry, right? I realize all these numbers are over here, but I'm going to rewrite them over here just so I can kind of, again, just kind of clearly summarize where I'm at. So 1031, right? So we already did 1029. 1031, we bought back the ratio spread for 9 cents. So this is another debit, right? This is where we, closed the ratio spread portion of the crab strategy. This is essentially where all of our risk is located in the trade. So this is obviously a good move. It didn't make any sense to keep this on. So we close it, but it does, our basis is starting to tick up a little bit. Like we just need to be aware of what we're doing and what we are indeed signing up for. So, all right. So that obviously brings us to minus 495. That's the number that you actually see right here. And then on 1031, so the same day that we bought back that ratio, we decided to go ahead and turn this into am I in Google? I'm in Google. Yeah, that's fine. So I wanted to do Qualcomm first, but I was already in Google and I was already just fired up and ready to go, man. So we're doing Google first. This is not Qualcomm. So if you're listening to the audio only version of the show, that's not really going to help you too much on a day like today. You're going to go back and watch the video version and you're going to get to see the dumpster fire happen in real time. You're going to get to see me think I'm in Qualcomm and I'm actually in Google, right? Or think I'm in Google, I'm actually in Qualcomm. And so we are actually in Google, even though we thought we were in Qualcomm. So that's okay, though. They're the same strategy, same basic structure of a strategy. And so the same principles are going to apply. So here with Google, let's stay here because we've already done all this work. We've got our trade entry at minus 486. We closed our ratio at 9 cents. And then we sold out, this 160 put right here for $1.26. This is where and this is obviously a credit. So this is a $1.26 credit. And this is where we created a diagonal for ourselves. So this is where we diagonalized this crab strategy. We should have stopped at 2 there, but we just kept going. And then on November 8th, so just Friday, we bought back the short put to retire the diagonal spread, so minus 18 cents. So these are all of the adjustments, and not adjustments. The first one, of course, is trade entry, but these are all of the trades. These are all the transactions that would belong to the same trade package. Now, I took a look at this earlier, and I have it in my notes. And so we've got a 486 debit on entry, 9 cents to close the ratio, $1.26 for selling the put, creating the diagonal, buying back that put for 18 cents. If we add all that up, that should get us to a basis of $3.87. So that is our overall basis in the trade. Now, if you saw the show on Friday, you saw me try to figure this out, but I couldn't do it. You saw me try to figure this out on Friday. I was at a loss for words. I was at a loss for actions. Like, there was lots of loss. I was taking lots of L's on Friday. Well, one of the reasons why is because I didn't take the time to figure all this out. And when I see 387 right here, I looked up here. Let me grab my Diet Strawberry. I looked up here and there's no 387 up to be had. Like, do you guys see 387 up there? And so that's why I was like, man, the chains let me down. But once again, you're going for rooster, you need rooster. You're going for wood, you need wood. I don't want heaven beside me. Well, we've talked about this many, many times before. I mean, you're going for wood and they throw you damn bones. Okay, that'll work. But man, you gotta be pretty close to the mark. There's no 387 in the chain. So I'm like, all right, obviously I'm not understanding this correctly. Right. Obviously, I am. There's some misapplication of, the adjustments over the life of the position that I'm just not quite gathering accurately. And so that's why I wanted to take a few seconds and kind of unpack this. All right. So my basis is 387. Okay. Take a look at the mark price of the strategy. $1.17. You see that right there. Actually, here, let me go ahead and let me erase that. Let's grab our Miami Dolphins teal. Been a fan since day one. You guys can check the tapes on that one. $1.17. Although, did you guys see my Lions last night? Looking pretty solid. $1.17 is the mark price on Google. $1.17 is the mark price on Google. Okay, now we're going to triangulate things now, right? Let's go ahead and I don't want to even grab another color. If we triangulate these three numbers, which we don't really need to triangulate them, but man, that's a lot of fun. Not only say triangulate, but to actually do it on the show. To actually use it as part of your content delivery, man, it's a whole bunch of fun. So look at that triangulation. Right now, these two numbers are the same, so you can make the case that we could have gotten away with just a straight line. But again, that we're missing so much fun if we do that. If you take 387, which is our basis on the trade, and you say, all right, if I wanted to buy back this put right now, I could buy it back for $1.17. Right? It has current value to me. It's marked to market. Like, that's the value of the long put. Okay, I could do that. If I did that, if I went ahead and bought back this put for $1.17, what would happen? That $1.17 would then get tacked onto my basis. So I would be left with down $2.70, I think. We'll put a little squiggly line because I'm not quite sure. And I'm no Julius Spina, but I'm pretty confident that's plus or minus a quarter. And so down 270, look where else we see that number. Look at that. It's right up there. And so the chains weren't wrong. They just made us work for it. Like, the chains weren't wrong. They just challenged us to figure this out on our own. Right? They essentially left us out to dry and said, you got to figure this out on your own. But it's good. Right? You got to rise to the challenge sometimes. Right? It's not just going to hand you everything. Like, sometimes you got to work for it, man. Sometimes you got to put in the reps. Like, sometimes you got to earn it. Now I feel like we really earned understanding where we are in the strategy now. And so that's good. Okay, so Google, we are currently down, what are we down? We're down $2.70 on the trade. And we have a long put on that has $1.17 of value left in it. All right, so that's the situation in Google. Hopefully that makes sense. And hopefully you can take this kind of, this template, if you will, and apply it to your own crab strategies, or really any strategy, where you just go into the chains, or you could also use the activity tab for my OGs that might be watching the show, and just go through kind of piecemeal style and label each transaction. And if you don't understand one, then you got to stop. Then you've got to stop and you've got to dig into that one a little bit more deeply until you do understand it. All right, so that is Google. We're down 270. Let's go to Qualcomm. This one's going to be easier than Google, actually, which is why I wanted to do it first. But you're going to see that with Qualcomm, the chains actually do all the work for us this time. So right here, like all these numbers you see up here, this is where we're going to end. Now, we're not going to stop there because what fun would that be when there's triangulation opportunities and all kinds of, itemizations and piecemeals and all kinds of things we can do. In addition to that, let's build this thing up from the bottom. So on November 5th, we did our 605 entry, right? So again, let's get our little ledger over here. My 605 entry. 605 entry. Okay. On November 7th, you can see it's becoming a well-worn path, right? At least when you put on a crab strategy that doesn't work. When you put on a crab strategy and the market just goes against you completely, retiring that ratio spread seems to be the most logical next step in the process. Now, maybe we'll have some crazy things happen even where we'll do some other things at another point in time. But for right now, this seems to be kind of what makes the most amount of sense in the event that the market moves against you right away. So we buy back the ratio, so minus 4 cents. So minus 4 cents, this is going to be my ratio. And it's going to be me buying back the ratio. I'm not going to write that just for brevity's sake, but I buy back the ratio. Then on November 7th, this is when we calendarized, or I guess recalendarized, because the crab is calendarized from the beginning. So we kind of re-upped, we double dipped George Costanza style on the calendarization of the strategy. And we picked up $1.65 for doing that. So this is when we created our calendar spread in Qualcomm. And you can see Qualcomm is getting really hammered today, which is interesting because, the market's fine. The Nasdaq's down a little bit, but not, Qualcomm's down like almost 3% on the day, which is, you got 2.5% right there. That's crazy. And so $1.65. Okay. I also sketched this guy out, and it looks like, now again, don't hold me to this because I'm no Jacob Perlman, but it looks like this is a 444, so nice and feng shui, basis on the trade. Now, when we found our basis in Google, again, the change made us work for it. We had to earn it. Here, they're handing it right to us on a silver platter. Like, it's beautiful, right? 444 is my basis. You can also see, this number. Well, let me grab the Diet Strawberry. This number and this number are the same number. That's great. You go in for rooster, you come out with rooster. You go in for wood, you come out with wood. You go in for rain when I die, you come out with rain when I die. Right? That's what you want when you fire up the chains. We know this. We've talked about this a million times. 444 is a basis. You see it in both places. Okay. Right now, if I go to, you can also see the mark price of the strategy is 205. Oop, I actually grabbed a gray. That's fine. You can see the mark price. It's kind of hard to see that green. I meant to grab the Miami Dolphins teal, but the Dolphins let me down again. And they're not even playing yet, which is about par for the course this year, I would say. And so 205 is your mark price. So we're down about 239. Right? So you can see we're down a couple of beans on Qualcomm, which is not amazing. But again, you guys keep this in mind. This is a trade that has not worked. It hasn't worked at all. We were dead wrong from the very beginning. And, we've got a $6, you've got a $6 crab basis at the start that now, we're only down a couple bucks. That's pretty good. That's pretty good indeed. And so that is how I would encourage you and suggest that you try to figure out the basis on your crab strategies. Just go in. If you're not accustomed to this, if it's not a well-worn path for you, I would take the time, take the 6-9 minutes to actually kind of unpack each itemized transaction inside of the trade package, and then you'll understand exactly where you are. And by the way, if you're doing like some crazy custom strategies that are like calendarized, 1x7 crabs and whatever, then this is going to be a good skill for you anyway, because you're going to have to kind of do that to figure out where you are in a lot of those types of strategies. And I've read your emails, man. I've read y'all's emails. I'm pretty much caught on my emails, by the way. I think I'm almost entirely caught up. And so if one slipped through the cracks and you're waiting on one, send it back to me, because I think I'm at inbox 0. By inbox 0, I mean inbox 9,000, but those are 9,000 that I have no intention of reading. But the ones that I meant to get back to, I think I did. So if I didn't for you for some reason, it was not intentional, please send it back to me. And that's just a good strategy, by the way. If you ever email me, I usually get back within 48 hours. I really work hard to make it 24 or less. But if a couple, don't wait like a week. Wait like 48 hours. Send it again, because my email inbox, it's kind of like a Google search, man. I got to be honest. If it's not on the first page, I'm not so interested in it anymore. And so if you happen to fall through the cracks because I just get hit by, just a bevy of, other emails and correspondences coming in from wherever, then just send it again. Send it again, and I'll get back to you as quickly as I can. So, all right, so hopefully that helps a little bit with the crab strategies. All right, so now, wow, we're already halfway done with the show. That's unbelievable. I can't believe this. We got to get to y'all's questions, man. I got to get to you all. Man, I see you guys. I see you guys in the chat. Man, look at you guys. I see Stock Charts Daily in the house. Man, I see Rob Banks in the house, Wanderers in the house, NV's in the house. The only thing I want to do really quick, what do I want to do really quick? So a couple of things, real quick, like super quick, 15 minutes or less. MNQ. So take a look at MNQ. This is crazy. So MES, we're not going to do anything. I mean, obviously the market's rallying because that's what the market does, I mean, 6,000. It was at 60.50 this morning. That's unbelievable. That's unbelievable. Yeah, I don't have words anymore. I really don't have words. And so, man, anyway, MES, we're not going to do anything because we already rolled up the put once, and I just want to let this thing chill for a little bit. Now, if we wake up on Wednesday morning, Thursday morning, whatever, not that we're skipping Tuesday per se, but just let's give it a couple of days at least, and the market's at 61.80, then it's like, okay, we got to do something, I suppose. We got to do something, I suppose. And by doing something, of course, I mean we'll probably not do anything and just lament our situation. But MES, we're not going to do anything. The one trade I do want to talk about, though, is MNQ. So MNQ, man, look at this. So we have not adjusted this strategy yet. I've been rather patient with this strategy. I've been rather patient with adjusting this strategy in terms of rolling the put side up. And man, I'm kind of glad that I've been a bit patient here because look at this. Now, when the NASDAQ was down 100 earlier, which that was very short-lived, of course, but when the NASDAQ was down 100, whether it be a bad feed or a typo or whatever, I saw 100. I saw minus 100. I was actually up on the position. And that's what I was going to celebrate here on the show with you guys. That's what we were going to do as we took our victory lap. At this point, we're taking victory laps on scratches. Like, that's the best we can do. We save our victory laps for scratches, right? And so we had a scratch. We had a tiny little positive scratch on our hands, and I was getting ready to try around the bases. I got to be real with you guys. But now we actually have a negative scratch on our hands, and so we'll sit in the batter's box for a couple extra days here, I guess. But still, the NASDAQ has been so strong. I mean, we put this trade on. It's been what, let me think here. It's been a couple weeks, I think, right? Let's see here. We did this trade. Yeah, we did it on, November 1st. So a week and a half. I was like, it can't be that long. Yeah, all this stuff down here, all this rigmarole that you see, this is all another trade that we did. So that's not what I'm talking about. What I'm talking about is just this guy right here, November 1st. The old-fashioned month-anniversary short strangle in NASDAQ. Right? Just the tried and true, man. That is just the Betty Crocker play. On the month anniversary, you're just selling premium in the indexes. And so it's crazy to me, though. 11-1. Hold on a second. Can I do this? Can I do the – well, they won't because it's futures options. I was trying to do the market state snapshots to see what the stock price was at 11-1. In fact, I'm going to do this. I want to get to y'all's questions, but let's do this real quick. 11-1 at about 2 o'clock. So let's go into the charts here. Let's do a daily chart. Oh, I remember the skill you guys taught me. Oh, it didn't work. Didn't one of you guys teach me that if I go to 3 years, it automatically goes to daily? Did you guys see what just happened? You guys are letting me down, man. You guys really came through on the chains, on the positions tab. But whoever fed me some misinformation on the program, I'm going to report you to the Ministry of Truth. And somebody told me that if you go to 3 years on Tasty Trade, it automatically takes you to daily, which is what I wanted. I don't want 3-year monthly. I mean, what are we, dividend reinvestment plan investors now? No. I need a daily chart. Let's go to daily. Actually, I don't even need, wait a second. Wait, I'm all messed up. Let's go to, hold on. Let's do November 1st. Give me a 2-week chart. Give me an hourly chart. That's what I need. 2-hour chart, whatever. Give me, where's November 8th? November 1st. Oh, boom, I found it. Look at that. Hold on. Where's 2 o'clock on November 1st? I just want to get a feel for, okay, it's right around here. We don't need to be exact. So the price of the NASDAQ is somewhere around there. I don't need the exact number. Doesn't matter. Look at this, guys. This is insane. Look at this. Now, I know Johnny Pools 47 on Twitter. He nailed it, man. I mean, he bought here. He sold there for a quick little scalp, right? Then he reloaded here. Then he sold right there, of course, for another quick little scalp. Then he reloaded right there, and boom, he's still sitting on it right there. I understand that. But for us mere peasants and plebes, this is nuts. You've got the NASDAQ at 20,200 approximately. And then it just put on just a quick little 1,000 points in what, a week? This was November 1st, so a week and a half, 1,000 points. Boom, look at that. That's like a 60-degree angle higher. That's insane. That's some pretty crazy stuff. And so anyway, the thing that I'm amazed at, though, so we have been able to absorb a 1,000 point up move in the NASDAQ. And we are at a scratch, guys. We are at a scratch. Do you know why that happened? Do you know how that happened? It is, all kidding aside, the thing that kind of governs all the other things that we do here. Selling premium when volatility is high. Because back here, when, you had the NASDAQ at 20,200, this was about right before the election. I mean, this was VIX to 2021, 22, right? So we were selling some nice, plump, juicy, frothy volatility, right? And now you've got volatility at what, 14, 15, whatever? Like it's collapsed. It's absolutely just, fallen on hard times. And so because of that, all of that volatility contraction, all of that volatility collapse has really allowed us to, shield against this huge, overwhelming delta move to the upside. And so that's good. That's a big reason why. I mean, we oftentimes, spend so much time focusing on, selling premium when volatility is high so we can make money, which is, of course, what we're trying to do. But selling premium when volatility is high also actually acts as a shield. It acts as a bit of a defensive maneuver because if volatility does collapse and the market rips, then you're going to have a nice little baked in buffer against that rip. And so hopefully that helps a little bit. But all right, let me get to y'all's questions, man, because I'm just taking way too much time on just a bunch of rigmarole that doesn't even matter. Sergio's in the house. What's going on there, Sergio? Sergio says, hey, Dr. J, I have a shop short strangle with 39 days to go. All right, 70 put and a 95 call for $3.70. All right, let's go into shop. And let's do now. Let me go back to a daily here. Daily. Let's do like a 3-month. Yeah, that's fine. All right. Whoa, look at that. Man, that looks like the NASDAQ. Wow, that's crazy. That's not as impressive as the NASDAQ, but it has kind of that NASDAQ feel to it. Right? Gap, rip, gap, rip, gap, rip, gap, down 12%. That's basically how this is going to end. And so you just got to wait. Just wait until your hairdresser or stylist or barber. Once your hairdresser, stylist, barber, which are amazing people, don't get me wrong, but generally speaking, they're not typically involved in, stocks and derivatives and options, right? In fact, here, don't wait for it because I'm not trying to pick on stylist and barber. My stylist is amazing. She's incredible, right? And so they may be in the market, they may be invested, they may be this, they may be that. Okay. Wait until your hairdresser or stylist or barber starts asking you about crypto, or starts asking you about short premium, or starts asking you about long premium. Oh, that's even better, right? If you hear from any of the above, Publix cashier, right? Publix, bag person, right? Stylist, barber, right? Uber driver, just regular people that are just kind of working, very, very, very important blue collar jobs. I'm not trying to, pick on these jobs at all, but I'm just saying we're in this world, right? And so we're not usually communicating with people that are not in our world, right? Whether it be a teacher, whether it be a, an Uber driver, whatever, right? Once they start, if they haven't done so yet, wait. Once they start coming to you with hey, I think I want to do X. I think I want to do Y. I think and I'm not talking about long-term investing. I'm not even talking about selling premium. I'm talking about, man, I want to make a whole bunch of money tomorrow. That's how you'll know the 12% drop is close. The 12% drop is very, very close. But anyway, I digress. Sergio, Shopify, strangle 70.95, $3.70 credit, considering a 3.5% rally today. Earnings are tomorrow, with an expected mover plus or minus $13. Curious about your perspective. You could roll the 67 days and that will give you another $1. Okay, so let's look at the strategy right now. So you're in December, 70.95. Okay, so you're down about $3 on the trade. Okay, You could roll the 67 days. That's fine. Generally speaking, you're down a few bucks on the trade. So you're down like 1x of credit received. I would close the trade. I would not stay in this trade. I just, as a personal rule, I do not take underwater, undefined risk strategies into earnings calls. I just don't do it. Now, if this was like a scratch or whatever, I probably would still do the same thing, but I would just be closing it for a scratch instead of closing it for a loss. I would close it because, in my opinion, these are the types of things that become catastrophic. These are the types of things that, all of a sudden it's like, man, you were doing okay. And then, the 1x became 4x in terms of the loss, right? And so those are the types of things that are going to do the most damage over the course of, a month, a quarter, a year, what have you. And so I would close it and I wouldn't even think twice about it. I would just close it. I would be done with it. And, if you want to do like fresh strikes for the earnings trade specifically, you could do that too. But this trade as it stands right now, I think it's done. I think it's over. Sergio says you could also put that up. Yes, you could. I wouldn't do that. With earnings coming up, I would just be done with it. And so Kimberly is in the house. What's going on there, Kimberly? Says the market prices are never wrong. They follow a data pattern at Stock Charts Daily. There we go. I got some friends in the chat. I agree with you that they are never wrong. That is 100% right. I don't know that I'm on board with the patterns that are so easily discernible, but that's what makes a market. Right? And you have novices like myself, and you have other people that have more of an expert view of the marketplace that might be able to discern said patterns. And so down 721, great segment this morning, Dr. J. I appreciate you, my friend. Thank you so much. I thought it went pretty well. And, it's like, man, I think I could have brought anything to the table this morning. Whenever you're with a Batista battery, things are going to work out pretty well. Like if you're just going through life and you've got not just one Batista, but two Batistas that you can lean on for like help and support, and just emotional companionship, man, it's really something special. And so that was good. That was a good segment this morning. I appreciate you watching it. And yes, thank you so much that they're down 721. Harold's in the house. What's going on there, Harold? Man, I'm sorry, man. Your boy he's struggling. He is absolutely struggling. He should have hung it up. Y'all should have held on to Zach Wilson. Like, don't you know what's crazy when you miss Zach Wilson? When you're like, man, I could really use some Zach Wilson in my offense right now. Like that's how you've personally and professionally fallen on hard times. Kimberly says, what's happening in Wolf? I don't even know. WULF. $8 stock. Ooh, yeah. Let's do it, man. We're in the recycle bin at this point. And so $8 stock up 60 cents. That's a pretty big move. They've got earnings coming up tomorrow, actually, after the bell. And so that's interesting. Let's take a look at in the December cycle. Yeah, the markets they're not too bad, actually. You go to, you're on the at-the-money strike. You're 10 cents wide or 15 cents wide, which is not amazing for an $8 stock. But, there's a reason why. You don't typically find too many $8 stocks with penny-wide markets. Like, that's a bit of an oxymoron. I'm sure that one or two of them exist. But generally speaking, the stocks are low-priced for a reason. And so a lot of times the spreads are quite wide to trade these stocks. I'm going to pass on good old TerraWolf, but they have earnings tomorrow for my degens that might be watching the program. You've got an opportunity to do something and lose a whole bunch of money tomorrow after the bell. And so let's see. Kimberly says somebody's plopping down 200,000. Wow, interesting. Okay, all right. Sergio, this morning's segment on going inverted with an IC was great. Thank you, man. Y'all need to email Tom. Man, I appreciate you guys. If you guys really like this segment this morning, you need to shoot Tom an email, tom@tastylive.com. He's got nothing to do. My man's on vacation. My man is in the UK on vacation. I saw the pictures on Instagram. He's eating bangers and mash or whatever. Like, shoot, you need to just hammer his email box. Be like, hey, Dr. Jim and the Batista battery, it was magic. It was nothing short of magical. Right, so shoot him an email. I would really appreciate that. And he would appreciate that. He's got nothing else to do. He wants to hear from you. That's Tom, Tom, @tastylive.com. And so let's see. David Galmore, no comment, just lurking. Man, I appreciate you, David Galmore. Listening and learning, Dr. Jim. Oh, you're lurking, listening and learning. Got it. You got me with the alliteration there. Thank you so much, my friend. Thank you. I appreciate you. Sunflower's in the house. Dr. Jim, what's going on there, Sunflower? If you put a diagonal calendar on yesterday, a diagonal calendar, usually those are two separate things, but let me read on. In Microsoft, and that day it immediately made $50. Would you close it? Seems like holding on to it ended up being a losing proposition so far. And then Sunflower goes on to say, it seems like if you put on a position and it immediately makes percent of your expected, maybe it should be closed. Yes. So this is the age-old question, right? And I've talked about this so many times on the show in so many different ways. It just comes up in all kinds of forms and fashions. And this is one of them, right? What is your school of thought when it comes to managing winners, right? There's basically two schools of thought, and maybe there's tiny little, tributaries between, tiny little stepping stones between these two major categories and these two major schools of thought. Number one, you have a profit target, you stick to that profit target, and you pretty much just go with that profit target. You don't really adjust things, you don't really deviate from that. Obviously, there's extenuating circumstances with like an earnings call or FOMC binary event, or the portfolio risk in your account changes drastically for whatever reason, or you need the capital, whatever. There's all kinds of reasons why you might need to make exceptions to the rule. But you have a profit target, you stick to that profit target. The other school of thought is, if you are kind of outperforming where you should be at that point in the trade's life, then you would consider taking it off because you are statistically outperforming where you should be. Now, I don't think the Tasty research team has looked at like every strategy. So like a calendar or a diagonal may not be one of the strategies that's been looked at. But I know the team has looked at short strangles. I believe the team has looked at short puts, kind of saying, hey, if you sell a strangle at 45 days to go and the IVR is X percent or whatever, 4 days into the trade, you can expect to be on average up 11%. I'm just making numbers up just to give you the example. You can find the segments in the market measures. I would Google, Tasty market measures. Should I stay or should I go? That was what the OG piece, like way back in the day, like 2017-ish, was done. I know they've redone it and kind of, modernized it, given it a bit of a modern twist in the recent years. And so it's probably in there with a similar title, I would imagine. But the idea is this, if you're statistically supposed to be up 10% at this point or 11%, and you're actually up 15, then you're outperforming where you should be. So you can make a really, really good, strong statistical case to go ahead and take that off at that time. Okay. You can do that. It's totally fine. Again, I don't know what the numbers are for something like a calendar spread. You're kind of, maybe just going by feel at that point, maybe just kind of slanging them from the hip, Brett Favre style at that point. But you could still definitely do that. The only thing that you have to be aware of, because it's been said before, every gimme, there's a gotcha. If you're going to manage earlier than you would otherwise, because remember, we're already managing early. Even if you stick with your profit target, that's early management in the world of, trading derivatives and options and things like that. If you're going to manage even earlier, only a couple days in, whatever, you're going to need more winners on the back end to make that work. Just be aware of what you're signing up for. I'm not telling you not to sign up for it. I'm just telling you this is what you're signing up for. I think a lot of traders don't quite think about that other side of the coin. They don't quite think about the rest of the equation, which is, all right, I'm booking a bunch of winners. Winner, 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 winner. But man, in the end, I'm not making any money. And why am I not making any money? Well, maybe you don't have enough of those winners, right? Because the probabilities are not on your side because you didn't collect enough winners. Just be aware of what you're signing up for. Now, again, we're already equipped to do that. Like, we're absolutely equipped with all the protocols and mechanics and all the things we have in place. So you're in a good spot. Which route should you go? That's going to be your call. I mean, I tend to gravitate more towards the, you have a profit target, you stick to that profit target. It just jives better with my own personal, my style and my schedule mostly, but also my own personal belief about the marketplace. And I don't have any hard stats to back that up, so it's worth less than nothing. I can assure you of that. But if you go the other route, you start managing super early, then you've got Tom and Tony, on your side. And have Tom and Tony ever let you down before? I don't think so. Have Tom and Tony on the Tasty Network ever taken you down before? It's never been done. It's never happened. So you're in good hands. So you'll be fine. So let's see. Kimberly, CL setting up for a spring to 80. Nah, there's no way. I'm not buying it. And then she says, Bitcoin going to 140. Nah, definitely not buying that. And by not buying that, I mean we're going to 185. I'm ready, baby. Stock Charts Daily in the house says oil and rates divergence kind of interesting. Can we discuss? I'm not. That's more of a macro thing. And so I'm gonna go ahead and I'm gonna claim that I don't have time to talk about it because I don't, and I actually don't even have the ability to talk about it because I know that like when it comes to like the dollar is doing X, so bonds should do Y, and gold is doing A, so oil should do B, or I mean, I'm just making these up. Those actual relationships might not exist. I knew them actually at one point when I was like in grad school and just on the other side of having graduated. I kind of had a better handle on kind of these macro connections. But then I actually started to realize, I'm like, man, I personally am not convinced that this stuff even matters in, a 30, 45, 60-day time horizon. Can it matter over the long term? Yeah. Can you make it matter in a 30, 45, 60-day time horizon? Maybe. Maybe somebody can do it. I can't. It never really made a lot of sense to me in terms of finding those connections for trades that are going to play out in, the next couple of days or next couple of weeks. And so I'm not the one to ask stock charts daily, but a Chris Vecchio and Ilya Spivak, maybe a Dylan Radigan, right? You can ask those guys, and they should be able to help you. And so let's see. Oh, Harold says Jets down, Yankees down. It's tough being a fan. Yes, it is, my friend. I really feel for you. Emerald's back in the house. I appreciate you. Orias in the house says, hey, Dr. Jim, trade small and lift big. That's right. That's the only way to do it. And let's see. Knack3 D Johnny. Dr. Jim's YouTube lessons are golden. Thank you, man. Thank you so much there, Knack3. I appreciate you. And we do have the next crash course. It's in the editing phase right now. Like it's all been shot. It's all been recorded. We are editing it right now. Like I've been extremely slow with the things I need to get done, but I'm trying to get them done as I can get them done. I'm working with Ryan. I'm working with the production team, and hopefully maybe in the next month or so, it might be on the YouTube channel. It's a crash course about volatility. And so again, all the things we were talking about today, like selling high volatility, being a shield, and all these things. Like it's just, this is kind of the centerpiece of what we do. So we did a crash course all on volatility. I'm very excited. I think it turned out pretty well. And so definitely, be subscribed to the YouTube channel so that you'll know exactly when that drops. But man, I appreciate you guys. Look at you guys. Bra Banks says Dr. J is never wrong. He's just early. That's 100% right. And then one man's opinion is in the house. MJ's in the house. Strong ideas in the house. Big Deal Donuts in the house, man. I got to run and get you guys to Jamal. But I just appreciate you guys. I appreciate you guys so much. If I can ever help you guys in any way, please shoot me an email. I am just jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Jamal coming up next with Engineering the Trade. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, $4,000, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
First, Tasty Live united finance and entertainment, then probabilities and research. And now, we're uniting the symposium with the blockchain with 2 unique virtual events. 6 must-know skills for active traders and 6 option strategies every trader needs to know. Both feature legendary trader Tom Sosnoff and other Tasty Live traders. You can watch the presentations live or anytime you like, since the digital collectible is yours to own when you register. To learn more and register for free, go to tastylive.com/events.
Got the need for speed? No problem. On Tasty Trade, adjusting your option positions is a right click away. Rolling just got quicker. Tasty Trade, make your move.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
What's going on, everybody? We're getting new highs from Bitcoin. It just does not stop. So we'll take a look at that, of course, and some of the names that often trade off of it. Can you trust any of these other moves that you're seeing? Financials moving to the upside, consumer discretionary moving to the upside, led by Tesla. Can you trust these moves, or is it just sort of a short-term change around? We'll investigate all those things and more on today's show. Welcome to the most dangerous show on the tastylive Network. It's Engineering and Trade. I'm your host, Jamal Chandler. It's Monday, and Josh Fabian is in the house. Josh, what's happening?
I don't think we can call this the most dangerous show.
Yeah, is that what you think?
I think Bears games have become the most dangerous show because I am a fit of rage and anger. Like, things get broken. They're screaming.
Yesterday's Bears game was not good when you consider the fact that they played a very bad team. Well, I can't call them a bad team. I mean, they beat us. If they're a bad team. What does that make us?
The Bears forgot how to football. They don't football well anymore.
Yeah. It was a very, very just a very ugly game yesterday. It was not fun to watch. It was pitiful, dude. I think we talked about this before the start of the show. I'm surprised that the coach wasn't fired too. I'm surprised. I mean, he's on the hot seat 100% for sure. He was always going to be on the hot seat for this year, honestly. Yeah, anytime you have a rookie quarterback, you're on the hot seat. You're even more on the hot seat when the rookie quarterback's coming in very heralded, and you give him a lot of good weapons to potentially succeed, and you should be a good offense, and for some reason you're not. And then you start out actually pretty decent. The record was pretty decent to start, and now it's going south. Oh, he's under pressure. He's feeling it.
Oh, he's done. He's done. He's absolutely done. But I don't even want to talk about it. It's that depressing.
You brought it up.
Yeah, I regret it.
How else was your weekend besides that?
It was all right. You know, I didn't do much anything. I read a lot. I don't know how I do this a lot where I end up buying like 5, 6, 7 books. And then I'm like, what did I do? Like, what am I thinking? First of all, I'm not that smart. Okay. So I can't keep like 6 or 7 books in my head at once. So that's mistake number one. And then it's like, I just put all this pressure under myself and to read. So yeah, that was my weekend. How about you? What'd you do?
Oh, that sounds depressing.
I'm hearing myself and I'm like, stop talking now.
For me, actually, it was interesting. It was a little bit, this weekend was a little bit about my youngest son because we did, on Saturday, he played in a couple of basketball games. So kind of slowly working him into travel basketball now that football's over. And he did a couple. And, again, I mean, for somebody he's played basketball, mostly rec basketball. He's never really played travel, but the few times I see him play travel, he's ready, man. I mean, he looks pretty good. Again, he didn't, I think he had a double-double in the first game. Second game wasn't so much. It was just different script because the team we played, it was funny. The team we played in our second game, I mean, I saw, I got to tell everything. They were very little. And not just compared to my kid who's tall, like they were kind of a little squad. And so immediately I'm like, I've done this for years and helped coach. I'm not coaching this time around, but I've done this whole travel thing. I've seen kids' teams. You can never underestimate any team, right? Mm-hmm. And a buddy of mine who's next to me, his kid, it's his oldest. That's the same age as my youngest. This is his first time around with this. He took one look at the squad. He was like, oh, we should blow them out. I looked at the squad and I looked at the coach. And the coach was this Indian dude. And I'm like, oh, nah, these dudes are probably scrappy. We need to be careful. Sure enough, dude, they were scrappy as hell. They were all over the place.
What a racist comment.
It's true. No, it's not racist. That's true. I knew they were going to be a scrappy team. I think you don't know how to use the word racist sometimes. I think you're not sure.
I admittedly don't. It's like
it was a scrappy squad. No, it was really scrappy, man. And sure enough, we played against them, and we barely beat them. That was a tough game. So that was a lot of the weekend for me.
Yeah. I watched the Bulls on Saturday. Yeah. Dude, that team, I can't. That is a bipolar basketball team if ever there were. They go down by like 20, 25, 30 points in a game, and then they come back and win.
Yeah, I haven't watched any games yet.
It's crazy, yeah. But I mean, they're not good. Don't get me wrong, but
at least you did something other than read your books. That's good. At least you saw a Bulls game. Thank God, because otherwise,
why educate myself?
Let's pull up the platform and take a look at what's going on around equity markets. Look, I got to start at the thing that's probably the biggest thing going on. Everybody's starting to talk about it. Bitcoin has been flying here. I mean, I guess the obvious reason, right, is that Trump is really favorable on Bitcoin. He promised a lot of Bitcoin people that they were going to do everything to support it, and so far Bitcoin is following suit and has not slowed down. I thought about getting in front of this for a second, and then I was like, nah, nah.
Get in front of it in what capacity? Like getting short?
Getting short this MBT. I mean, these are fairly easy to trade, but nah.
Hey, do you think? You know the little chocolate candies that are in the gold, it's like the Jewish candy that comes out around in Hanukkah. You know what I'm talking about?
No,
it's like Jewish. Piece of chocolate and it's red. Well, yeah, but your son wants to be. His little pieces of chocolate candy and it's in like gold foil. Okay?
I think I know what you're talking about. What's the name of it? Yeah. It's like Lent or something like that?
No,
LINDT or something, I thought.
No, you're not even close. This is just going to go for all my Jewish friends out there, okay? But it's always used as a picture.
Actually, I am close, and that is a LINDT is a candy. They wrap chocolate.
That is a candy, but that's not the one I'm talking about. But they always use a picture of it when they're talking about Bitcoin. I am 100% convinced that Trump thinks that that's actually a Bitcoin. And I'm not knocking him. I'm just saying, like, this guy suddenly embraced this thing after knowing nothing about it. After, like, it's an interesting pivot. I think it's actually more JD Vance than it is Trump because he's always been on the crypto bandwagon a bit. But the run that we're seeing in this, like when you said you're thinking about getting short, I'm like, this thing's going to 100,000.
I know it is going to 100,000.
It's like one of those things. I won't touch it, but it's going to 100K.
Yeah. I know that's the thing. It's almost like I was interested on the contrarian play, but I'm like, nah, I'm not touching it. It's going there probably in pretty short order. So I have no desire to do it. I also haven't touched any of the names we were talking about. Coinbase is one of them. I mean, look at this, $58, bro.
This thing's crazy today.
Wow.
This is causing people problems today.
I'm not touching it. It's always kind of these option markets are a little illiquid for me anyway. That's why I'm not necessarily interested. But nah, I'm not doing anything in that.
Mara's an interesting one. But
I think I have lead calls in Mara. I can't remember. Or is it right?
I wouldn't. That's when I wasn't going to get short. I actually looked at getting long Mara last week or the week before, and I was just like, I don't know. I thought there were more interesting plays on the board. There weren't, as it turns out.
Yeah. Well, I mean, other than equities, you're saying like heading into last week? Yeah.
Yeah, it was. Yeah, I mean, it was just like I just did not expect the run in crypto to be so. I mean, this is like it was like a pressure cooker.
Do you have any crypto?
Huh?
Do you have any crypto?
I've been long some Ethereum for like probably a couple of years.
Yeah. Same with me and Bitcoin. I got. I mean, a very like small amounts.
Yeah, tiny amount. Here's my problem with this stuff. I don't understand the point of it. Like, I still don't. I understand what the blockchain can do.
Yeah.
I don't understand what you're supposed to do with a Bitcoin or
like in your daily life currently.
Exactly.
Yeah.
Exactly. I mean, would you pay for anything with something this volatile? Would you accept payment for anything with something this volatile?
I don't know if I know, right? I don't think I would accept. I would pay for something with it maybe, but that's not what I got into it for. Like, I just got into it in the event that it starts to do this, and I just have some. Like, it's not even something, I've just owned it, and I'm not even thinking about getting out now. Like, whatever.
Yeah.
I mean, I even have some Doge too, if that tells you anything. Like, I have a bunch of that actually.
I used to.
I am cheerleading on that. I'm not gonna lie. I mean, just saying.
I mean, as a trader, you want to trade anything that's liquid that has the potential to move, right? You don't care what it is, but I just like. For whatever reason, I just can't get my head wrapped around this one. And I'll just defer back to my earlier comment that I'm just not that smart. So,
Yeah, I don't have anything going on in any of these names right now. It's just fascinating to me. I do kind of agree with you. I mean, this is again, if there's anything that I feel like I know and do well, it's momentum trades and momentum things. And this is a serious momentum that's going to push it up towards 100K. It would feel like at the time. I do think I do think this is probably one of the better ways to play it, MBT, I feel, versus, I don't know, these names. I just feel like things like MicroStrategies. Didn't this split too? This just split not that long ago, right? Damn.
I think it's pretty certain. Yeah.
Yeah. I mean, these options hard to play.
Hang on. I don't want to cut you off, but I don't know if you see the chat room. They're exploding. Yes, it's Gelt, guys. It's Gelt. Hanukkah Gelt. That's the chocolate candy. Sorry. Back to what you're saying.
Yeah. This. I don't know. These options aren't. These options are wide, bro. Like, I'm just not.
I don't
really
like the
interested in
stocks. I
trading
like
this.
MBT like you do. Like I would rather do it that way, or play cash. You can buy a cash dollar amount.
Look at that. You can't even really get anything in here
No,
for this guy in Gunner. It's like, it's unplayable to me.
Yeah.
I mean, I would say, honestly, it could be worth just buying some Riot.
Yeah, this is one of those directional ones. If you want to take a swing,
Yeah.
go for it. You are
This is
going to have a
one
hard time
I would
selling
take a swing
premium.
on this guy.
Do it.
And this is also, it's not marginable? That's interesting. It's $1,500, but I guess this one is not, huh? Interesting.
Well, look at the volatility on it. 100 and
Yeah, tells you pretty
that's
much
why.
everything.
Yeah.
Speaking of names that are also going, Tesla, another day.
This is
I don't know. I just didn't believe that it was going to do this. Bitcoin, I probably would have thought so more than anything. I didn't believe it was going to keep running like this.
Tesla's a squeeze, I think. I mean, this
Yeah,
feels.
you think?
Yeah, this feels squeezy.
I got this Condor. It's in the money, of course. I'm not doing anything. It is
If
what
you
it
have
is. At this
short
point,
delta in this anywhere, you're screwed.
not straight up. Yeah, not straight up short delta. This is risk defined. I was not.
Yeah.
I cannot. People like you said, other people out there who might be selling strangles, dude. Be careful in these names right about now. These are. I mean, this is flash.
There are some landmines out there.
Yeah.
Yeah, like that's why, like with crypto, if I'm gonna play it, MBT is one way to do it. Or I've got no issue if you want to just buy Bitcoin, like with cash. Doing it that way, taking a small shot. But I think if you sell premium in some of these right now, like this is manic trading behavior, right? We've seen this in the first time I ever saw it was like the mid 90s. I saw it in a stock called iOmega. They made external hard drives. That thing was like $2. I mean, it was crazy. I just watched it and was like, what is happening? And you see this thing happen over the years with different areas. And my lesson from it has been stay away. And it's just not, it looks really attractive, but it's a really tough trade.
You talking about Bitcoin?
I'm talking about these
Bitcoin
manic
names?
type of like these manic type moves. Like if you want to buy Bitcoin, like I said, buy the cash. Okay, how much the risk in it, right? I'm gonna buy $1,000 or whatever the case may be. But you start selling calls against this stuff, naked, and you can't get anything for a spread. So you sell it naked, and it's like Godspeed.
No, don't do that. Don't do it. The other thing I find interesting, as you can see, I was pulling up a lot of these financial names. This has been also a trade that's been going post-election, right? Financials to the upside. You see XLF, XLF making moves. It's interesting because I have like a couple of deltas left over from old trades, but other than that, I haven't placed any new trades. As a matter of fact, I just told you I closed down my main trade that I've had on in the book for a while. I was long an MES contract from about, 5,700 and change. And I was short call spreads in December and SPY that were basically like the 585, 595, and the 590 and 600. And I closed them out. What was it? Wait, I'm not knowing my strikes. What was my strikes? Yeah. Oh no, I was right. Yeah, 585, 595, 590,
You did that.
600.
You closed out Friday, right? When we were on air.
No, we were talking about it on Friday.
Okay.
I closed it out today. I just closed it
Okay.
out this morning. Mostly because I don't really feel like there's that much juice in the trade. Sure, I'd probably still make money if we keep going up.
Yeah.
the vol is in on all of these SPY. I mean, I had the same trade in Qs, SPYs, and Diamond, and obviously, IVR's down in all these. We've come out of the election. Things have changed. Things have kind of fundamentally changed, and we're seeing all these movements with, obviously Tesla mooning because obviously Elon is connected to Trump, and we're seeing, financials getting big moves. We're seeing sort of bonds being held down for a while. I'm just trying to. I think it's been a week, and like you said, there's a lot of different things happening. There's a little rotation happening, so I'm just trying to I think you could almost argue most trades you had prior to the election are old trades in a way, right? I mean, it's one thing if vol is still high in something, which most likely it's not because vol has largely come out of the market. Yeah. But I think it's almost a time to sort of close some things down and reassess. Okay, what's going on here right now? What's going on?
I think the sector trades that people had pre-election, I think that those are probably done. I think if you also, just being short premium, but I think there's a lot of okay, let's figure out. I mean, I'll props to Warren Buffett and his career and what he's done. I don't follow his trades or his thinking necessarily, but there's been a lot of talk about how much cash he has built up, how many positions he's gotten out of recently. And I think that that's just an example of what we're talking about. Hey, listen, let's figure out where we want to play right now, because I don't know that necessarily the things that you wanted to play in 2 months ago or had Harris won are the same places you want to play today or with Trump winning. So I think what you're saying, it's a good time to take inventory of what you've got, and what do you see as being the bigger opportunities as we move into 2025? God, I don't even like saying 2025 out loud.
Why does it freak you out? New Year?
A little bit, yeah.
2024 was a cool kind of looking year. I know 2025 seems a little weird.
Just the whole 2020 anything really. I mean,
2K25, is that what you said?
It's just I keep getting further and further away from my birth year. It's it used to be when I would say I just had to give somebody my birth year for something yesterday, and I'm like, man, that's really a long time.
Yeah,
ago.
it sounds really long. Yeah,
it used to not be. I used to be the young guy.
Man. Oh no, he's going through a midlife crisis on air right now.
Oh yeah, I can melt down. I'm so on the cusp of a meltdown right now.
Yeah, the only thing I haven't given up on yet as far as trades is being long gold, which again I'm getting waxed on that trade. Luckily I have other things to offset it. I mean, this has been, again, this is another thing ever since the election. It's been moving strongly to the downside. At least I should say there's been two big moves to the downside. I don't know what to quite make of it yet. If it gets to this 2,500 level, which is the 100-day moving average, well, we got some thinking to do maybe. But that's been another one. And this bond trade again. I mean, not quite the same velocity, but definitely the same directional type of move. And I just I don't know what to make of it all yet, because again, this is all really, this one's obviously been in a downtrend for a while. This is a contrarian play for me, getting long this. I still think it's one of the better trades on the board. I'm not changing that as of yet. And gold is further out. That trade's 40. I think my gold trade is over 45 days out. Again, that's another long call spread. I'm holding on to that, and I'm just trying to figure out. I'm giving some market some time to figure itself out, I should say.
I think
it's not me, it's the market. Okay, I'm trying to. We're dating. We're mutually exclusive.
It really isn't me this time. It's not me. It's you.
It's not me. Yeah, it's not me.
I'm with you. I'm not in gold, but I'm in silver. Same boat though. Same directional move. Trying to.
I'm in
figure
that.
out.
That's
yeah. What's that going to do? Bonds, I think. To me, bonds say that they're worried about inflation longer term. That's but I don't know. Other than that, I mean, okay, so what's the trade? I don't know. I would still probably be on the long side of bonds, guessing that rates will come down. The other one is, and we talked about this pre-show too, is oil. This is, are we? Is it war off? Or I mean, what This is a level we've talked about oil. Once it gets down below 70, it starts getting interesting. When it gets 68 or 67 handle, I'll jump in.
68 is not enough for you?
No, I want to say. Well, you got in at 68, right? You said you got.
I got in at 68.15 today. Yeah, around this level, right around here.
Yeah, I want to get in a better price. It's very important
interesting to me.
I want to get in a better price than you.
Really? Well, I tell you, look at this. This is a 5-year weekly chart. It's right around the 200-day moving average. It's going to bounce off of that, Josh.
Well, you said 68.15. I'll go 68.
The low today was 67.92. You might have missed the low already. It's too late.
I may have. I actually may have because in fact, I could tell you because I actually put an alert in on this where I wanted to get it. And
all right, where do you want to get it?
Well, holy cow, my system is moving slow, and I lost it because I had to reboot.
And it's gone.
And it's gone. I want to say 60. Hang on, maybe I can figure this out.
I mean, I like again, a 67 obviously would be great. I just feel like a lot of times, well, yeah, you got to put those alerts out to get that reminder. But sometimes I feel this is when it goes 67.92 and then boom, and then takes off, right? Like
67.45 was where I had my alert.
Oh my God. Really? Really? That's the why?
Now I'm going to wait and I'm going to get it tomorrow. You watch.
Based on what?
I don't know. I just drew a line. Drew a line on the chart. It looks good.
Oh boy. It is. What are you talking about, dude? It is.
Yeah, but bottom line, regardless of the pennies that I'm just
exactly.
It's just become an ego thing with me, because I want to do better than you. But it's a pot odds play. It's kind of like bonds. Like, what is it really? What's it telling us? What's the message in it? I don't know.
I don't even care at this point.
I'm not that smart.
The narratives around oil. I honestly don't anymore.
I don't care about the narratives on that or bonds, but
unless it's something major, like obviously, and even then, sometimes I don't feel like reading all the tea leaves on all the things that are moving oil anymore.
No, I've got 7 books to read. I don't have that kind of time.
Yeah, and I got no books to read. I definitely don't have that kind of time.
It shows. It really shows too.
Yeah,
you know that.
That's right.
You want to borrow a book? Want to go to the library with me? I'll take you.
No.
We can start with like a Bernstein Bears.
No, I learned through osmosis. That's why I'm so intelligent as is. I don't need the book. See, that's the difference between you and me. Yeah, just put a book right next to my head. It just all.
I tried that in college. It did not work.
Wouldn't that be cool though? That should be something
awesome.
Me and my friend came up with the idea of a Kindle, by the way, when we were in college. This happened, and we never really put it down, the idea, or pursued it. And I remember when it came out. And we just looked at each other like, damn, we could have but they would have just stole our idea anyway. You know what I mean? Like, you go to them and tell them, oh yeah, this is a great idea. Oh no, that idea sucks, but thanks for. Next thing you know, they come out with it and you get nothing. That's how that goes.
I had a Palm Pilot. Remember those Palm Pilots?
Yeah, remember those.
I had that, and I had my cell phone, and I put them together with a rubber band, and I'm like, this is the future. It's gonna be this, and somehow this is gonna all merge together. So yeah, we've all been there. Good ideas that was probably.
It would be nice if they merge all of I will say I agree with Elon on this idea of merging all social media. I mean, he hasn't said that per se, but I think he wants to create a super thing, right? Like a super app. Because sometimes it gets a little, it's just so annoying sometimes to go to so many different forms. If you call them social media, right? Like there's a lot of things that are social media adjacent in a way, like a LinkedIn, right? But then there's actual social media like Facebook and Instagram and all their whole, and then there's X. Which is the first time I've ever really called it X. I usually just call it Twitter. But all of those things, if they were all in one, you wouldn't have to go to 10 different places just to post something,
Yeah, I don't use X that much anymore. And I'm not making a political statement. It seemed like my feed changed. And it was just this isn't the stuff I want. And I'm really too lazy to go in and start calling the people I'm following or things like that. But I agree. Social media is just such a waste of time. It really is.
It is.
Time suckage.
What do you think? You think we're going to see 4.3.5 again?
It certainly looks that way. I'm glad I refinanced my car a while back when I did. You're like, you financed your car? I'm like, uh-huh.
Yeah, I remember. Yeah. Was that a month ago? Was that around here?
Was
it October?
It was probably October. I mean, it was
a hell of a move, man. I mean, geez, look at this.
Yeah, I did not get to the bottom of that, but I caught it somewhere in the middle. Yeah, it's really interesting, especially with the Fed planning. It looks like they're going to cut rates again in December. I haven't looked at the CME thing today.
I just looked at it myself. It was like 63% chance of a cut, I think, something around there.
Yeah, they're going to be hard pressed to do that with the way that these rates are moving. But I think there's a lot of confusing messages right now. Like, this gets back to what you were saying earlier. There's a lot of noise, and I think that we're going to need to sort a lot of this out, figure out what policies are going to be addressed initially, what sectors could be affected. I think that the whole idea of deregulation is net positive for equity markets. So it's just what pockets within that are we going to see? Obviously, the financial sector seems to think that it's really good for them, and I tend to agree on that.
Yeah, last week was definitely the most. I'm sitting here trying to look up and see if there's any earnings. Not that I'm going to trade it, but last week was the most that I traded in a while. I felt like it was a really great opportunity, and I don't really feel like that as much right now. And so, yeah, I'm definitely going to be light on trading more recently. Shop and Home Depot have earnings. Before they open
Shop
tomorrow.
I think is a tough trade. I think actually they're both tough trades, to be honest.
I would let's see, what that chart look like. I would sanction anybody who was interested in the calendar call spread for earnings on this one. I'm not playing it, but I wouldn't blame you for doing it. Again, this one lines up well, especially if you want to play, any big move. And again, these are all about like if the beats are well and et cetera, then obviously that's when the big moves happen. I would sanction this one. I mean, it's always nice to see like something that's far upside the cheap 15, 20 delta call that's like $1 and change. And if you can get, the same equivalent call for like that, I mean, that's like, well, that's the 435 strike, but 430 strike. But if you can, under $1, I love doing those for like $1 and change. So I'm not doing it.
It's a low risk, high reward. Yeah. Yeah. No, I'm with you. But I was going to say, this is kind of just related to all this. I've actually changed my scalping too. I've really cut down like how many points I'm looking to take out, because I just I don't know what this market's going to do from day to day. It seems like it's going higher, right? But I think that along with the figuring out what positions you have, what positions you want, I've definitely become a bit more conservative in my scalping as well. And I don't know, people might be doing the same thing. I get asked about scalping a lot. That's why I'm saying that.
Yeah, no, it's understandable, man. Yeah, I think I'm just gonna let things, like you said, let the market figure itself out and let it sift through all that. Folks, we're up against time. Thanks for watching the show, and as always, be smart, be patient, trade them small, and trade them often. We'll see you.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
First, tastylive united finance and entertainment, then probabilities and research. And now, we're uniting the symposium with the blockchain with 2 unique virtual events. 6 must-know skills for active traders and 6 option strategies every trader needs to know. Both feature legendary trader Tom Sosnoff and other tastylive traders. You can watch the presentations live or anytime you like, since the digital collectible is yours to own when you register. To learn more and register for free, go to tastylive.com/events.
Hello, everybody. Well, welcome to a new week. And wow, Bitcoin, good heavens. The futures on BTC are up over $10,000 right now. We've got a lifetime highs on Bitcoin, obviously, and a lot of equity indexes. And I've been having a ball. A good friend of mine who, like me, was a fellow perm bear, but got cured. He, last I heard, had bought a bunch of Bitcoin. So I wrote him a note today saying, hey, congratulations. He said, no, I sold all mine in August. So it's like, good. But in his defense, he actually used the funds to build a Bitcoin mine. So it'll work out anyway. So I've got a lot of symbols and not a lot of time. So let's jump in and catch up. As always, we begin the spider, and as always, it's at a lifetime high. It's just pushing higher and higher and higher, and that's okay. That is okay. I'm focused on individual stuff, as most of you know, and weirdly, most of my short positions have stocks that are down today, which is pretty cool. But the spiders keeps on keeping on. Historic highs, valuations like you've never seen before, and those of you who are on slope have read all about it. The fundamentals are bonkers. Here's the diamonds, likewise, lifetime high on the Dow 30. It's getting close to that midline of this multi-decade channel, but the vapors from the election results are still going. It hasn't even been 1 week, of course. 7 days ago, we didn't know who was going to win for sure. And in the 4 trading days that have taken place since the results became clear, things have just been on a rocket ship. In the US, that is. Jump overseas, different situation. Here's emerging markets down again, way below lifetime highs. I mean, the lifetime highs were literally years ago, as opposed to the US, which is like every stinking day. China, inconsequential. It's up, 0.19%. It's still battered down in this zone, even after that $1 trillion plus bailout number 96 they threw. But today's really all about crypto. Bitcoin has gone stark raving mad. Last week, I said Bitcoin will cross 80,000 in short order. Fine. I didn't know it would be this, not only this quick, but blast right past 80. It was interesting to watch it because this week it got over 80, then it backtracked like to 70, 78. It's like, wow, kind of just performative, just for the heck of it. No, it was just backing and filling, and it just keeps climbing. So congratulations to any of those out there. Of course, we've all heard the stories about, I forget the statistic in terms of the percentage of Bitcoin that has been irretrievably lost. Like the password's forgotten, or the hard drive was thrown away, or got corrupted, or what have you. It's big. I don't. It's something like, I want to say like 30%. It's definitely a double-digit percent, but it's some jaw-dropping figure. Wow. I mean, that's many tens of billions of dollars, if not hundreds of billions. I think the market cap on Bitcoin is now at like 1.6 trillion or something like that. So, yeah, hundreds of billions of dollars just gone through accident. For those who have retained it, though, they're doing just great. So yeah, there's BTC. It's a bit of an odd man out because other cryptos up a lot, sure, but it's not at lifetime highs like Ethereum or what have you. One big beneficiary of this is obviously MicroStrategy. MicroStrategy used to be kind of a failed internet bubble train wreck. This had gone, it was like a normal business at the time. It had gone from like $333 down to literally like 33 cents. It lost 99.9% of its value. But to Michael Saylor's credit, they've turned that around. And they've basically become a giant Bitcoin holding fund. Sometimes they say hedge fund, but that's not correct. It's just has a massive Bitcoin, about, I think, $26 billion worth. But the company has a market cap of like 60 billion. Even though it doesn't have really much of a business besides Bitcoin. So not sure what that's all about, but it's having a sensational day. As I say, just about anything crypto related is up, but it's not lifetime highs like Bitcoin is. Like here's Ethereum, which is the number 2. It's exploded higher, but it's still about 40% under its lifetime high. And then of course, Dogecoin, which famously was created as a gag, but has become a huge crypto success story, especially lately. You can see right here. I mean, in just a matter of weeks, it's gone from a dime up to around 33 cents, 220% rise. It's fun to watch from a safe distance, I'll say that. Now, this is all obviously resulting from the election results. And I did a post today talking about how back in 2020, I coined a term called ABC stocks, accidental beneficiaries of COVID. Moderna, BioNTech, Zoom, basically, Peloton, stocks that really were at the right place at the right time. And those went massively higher because they had a vaccine or they gave you a bicycle to ride or what have you. And there weren't that many. Well, those ABC stocks have been completely destroyed because COVID's long gone. And now we've got the Trump stocks. And way before the election, I talked about, what kinds of stocks would benefit from a Trump victory. And basically, it's companies associated with friends of his, like Elon Musk, like Peter Thiel. And that has certainly transpired. Tesla, goodness gracious, look at this. It's hard to believe. It was only in April that this was the worst stock in the entire S&P 500. 500 in stocks, and it was 500th place. Embarrassing. Way down here, it was $138. Well, it's not embarrassing anymore. It blasted higher, and me and the Fibonacci's, that's what this is all about. And so I got up here in July, and this very much traces Trump's popularity or likelihood, because you remember in mid-July, it was like a foregone conclusion. Then things began to really cool off with him, and he got, began to look a lot more iffy. And so Tesla fell a lot, and then started climbing. Then another tumble. And basically, the last time it was really battered wasn't that long ago. It was on October 23. It was down around $212. And since then, it leaped forward, kind of eased back, waiting for the election results. This is election day right here. Then the results came out, jumped higher, up, 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 and up. And the Fibonacci's have, the whole way, have been a vital guide to support and resistance. The last one, which is today that we tagged, is right there, that pink one. And that is like to the penny where the stock is right now. So it just keeps vaulting from fib to fib, like so. And I'll say it again. I think Tesla could be one day the most valuable company on the planet, even maybe in the next 4 years. If SpaceX was public, SpaceX percentage-wise would be up way more than even Tesla right now. Because Tesla sells to consumers, SpaceX sells to the government. So, SpaceX is private, but as I say, they would be up massively, even compared to Tesla, if they were public. Anyway, I do think that this is going to ease off for whatever reason, because you just can't. This is unsustainable. So this is very vaporous right here. This could easily fall. I mean, in the most extreme scenario, and I don't know what it would take to do this, but in the most extreme scenario, it could get back into this vicinity, sort of like right after election day. And if so, I think it'd be a fantastic place to buy into it. But yeah, I've been really surprised. And I'll say again, the target 460, I think for next year is reasonable. I'm like 40% of the way through my symbols. Palantir, same deal, way up here. Yes, it's up massively, like literally about 1,000% over the past 22 months. But I think it's going to ease back. You can't do this every day. Axon, formerly known as Taser. I got in the business way back when it was called Taser. Here's the channel. Look how close it's getting to that channel. I think we're close to the end for the first phase of this post-election rally. And of course, the same old we've talked about all last week, the private prisons. Geo Group, blasting higher, lifetime high. Core Civic, blasting higher, almost a lifetime high in the vicinity. So yeah, those are the post-election success stories. Interestingly, the monsters from earlier this year they stink, relatively speaking. Like Nvidia, The Darling is down on a day like this. It is hanging out. The price now is where it was last Wednesday. It's kind of got its thumb stuck in its pockets. And it's probably a combination of tariffs and just the uncertainty of the Chinese relationship. But semiconductor stocks in general are weak. ARM Holdings down almost 4%. Supermicro, which is a story unto itself, down over 5.5%. On my own positions, and we'll do a rocket sled through my own shorts. That's terrible. My bearish positions, we're going to talk about them. You with me? Okay. So let's go real quick. So I've got puts on all these, and none of that. I'm out of the Januaries. They're at the earliest March. I'm giving myself lots of time. So they are Cleveland Cliffs, EWZ, Brazil, Huntsman Group, HUN. I'm not in Netflix, actually, so I beg your pardon. That's an error on my part. SMTC, Simtech. CC, Chemours, the company I can never learn to pronounce. This is a real favorite now. DB Horton, DHI. I really like this setup, the home builder. Intel, we talked about this last week. So far, so good. We're down over 4% today on this. I like the look of Intel. Lincoln National, LNC. It's up today, but like I say, these expire anywhere between March and literally January 2026. Lots of time. Next Era, that's behaving itself. NEE, backing away from that red horizontal. Nike, big all right triangle pattern on that one. And the last of these, on Friday, I bought a bunch of SMH, the semiconductor ETF, and that's down nicely, 2.35%. Let's see, I went to fifth gear, so we're actually going to make it on time, in spite of the first 2 minutes being chopped off. But precious metals, I'm giving this another go. Because, boy, you talk about the contrary trade. Crypto is sexy, and precious metals, yuck. I like yuck. So this is what I'm seeing. Here's GDX getting battered again. This is the miners. Check out the green line. Look where we've been battered too. This has been falling for weeks now. Bang, 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 bang. But that green line, that green supporting line, I think should serve as support. No position. I only have one precious metals position, which I'll tell you about in just a sec. Here's gold, GLD. This has been banged down ever since it peaked here on the 30th. And I'm hoping this represents support. But the actual only position I've got amongst these is SLV. I'm tilting at this windmill once again. And I've got to stop right at that blue line. And we'll see. I've tried this 2 or 3 times, lost a little bit each time because I'm very picky about these stop loss levels. But we'll see. And if it sticks, maybe this is the one. But anyway, that's it from me. Looking forward to the rest of the week with you. And thanks for coming by. I will see you tomorrow. Bye-bye.
If you missed the live show, here's our cherry on top weekly recap.
The guys in Australia absolutely love it when they can make fun of you. It is part of the culture. If they have an opportunity to pounce all over you because you're an idiot, then they take every advantage of it in Australia. And
I welcome an Australian man to pounce all over me. Yeah, he could go down under,
Tom's gonna give me a hard time for this. Can't believe I'm gonna say this. I'm in a vulnerable state right now, so I'm gonna say it. Taking tap dancing lessons.
Hold on, what? The two of you are doing tap dancing.
Yeah. Oh
Oh my God! I want to come watch. Please, can I come watch? Don't maybe come to your what do they call that? Not rehearsal.
Oh yeah. Oh yeah, you're coming.
Graduation, like his graduation.
When my recital.
Your recital.
Yeah, when I do my recital. Yeah, you're coming.
That's the freaking best thing you've ever said, son.
You're coming. You're coming. I'll tap in here one time. I'm gonna do it
with your hair. You're gonna look like Borat. I've seen you play golf. I think you should take up tap dancing.
Thank you. See, I knew you had to get a criticism in there some. I appreciate that.
TP refuses to adjust his webcam, so he does the show like this. And it's the most Bill Belichick camera angle I've ever seen.
You know what? A couple times I asked him to change it because I thought it'd be better.
Everyone in production has asked him. Every single person.
I decided it looks great. I love it. Just leave it the way it is. If he can get away wearing that shirt with that pose, he deserves it.
Oh my God.
Like Chilean sea bass. It's actually toothfish or whatever, soft fish.
Ugly fish is what they call it.
Fish. Yeah. Right. Yeah. So it's Chilean sea bass. It sounds good.
I got a Chilean sea bass.
$50 a slice. He just eats
What do you mean? Well, hold on. What do you mean you got a Chilean sea bass? If you tell me that you bought one and it's sitting in your refrigerator or it's been in your freezer for a few years and you just uncovered it, what does it mean you got one?
Every time I go to Costco, I buy Chilean sea bass because I like it.
Ew.
And how do you cook them?
Oh, I have a system down. I cook them in.
Jesus, blessed. I can't. I almost tell you. I took your crap all freaking day long. I am not taking this. I want to get to Johnny Trades and I want to go.
Get the full scoop by checking out the archives at tastylive.com.
It was a great show, very inspirational and motivating. I feel like you got to know each of the traders a lot better on a personal level. It was awesome.
This is my 10th or 11th live event. I thought the math was really complicated and it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
Nikki, we are back, my son, for the last call. Thank you so much for joining me today. I don't know. It's the type of day where, well, first of all, I said we're going to go down on Monday. And lo and behold, as foretold, we are. NASDAQ's down 31, well, 28 right now. So
oh God. Oh. The pain.
And to couple that, even the S&Ps really aren't up. They're only up $2.75. Dow is up 270. And your leader in the clubhouse, which I hate, even though Tom's position warrants a Russell higher and even the S&P lower, which he got today. I just think when the market rallies on a Russell move, it just doesn't seem as much fun for trading, for me at least. I guess because I trade more NASDAQ stocks. What about you?
Yeah, I mean, the Russell stocks are not our bread and butter trades. I mean, the Russell IWM itself is liquid enough, but 99% of the stocks or 95% of the stocks in the Russell, most people haven't even heard of. So, let alone traded. So, yeah, I totally agree.
Volatility in by 10 cents to 1540 at the higher end of its tightish range so far today. Bonds down 2. They rallied off of their lows. They're only about 4 ticks off of their highs. That helps Tom's position a little bit. But look at Bitcoin here at 87,000, got up to 88,000. I know we've got a crypto special coming on today, I think at 4:30.
Yeah, we got Katie doing a Where Do I Start series. Are you jealous?
No, son, I am not jealous. I created it, and now it's supposed to live on forever.
I know.
It's my gift.
Katie is favorite child. I know
it's my
that.
gift to humanity, just like you were.
Thank you. Thank you.
You're welcome. You're welcome. Yes, but Katie was my first, right?
I know.
I mean, yeah.
And the jealousy is still in me. It's okay.
I understand that. Oil down $2.22 to 68. Got a few emails today speculating on, do you think oil is bearish for the market? I'm going to let you answer, and then I'll tell you what I said.
The down move in oil bearish?
Yes.
I don't read into that. No.
Okay, I don't read into it either, and oil basically has no correlation to the overall market. I think it's 0.04 or something like that. So it's neither here nor there. I do know that it goes straight to the consumer's pocket. I mean, if you're going to fill up your tank every week,
not
to get
today,
to work,
not tomorrow, not next week, not next month. This move has
maybe
zero
not
to
even
do
this
with.
maybe not even this year. You know how they do
this
that.
has nothing to. You don't get this money back. Oil down 3%. That doesn't mean they're 3% cheaper at the gas station.
It doesn't even mean it's 3 cents cheaper. What if
No.
3%?
No. I don't buy
over a
that.
sustained period of time, you'll get some benefit to that. Next thing is gold. Gold down $63. Big move in gold. I mean, you basically have an implosion in gold to the downside. And I get it. You know, gold was 2,400. It got up to 2,800. It's 2,600 and change. It's mid-range. For the session here, and by session I mean over the last 6 months or so. What do you think about gold here? Ivy rank of 58.
I got into a long silver position last week, so I obviously am not enjoying that one today. I mean, I don't trade a ton of, and I had a butterfly, a risk-free broken wing butterfly, or broken wing butterfly that I turned into a risk-free butterfly in GLD that had my short strikes right at 250. So I thought and it's expiring this week. I thought I was just, ready to.
How much can it move?
How much could it move?
$2?
Yeah, 50 cents. You got 16% implied volatility. This is free money going into the end of the week. So I'm not.
A full move in one direction is supposed to be $3 or less.
Yeah. And we were at 149 or 249 on Friday at the close. It looked like
beautiful. It goes up $2. You're beautiful. It goes down $1. You're amazing.
I was a genius. And then today you stink. And that's how it goes.
today you stink. So now you gotta sit and hope and pray. It's okay.
Yes.
Hope and pray is okay. Big mover you mentioned early this morning was Nat Gas. No change there as Nat Gas is higher by 10%. Honestly, I don't remember a 10% move that often. I know we had them. I know we had one probably here just a few days ago, but they seem like they're big moves to the upside when something moves 10%.
Yes.
Other things that are moving 10%, my friend, there are a few of them. I'll name Tesla for one. It's about an 8.5% move to the upside, although it is off of its highs when it was closer to 10%. And Coin is another one of the big movers, up $58. That's a 20+% move to the upside. Coin is in a rip your face off rally. I mean, high implied volatility, straight up move. You get in front of that train, there was no stopping. Same thing with Tesla.
Yeah, I haven't had as many emails on the coin and micro strategy moves, and I think it's less applicable there. But I think Tesla, I had one email that sticks out in my mind because they basically had the thought process that Tesla will never go down again. Like there will just not be down moves. And, my response was like, if you don't think the stock's going down really ever, you should just close the position. You shouldn't be leaning short. But I think for Tesla,
you shouldn't have any position that doesn't have long delta in it.
Yeah. Why have a short delta position if you don't think the stock's going down? I mean,
but we can argue the direction till the cows come home. But there's one thing that's absolute: you have to have delta that matches your assumption.
100%. For the other half of the people that are looking for ways to be a little bit short or a little bit short volatility, I've tried to put out the idea of put diagonal spreads or put crab trades, like stuff like that, because in a product like Tesla, and I think it's different than Coinbase and MicroStrategy, which will have higher implied volatility for, I think, a longer period of time. I think if you had a $20 or $30 or $40 down move in Tesla, which is, a half a day movement over the last week or so, you would see volatility come in very, very significantly, especially in, the December and closer expirations. So I think from a risk reward perspective, in terms of trying to be short on Tesla and short volatility, I think that's the better way to play it than selling call spreads or even naked calls out of the money, because the risk reward on the $40 up move, I just put on a put crab trade in Tesla where I'm long the
explain what a crab trade is for people. You're buying two. Go ahead.
Or I'm buying one longer duration, closer at the money option. So the 325 in January. I'm selling two of the 275s in the December monthly expiration. The crab trade for me is to buy a wing further out.
To reduce your buying power.
To reduce my buying power, so I'm not naked. If you have a larger size account, you can do it naked. But what that does is it gives you short delta to a point. But it gives you a little bit of that short volatility, especially in the shorter term, the next couple weeks, whereas your long option further out in time is not going to be as subjected to a potential vol contraction. Tesla is one of those stocks that when it has these big moves, if it reverses and goes down, you tend to see volatility come down as well. And when you look at
volatility gets creamed to the downside.
It gets killed to the downside. So even if the stock were to drop into an extreme, 200, let's say it go down 100 or 150 points, and you're in the money on a put.
Let's say it goes back to where it was last Monday
at 300. Your puts don't move. Your short puts don't move. Your long put holds value and gains intrinsic value. And that's where you get a ton of the, it's a lot of bang for your buck. If you're short, if you're short calls in December at the 450 strike, 100 points out of the money that are trading at $12 versus $100 out of the money on the puts, they're trading at 3 or 4.
Right.
You get a $20 or $30 or $40 up move in Tesla, and those calls go from $12 to $30. You have $18, $19, $20 of risk on a $40 up move, whereas a put diagonal or a put crab trade, you have $300, $400 in risk on that same move.
Yep.
So I think from a risk rewards perspective, and we talked about this earlier, because of how high vol is and because of the skew and the asymmetry of risk to the upside, I think that's the way you attack that sort of situation.
A lot of intelligent talk there, a lot of subjective talk there, your own kind of personal views on risk and stuff like that. But I'll give you some math to it too, son. If you look at Tesla, because that's the one that you used, it has earnings in January. The monthly implied volatility is 68. December, that doesn't have any monthly, that doesn't have any earnings to it, is 74. It's quite rare to find something with almost 40 days, 39 days in December versus 67 days in January that has that much vol skew plus earnings looming. I did the same type of trade in Meta. Now, I got the down move that I needed. I put on Meta when it was 88 and it went down to 80. I got the down move. I had a put diagonal on that I wanted. I had short delta to. But again, the first day or two, Meta actually went a little bit higher. You know what I mean? So, it's not like you get the move exactly right. But if you have that vol differential and you've got a little bit of that kicker with earnings being in that month, you think volatility is going to stay up there. I get it. It's not going to affect it right now, but it's a little bit of a boost to keep you in that trade. A much more intelligent trade. I wish I had listened to you when I put on my Tesla strangle a few days ago.
Well, I wasn't laughing at you. I was laughing at the YouTube chat that said from Griffin. He says he can only understand 65% of what I'm saying because my hands are constantly out of frame. So I'm losing him. So I'm sorry about that.
It's okay. It's okay. It's good that way. Right?
The only other thing that I really did today was a trade in Mara that you might like.
All right, give this to me. I've got a few people who write me about Mara. It's up $5 today. Earnings are coming November 12th, which is tomorrow after the close.
So I'm playing into the skew a little bit here, and I did this actually last week for the Cherry Picks trade ideas, and we closed that one out. Selling the 20 strike put December, and then doing the 30-35 1x2 call ratio. Selling and put
35 1x2.
Yeah, I did it at 275 or 280, something like that. 270.
Yeah, it's 280 right now. Yeah,
it's marked at 280 right now. Break even puts you at 42 and change on the upside. Downside is 18.
Under 18, but yeah, sure.
1730. Do you want to correct me?
1720,
Yeah.
But go ahead.
Yeah, 1730. You got
1720 if you get filled at 280.
I'm at 270.
Fair enough.
So it's back to lows. So you got break evens at lows. On the upside, it's 42 and change.
Yeah, 68% pop. I mean, as long as you have over, I like to have over a 65% pop. You're right there. It's an intelligent trade as far as I'm concerned. I mean, the direction is neither here nor there. Your upside is covered a lot better than your downside. And I think that's what you're afraid of anyway. So I like it.
Yeah.
Makes sense. You basically have a embedded call spread with a short strangle.
Yes.
I like it. Nice little play in Mara. My question is, why December if earnings are tomorrow and not shorter dated? I know you'd have to go closer, but why the December?
You could do it into earnings. I just did it to give myself a little bit more time, more premium. I mean, the earnings, so to speak, I don't think are that much in play. I think it's just a Bitcoin proxy, and that's why you're seeing the heightened implied volatility. But there's really not much to do on the downside here. Like the 20 strike puts in the November, this expiration this week are trading at 20 cents. I think this is more of a vol play than a directional play. Like I think if you have
131% monthly applied vol, I mean,
it's the same thing you're seeing in like a Tesla or Mara or MicroStrategy, Coinbase. I don't know if you're a Sosnoff type account, you do the 30-40 1x3.
Yes, he would do a 1x3.
I tried to get him to do that in DJT. That would have been a nice little winner for him. He didn't like that. He was too scared.
I had him do that in DJT when DJT was closer to about $50. So it worked out for us. Okay, DJT up $1.30 here today. For earnings, for those who are going to play it, you got Shop, you got Home Depot, Mosaic, LYV, TSN. If you're interested, we're not doing anything with those. Frankie from the chat room just wrote in and said, yeah, we worried about your dad at some of the trade shows too with his hands. He got kind of close to a few customers' noses and stuff like that when I was talking. So it runs in the family, son. You're okay.
Yeah.
For sure. So you've avoided a lot of these stocks that have had these bigger moves, the Coin, the Teslas of the world.
I mean, I played them to the upside and took profits along the way and missed out on a lot more. But that's the name of the game sometimes.
Yeah, you can't.
It's hard to see someone go up.
You can't play for 100% moves.
Yes, it's always a hindsight look back. It
always is.
You take profits after the first 50-point move, and then it has another 200 points, and you're like, well, what?
Sure.
What am I supposed to do?
Right. I agree. I mean, listen, you could take something as simple as gold. Let's say you didn't buy the bottom and you didn't buy the top, and you bought it somewhere in the middle around 230, or your break even was around 230 or whatever. The stock got all the way up to almost 260, and now we're back down to 242. What do you do? Do you hold? Do you keep it? Do you stay? These are the big questions that only you as the individual can answer. That's the problem with this whole thing.
You want another spicy one?
Sure.
I mean, what is just super cheap right now?
Your Intel.
Yeah. I was thinking vol. Is
Okay,
anybody thinking that there's going to be any volatility? I mean, I had the text from my friends this morning. It was the first time he would like to buy some calls. He wanted VOO. I told him it's not liquid enough. You got to go to SPY,
Right.
do some SPY calls. You want some calls. He says we're going nothing but up till the end of the year. I mean, is it? That's a serious text. The first time ever I had to walk him through. He was doing it on another very clunky brokerage firm account, sending me, texts with screenshots. So if you think,
wait a minute, he wants to be bearish on volatility.
No, he doesn't know what the VIX is. He wants to buy calls and SPY. I'm saying maybe it's a contrarian indicator that we got a little bit of volatility at least like once or twice before then. You know?
Oh, you're fading your friend.
Yeah, I got my friend, call and he wants to buy some calls in VOO. He's ready to rock because we're only going up. So maybe you do a tiny little vol play, and I'm thinking in this weekly. I think it comes, you got expiration this week. I mean, you usually, when I get those texts, it's usually shortly thereafter that we're ready to rock. So I did a UVXY 4-day zebra trade. Very cheap. Okay. And this one's on the follow page as well. So I'm long the 20s 2 times, and I sold one of the 21s in the November 15th expiration. So they expire at the end of this week. If volatility goes nowhere, you probably lose 40, 50 cents. If we get a pop in volatility, you make a nice little bang for your buck.
You said with 15 days to go, right?
No, I did it with 4 days, November 15th.
Oh, you did do it 4 days. Okay, that's what I thought.
This week.
Sorry, okay.
I don't want to miss, the sell signal. You got markets at highs. You got, and
it's a complete 50-50 shot for the next 4 days.
It's a rental. It's a vol rental.
That's correct. You have defined risk of $150 or $155, whatever you paid for it. You're fading your friend. You're going to make a little bit of money on him. I mean, I don't like to play the don't pass line, but I get it. Okay. All right.
It's just a small little it's just a something. I just thought about it all morning. I was like, God, that's got to be it. It's got to be the one.
Make sure you send a screenshot of this and the closing price too, and you make a little money on them.
Yeah.
I like it. I like it a lot. Are you ready for some viewers?
Some what?
Bro, would you like some company on the show? Sometimes we like to have some company come on the show. Is that
for the handoff? Of course. Of course.
Yeah.
Sure.
Uh-huh. Okay. Well, I just saw his picture pop up there. I don't know if we have Ilya and Dylan. We're just Ilya at this point, but if they're ready, they can come on whenever they are. I'll see them come on.
Yeah, Chris is sick. He's sick of Aaron Rodgers.
Yeah, Chris is sick, and he is sick of Aaron Rodgers. I think a lot of New York is Chris. You know what? I was watching something on ESPN today or something like that. They had Belichick on. You know, he won 8 Super Bowls.
Yeah, he was wasn't he
6
on the
and 2 with the Giants?
He was Giants. I thought he won Cowboys.
2 with the Giants. I think it's 6 with the Patriots.
Okay. Yeah. I mean, let's give him the bag.
I think he'd be a good fit.
I think he would be a perfect fit.
Yeah, I think it'd be a good fit. Ooh, as for told, even the S&P down 50 cents.
Oh, they're crashing.
What do you think of the volume today on the E-mini S&Ps? I know it's a Veterans Day, so I know the bond market open outcry is closed. Obviously, the bond market, electronic market is open, but even the S&Ps only 900,000, and we're near the end of the day here. Another light volume day in the futures, at least.
Nobody's wasting time with that when you got Coinbase moving $6 a minute.
Yes.
Tesla going nuts. I mean, you look at the volume on those stocks; it's astronomical. I mean, Tesla. I'm sure Frankie will tweet out what the option volume is, but it's got to be multiple millions.
No. Frankie told me 100,000. 39 April 39 VIX calls traded today.
I don't
somebody
care
bought
about the
them.
VIX call stuff. That's all.
I know. I agree with you 100%.
Mr. 50 Cent. That's all tail risk hedging. I mean, like, if you're Goldman Sachs, some guy on the desk, and you're leveraged long Tesla for 300 points, and you're going to hold that overnight, you're going to buy a couple 50 cent call options and hope they go to zero.
Yes, I know. People don't think like that, though.
I know.
They think that that's the direction. All right, let's bring my man Ilya in here. I don't think we have Dylan. When the cat's away, the mice will play. Dylan's not around here. But Ilya, I can always count on you. What happened to your friend Chris?
I think it may be something related to things transmitted through TV screens, but I can't say for sure.
You know, the fact that I had to deal with pretty much my entire life of being tortured by Aaron Rodgers, I'm actually excited for the opposite to happen to another fan base of like being tortured by having Aaron Rodgers. Like I had to watch Aaron Rodgers torture me all my life.
Basically your whole adolescent and adult life.
The whole thing. It's all I've known.
Yeah. That's all
Thankfully,
you know.
I know nothing about anything, so none of these things mean anything whatsoever. I'm just waiting for CPI this week, like the macro nerd that I am.
Ooh.
Oh my God!
What day? Is that Wednesday?
That is Thursday, I think.
Thursday.
Right.
So what do you think? What's your play?
I mean, I think the thing that we were watching into the election, and obviously with the crescendo of the election, was everybody basically since the middle of September when the Fed made their move said, okay, they're making a move on a hot economy, so that's going to be inflationary. So yields go up, gold goes up, the curve steepens, dollar goes up. It just all happens at the same time, all in concert, and just tells you the same thing. And with the election, we sort of had the big fireworks display on that. And now we're kind of stuck. So if CPI is hot, as U.S. economic data has tended to be recently, if that basically says there's inflationary rethink here beyond just the election, there's more than just that, because I think that's speculative juice may be already squeezed until we know more. But if there's something here where the Fed really shouldn't cut in December and those odds are still live, then you get a stronger dollar. You get another move up in yields before the whole thing sort of resets again.
I was going to say that doesn't seem good for Tom's bond position while he's out in the UK. He might come back to a little debacle.
You wouldn't be talking like this if he was here. I know that right now.
No,
no way.
I get a little bravado when I take over, you know?
I like it. I like the conversation.
In fairness, I am definitely nervous in my gold short, which has moved a lot. I'm nervous in my bond short, which has gone a lot. I'm nervous in my dollar longs, which have moved a lot. Sort of sitting here at levels where they've hit extremes recently, going, okay, well, are we going to do this thing or not? At least the euro is doing it.
Yeah, the euro's definitely doing it. Sure, the pound is trying to do it, but the euro's definitely doing it.
Yeah.
All right, Ilya,
wait. We didn't have Tom here to say it, but oh my God, they rallied him 10 on the close.
No, they rallied him 5. They rallied him 5 on the close.
Oh my God, Bat, did you see that one? They rallied him 10 on the close.
You know what that means? Everybody traded from the short side today. I couldn't get them back till the end. We're going to take a quick 90-second break. You're brutal, son. You're brutal. By the way, on Monday, find the door. We're going to take a quick 90-second break and come back. We got more Tasty Live after this with Ilya and some people. Peace.
Know someone who needs a better broker? Earn $250 for each qualified person you refer to Tasty Trade. Because friends don't let friends trade on a bad platform. Terms and conditions apply. Join the club, genius. Tasty Trade.
I want to play a game. It's a relationship game. So I'm going to ask you each a question.
Who loves the hardest?
Yes, yes, yes. So are you ready?
TikTok.
Who's more stubborn? Who's more public? Who's more patient?
These are two of the least. These are the least patient people I've ever met.
I'm gonna say him just because he's a little older than me.
Who calls or texts more? And who do you think takes longer to get ready in the morning? Who's a better driver?
I drove a truck in New York City.
I can fly an airplane.
Who loves the bed the most? Who's the bigger spender, do you think?
Me. Yeah.
Who's the alpha in this relationship? Who is more spoiled?
Oh, him.
Who do you think is funnier? Who is the better debater?
I'm gonna give it to him.
Dylan, you think you're the better debater? Are you the master debater?
No, he's he's good because he doesn't answer the questions, which is great for debating.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Know someone who needs a better broker? Earn $250 for each qualified person you refer to Tasty Trade. Because friends don't let friends trade on a bad platform. Terms and conditions apply. Join the club, genius. Tasty Trade.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
And we are back. Sans our friend in New York, who is missing in action, but we are live to you from San Francisco. I'm Ilya Spivak. That's Dylan Radigan in Milan. Sir, how goes it?
Very well. Nice to see you. Our first full week in the era of President-elect Trump. Interesting to see how the market behaves on the back of a weekend to digest all of the various hysterical concern and euphoric joy. Seems to be resolved with absolutely nothing. In other words, the rally holds, but no additional actions appear to be warranted. I mean, it seems to make sense, and I think it was Sosnoff who was saying it. I think Sosnoff's on his, he calls it a European tour, although it's technically a British islands tour as a result of Brexit. But I do believe that Sosnoff was the one looking for a selling opportunity on the post-Trump election rally. Today looks like the first day where that has some validation, and at least as you look at the S&P chart that sits in front of us right now. The thing, sorry?
Indeed. I mean, I think this is kind of it's an interesting sort of situation here, to your point. I mean, we haven't really done anything, but maybe that's the story, is that we've been doing things for a while, and here's the election, and ever since the actual crescendo, it's been kind of limping to a stop. And today we are indeed stopped.
Yeah, my interpretation, and maybe it's my bias, because I think I don't think Trump is a qualified or worthy leader of a dog pound, let alone the most powerful nation in the world. But that's a personal matter. But I do, my interpretation of the market action between the election and today is one, Bart, for sure, appreciation for Trump's victory by virtue of tax rates and regulatory regimes. But also, I did interpret a lot of the action last week, Tuesday, Wednesday, Thursday, Friday, as a response to a clear result. That there was an unambiguous, that clarity in and of itself was a value proposition. So you had clarity plus regulatory plus tax regime, all favorable. As you go into the first full week of a president-elect Trump, you start to find yourself dealing with things like a U.S. ambassador to the United Nations, who is a unqualified nincompoop from upstate New York, and I know from what I speak, being myself from upstate New York. And so you see names like Stefanik thrown around as at cabinet level appointments. You start to come to the realization as to just how catastrophic a potential Trump administration portends to be.
I mean, I think you get the confirmation on the argument about uncertainty very, very clearly when you look at what's been going on with gold. I think this really tells that story because we were all kind of sitting here trying to figure out what in the world gold was doing when the Fed cut by 50 basis points, and then it didn't do anything. It just kind of stalled. But then in the aftermath of that cut, I mean, here's where the Fed makes its move right here. And of course, we get the initial gold move, and it holds up a little bit along the way, but ultimately resolves higher. And what's strange about all of this is while this rise in gold is happening, we are also seeing a rise in yields and a rise in the dollar at the same time, which makes no sense. So here's where the dollar is, just to kind of anchor us into what's happening at the same time. Here's where the Fed is. The Fed marks a top in the dollar. The euro starts to sell off as a kind of stand-in for dollar in general. Dollar starts rallying right after the Fed. We see the same thing in the bonds. Here's that same turning point, strange lines all over the chart notwithstanding, where it couldn't be clearer. There's the Fed. Well, as soon as the Fed does the 50 basis point cut, everybody goes, oh, you're cutting into an economy that's not terribly cool. This is going to be inflationary, higher rates, higher dollar. That should be a terrible environment for gold. And yet, here's that same moment for gold. It's going higher. And
you're suggesting that divergence was a function of uncertainty?
It certainly seems that way, because if we look at what happens with the election, we get up here, we stall, here's the election, and here's today. Mm-hmm. So as we've seen the uncertainty go away, we've basically reset right here. This is where the Fed is. We've essentially erased everything that we've done on gold since the Fed. All of that divergence with yields and the dollar has been erased basically in a manner of two sessions. The session leading into the election, and today.
At what point do you think that the market starts to reflect an opinion of Trump as a leader as opposed to an opinion of clarity on a presidential election?
I think
I think you know what I mean, but
sure.
Just to clarify for everyone else, I look at last week's market action as a response to a resolution with the presidential election. And I look at what we'll see over the next 3 months as more of a reflection of tariffs and sort of the certain unadulterated chaos of a drunken and psychotic Trump administration that's about to unfold before our eyes.
So one of the more interesting things is you could see it in the initial response overnight as the results were coming in, sort of a sense of yields going higher, the dollar getting stronger, and it held up in places and then not in others. I mean, certainly in gold here, it held up. But if you look at the bonds, I mean, here's the move on the election. You got a flavor for what this was. And since you've corrected and you've kind of reset, which I think, to your point, speaks to digestion rather than follow through, the markets are kind of getting through the certainty of the outcome, crystallizing. And of course, it's technically a holiday today. Open outcry is closed for the bond market, so it's a little bit iffy today. It's only electronic markets, so maybe we can make the argument that it's a little bit thin and we're not seeing follow through there. But you would think that if you go down the menu of policies, from the bonds, the response should be higher on yields and lower on bonds. Because deportations of labor, that's inflationary. Tariffs, that's inflationary. That should take away the Fed's ammunition to cut rates by still more, if that's in the market or is entering the market, especially since economic data continues to look hot. We're going to get CPI this week. We're going to get retail sales this week. We'll see if they continue to do what economic data out of the U.S. has been doing, but it's all been really hot. Notwithstanding that jobs report with the weirdness with the Boeing strike and the hurricanes and all the rest of it. I mean, that was just a aberrant sort of thing. But outside of one-offs like that, the data has been really strong. And so ostensibly, all of this should be inflation, fewer cuts, and higher yields, and a stronger dollar, and weaker gold. And you're seeing it in places, but not in others. So gold is obviously doing it. If you look at what's going on with the dollar, here's the euro. That's doing it. Although one might argue it's starting to get to levels where maybe it's getting to some kind of a point of contention. But you're seeing another strong dollar day here today. So I would think that's sort of in the direction, but you'd want consistency. And I'm getting to a place where I'm thinking, okay, does anybody actually have enough information to start to speculate on these things? And maybe it's not in the price yet. And to your point, maybe this is the story of now through year end. Who's getting nominated, and probably to some extent into January. Who's getting nominated? What are they going to do? Chris took some heart, I know, last week in the nomination of Robert Lighthizer as U.S. Trade Representative again, because I guess he's not blanket tariffs. No tariff is a bad tariff kind of policymaker. He's also the architect of the tariff as a instrument within that orbit. So I'm not sure how prepared I am to think that this means the tariffs are not going to be as big of a thing, but any kind of a tariff is inflationary in this environment. So, or extra tariff, obviously, we still have the ones that Trump put in before. So it'll be interesting now to see who gets nominated. I'm with you. I don't think it's in the price yet.
Yeah, I think all this price action is response to election is over, undisputed, super clear outcome. Mm-hmm. Thank God.
Yes.
And by the way, the person who won and the party that won is the party of lower taxes, theoretically, and less regulation, theoretically. And now the wild card is this is not your father's Republican. This is not a George Bush Sr. administration. This is a known New York mafioso con man scoundrel who will do anything and everything. And so that's sort of where the volatility gets introduced into the future outcomes. I do wonder looking at the severity of some of the price action, like looking at the strengthening of the dollar relative to the weakening of the euro that's in front of us, looking at the short-term bump in this equities market, looking at it in the sell-off of gold. If you were to look at it with your macro trader's perspective, and I'll just give you equity rally, gold sell-off, euro sell-off, dollar rally being the other side of that. Just those three, just on price action in a hurry. I'll give you the NASDAQ rally, same as the S&P. But equity rally, bond sell-off, dollar rally, are any of those tempting you either to be, again, short equities, the obvious contrarian impulse to any of those charts?
So for me right now, U.S. indices present fear and concern. For me as a trader, the index is obviously robust. I look at this and let's just look at the actual active contract here rather than the continuous, because it really tells us in practical terms where we are. We got back exactly to hit the July high and then stopped. And that's a really interesting sort of thing. On the one hand, those of us that have been skeptical of this whole thing, not because we're skeptical of the long run narrative, that would be foolish, but skeptical of how far we've come, and as a student of history, on the lookout for the initial washout before the great big long narrative comes, the way it was with telecoms and the internet and the .com bust, the way it was with railroads and with, frankly, the original 13 colonies and warrants. So it's time and time again, these things that are massive breakthroughs give you an initial build out, massive overcapacity, fraud, all manner of things. There's a washout, and then the real long-term story starts. So I look at this chart of the NASDAQ, and obviously my trigger finger itches to short, but I'm not going to do that here without more confirmation. And that might mean I miss it a little bit.
The dollar just on the rally, or how about being long the gold just on the blowout?
I need to see the price action tell me that those things are becoming wrong. I've been short gold, so I've been basically papering over my sins being short the NASDAQ into the election with having been short the bonds, long the dollar, short gold. So those have kind of bailed me out here, even though I was in a risk-defined vertical on NASDAQ going into the election. It still kicked me square in the teeth. But these other things have helped. So I'm looking at gold here and essentially saying, okay, it's at its low from back in October, so essentially a month ago. It's washed basically everything since mid-September, which is where the Fed is. And now this is a story about the CPI numbers, the retail sales numbers, the Powell speech this week, and whether there is actually, outside of the election, outside of you think the tariffs are going to be inflationary, the deportations are going to be inflationary, all of those things, outside of that, is the economy actually just hot? And the Fed is actually off sides in any case, election notwithstanding.
And you're saying some insight as to the answer to that question is forthcoming by virtue of the November data set / speaking set /
Absolutely.
Time window.
Absolutely. Absolutely. I mean, I think we're looking at CPI, and that's sort of the main event risk that's on the menu. And the probability that the Fed might actually hold back the cut that the markets are still leaning towards in December, that's a live possibility. The expectation is that we're going to hold at 3.3% on core. That would be sustaining the bounce from September and matching essentially June. So it would mean that core inflation hasn't gone anywhere in 6 months, almost. And that's a stalling. And then the headline is expected to jump to 2.6, which would be the highest since July. All of that isn't going the Fed's way. And the trend for U.S. economic data has been to beat forecasts. So the risk is the numbers are actually even hotter. And if that's the case, the likelihood that we get a December cut is going to start to come in. And that's not good for gold if, in fact, it has recoupled with sanity and started to move again inversely of the dollar and inversely of yields. 65% is what's the current probability that we get a cut. A standard 25 basis point baseline issue.
Let's assume Trump does what he said he's going to do, which is implement widespread tariffs, particularly on China.
Yeah.
Implement widespread deportation.
Mm-hmm.
What does that mean for the U.S. dollar and the U.S. bond? If he just does what he says he's going to do.
Assuming he does what he's going to do or some version thereof, we get disruption of labor markets because some of these people are going to get caught up. That means the cost of labor is going to go up. So that'll just mean scarcity of labor. That's inflationary, let's call it 5, 6, 8 months downwind until that sort of digests and readjusts, maybe. The tariffs are inflationary for very obvious reasons. I mean, if you're an importer of stuff, in particular from China, you are going to be having to pay a higher tax on what you import. Let's just be very clear. One sovereign country can't compel another sovereign country to pay it a tax. So let's just be very clear that the tax that is a tariff is being paid by the U.S. wholesaler that is importing goods from wherever. And what they're going to do in an economy that is still growing at a decent clip is not swallow that. They're going to pass that on. They're not going to let that eat into their margins the way they would, let's say, in a recessionary type of environment where they say, you know what, consumers aren't going to buy this stuff. We have to eat some of this in profit margins. They'll probably pass this on because the economy is looking generally okay and consumer spending is strong and the service sector is humming along. They pass that on. It goes directly into CPI over the coming months. So the upshot is inflation. Now, if that then starts to crush economic growth, which we'll know maybe 2 quarters in, something like that, unless it's sort of catastrophic, then it will start to eat away on itself. The slowdown in the economy will start to pull inflation lower, but it will be at the cost of this shock hurting growth and killing consumption.
I mean, just from a trading perspective, what would be the Trump does what he said he was going to do trade today? Like if you were
I think it would be higher yields
today for him to do what he says he's going to do.
I think higher yields, stronger dollar, all because what you have then is basically the conclusion that who knows what version of these things happens, but if some version of them does, that's inflationary. That means fewer cuts from the Fed. That's higher yields. That gives the dollar a yield advantage against other currencies. That's widening. The ECB is cutting. The Bank of England's cutting. Every other central bank, barring Australia, is for now is cutting. So you have a very clear story here. Yield advantage to the dollar expands, dollar goes up. I mean, the version of this in the euro is truly clear as day. This is basically moving right in line with the Europe versus US 10-year yield spread. It's almost identical.
And equities and gold?
Gold seems to have once again found reason in the sense that it seems to have once again started to trade with things that should be trading with, so that you see a stronger dollar and weaker gold is how things are supposed to work. This was a sort of weird aberration here. Again, I think in retrospect, seemingly linked to the election. Now that we're here, if you get a stronger dollar and you get higher yields, this is going to keep going lower, is my sense. And the next kind of big levels are down here at 25.60, and then maybe down here somewhere at 2,500, 25.10.
Do you think the market thinks Trump's going to do what he says he's going to do? And I say that in the context of when you look at the polling, one of the my interesting things from the exit poll was broadly Kamala was viewed as not, people didn't believe that she was going to do anything she said because she was lying about Joe Biden's health and blah, 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 blah. More people seem to think that Trump, who is the world's most famous liar, actually, is more likely to do what he said he was going to do on the campaign trail. By the way, feel the same way. I think that Kamala was full of shit, and I think that Trump is more likely to do what he said he was going to do. But again, that's purely like a primitive response to political rhetoric. It doesn't have any basis in logic.
Well, I think what we know from 2016 is that Trump tries to do what he says he's going to do. Doesn't always get there.
Meaning deportation, tariffs, Muslim ban, whatever.
He tries the Muslim ban, it gets overturned, he can't do it. He tries the wall, he can't do it, really. He does a little bit of it, but that whole big, we're going to build the wall and it's going to be fast and Mexico will pay for it, none of that.
So meaning deportation and tariffs will at the very least be attempted.
Sounds like it. I mean, last time everybody said he's not going to really tear up NAFTA. He did. And renegotiated. He replaced it. The deal he replaced it with is maybe even marginally a little bit better for the U.S. It's not terribly different, but he did it. He targeted tariffs at allies in Europe. He pressured NATO for more military spending. One might argue that's been a successful thing in the current environment. So a lot of the things
I think
he said,
it is. I think the NATO pressure for more resources is rational.
Yeah, I mean, a lot of things he said he was going to do, he at least attempted. And some of them worked, and some of them didn't, and some of them happened, and some of them didn't. So in that sense, I suppose it's like any administration. I think the key here now is going to be what happens in the specifics. But to your question, I don't think the market has really onboarded at least some of this, because looking at the Australian dollar, I don't see a level of panic about China that's nearly as pronounced as what could be if all of this went into effect.
So, meaning if there was really the expectation of widespread American tariffs on Chinese exports, the Australian
that are greater than they are now
would be a different price chart.
My sense is that you have sensitivity to it, but the markets aren't ready to kind of lean in. You sort of see it here. So here's the election. Dollar goes up. It tries. There's a strong attempt to make a big break lower. It never holds and ultimately gives it up. Here's where things get interesting. Over here, you get this massive rally. And this was also a day of rallying for copper, which is another baseline asset to track China. That's this right here. Same move. And here's the election. Again, negativity about China on the election. And then you get this. And all of this followed these really explosive Chinese export numbers, where all of a sudden exports for October jumped almost 13%, which is a number unheard of in like over 2 years. And everybody looked at it and said, what? Like the expectation was less than half. It was like 5%. So it was a complete outlier number. And then when you dug into some of the data that got released alongside, some of the purchasing manager index numbers that got released earlier in the week, where you also saw this massive jump in exports, you get the sense that this is the tariffs, where people are saying there's going to be these tariffs, or at least when these numbers are done, the Trump likelihood is higher. He's leading in the polls. It seems like companies basically went to go and say, let's import everything we can now before the price goes up, before these tariffs go up. Let's stock inventories. And people looked at these numbers and said, oh, Chinese export growth, la-di-da. And literally the next day, with the benefit of one day of digesting these numbers, it goes away. It goes away here. It goes away in the Aussie dollar. And then, of course, your resident China skeptic here went on Macro Money last week and poo-pooed these export numbers and said, look, over the weekend, if the inflation numbers come out weak, you know just what's going on with demand in China. And the inflation numbers that came out over the weekend were awful. Softer CPI out of China than expected, softer PPI, all of it weak. And of course, that same trade report that had the exports jump also had imports falling over 2%. There is no internal demand in China. It's coming unglued, the whole thing. Until there is fiscal stimulus that the government does, there is just no demand in the economy. So really, we should be afraid, or at least the markets should be thinking that if the tariffs get done, China and anything China related is going to get cooked. And we've seen some of it here where people go, oh, they're recovering. No, they're not. But there's not this conviction that there's a bigger issue.
Meaning a strong Australian dollar is a prosperous China and a weak Australian dollar is a suffering China?
That's right. China is Australia's biggest trading partner. And when you look at what China buys from us,
you're short. So if you're long tariff, you're short the Aussie dollar.
That's right. And I am. I got a little bit short up here on this bounce. If you go into a 4-hour, you can see where the trade kicks off. So you have this push higher, you take out this level, and then once you dip in here, you've basically invalidated the upside breakout. So I got short right there, and I'm holding it here, basically waiting for it to find its way in this direction. And I think the fact that it's still holding at these levels tells us it's not done, that the market is not prepared, at least, to say at this point, all of the threat that is the tariff is here. I think if it was,
meaning the market's expecting either the tariffs, either they're not coming anytime soon because inauguration / legislative chicanery, or they're not coming at all.
It would be difficult for them to not be coming at all, but I think the market has basically gotten itself to a place where they're saying, well, is it really going to be 60%? Is it going to be 20%? Is it going to be targeted or blanket? Is he really going to do a 10%, 20% tariff on imports wholesale? How would he even do that? And so I think the market is maybe waiting for specifics. But in fairness, you get a hot CPI number this week, you get some hot retail sales numbers, and the market, I think, goes, who cares? It's already getting more inflationary. The only thing these tariffs are going to do is be even more inflationary. They're not going to be disinflationary. There's no world in which an extra consumption tax, essentially, because that's what this is. This is a VAT on imports. It's a consumption tax on imports. Call it a sales tax. It's just on sales of imported things. So in what world does the price of stuff not go up when you take what the baseline is and you add a sales tax on top? It's a mechanical sort of thing.
I mean, is the rally in equity markets a rally triggered by expectations of asset inflation or a rally triggered by expectations of profitability?
It's difficult to envision how it would be asset inflation, only because to have that idea, to basically say what this is, let's get back and look at our NASDAQ chart here just as the baseline. If what this is basically the expectation that, look, we're going to have deregulation, we're going to have lower taxes, we're going to have essentially a non-interventionist kind of laissez-faire perspective on business and just kind of let everyone run, let the animal spirits do their thing. And then we are going to create these tariffs. And both of those things are going to be inflationary, and they're going to have higher rates, but because they're inflationary in a way where the animal spirit stampede makes the economy go faster, it then is able to absorb the impact of the tariffs. It then is able to absorb the higher rates because things are costing more for good reasons. The economy is outpacing the rise in costs. It's sort of where we are now. The economy is growing strongly. Wages are growing at 4%, and inflation is closer to half that, 2.1, 2.2, depending on which index you look at. So right now is an environment where the economy is running hot enough that, yeah, there's still inflation, but we're rapidly closing the affordability gap because wages are growing at almost twice the rate. So the gap is shrinking. But you'd have to envision in a Trump policy set that you've basically unchained the economy so much and ramped it up to such an extent that it's racing faster than the tariffs can hold it. And if you believe you can do that, then everything is fine. The deficit comes down. Economic growth solves all ills. But if you can't do that, if the deregulation and the tax cuts don't get you in a place where you can offset all of the other things you're doing that are pulling you the other way, well, then you have a big issue. And the last Trump administration, even though everybody sort of focuses on the COVID part of it, this gambit didn't work before you got into 2020 and the pandemic, which obviously skews any kind of assessment of the Trump administration on an economic scorecard. Obviously, everything looks awful if you include COVID. The entire global economy shut down. But if you look through the end of 2019 and leave COVID out of it, what happened was a tax cut in 2017, a trade war in 2018. The hotness of the tax cut didn't last. The trade wars ultimately got us the slowest economic growth in 6 years by the end of 2019. The Fed stopped hiking for a reason in 2018 and started to cut. By then, the gambit already didn't work. If we try to do that again this time, the conclusion would be at the front end, first couple quarters, the deregulation, the tax cuts, they help you. They juice growth. But if you do the tariffs, you end up with slower growth and higher rates. If you do the labor market disruption, you end up with slower growth and higher rates. It just happens maybe in 2026 or the tail end of next year.
Is there a scenario where the arrival of Elon Musk and his compatriots results in a level of prosperity unprecedented in American history, where the fantasy of efficiency and a reduced government catalyzes the biggest period of economic growth in American history?
Well, so let's go down the levers here, right? And very simply kind of figure out what is efficiency in this sense, right? He's not coming in to make the government work differently in the, or at least that's not the
stated premise.
The premise, yes, of what is on offer. The premise is not unlike Twitter before he got there. The edifice is bloated. There's too many people.
Eight out of 10 people can be fired.
Yeah, doing God knows what, and the money that's spent on that stuff is wasted. So what we're going to do is we're going to cut that off. Well, okay.
Can I make one comment there?
Sure.
In the scope of the American economy and the American government, 80% of the government employees amount to less than a flea upon a dog's ass as a relevant financial consideration.
That's right, because overwhelmingly, the costs are defense entitlements and the cost of borrowing.
Not to mention the dollar, the unlimited supply of dollars. Anyway.
Yes.
So efficiency through cost savings from firing people is worthless, but efficiency through a more prosperous economy through less regulation and lower taxes, I can't dismiss as easily.
Well, and therein is what this comes down to, right? If you're going to go reduce the size of government, it's not the cost saving that moves the needle. It's the removal of barriers to the animal spirits galloping ever more quickly. And that becomes the same thing. Can you get enough juice from that to overpower what that will mean in terms of rate hikes and rising inflation, with the added kicker that you are amplifying the inflation with trade barriers and disruptions to the labor market and all those things.
And deportation. So you're bumping, let's say he does what he does. You're going to bump inflation up on tariffs. You're going to bump it up on deportation.
Yes.
You're going to get theatrics on firing government workers, which will be neither here nor there in terms of economic value. And so you're betting on compelling private sector economic activity.
Yes. And by the way,
overwhelms the deportations and the tariffs.
Yes. And the bet that you're making there is not unlike the bet that China is currently failing at, which is an interesting kind of dichotomy. We live in a world where China is saying we don't want to get the economy used to fiscal priming of the pump. We're going to give you inducements like lower rates, like preferential terms to buy back debt. We're going to funnel it through local governments, but we're not going to actually do any spending ourselves. And through doing that, we're going to give you the incentive to go out there and spend, but only if you want to. We're going to give you the inducements, but not the physical pushing of demand through the economy. Whereas in the US, the reason that we've been as strong, whereas everybody else is stuck, including China, is we pushed a ton of fiscal stimulus through the system during COVID and didn't let the thing fall apart. It resulted in inflation, and now we're battling it. And it's been cut significantly, at least in terms of rate. And in terms of its absolute effects, we're eating into that slowly, and now not so slowly, because wages are, as we said, growing at almost double the rate of inflation. So the absolute impacts are getting whittled down now in terms of their impact on actual sort of people's purchasing power of stuff. And what we're saying seemingly with the new administration is, let's do more like China, in the sense that let's spend less, let's create a more fertile, or what we think is a more fertile environment for people to take their own initiative. They'll run. And we have a better track record of that, obviously, than does China. So maybe it'll work. But what we know from the experience in 2016 to 2017 is there's a sequencing where you get the pop in growth, it lasts about a year, and then the trade barriers kill it. And so we'll see if that's a movie that repeats.
Do you think the Musk portfolio will outperform? I know you're a macro guy, so it's not a fair question to ask you, but whether it's Tesla, or for that matter, Twitter, do you think that the Musk asset portfolio, the market sure does think so.
Yeah, I mean, the market certainly thinks that there is some kind of
an edge.
Some kind of an edge, yes, some sort of favoring in the court that is being baked in here. The sort of interesting pivot to all of this for me is actually to stay away from the Musk portfolio, but to look thematically at an adjacent space, as it were. I was looking at this right here, and this is the iShares Global Clean Energy ETF. And the thing that struck me here, you pull back a little bit more, is this thing has basically been in a narrow range since the end of 2023. I mean, obviously all stocks fell here. This is the sort of initial post-COVID ramp up, and then things cool off, and then here's the rate hike year where stocks fall in general. And then when you get into here, you sort of settle into this quiet range now for almost a year. And on the election, you break it, which makes sense. Because any kind of progress on clean energy, on building anything in this space probably stalls in the baby drill administration, which might be interesting in terms of what that then means for the Musk, Tesla, sort of will they be able to curry favor type of conversation, because this and what's going on with Tesla seem to be at odds. I mean, Tesla is obviously a clean energy type of company, and it is soaring, but the view on the space is clearly very negative. So as a kind of madman's delight, I've actually taken a little bit of a put exposure here, open-ended. The puts were pretty cheap. So I'm just going to see if this breakout gives us something. But I would imagine that anything wind or solar related is going to be negatively impacted, which, by the way, also includes the Musk portfolio.
Right. But your suggestion is that the basic government corruption will benefit Elon Musk directly, even as all of Elon Musk's industries are punished by virtue of being out of favor by a more fossil fuel friendly administration.
I would think so. And I think it really comes down almost more so to natural gas. If the U.S. wants to be the preeminent AI and crypto and everything under the sun destination, and really wants to beat China and beat everybody else at this game, what it needs is abundant energy. And we've obviously seen there's been interest in nuclear power and this and that. The thing that's really abundant and cheap in the US is natural gas. It's basically free at this point because it's a byproduct of the fracking extraction. So we have all the natural gas that we could possibly imagine. And if the focus then is, you know what, reshoring, build the AI here, close the borders and let everybody else figure it out, we're just going to, in isolation, become Fortress America, as it were, then that doesn't bode well for investing in clean energy. That suggests we're just going to go for whatever is abundant and cheap and go and retool. If the big manufacturing thing that is so central to the Trump economic platform, the big kind of reindustrialization of America, if that's, and I mean, Musk advocates the same, if that's coming, that's probably not about renewables.
For sure not.
So Musk might get a carve out. He might finally get that interstate charging system built out. I mean, it's there in the plans. The Department of Transportation is supposed to be doing stuff on it. It's part of the, if I remember correctly, it's the Inflation Reduction Act, which is interesting naming. But the infrastructure build out that is baked out in that bill to huge sums of money, I believe includes this, if memory serves. Maybe that actually gets done, but I can't imagine it's good for renewables more generally.
And then just flipping to the other side of the room, to the degree to which it's higher rates for longer, by a little or a lot, TBD, but you know, it's marginally higher longer, or slow, you know, less cuts over more time, however you want to do it. And market rates obviously are up. Is there a relevance for that either in the banking sector and or real estate of consequence here?
Well, so interestingly,
or for that matter, in the credit roll.
Interestingly enough, actually, if we take a look at the way that the markets performed today, and we look at the sector rotation as things kind of digest, the places that you see the pain, interestingly, today is in tech, but mainly in real estate. And so if we take a look here at the sector ETF, it's kind of idling. And if you look at the consequences of the election here, they don't really register in a dramatic way. So here's the election right here. So you get a little bit of a bump, ostensibly because the market reads the outcome as higher rates, but it doesn't really get too far. So it doesn't look like this is another space where anybody has actually taken stock of what this could mean. And then if we look at the financials here, which also don't do all that great, although they've come off the lows here. I mean, here, obviously, the response is much more emphatic. Right? Here's the election right there. I think in that space, it is perhaps clearer. Because who knows what happens with rates, but the banks are probably getting deregulated. And there's probably going to be a lighter touch at the SEC. There's probably going to be a lighter touch at the CFTC. There's probably going to be a lighter touch all around. The Fed is probably going to be encouraged not to be, and the Fed does its own thing, as we found out last week from a very testy Jerome Powell. He certainly showed signs of having had some stressors in his life before he took the podium last week. Chris later told me that it was in fact official that he had the call with the president-elect earlier that day, and I guess they figured out that he was going to stay out the rest of his term. But when Powell did that press conference, he looked heated. And for whatever reason, I guess they've reached a détente. So that's maybe a harder thing to answer, but at least the lean on the Fed is going to be to leave the banks alone, to not shake them down for more reserve capital and things like this. So it seems like the banks have been a space where it's been easier to say, oh, this will be an unalloyed good for the banks, but who knows real estate. I think the one that sort of really sticks out to me is KRE, which is the regional banks, which had obviously simpatico moves with banks in general, but higher rates should be terrible for these because they're still sitting on all those portfolios of terribly underwater credit that took down SVB, that took down Signature, that got First Republic into trouble, all of those things. We've basically been away from that story because rates were going the other way because everybody thought rate cuts. The noose has retightened, and yet regional banks seem to like it. Maybe they think the deregulation will be offsetting enough.
What's ahead this week in terms of new information? Just to play Chris Vecchio for a second, what are the macro tent poles here in the immediate future?
To me, the CPI number and Powell's speech this week are going to be key because I think the thing that's left in this story, if we're not going to make new bets on the election, and maybe we are, maybe we're going to get more people announced, like maybe there's a Treasury Secretary announcement this week. And people are going to go, that's not Steve Mnuchin. That's, the creature from the Black Lagoon that wants to put 60% tariffs on everything. Or it is Steve Mnuchin, in which case we're going to get a sensible version of Treasury policy like we got last time. Who knows? So maybe that's an announcement that's coming. But what we certainly know is that CPI is coming out, retail sales is coming out, and that'll give and Powell is speaking. So it'll give us a sense of whether election notwithstanding, we already have a hot economy that needs fewer rate cuts. That'll be a story unto itself. And then more weakness probably out of China. There's more data due there. And UK GDP numbers are due. The pound is holding up a little bit better than the euro here, but its days may be on the wane. Because if we get soft GDP numbers here, this thing is going to probably catch up lower. I'm still short for what it's worth.
Well, it's a pleasure to talk to you. I like the two-man routine.
We've certainly managed it. The hour flew by. Overtime is now out of time, as our catchphrase goes. We'll hopefully be back with Mr. Vecchio to keep us honest and give us some unalloyed bullish perspective. No doubt he's more confident than ever. With that, we'll sign off for here for Dylan Radigan in Milan. I'm Ilya Spivak in San Francisco. Don't go anywhere. I'm staying. Macro Money's coming back to answer Dylan's last question about upcoming macro risk in excruciating detail. So don't go anywhere.
See you tomorrow.
Dear Braden, big thanks to you and the nerds for the wonderful tech support. Of course I back everything up to cloud, because I'm 60 years old and I know what a cloud is. Yours truly, Larry.
Sometimes it feels good to get smart. Get even smarter with live trading insights.
and some live taunting.
No, your office is right near a different. You're like closer to the.
Near what?
Whatever.
This is English. You should watch him read.
From the smart mouths at Tasty Live.
In road trips, my family, it was like whoever could get the captain seat was it.
That's great. I'm having a great time.
Me too. But I mean, stay a while. Take your jacket off.
No, I mean, I'll stay, but the jacket's not
Come
coming
on,
off.
take your jacket off.
Nope.
Come on, take it out.
I'm sorry. I didn't mean to.
No, I'm sorry.
You hopped on this cowboy's horse, so I guess you got to hear his tale. In '87, I took it off. There was the market crash. In '92, NBC canceled Blossom. A couple of years ago, I lost it for 2 days, and the Lakers won the NBA Finals. Bottom line is when this thing comes off, bad things happen.
You've got to take it off sometimes. I mean,
Never do.
how do you shower?
The jacket's kind of gotten used to it. In fact, every few days it needs it.
No matter what, you keep it on.
I can take my shirt off if you want, but I'm not taking the jacket off.
I just don't know if that's something that I could deal with.
It'll be like a teal tornado. Just endlessly washing up on your short.
I mean,
This is moving so fast, and I like it.
Yeah.
In the world of options, somebody once said, for every gimme, there's a gotcha.
It's all about generating positive expectancy in your portfolio.
Welcome to Option Trades Today. I'm Tony the Bat Batiste, and I've got not one, but two trade ideas for you today.
Exploring zero DTE. We promised you we would take a look, and here we go.
Move with the rhythm. Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
We're going to go to New Orleans. I got to be in New Orleans. What's up?
Y'all three guys, just the whole organization is just phenomenal, and it's changed my life. And I wish more people would just sit back and listen to y'all and take it seriously, because it will change your life if you enjoy trading. I don't know if I could ever repay any of y'all for this free advice and free teaching y'all do. Is just remarkable. Tom, I got your hat on, and ever since I got it on, I've been blowing the market up. So make sure you don't give one to Tony or Scott, because I don't want them to benefit from us.
That's okay. Good job out of you.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Oh, yeah. Tasty Nation, good morning.
What happens when two titans of trading come together to harness the power of their prowess? Let's watch these two master the art of the noble sport boxing. Wow, look at those geriatric thumbs go. Someone had an extra dose of fibre this morning. Like a flutter of fills, it's definitely fists of plastic fury over here. And I'm spent. Well, lucky for us, Tom and TP are better at writing than they are almost anything else. Subscribe to Tasty Live Cherry Bomb to get piping hot takes on the market delivered right to your inbox. Sign up at tastylive.com/newsletters.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
If you missed the live show, here's our cherry on top weekly recap.
You know what my first concert was when I was very young. It's quite embarrassing.
Anson.
How'd you know that?
I mean, I feel like everybody.
How did you know that?
Because who else was popular then in like the late 90s?
Oh my God, that's amazing. That was cringe. There it is, the song. Yes.
Yes. All right. Good luck. Good trading. Let's go eat some roost.
Peace.
It's the first day after last week's fireworks, and the markets are looking for direction. That's if you look at equities, of course, but if you look elsewhere, the fireworks continue. That's what we're going to check out here as we get started for the week. This is Macro Money. I'm Ilya Spivak, head of Global Macro here at Tasty Live. And what we are going to do here is take a look at what the markets did. Of course, last week, it should be no surprise that the U.S. election held sway as far as reasons for things to make moves. But we'll take a look at what that's ended up giving us and what perhaps it might mean. And then we'll take a look at what is on the menu for this week and see how that might influence things going forward. So let's take a look here first at what we are getting here from the upshot of what last week told us and go through this performance. I mean, clearly on the equity side, there's no question that there was a massive one-day move last week. Most of what happened thereafter was much slower by comparison, and most of what happened before was standstill. And that was, of course, the outcome of the U.S. election. Strong rallies for the S&P and the NASDAQ, up, give or take, 5% apiece. And the upshot from the bond market, interesting, giving us not so much a uniform upswell in yields, although that was the initial reaction once the election outcome became clear, but more a steepening of the yield curve. So yields rising at the front end, up 1% on the 2-year, backing away a little bit on the long end, down 1.8% at the 10-year. Now, obviously, looking at the 10-year, after a 3.4% rise, a 1.8% pullback still leaves you net with higher rates. But interesting to see that what we got last week was a kind of pulling of the rate structure forward, a sense that rates are going to be higher nearer term, which in some ways lines up with what the implications of the election seem to mean. And that is, of course, something that's been in the market for weeks and months ahead when former president and now third-time contestant, second-time president-elect Donald Trump would be leading in the run-up to this election. The sort of policy mix, broadly speaking, tended to be negative for bonds, tended to be positive for the U.S. dollar, tended to uplift yields because the upshot tended to be that this would be inflationary, that the introduction of tariffs would be inflationary, that significant efforts to stem migrant flows and to, on a large scale, remove migrants from the country, that this would be inflationary. And that, of course, meant that the Fed probably had less scope to cut rates. It probably meant that the dollar had more of a yield advantage than if those things were not the likely trajectory of policy. And so you had a similar sort of response once Donald Trump actually secured victory with last week's election. And the mix of responses seemed to be, well, deregulation, tax cuts, especially corporate tax cuts, are likely to unleash some degree of animal spirits, some degree of fiscal stimulus by way of tax reduction into the economy, so stocks go higher. You also have that in addition to tariffs. I mean, of course, a pickup in economic growth is inflationary already, but that then is coupled with the prospect of widespread tariffs and a significant disruption to labor supply. That then is inflationary, and so you get this tilting toward higher rates in the near term. Gold, interestingly, falls against this environment, seemingly recoupling with its relationship with the dollar and yields. So when yields in the dollar go up, gold tends to decline in that it yields nothing and is a natural foil for fiat currencies. It had an interesting decoupling from that, which we'll take a look at momentarily. The election seems to have taken that decoupling and closed it. The dollar higher, we can see a 1.2% gain on the euro. And the idea that this administration will be friendlier to the crypto industry, delivering a massive upswell for Bitcoin, it rises almost 11%. Since then, an interesting thing has transpired. So stock markets today idling, not really going very far at all. If we look at the S&P here, it manages a very modest increase here on the day, but is basically flat. If we look at what's going on with the NASDAQ, it is flat, but a little bit lower on the day, down about 0.3%, whereas the S&P is very narrowly higher. And what you end up with then is a situation where there's weighting that's happening as if to say, here is your baseline views of risk appetite in the markets, S&P 500 sort of chief among them, and it has a net daily increase of 0.05%. In other words, whatever the strength of the move last week, now we've kind of paused for consideration. By contrast, NASDAQ ends up down 0.1% on the close. Again, a little bit soggier, a little bit in the other direction, but nevertheless, very little changed. And so there seems to be a kind of settling of the dust and a look ahead into what may be the next shoe to drop. And that story begins with U.S. CPI data. The expectation here is that we're going to have the core level, the one that the Fed tends to look at most closely because it most closely follows those things that the Fed can actually influence, underlying demand in the economy. It's not much the Fed can do about global energy or global food costs. We have the expectation that 3.3% holds for a second consecutive month. In other words, if we consider what U.S. inflation is doing here in this context, this would be the second month at 3.3 after September. That was a rise to from 3.2 in August. The low in the sequence, as a matter of fact, is 3.2 in July. So June is the last time that we were at 3.3. We took a step lower. July was a meaningful low. And since July, so what will be the fourth month for October, if the expectations hold, we will have stopped making progress on core inflation. And that, of course, is an issue here. The expectation, of course, that the headline will also move higher from 2.4 to 2.6. That would be the highest since July, so a 3-month high if it comes out as expected. But it's really the core that is the main issue. We can see that when we see what makes for this gap in between core and headline, it's this stuff down here. It's the ebbing negative contribution to CPI from goods and, of course, from energy. At least in the case of goods, it seems to be rebasing back to zero over the coming months. So perhaps in this incoming data, we'll have that influence rebased out, and that'll give us this pop in the headline. But from the Fed's perspective, this massive area in core services is where inflation lives, and that's approximated by this core CPI reading, which isn't going their way at this point. It's certainly not materially running away from them, but it is certainly not making the kind of progress they would like to see. Later in the week, we're going to get retail sales numbers. Expectation here is that we're going to get a rise of 0.3%. That's after 0.7% in the prior month. Give us a sense of what the economy is doing in what is the most important part of the landscape. And that's, of course, because 80% almost, 75 to 80% of GDP in any given quarter is contributed by household consumption. And so how retail sales work out here, what appetite is for uptake, and whether receipts stay within this range or start to veer off, that's a very, very important consideration for how the overall economy is doing. The explosive strength in service sector ISM numbers would suggest that there's perhaps some upside surprise risk here. And indeed, if we look at the way U.S. economic data has tended to perform relative to forecast, we can see increasingly since late August, U.S. economic data has overshot estimates. And not only has it overshot, not only is this Citigroup index above its zero line that separates upside surprise tendency with downside surprise tendency, the quotient by which we've surprised, the momentum in upside surprises, has been building and building in a steep, steep way, suggesting that we are still in a place where U.S. economic data has momentum much greater than the baseline expectations from economists' models are implying. And so the risk is that we continue to surprise higher, both on the retail sales number here and the CPI report. And of course, what all of this distills into is a still less hawkish, or a still less dovish, outlook on U.S. monetary policy. We can see that here already. Here's where the peak in rate cut speculation is. This is right on the eve of the Fed's 50 basis point cut in mid-September. Here's that cut. And what we can see is as the data has been getting better, this is it right here, so too scope for rate cuts next year has diminished. Now we can see for this year, we've been basically fairly steady. The cut that we just saw was expected, and indeed we've now had that happen last week. And what we are still looking for at this point is the possibility that there is another one in December, but we can see those odds aren't moving very much. The key question, of course, now, whether we are going to get something like a move in the final meeting of the year. 65% chance that that move is going to happen. And then looking at next year, at this point, the market is tilting to maybe 2 more cuts next year. So 2 of them are baked in, but obviously 58 basis points is a far cry from what would be there were we to get the full 3 cuts. But that would be 75 basis points, which means we're only 8 basis points on the way to pricing that in, giving 3 cuts a mere 32% chance of happening. So at least as far as what's baked in now. If we continue to get movement in this direction, if the data keeps getting hotter, that means higher yields. And when we look at what this means, we can see here was the move in the long end of the curve following the election. We've since corrected almost all the way back, and we're still sitting right at these lows that we sort of begrudgingly took out going into last week's vote. If the data on the U.S. side continues to surprise higher, the expectation ostensibly will be that rates will be higher downwind because the Fed will be still less able to cut rates in what is shaping up to be an increasingly inflationary environment before we even consider what's going on with the way fiscal policy will change under a new Trump administration. And so with that in mind, there is perhaps risk that this continues to move lower on those numbers. And of course, if the numbers go the other way, the interesting thing would be if this is in fact an attempt at bottoming. And that perhaps requires a push back over 119 somewhere into here to sort of reset this series of lower lows and lower highs. The other big question here within the same narrative is gold, which of course hasn't waited and is aggressively moving lower already, taking out its up move since back mid-year, where the market really started to speculate on more Fed easing. We, of course, see that right here. This is mid-year. We only expect 3 cuts at this point. As we start to expect more, gold understandably moves up. It has now basically erased all of its divergence from what's been happening in bonds after the Fed, but before the election. We can see here, here's the Fed meeting. This is where the Fed cuts 50 basis points and promises more cuts, and the market goes, you're cutting in a hot economy. Rates go higher. Bonds go lower. Incidentally, you see the same thing in the U.S. dollar. The Fed is right here. As rates go higher, so too does the dollar. This is the euro sinking here as the dollar strengthens. But gold, interestingly, decoupled from that here. Well, now in the aftermath of the election, that's the election here, and this is today, we've erased that divergence. And the question then becomes, if you now get hot U.S. economic data, do you continue to build lower? Because gold now is a function of the underlying dynamics as it typically is after an aberrant period. So if you take out 2618, then you open the way down lower into this area. And of course, then the line in the sand on the top side, assuming things go the other way, comes in right here, 27 and into about 27.22 to 27.30. This is the chart of the dollar that we just looked at a moment ago. The greenback continues to push higher, progress still getting made. We're looking at now this low from earlier in the year at 106.29 as the bogey. And if we do get hotter U.S. economic data and that does give us higher yields, the expectation would be that that continues to echo here, which means that if we then take out this level, we open the way down in the direction of 105, sub 106 and into 105. And one might expect that that extends into other dimensions of the dollar also. But there, and in particular in the UK and in Australia, there's some data of their own to shape outcomes. In the UK, we have the third quarter GDP result, the expectation that we are going to see a further strengthening of the economy. It's really tried to build momentum this year. We can see we started the first quarter with a contraction and really sat near standstill for much of 2022 and 2023. We're seemingly starting to see things heat up a little. And the expectation is that for the third quarter, we're going to get a 1% rise in GDP, which would be the strongest, clearly, in quite some time. We'd have to go back to early 2022 to see comparable numbers. So here, things are, to some extent, the mirror image of what's going on in the U.S., where while U.S. data has been surprising on the upside, UK data is increasingly surprising on the downside. And if this GDP number comes out and gives us a softer outcome, that's likely to reinforce speculation that the Bank of England is going to be more willing to cut rates. We already saw with the Bank of England policy announcement last week a smaller consensus deviation, as it were. The expectation was that 2 of the 9 voters on the committee would vote to forestall rate cuts, and it fell to 1. And certainly nobody wanted to hike. The consensus around easing, by contrast, that seems to be strengthening, and weaker than expected CPI numbers out of the most recent UK figures, those don't help in that sense. So if you get a softer number on GDP, you might get the impetus for the pound to start looking more like the euro, catch up on the downside, take out this support in the sort of lower 128s area through about 129, this sort of congestion zone right here, and end up with a pathway down sub 127 into these levels. The top of this range still stubbornly holding it around 130, 130.50. And then finally, out of China, industrial production and retail sales numbers due. Data out of China also is tended to underwhelm. Inflation numbers over the weekend were a case in point, and explosive export growth numbers last week looked more like front-running eventual tariffs and trying to get things in at lower cost rather than genuine demand. Not surprisingly, the Australian dollar, a proxy for Chinese economic conditions, first jumped and then the following day erased all of it as it became clear that it probably was not a sign of robust export strength with legs that came out there. And then, of course, the inflation numbers over the weekend helped to confirm that the situation remains anemic. If these numbers miss, as Chinese data has tended, then we end up with perhaps the catalyst to finally take out this bottom on the Aussie and have it lock in with something more similar to what we're seeing in the euro and set the stage for a move down sub 65. And that is Macro Money for today. As ever, we are here Monday through Thursday, right after Overtime, a show that I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go therefrom. I am also on Futures Power Hour Mondays and Fridays. I am on The Price of Truth on Tuesday this week, usually Wednesday, but we've shuffled things around a little bit. I am also there for First Call with Tom and Victor on Sundays, writing for the News and Insights portion of tastylive.com and opining sporadically on the platform formerly known as Twitter at Ilya Spivak. If you are watching this on YouTube, like and subscribe. Macro Money will be back tomorrow. Happy trading.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, $4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Decision to build Thinkorswim was a byproduct or derivative of 20 years. In our minds, the future of finance meant that we were going to move away from something that was very manual and move to something that was tech-driven.
What we did with Thinkorswim truly changed the industry. To do it a second time was a challenge that I just had to take. The platform is just leaner, cleaner, a little meaner, legitimately built from scratch.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. That's what I do.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade. What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
I bought a stock when I was first old enough to open a brokerage account. It went up 1,000%, and I made a bunch of money, and I was hooked. I felt like I was just pretty much gambling in the markets. I had a big win, and it was mostly failures thereafter that. And I thought I need to find a way to consistently pull money out of the markets and find a more consistent, repeatable system. Fast forward, I ran into tastylive. Really loved the market measures and the data they had behind to back up the research they were doing. My biggest takeaway is that you can find an edge in financial markets. It lies in volatility overstatement, volatility mean reversion, and having solid mechanics.
We're back. Tasty Crypto Show. I'm Ryan Grace, and with me today, she needs absolutely no introduction whatsoever, Katie McGarrigle. Welcome to the show.
Thank you for having me. I'm super excited to be here, Ryan.
Yeah, me
it's
too.
Just like old times.
It really is. We were just talking off air how we've both been here now for over a decade. Done a ton of content together here on the show. I think you are, in a way, the queen of Tasty Trade.
I think there's a couple other people that might be,
maybe
a tier or two above me for that. But, I'm happy to take that crown if it becomes mine one day.
I think you deserve it. I'm excited to do a new mini series with you here on the Tasty Crypto Show. We've been talking about this. Katie has been getting more and more involved with crypto on the business side, on the Tasty Crypto side, on the Tasty Trade side. And the idea came to mind that we would kick off, or I guess bring back, where do I start? Crypto.
Yes. So to kind of add to that, I learned how to trade options and futures options all right here in the Tasty Studios. Like you said, right when we kind of first started working here together over 10 years ago now. So I've got, some experience under my belt, but frankly, I've kind of avoided the crypto space mostly because, there's a lot that comes with the intimidation of learning a new product, right? So it's the language, which DeFi has its own set of language and terms that are even so different than the options and futures trading world. So that was kind of a deterrent to me. But on top of that, there's a time element involved. So
Absolutely.
It's really nice that you and I can actually carve out, the next couple of weeks, 30 minutes a day to just kind of see how I can start to integrate this into just my day-to-day portfolio?
Absolutely. I think it has a place in a portfolio. We're going to walk through all of that and more here on the show. But before we do that, Katie, we're live on YouTube. So if you're streaming on YouTube, hit us up in the chat, type in some crazy stuff. Before we get started, we got Lone Sophos here. We got Dav. Well, we got Tasty Crypto up in here as well. So if you are on the show, you have a question, you want to type in a comment, hit us up. The chat is open. But Katie, let's jump into it. Where do I start? Crypto, episode 1. Beautiful
Mini tiny
thumbnail,
golf clap. Gentle.
I must say. So today, I want to talk about the basics. Before we do that, though, I want to get some understanding and maybe set the stage for everybody as to kind of how you'd rate or rank your crypto knowledge. I think you've bought Bitcoin before.
Yes.
Correct me if I'm wrong.
Tiny bit.
But how familiar with the space, the industry, the markets, the products, just anything at all? Where are you at?
I would say that, like, if you were putting me on a scale from like 1 to 5, 5 being an expert and 1 being like I know nothing, I'm at like a 1.5.
Okay.
Like, I have truly, I want to come into this with as little bias as possible, and I'm hoping to rely on like the resources that you guys have already kind of built on, tastycrypto.com, and as well as on the Tasty Trade website, as well as on tastylive. I want to kind of utilize those to help me get a little bit further along than I currently am. But for the most part, it's been very broad. I know some major coins. I know a teeny tiny bit about how it works. I understand that they can be vehicles for both investing as well as speculation. I know that I can probably stick to, the most liquid or the most heavily traded ones. I know that derivatives are hopefully on the way. But other than that, I mean, I have been very, very passive when it comes to learning more about the crypto space.
Perfect.
1.5.
That's a great place to
Do you think
start.
I can get to like a 4 by the end of this?
I think in 4 episodes, maybe 3 episodes, we'll have you full degen.
Oh, wow. Okay.
We'll be on chain. You'll be in some memes.
Okay.
We'll be having fun. We hope to get there.
Yeah, I think we will. And I think, the good part about this is that, and I've talked about this, and you've probably talked about this as well, but I don't like the idea of trying to cram, right? Like, when you're in college, you cram overnight for an exam and try to put as much into your head in a 24-hour period of time so that you can like ace the test. But I see this much more as like a long-term play that I need to kind of build a muscle memory on in order to do this successfully. Would you agree with that?
Yeah, I think that's a great approach. I mean, what I hope to accomplish with this show is for everyone to walk away with some foundational knowledge, some understanding of what this is, what we mean when we say crypto, what it represents, how you can participate in the space, and maybe where it fits in your portfolio. A lot of educational series tend to jump right into the weeds and get into very specific details around how the technology works. Technology is an important component to this, but we're not going to really focus on that. We're going to focus more on the why, the what a little bit, less on the how, but really the why. Why is blockchain such a transformational technology? Why is Bitcoin so important? What does this represent? And again, how do you participate in a way where maybe you can make some money along the way? At the end of the day, that's our goal here as investors. If this is something that I'm going to allocate capital to, well, I hope to see a return. And so we'll talk about why we think that there's, a probability of return. There's a positive expected value here when participating in the market. And we'll get through all of that throughout the show.
I mean, and what better day to start than where we're seeing Bitcoin trading?
Right? Yeah.
It's kind of like the stars align for just this show.
We are kicking it off with Bitcoin at all-time highs, or right there near all-time highs. So let's jump into it, Katie. Where do I start? Crypto. Quick overview of what we're going to cover here on the series, little mini series. Not quite sure how many episodes, 4, 6, maybe more. We're going to run this until Thanksgiving here in the U.S. at the very least. But Monday and Wednesday this week, we will be covering Where Do I Start? Crypto. Katie's on a journey. I'm her guide. And like I mentioned, we're going to try to give everyone a foundational understanding that they can use if they decide to invest in the crypto space. So a little bit of an intro. Going to try to define some of the jargon that we use. We're going to talk about Bitcoin. We're going to talk about Ethereum. We're going to talk about investing in crypto as well. hopefully provides some perspective around how to approach markets. Same thing that we do with futures and options. And then we are going to get into the details, into the weeds a little bit towards the end. We're going to talk about going on chain, participating in DeFi, some of the tools that you can use, whether that's the Tasty Crypto self-custody wallet or some of the features that exist at Tasty Trade. We're going to walk everyone through how to use the products, how to use the platforms, which will be exciting. So a little bit of a demo that'll be incorporated into the shows as well.
That'll be great because I feel like there is so much technology out there now. You kind of don't necessarily know what you're looking at as a newbie. So I like that we're, kind of starting not narrow, but, with products and tools that I already kind of use and know. And from there, if you decide to expand or want to, you can. But sounds great.
Yeah, hopefully it feels really familiar. Before we jump into the basics of crypto, I want to get a sense from you. When I say crypto, what do you think about? What is crypto to you?
I mean, it's a tough question because if you were to ask me, several years ago, I'd be like, it's like digital money, you know what I mean? But now, as I've gotten a little bit more farther along, and of course, you can exchange goods and services for it, but for me, at the end of the day, it's just like another vehicle in which I can participate and build my portfolio. So whether that is a store of value or a digital asset or a safe haven or a diversifying tool, it's kind of all of those things to me.
Yeah.
But I don't know if you're looking for a more formalized definition.
No, I'm just curious what comes to mind when you think about crypto. I want to approach it to start with from a very broad perspective. So I liked how you mentioned that it's all of these things. And when we talk about crypto on the show, the first takeaway I want everyone to have is that we're describing something much bigger, though related to Bitcoin. A lot of times people will use these terms synonymously, interchangeably, crypto, Bitcoin. I do that myself. But when we talk about crypto, we're really talking about or using this term as a catch-all to describe everything from blockchain technology, cryptocurrency, digital assets, NFTs, tokens, all of these terms, words, the jargon that people are probably used to hearing by now fits into this crypto bucket when we talk about crypto. We're also going to talk about blockchain. You're going to hear that quite a bit. You're going to hear the term network. When I say blockchain or I say network, for the most part, I'm talking about the same thing. And that's the blockchain network. There's more than one. Bitcoin is a blockchain network. We'll talk about that. But at the kind of most basic level, the way that I like to think about it is that the blockchain is just simply a way to transfer value. There's a lot that you need to know about it, but high level, it's a network for value transfer. You'll hear distributed digital ledger. We'll talk about what that means, but it's a digital ledger. Kind of think of it as a spreadsheet in the clouds, decentralized, right? Is maybe one way that you can think about this. And this database or this spreadsheet, this blockchain network, it stores data. It stores transaction history. And that might not seem like it's very valuable or there's anything special about that, but we'll explain why, depending on how it's used, why that matters. But you'll hear blockchain, you'll hear network, and that is the underlying computer network that tokens or value is transferred on.
Right.
You'll also hear cryptocurrency, and this is the mechanism for that value transfer. This is the token, so to speak. It's the digital money on the blockchain. And we can think about that as being useful for us to transfer back and forth, for us to make payments. But it's also a way for, in a sense, computers to pay one another. At the end of the day, it doesn't really matter who's transferring the value or why the value is being transferred. But the token is used to represent value on the blockchain network, and the network is used to facilitate the transfer of the value.
Right.
That in itself is, in some people's opinion, very valuable, inherently very valuable. But that's what we're talking about when we say crypto, high level, catch-all term for everything that kind of fits into this space, blockchain or network, and then cryptocurrency. A couple terms I wanted to get out of the way to start with.
So if you were to put it in more traditional finance terms, if I am using Venmo to transfer US dollars to you, Like, do those feel similar enough to you?
Yeah, I think that's a great way to look at it.
The network and the currency.
Yeah, I think that's a great way to look at it. Venmo, the network, and then in this case, the value transfer mechanism, US dollars on top of this network or within this network. I think that's a fair way to approach it.
I know it's a little more nuanced than that, but I'm just trying to bake it into something that's like simple enough.
Yeah, it's an absolutely fantastic way to simplify it. In this case, the cryptocurrency that we're going to talk about next is Bitcoin. The network is also called Bitcoin, so it can get a little bit confusing. But let's jump right into that
It
and
wouldn't be
talk
the
about
show
it.
if there wasn't a couple of gimmies and gotchas,
Right.
you know?
Absolutely. Why is it called this again? That's just what they called it. So let's talk a bit more about the most famous cryptocurrency, the gateway drug, I suppose, where everyone tends to start. Have an interest in crypto curious, something going on in this space, blockchain this, blockchain that. You end up at Bitcoin most of the time. At least that's where you start most of the time.
Yeah.
So Bitcoin is both a blockchain network, it's a technology, it's also a cryptocurrency. This is where it can get a little confusing. But let's start with big B and little b. So like I mentioned, Bitcoin is both a technology and a digital asset. When you see Bitcoin written with an uppercase B, not always, but most of the time, it's likely that it's referring to the blockchain network.
Okay.
So this is the network of computers, the Bitcoin code or the protocol rules, the overall ecosystem that exists and supports Bitcoin, the cryptocurrency. Very early on, I would say almost a decade ago, you would hear these things in financial media. You'd hear people that were learning about this, and they would say things like, really love blockchain technology, but I don't like the token. This is back before we really had any sense of global regulations or how to approach this. And so people would say, are these securities? Maybe, maybe not. But everybody would say, I really like blockchain, but I don't like the token. Well, you kind of need the token.
Yeah.
And so that's Bitcoin, little b.
Little b.
Lowercase b.
Yeah.
When you see that.
Improper noun or proper
Yes.
noun, big B, obviously.
Oh.
Okay. And then regular.
Yeah, I think very simply, big B, that's the blockchain network.
Yeah.
So that's Bitcoin, the network, the ecosystem, how all this works. And then there's Bitcoin, little b, that's the token.
Yeah.
That's the cryptocurrency. We'll get into the differences between tokens, technically, and cryptocurrency. There's some slight differences there. But Bitcoin, little b, that's Bitcoin that we're trading.
Yeah.
The crypto, Bitcoin, big B,
Okay.
is a technology.
So little b, I mean, we're going to be talking about both on the show, of course, but the thing that you and I are going to be buying and selling is little b.
Yes, but as a way to participate or invest in, big B. And I think that's the key here.
Okay. I get that.
People also say things like, it's not real. There's no intrinsic value. I can't touch it. I can't see it. I can't hold it. At least with gold,
Yeah.
I can touch it. I can hold it, right? The value here is in the technology.
Right.
And you can invest or participate in this technology in dollars, in dollar terms, in terms of, I suppose, how it's valued, by owning Bitcoin. Now, you can use Bitcoin. You can just store Bitcoin, hold Bitcoin. But that's the way that you participate from a financial sense.
Okay, question there. When you say in dollars, is that globally?
No,
Or-
not necessarily.
Okay, so can you buy and sell Bitcoin in yen terms, in euro terms?
Absolutely.
Okay.
Absolutely, you can. I think globally, though, quoted in dollars due to the fact that the dollar is the global reserve currency. When you look at many other commodities, and I consider Bitcoin, even though it's called a cryptocurrency, I consider Bitcoin a commodity. But most commodities are priced in dollars.
Right.
Not all of them, not for every transaction. But that's primarily the reason that it's priced in dollars, but absolutely local markets priced in the local currency.
Got it. Okay. I didn't know if there was like a standardization across the board.
No,
Which
not
makes sense
really.
if it's decentralized finance. There might not be standardizations quite yet, or there might be some, but not others. So.
Yeah, in terms of exchanges, it'll be localized in that sense. But in terms of how people talk about this or quote it, typically you're going to quote it in dollars versus quoting it in euros, for example.
Got it. Okay.
So Bitcoin, big B, little b, I wanted to call this out because it's really important to understand that what we're participating in here or we're investing in when we're buying Bitcoin is this technology.
Mm-hmm.
And there's a lot of inherent value in this technology that I think intrinsically makes it valuable. So let's talk about some of the features, right? What are the characteristics of Bitcoin that even make it interesting to begin with? Why does this thing matter?
Mm-hmm.
To your point, we have Venmo, we have PayPal. In the US, we have fantastic systems that arguably are, much more efficient at times than, let's say, the Bitcoin network. But here's why Bitcoin's so special. And we're going to dig into each one of these in just a second. I think the most important element here in terms of why, from an investment perspective, this is special is that it's a hard asset. There's a degree of rarity or scarcity. There's a limited supply of Bitcoin. 21 million will only ever be mined, will exist. On top of that, from the very early days, it's estimated that a couple million or so, maybe more, have been lost or are unrecoverable. People didn't store them
stories
properly.
on Reddit.
Exactly.
Okay.
So you know what I'm talking about. So there's about 19 million or so in circulation today. 21 million will only ever exist, but it's likely that there's some that are unrecoverable. So we're kind of pushing up against that upper bound. What makes this important is just that there's, again, a limited amount of it. So while it is digital, it has these components of a hard asset or hard money, hence it's
commodity.
Exactly. There's the digital gold analogy at times. So limited supply. It's also decentralized. This is really important in that there's no single entity that controls this. There's no single corporation, individual, government. It's a decentralized global computer network, all running the same code, all adhering to the same protocol rules and operating in similar form or fashion. No one can turn it off. No one can say to you, Katie McGarrigle, you can't participate in this. It's permissionless. It's peer-to-peer. It's decentralized. There are good things and bad things associated with centralization. There's good things and bad things associated with decentralization. But an important characteristic of, again, what makes Bitcoin special is that it's entirely decentralized.
Right. Okay.
It's also entirely digitally native. It exists only on the internet.
Right.
Which gives it some unique properties. I also would argue that it probably introduces some unique risks, but it is only on the internet.
Right.
It's only online. And in a world where our lives are more and more digital, we spend more and more of our time there, more and more services and things that we interact with are digital. This, I think, does play as a currency, a store of value, or even collateral in a system. In that digital world, it plays more of a role going forward. But entirely digital. It's also extremely secure. So one thing I want to kind of clear up here is that you see people talk about Bitcoin as if it's extremely risky. You see there was this hack or that hack. People lost money. Bitcoin has never been hacked. The blockchain network, the technology that we're talking about has never been exposed. Exchanges can get hacked. People can get hacked.
Yeah.
But this, in terms of the technology, the network itself, extremely secure because it's a decentralized blockchain technology. Inherently, that makes it secure. Given, and we won't get into all these details, like I said, but given how more Bitcoin is mined, cryptographically, how transactions are verified, added to a blockchain, secured, all of this makes this very, very secure, very robust as well.
Like you said, which comes with unique, like you said, people get locked out. They can never recover whatever it is they've lost. But that's also due to how secure the nature of the product is.
Yes. Yeah, it's not necessarily a positive or negative. I mean, there's certainly positive characteristics and negative characteristics. But at the end of the day, it is what it is. It works this specific way. It's rules-based. It's mathematical. It's very kind of pure and true in that sense. And it's secure as a result. Does not necessarily mean that it's very easy to use, but it has a high degree of security, and that's important to a lot of people. It's also extremely transparent. It's still private, but all transactions, the history, the record of everything exists on chain. And I think, again, there's definitely positives and negatives to that. Very early on, for magic internet money, as people like to refer to it, there weren't that many use cases. One of the use cases was buying drugs, narcotics online, right? Through kind of black market websites. Found a use case right away. Today, though, if you are a criminal or participating in criminal activity, I suppose, if you are trying to launder money, this blockchain is pretty transparent. Again, we don't exactly know who's associated with all these wallet addresses, but as many people have seen, usually the funds from these hacks, or at least historically, a lot of them have been recovered. A lot of times,
because you can just
there's
check
a trace.
the ledger.
Exactly. Anyone can look at the entire history of the Bitcoin network and its transactions, look at the blockchain. It's all perfectly transparent.
Yeah.
Which is a positive, I think, from a financial system perspective when you go back to, let's say, 2008, where you have all of these banks that are over-levered, that have all of these toxic assets. It's all commingled, intertwined within the banking system. And yet no one knows who owns or owes what where. Not very transparent. Very, very opaque system versus something that, at least in this case, very simple, digital, distributed ledger. Very transparent.
See, like, that's something I did not realize. Like, because like you said, people act as like this is like the dark web. And it's actually a lot more open than that. And I mean, you know, taking words right out of your slide, but transparent. Like, it seemed like it was just like this shady subsystem.
Look, at one point, there weren't a lot of use cases for this.
Right.
Right? And that was over a decade ago. I would equate this to a system where, let's say you go to the grocery store. And I don't know what you buy at the grocery store. Some groceries, I suppose. And you get some change. Maybe you're one of the few people that pays with physical money.
Yeah. Back in my bartending days, maybe.
Okay.
But not so much anymore.
Well, you pay and you get your change. And we could, let's say in this system, we could track every single move that change you received has ever made.
Yep.
Maybe at one point, years ago, one of those dollars or 50 cents, whatever it was involved with some sort of illicit transaction. We
Right.
can see that in theory. I mean, that's how transparent this is. Now, we might not know what those activities are or what that facilitated, but a record of the transactions, a history, exists on chain. So over time, as databases are built up against this, and there's a larger record of transactions, it becomes even more transparent, and I think less likely that you would use something like this for nefarious activities. The US dollar, physical fiat currency, is pretty good for that versus Bitcoin. But early on, all it was really used for.
Yeah.
I am glad it found a use case, though, because it was able to survive and thrive, and here we are today, even though maybe one of the only use cases was the Silk Road at that time. But that said, these are a few of the reasons, high level, why Bitcoin is special. I think it's important to understand this feature set really is how I'll describe it, because it makes it a lot easier then to kind of grasp the intrinsic value, why this technology matters. It doesn't mean that you have to use this technology or that you should invest in Bitcoin. But because this exists, it unlocks opportunity for people around the world. It creates an alternative system. In many cases, it creates a very compelling alternative investment. We're going to talk through that here more on the show. We are going to run out of time, by the way. So we'll spend the beginning of the next episode talking a little bit more about scarcity, decentralization, kind of the digital portability that exists here, all of the features that, again, make this pretty compelling. And then we'll talk about, additionally, what that feature set lends itself to. Financial freedom, a bank for the unbanked. You remove financial intermediaries, you remove some costs, you gain efficiencies, you remove some friction there. And we'll, again, hit on what I think is to me as an investor, one of the most important pieces here, which is that scarcity, especially in a world where we see arguably continued devaluation of fiat currencies. Like, this stands out. There's definitely a reason why you'd want to invest in that as a result, I think. But we'll talk about all of that here on the series as we move forward.
Yeah, I'm looking forward to this. I mean, like, even just, laying out the financial freedom and the middleman, like, all of that sounds great. And at the end of the day, even before that step, I'm like, this is just another tool in my toolbox that I can start to utilize and pivot towards if traditional markets are low in volatility, or I'm not having success with my traditional strategies or with my traditional asset classes that I'm trading. So all about, not only incorporating this as a way that I can stay active if certain approaches aren't necessarily working for me, but then all of the other compelling reasons to dig into this a little bit more. So
Yeah,
very
absolutely.
excited.
And I promise I will not just talk at you the entire show either. I want to get your questions. I also want to hear questions from everybody that's following along here. So if you have a question for us, you can type it in the chat during the show, or you can send it to support@tastycrypto.com, and we'll surface it on the show, because I really want to understand your perspective and hopefully answer any questions that you do have that come up along the way. And we'll jump into the fun stuff, the more important stuff. Decentralization is great, but what drives crypto prices? How do I think about this as an investor? Is this something where I need to identify trends? What market environment does this work in? Maybe what market environment does it not work so well in? We're going to cover all of that, so I'm excited about it.
Yeah, it's going to be great. And I am happy to be a mouthpiece for everybody's questions. So I will definitely come with my own, because I am naturally, I've had a journalism background. So I am a question asker by nature. But like you said, if there's anybody online that wants to ask questions too, I will relay them. It'll be great.
Beautiful. Well, that sets the stage for the show. We will be back on Wednesday. We're going to continue the conversation on Bitcoin, the basics, and then we're going to start talking about investing in crypto markets 101. But until then, I'm Ryan.
I'm Katie.
Thanks for watching.
Peace.